Basically back to flat from where we started on Friday morning. So in some ways nothing to see here, but we've got a price in the second bid to Europe this morning, Tom.
That is the uncertainty. And I started at 7 a.m. talking about risk off. Now it's more around caution. I'll reframe that. There's a bit of caution in these markets. European futures end pointing lower by 0.2%. But to your point, after a record close on Friday, FTSE 100 futures a little softer by 12 points. The UK could ironically end up being one of the worst hit as a result of the changes and the tariff uncertainty. DAX futures pointing lower by 131 points, softer by 0.5%. We're watching oil and we're watching what's happening in precious metals as well, Guy.
Here we go. Time for the start of European trading. We should probably do stock futures first.
Yes.
So, sorry, single stocks first. Anna needs to talk about concrete.
Yeah, I've got a few of these. I don't think there's any concrete in this morning. Johnson Matthey is in focus. The Honeywell is still buying part of the business, but for less money than previously announced. So we'll watch that one at the start of trade. Rolls-Royce in focus. Other media in the UK was reporting over the weekend there could be a buyback coming this week. No confirmation or denial on that so far. And NL starting a €1 billion buyback and outlining its strategic plan, Guy.
I only have 40 seconds there, and I had far too much time. I'm not sure if I can fill 40 seconds. I can probably fill a few seconds, though, before we get this European market open. Here we go. Let's see what's going on. FTSE futures are a little negative, but not by much. It's kind of the picture I think we're probably expecting to see more broadly across the continent. I think probably a flat to mildly negative open is probably the picture that we are looking at. US futures have certainly rolled over a little bit, but if you take a look at the two-day chart, basically there is nothing to see here. We have done little in terms of changing the trajectory or narrative. Tariffs have changed, uncertainty has grown, but equity markets by and large actually fairly flat as a result of all of that. And that's what you're looking at this morning. FTSE's barely changed, CAC's down by 0.2%, IBEX is actually higher this morning by 0.4%. Tom, what do you got?
Across your sectors, utilities, top of the list right now, up 0.7%. Basic resources gaining 0.6%. Banks also up 0.5%. So you've got, what, 6 sectors in positive territory so far. On the downside, the biggest losses right now, at least, coming through for tech, which is down 0.9%. Industrials also a little softer by 0.7%. And again, to the downside, the majority of sectors in negative territory, not by a significant amount, just 6 sectors right now in positive territory. Utilities at the top, tech at the bottom, at least as things stand, Anna.
Yeah, it's interesting that the market, you know, we talked a lot about tariffs this morning, but the market arguably is thinking more about tech and the AI themes, or at least still thinking about them, because the worst performer within that tech sector is SAP, and that's the thing we've talked about before, about software. Dassault Systèmes, also weaker, and that takes us back to that software theme. So that's a theme that is living on and cutting through the tariff chaos that we see. Banks actually jumping into top spot now, up by 0.7% for that particular sector. A wide range of banks going higher from France, from Spain, so we'll continue to watch that. Interesting, the German market not open, which is not unusual, but the futures picture was suggesting that we'd see some of the worst pain in Germany this morning, which with trade in mind and exports in mind seems as if it would fit, but the CAC is actually doing a little worse than had been expected.
SAP is down by 2%. SML and SAP, the two biggest points drags on the market this morning. Siemens is lower, Rheinmetall is lower. So you are seeing some of the German names under pressure, basically defense names and some of the tech names, some of the big European tech names are certainly softer this morning.
NL is now near the top of the list in terms of the energy space, up 4%, and the miners as well. Fresnillo with exposure to silver, up 3.4%. And worth noting that Anthropic came out with another cybersecurity update towards the end of last week, and there was a bit of selling pressure across some of the cybersecurity stocks. More. There will be more, and this is the point. We're nowhere near the end of the story, and it's not just going to come from Anthropic. It will come from the other major labs as well.
Well, no doubt AI will be part of our next conversation. Jerry Fowler joins us, Head of Global Derivatives and European Equity Strategy at UBS Investment Bank. Jerry, nice to speak to you this Monday morning. So the news flow leads me to ask you about tariffs. Market reaction would lead me to ask you about AI. But I'm going to go with tariffs first, because there has been big news flow surrounding this into the weekend and over the weekend. How much clarity do you have on where the tariff story goes and how much it matters to Europe and European businesses?
I mean, our long-held published view is that even though the IEEPA tariffs were struck down, there are alternatives. And so the tariffs are largely in place, likely to stay in place in some form, perhaps in various forms. But it's not the most important driver in markets at the moment, except that it just adds to that sense of uncertainty about US policy. And I think one of your previous guests might have been talking about how policy at the national level like that tends to come through in currency depreciation. So we're seeing a little bit more of that today. But, that currency depreciation is not just being driven by uncertainty, which was really the story of last year. It's now being driven by US investors investing offshore. If I plug one of your tools, the BI ETFS Go has fund flows in ETFs. And it's very clear that US investors are investing a lot more in international ETFs, to the point where actually the scale of investment in non-US specific ETFs in January was more than US specific ETFs.
Yeah, okay. And so let's linger on that then. So we are seeing the tariff story expressed in FX. Dollar is weaker, euro is stronger, and this partly, reflects the ETF flows that you're talking about there. I mean, how much of a headache is 118 for euro dollar, or if that isn't, where does it get to? It becomes a headache for European companies.
I mean, even if we look at GICS level 1 sectors that are exposed to the more significant exporting sectors as compared to the domestic sectors, last year we saw earnings expectations 12 months forward go down about 7%, largely because of the currency. Maybe there's a little bit of a tariff effect in there as well, but I think analysts really struggled to put that in their estimates. So it absolutely dragged down earnings quite materially last year for certain parts of the market. But the other half of the European market did very strongly. Earnings expectations were up about 8%. So it's just one of those drivers of really, really record-breaking dispersion within the market. 118, fine for now because we've been there for 6 months, but certainly it becomes more of a headwind if the euro pushes on to 125, 130. If these flows from US investors continue pushing into international markets, much of which benefit to Europe as well as other markets as well, but Europe is big. That flow, which we haven't really seen, that outflow from US investors since prior to the GFC, used to drive very significant dollar down and up cycles. What US investors do with their portfolio flows can be very consequential, and we just haven't seen it for 15 years.
Okay, a couple of things in there I want to pick up on and talk about a bit more. Dispersion. Why have we got such huge single stock dispersion and index stays where it is? Index vol on the floor, and single stock dispersion massive. Does index vol come up, or does single stock vol come down?
So correlation is the defining factor. Are stocks going to behave in a correlated fashion? Well, since COVID, they really haven't.
No.
We've seen multiple dispersions. Back then, it was services versus manufacturing because of the shutdowns and the reopening and the supply constraints. We've had very narrow AI enablement performance, particularly in the US. That's now feeding into Europe, where the AI enablement stocks, the capital goods, the renewables are performing and nothing else is. You've got the Chinese competition dragging on parts of European markets. You've got the tariffs, you've got the currency, now you've got this AI divergence of who is a winner and who is at risk. So I don't think that dispersion goes away, but certainly if we had periods of correlation, you could very quickly see a lot more index volatility, and we've already seen that year to date.
The impact of that would be?
Well, exactly. So if volatility goes up from, say, 15 to 20, as it has year to date, you very likely get more risk premia being priced in the cyclical parts of the market because they're more sensitive. I think that explains why banks are
Does it bring indexes down, though, more broadly? Because you just have to de-risk.
Well, certainly. So what it might, depending on how cyclically oriented the index is. Europe is fairly well balanced between cyclicals and defensives. It certainly brings the cyclical valuations down, but it obviously supports the valuations of defensives. What it does, I think, though, is degrosses the market. So anyone who has a really significant active position just comes back towards neutral, which is really what we've seen. I haven't seen a lower gross position in European equities for a long time, where it appears that pretty much no one owns anything except ASML as an overweight, and everything else is sort of within a standard deviation of where they've been for the last 5 years or so.
Does that change this year?
Well, once volatility dies down, I think we get a bit more traction with some of the cyclicals because we are expecting that cyclical acceleration.
Yeah.
We are seeing better performance from the fiscal beneficiaries, the companies that will benefit from activity in Germany. We're seeing good performance from the cyclical value stocks because of just their economic momentum. So I think that we do end up with reasonable performance this year coming through in large parts of the market.
Do you also buy the thesis that Europe is better positioned in this part of the AI story because of the capacity to lean into the energy piece and part of the hardware story, and that there's less exposure on the software front?
So we've already seen a lot of winners outperform. So that's the capital goods and renewables companies. We still like them, and they are generating a lot of cash flow. So that's a big win. But they're pretty expensive and pretty crowded. So you need to be a little bit careful and a little bit more selective. And they're up strongly year to date. The companies that might be disrupted, down strongly year to date. But I don't know that uncertainty is going to abate anytime soon. So let's not expect a sharp rebound. So the battle for alpha is going to be everything else. And the everything else is, can you make use of AI? Or are you going to be disrupted by it if you're in the middle? And if you're in the middle and you're potentially an AI adopter, we think you win if you're large, you've got lots of data, lots of documents, and lots of customers. So that puts you into things like banks, it puts you into things like food retail, where Tesco is showing a lot of progress, puts you into transportation, particularly some of the airlines. And through earnings season, these companies are being the clearest about how AI is benefiting them, especially the banks. Really clear metrics saying we are making this much more money or spending this much less money because of AI.
Just on the banks, so this is one sector, yes, has huge amounts of data, huge amounts of knowledge about people, but also I remember listening to one senior executive saying startups in this space can move so quickly. Banks, there's so much responsibility, so much regulation, they can't move very fast. So how do you fit that into expectations around what they do?
So we've certainly seen a bit of disparity. Obviously, the wealth advisors are perhaps a bit more disruptable because they're primarily providing a service of like informational value. Whereas banks, it's a bit different. They rely, customers don't move very much because there's a lot of trust involved, so that's very important. There are a lot of regulations, which creates a little bit of a moat around their business. And the reality is most of what banks do is transactions. So it's so it's almost like a physical product. You've got to do something in the world as opposed to just provide information. So I suspect that banks are a decent amount more protected from AI disruption for a longer period. But also, these are the biggest companies in the world investing very heavily in AI. And scale matters because the more data, the more processes, the more customers you've got, the more likely it is that AI is helpful. If you're a startup, you don't have the data, the customers, the processes yet. If you can get the scale, it becomes useful. Maybe it helps you get the scale, but the banks already have it. So we've seen them beat on cost assumptions versus consensus 9 out of the last 11 quarters. So they're clearly already showing that they can they can contain costs better than the market expects. And I think that's even before we've seen a lot of the AI tools roll out.
One final quick question, just back to kind of one of the earlier points you made. The money that's coming out of the United States, is that seeking safety? Is it seeking cheapness? What does it want?
It's a mix of a few things. So first of all, we did see outperformance of non-US markets to US markets.
Yeah.
We are seeing a lot of the cash flow. So there's an extra $100 billion of capex that's coming from the hyperscalers this year, which is purely driven to cost inflation of memory from Korea, for example. So a huge amount of what the US is spending is actually simply being transferred offshore to the providers. And you've got an awareness that the dollar is still coming down. And so US investors will seek some safety in diversifying their currency exposure.
Is there a belief that if the US markets go down, the rest of the world does better?
I think it is, at this point, to some extent, self-reinforcing, that if the US continues to underperform and the US dollar continues to weaken, it will actually attract more flows offshore because we're starting from low base.
If the US market went down hard, would the rest...
So that's where it gets a bit more tricky, because as soon as you introduce a lot of volatility that might well be US-led, then it can obviously have a feedback loop on the performance, the economics, and the appetite for risk of investing internationally. So there's this sweet spot that if the US is sort of doing fine, maybe up a little bit, maybe even down a little bit, but not particularly contributing to global cyclical volatility, the rest of the world probably outperforms. If we have a huge recession and a lot of volatility, then all bets are off.
That's the beta. Cool. Jerry, great to see you.
Thank you.
Thank you very much indeed. Jerry Fowler, Head of Global Derivatives and European Equity Strategy, joining us from the UBS Investment Bank. Quick look at the Core 6. This is what we are seeing this morning. As we've just been mentioning, ASML is front and centre, and that stock is down quite hard this morning, 1.75%. Luxury's having a fairly good day. France outperformance. Germany having a less good day. Let's deal with the details. Let's start with Johnson. Charlie Wells, over to you.
A very dramatic drop here, and we're seeing this on the back of that M&A announcement that came over the course of this morning that Honeywell would be buying Catalyst, an enzyme producer, by Johnson Matthey, but at a discount. And it's seeming like the market is not liking that discount, down 15% so far this morning. Again, Johnson Matthey is saying that they could offer back to shareholders some £1 billion, but it's seeming like that discount news is not coming strong through the markets. Let's flip and take a look at an opposite story that's post-NL. They had some very nice earnings out this morning. They're up over 1%. They projected a solid year going forward as well. That is assuming that de minimis rules, we know that there's a lot of tensions in trade this morning, assuming that de minimis rules do not have a negative impact on their business model. Let's again take a look at Enel, the energy company, because they had some solid numbers coming out talking about dividend growth, and we're now seeing them up over 3%. The company also talking about an ability to invest more in renewable energy. That seems like a story that the market is liking. A story that I think the market is not liking so much is SAP. That, of course, is that tech company. And this really brings together, SAP really brings together two of the difficult themes that we're seeing this morning on trade. Tensions about trade coming from the United States, creating, some turbulence between the U.S. and the EU, and also that tech story that you guys have been talking about, tech under pressure, given that apocalypse we've been seeing over the past couple of weeks.
Charlie Wells, thank you very much indeed on some of the stocks on the move in this Monday session. Coming up, oil dropping as traders weigh the Iran deal outlook. We're going to discuss the market with Angelina Balavina from Fitch Ratings. That is next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tomorrow, As affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Welcome back. It is 8:17 here in London, 9:17 in Paris and Frankfurt. And this is the picture across European equity markets right now then. Down by 0.3%. We saw some strength coming through during Friday's session. So if you put the 2 days together, we're not necessarily weaker at all. But the DAX is down by 0.7%, which is interesting. The fact that we are seeing more weakness coming through there in that export-heavy market. Let's have a look at the US futures picture. And we have, although actually it could be some of the tech names like SAP leading us lower on the DAX rather than the export story. Let's have a look at US futures, down by 0.5% on E-minis. The same thing applies about putting the 2 days together, guys. You've been mentioning a couple of times, but interesting that Nasdaq futures down by 0.7% ahead of those Nvidia numbers, which our guest was talking about earlier on.
Going to impact multiple markets. We'll keep an eye on what is going to happen with Nvidia later this week. Let's talk about what we're seeing in crude this morning. So oil is down. You could argue that what we are probably seeing this morning is an unwind of maybe some of the insurance that was bought by traders Friday. Do you want to carry risk over a weekend? Who knows what's going to happen over the weekend? Maybe you buy a little bit of insurance, bid prices up a little bit Monday morning. Maybe that comes out. But we still, I don't think, know what's going to happen next. Investors certainly weighing the odds of a nuclear deal between the US and Iran. We've got more negotiations on the issue expected later this week. But we've also got an awful lot of military kit in the region. Trump very much, again, appearing to threaten Iran, basically saying, make a deal.
They better negotiate a fair deal. They better negotiate. You know, the people of Iran are a lot different than the leaders of Iran. And it's very, very sad situation.
Angelina Valovina, head of EMEA Natural Resources and Commodities at Fitch Rating, joining us to discuss. Angelina, what do you think the market is currently pricing? What do you think is seen as being the kind of the base case, the most likely outcome vis-a-vis the Iranian situation?
Good morning, and thank you for having me on the program. So the oil prices are always volatile, but the current situation with Iran, also with the US tariffs, adds to this volatility. So during the last couple of weeks, the geopolitical risk premium increased to about $10 per barrel for Brent. And the Brent price went up from $60 at the beginning of this year to about $70 yesterday. We do believe that depending on how the situation with Iran will evolve, that will add to the volatility of the prices. But given that the market is oversupplied, it will keep a cap or a lid on the geopolitical risk premium. Our price forecast for this year is $63 per barrel on average for the year for Brent.
Okay, that just coming back to that kind of the market is capped. What we're also hearing is the fact that a lot of the oil at sea is currently sort of sanctioned and therefore may not make it to market. So maybe you can back that out of the current surplus that exists out there. There's also the question of if there was a prolonged conflict and we saw resources in the Gulf in other countries being hit, maybe that takes a significant chunk of available crude out of the market as well. How firm are you in your belief on that cap, the fact that there is a glut and it will limit the upside on the supply, on the price?
So it remains obviously to be seen whether diplomacy will prevail and tensions will subside. But if not, there are two potential key risks to the oil market. The first one, as you mentioned, is potential material disruptions in Iranian oil production. And the second one is the closure of the Strait of Hormuz. And again, we will need to assess the impact on the market through the prism of the oversupplied global oil market. So Iran is a sizable oil producer. It accounts for about 3.5% of the global oil production, and it produces 3.5 million barrels per day. It exports 2 million barrels per day. And despite the tight US sanctions, the supply of oil from Iran has been relatively stable. So potential material disruptions in Iranian oil production would add to price volatility. It would increase the risk premium. And we have already seen it because of the buildup of the US military presence in the region. However, as I mentioned, the market is heavily oversupplied. And that should limit this geopolitical risk premium, and also it will put a cap to the upside of the oil price. What do I mean by oversupplied? First of all, the spare production capacity of OPEC Plus is over 4 million barrels per day. Secondly, the global supply growth exceeded the demand growth last year, and we do expect this to continue this year. So last year, supply grew by over 3 million barrels per day. Demand increased by less than 1 million. So that's a significant increase to overcapacity. And then this year, we expect the supply to grow by more than 2 million barrels per day, whereas demand will remain moderate, or demand growth, less than 1 million barrels per day. So this will further add to the oversupplied market.
Okay, so you seem fairly convinced then that we do have this glut and oversupply situation in the oil markets. Thinking about the reaction function of the Iranian regime, Angelina, and knowing as you do about their reliance on the Strait of Hormuz themselves to export crude, what do you think, what would be the circumstances where we would see a shutting of the Straits of Hormuz, do you think? And what impact would that have on the global price?
There are maybe two ways of looking at it. If the Strait of Hormuz is closed, the impact will be significant because it is a very important artery for the seaborne oil transportation. Around 20 million barrels per day of crude oil and petroleum products are transported through the strait. And this is about a quarter of global seaborne oil trade and 1/5 of global oil consumption. Alternative routes are very limited. There are two pipelines, one in Saudi Arabia with capacity about 5 million barrels per day, and the second one in the UAE, it's about 1.8 million barrels per day of capacity. Therefore, if there is a protracted blockage of the Strait of Hormuz, there would be material repercussions for the market. Having said that, we don't expect it to be protracted. The reason being is that the strait sits at the intersection of multiple economic and geopolitical interests. So half of the oils which are transported or exported through the strait are from Saudi Arabia and the UAE, and the remaining half is from Iraq, Kuwait, and Iran itself. And then half of the exported volumes are directed to China and India. So if the closure is for a protracted period of time, it will have a very significant and negative impact on both exporting and importing countries, and that's why we believe that it's highly unlikely.
Angelina, just on the price view then, around, even if it is a temporary blockage of the Straits of Hormuz, what kind of pricing would you model?
So there will be an immediate reaction of the market, and it will be significant.
Yeah.
So the risk premium will go up quite substantially. But it will depend on how long it will remain closed. And then the market reaction will subside.
Yes. What is the ability for Venezuela to fill any gaps? Is there a bet by the Trump administration that Venezuela can add additional barrels to the market to counteract some of the pressure?
Not immediately. So the interesting story about Venezuela is that it has a very large reserve base. It's about 17% of the global proven reserves. However, it's a very small producer on the global market. It's less than 1% of the global production. So in the short term, it can increase the production by 200,000-300,000 barrels per day, but it's quite small within the context of the global oil market. In the long term, the production increase will be quite challenging because it requires quite a few conditions to be met. One of them is the development of the fiscal framework, which is relatively stable and support the investment in the country, in the oil sector, because the sector is quite dilapidated and it requires heavy investments.
Yes.
And the investments need to be attractive for international players to do so, because quite a few oil and gas companies burned their feet in 2007 when their assets were expropriated. So it's possible to increase production by 1.5 million barrels per day, but it would require a lot of time and it would require investments.
Okay. Angelina Valavina, head of EMEA Natural Resources and Commodities at Fish Ratings. Thank you. Coming up, as the US threatens military strikes against Iran, and the former UK ambassador to Iran will tell us what we can expect if a new conflict breaks out. We'll have that interview for you next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back. This is the opening trade. We are 30 minutes into the Monday session. You're seeing a downside pressure then, 0.3% across the regional benchmark. A little bit of concern, a little bit of anxiety. There is uncertainty then as a result of what we've seen on the tariff front. But it's the tech story that is leading the downside when it comes to Germany, with the story around SAP under pressure once again, of course, that major software supplier on the enterprise front. And you're seeing the DAX down 0.5%. Over in France, the CAC a little bit softer, just down 1/10. A similar picture of the FTSE 100, down 15 points so far. Banks and utilities amongst the leading gainers, and tech feeling the pain. Guy.
Show you some tech in just a second. 242 up, 339 down. Again, we talk about this kind of rotation that we're getting in the markets. You are seeing it cancelling itself out, and therefore at an index level, actually vol remains relatively low. But look at volume today. It is down by nearly 40%. I do slightly wonder, in fact, I'm very much wondering whether or not this is snow day related. It looks like the New York trading story could be disrupted quite heavily today by the weather. Feels like it's almost like a kind of US holiday today in terms of the volume numbers we're seeing. That would be typical of a national holiday in the United States. Let's talk about where we're seeing the leaders. Some of the energy names certainly on the move. You've also got some of the gold mining moves as well being watched quite carefully. So Fresnillo is up quite strongly today on the back of what we're seeing in gold. Enel is up by 3.5%. JD Sports out with numbers, returning money to shareholders as well, as a result of which that stock is up quite nicely. But the action is at the other end of the spectrum. I think more interestingly, we've got Johnson Matthey trading lower. Looks like the deal that it had done is going to be done at a lower price in terms of selling part of its business. And as a result of which it is down by 15% this morning. But look at the big two tech names out of Europe. ASML is down hard, down by 2.4%. SAP is down by 2%. SAP has dropped nearly a third from its highs to where it is now. Is there more still to come in terms of the downside on that stock? SAP currently trading at 170.52, Anna.
So tech in focus in the markets, trade certainly in focus, and one of the stories we're keeping a close eye on this morning. Senior US officials are saying President Donald Trump's tariff defeat at the Supreme Court won't unravel deals negotiated with global partners. US Trade Representative Jamieson Greer told CBS's Face the Nation that the trade deals remain in place and the administration will stand by them, expecting partners to do the same. Hungary plans to block every EU decision concerning Ukraine until oil starts flowing again through the Druzhba pipeline in Ukraine. Prime Minister Viktor Orban says, quote, no war loan can go to Ukraine until oil deliveries to Hungary restart. The pipeline system, which moves Russian crude to Hungary through Ukraine, was damaged in a Russian attack back in January, leading to a halt in shipments. US President Donald Trump says he is considering limited military strikes to pressure Iran into signing a new nuclear deal. Oil fell as investors weighed the odds of a nuclear deal between the US and Iran, with more negotiations on the issue expected to take place later this week. Tom.
Let's get more insights on that story. Joining us now for a discussion on the situation in the Middle East, Rob McCare, former UK ambassador to Iran from 2018 to 2021 and Chatham House Council member. Rob, thank you for coming in. What is your current best assessment as to what President Trump does when it comes to Iran?
Well, there is a feeling of inevitability about this huge military build-up, isn't there? But I would say that even at this late stage, President Trump's preferred option would be to get a deal and get him off the hook of military action. As long as that deal is better than what all his predecessors have got with Iran, and if you look at the words used by Steve Witkoff over the weekend about capitulation, I think that gives you a sense of what the US would want out of this, and I'm not sure that that is available from the Iranian regime.
Because there's a debate, isn't there, as to the nature and the contours of the deal, to your point, and as to whether or not it sticks firmly to the nuclear ambitions of Iran or starts to include things like the ballistic missiles and their support for proxies. Israel has a view on this. Do we understand what the Trump administration, how narrow they are prepared for this deal to be at this point?
Well, there have been conflicting signals from the Trump administration, of course, but I think that they probably would be prepared to do a nuclear-only deal if it was a really comprehensive one. That would be my estimation. And if you look at the sort of leaks coming out of Tehran about what they would be prepared to offer over the last few days, it's really where this negotiation you'd always expect it to go in an end state. It would be a de facto suspension of enrichment, at least for a period, and inspections, and the sort of things that Iran's prepared to give. But it's still, you know, it sounds like it would
This was the Obama-Iran 2015 deal, essentially, that Trump nixed, and now he's trying to revive.
So it would look like that, and I think that's why they would have to have some actual stopping of enrichment, you know, to a more comprehensive degree to get it. And I think that, as I say, that they are looking for Iran to capitulate. I think that the way that the president thinks is that with this much military force in the region, Iran will blink and they will cave to a really serious deal, which he can declare victory on. And I just don't think that's the way that Iran thinks. I don't think.
Why not?
Because I think for the regime, their whole ideological setup, and it's still being driven, of course, by the supreme leader, who is old and is unlikely to change his thinking, is about resistance. And so if they will see themselves as if they can do a deal that lifts sanctions and still come out with their heads held high, they would do it. If they are seen to surrender to the US, that really undermines the whole rationale of the regime. And they would probably see taking military strikes with the potential for that at least rallying their base, if not the wider population, as being a less bad option.
In the first option, how vulnerable do you think the regime would be? If you were to see that situation evolve, would they be a credible force still within Iran? There's been significant domestic pressure.
That there has, and of course they have a huge amount of domestic power, and as long as they have their core base loyal to them, they will be able to deploy more force onto the streets than unarmed demonstrators are able to do. So their ability to keep power domestically is still strong, but there are divisions inside the regime. There is an increasing lack of credibility as well as legitimacy, and so that sort of potential for political change, for change coming from within, is I think what we need to watch.
Yeah, that's a really interesting dynamic, because I was going to ask you, what role do the protests play from a US perspective? Because we have mixed signals there as well. President Trump saying sometimes help is coming, and at other times putting the focus entirely on a nuclear deal and not really talking about the protest activity. But is there something then brewing domestically that is worth paying attention to when it comes to the regime?
The regime is still looking very vulnerable, very paranoid, is doubling down and trying to just to maintain its power. And there are clearly divisions inside the regime about how they should go forward. But for the US, as you say, the choices are military strikes, if you're going to have military action, are you just going to do another version of what happened last June, take out the nuclear and ballistic missile programs, or are you going to do a really comprehensive military campaign that tries to topple the regime? And of course, if you deploy enough military power, you might collapse the regime, but you might also collapse the state. And at that point, the risks are obviously extremely high for the region, for the US, for escalation, and for the people of Iran.
And do we have a sense of what the end goal is here for the US? Because they have oscillated between talking about the human rights record on the ground and the protesters, and then also just focusing on the nuclear side of things. So do we have a sense of what it is that they want to achieve by the end of this?
Not really. I think that President Trump is keeping his options open, and I think, as I say, if he could get a nuclear deal that was perceived as a strong one, I think that would be a good option for not having to go to war. I think that there is a risk in just doing some limited strikes that then aren't seen to be helping the people inside Iran, because obviously there's a lot of pressure from Israel and from more hawkish voices inside Washington to try to topple the regime with military power. But the risks that come with that are considerable. So there's no really attractive options here unless you get that deal, and the deal just seems to be really, really a slim chance of getting it.
Rob, what are the Saudis, the Qataris and the Emiratis likely to be telling Trump at this point?
I think they're all going to want to try to avoid a military action that could just escalate and put them in danger. Puts them in danger both directly because of hosting military bases, also economically. You were talking earlier about the Straits of Hormuz, which is the threat that Iran's always liked to wave whenever this situation comes up.
Do you think that threat is real now?
I think they could do it. I think it's a very unattractive option, really, for Iran, because not only because it hurts their own exports, but because once you've tried it once, they will know that the US will have a counter plan, and it will involve clearing mines and probably taking out the Iranian Navy completely and a number of other things. So they will, once you've done that and then it's straits have been reopened, you've pulled that lever and you're then looking more like a paper tiger.
Is the real danger here you mentioned it earlier, a failed state in Iran? What does fragmentation look like, and what are the implications of it?
I think that's one of the biggest risks, and I think it may be a risk that the outside world needs to take more seriously, because if you look at the impacts that we've had from other countries in the Middle East that have degenerated into internal conflict and civil war. Iran is a much bigger country, it's 3 times the size of Syria in population, and the impacts in terms of regional stability and obviously extremism, terrorism, refugee flows, regional conflicts, because all of the neighbouring states would have an interest because of cross-border populations. So it could get very bad, and I don't think that's inevitable, but I think that if the central authority in Tehran did collapse, it's a very serious risk that you would see.
Who's the biggest power in that? Is it the army? Who is the most likely next force to run Iran?
So if there's a very chaotic situation and conflict inside the country, you'd expect that in Tehran, the IRGC, who already wield a huge amount of power, but quite a lot of it behind the scenes, you expect they'd probably step forward and take power more overtly. That's one quite likely scenario. But if they are weakened, distracted, decapitated by military strikes, and you see other parts of the country, with Kurds or Baluch or the Arabs or others wanting to run their own affairs more, you could see some quite serious geographical splits in the country.
Yeah, the IRGC doesn't sound much like the regime change that maybe some people have been suggesting. Will President Trump and his team be taking a slightly more positive read across from the more recent developments in Syria? Because yes, the history of that conflict is protracted and awful. But more recently, their experience of it has been, perhaps in their view, slightly more positive. Will they be looking at that as any kind of test case?
I think it would be a mistake to look at it as a test case because, of course, it's a very different situation because you had an organised militia that was holding part of the territory, which when the Assad regime weakened out and hollowed out and eventually collapsed, you had a force that could take over. And it wasn't a representative force, it didn't represent the whole of the country, but because al-Sharad took a fairly progressive view of saying, this will not be an Islamist regime, that's going to be sort of persecuting Alawites and the Shia. It has taken on the capacity to be a national government. Now, there isn't any equivalent to that in Iran, which doesn't mean to say that you couldn't get to the sort of outcome we'd all like to see, which is a more democratic, more representative government replacing this current regime. that's better for the outside world and better for the people of Iran, it just feels like the pathway to that is incredibly narrow.
Rob, the leader of Israel, Prime Minister Netanyahu, of course, was in Washington recently meeting with President Trump about this issue. Where do you think Israel sits? Does Israel want to see the US take decisive action against Iran at this point?
I think the answer to that is probably yes, and probably they would like to join in as well, I would have thought. And in terms of the risk we've just been talking about of a failed state in Iran, which is at one extreme end of the spectrum, now that's really bad for Iran's neighbours. It's really bad for Europe because of refugee flows. It's really bad globally in terms of security and the risks of extremism and terrorism. But it's probably not the worst outcome for Israel. So I think the way that they would see it would be that's not necessarily the worst thing that could happen.
Okay, Rob McCare, thank you very much indeed. Really important and valuable insights as we weigh up the potential options, or at least the Trump administration continues to weigh up those options. Thursday in Geneva is the expected continuation of the talks between the US and Iran. Rob McCare, Chatham House Council member and former UK ambassador to Iran. Coming up. According to research from Bain, the dry spell facing the private equity industry is now worse than the 2008 crisis. So just how much in terms of unsold assets is the industry sitting on? The answer when we come back. This is Bloomberg.
cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Welcome back. Now, before the break, we asked you how much, in terms of unsold assets, is the private equity industry holding on to? What is the value? The answer is $3.8 trillion of unsold assets. This is according to new research from Bain. Private equity returned fewer profits to investors for a 4th straight year as the industry sits on this huge pile of unsold assets and struggles then to raise money for new funds. Distributions as a percentage of net asset value remained at 14% last year. That's the second lowest level since the depths of the 2008 financial crisis. And the duration of the rut is even more severe than when private equity firms faced back then. The value of deals in 2025 did rise 44% from a year earlier, but that was fueled by large transactions, big ticket transactions, including the $57 billion take private of Electronic Arts. But still, that made little more than a dent in the industry's so-called dry powder or money available to invest. So a lot of dry powder still, and those assets still contained by private equity, struggling to shift them off their balance sheets, Anna.
Yeah, I like how we put the title in French. Very nice. Right, let's talk about some of the other things on our agenda for this week, Tom. EU lawmakers will be meeting 1:30 p.m. UK time, that is, to reassess the bloc's trade deal with the United States. More on that in just a moment. We're also listening out for Christine Lagarde speaking today. Tomorrow we get State of the Union. That's the big address we'll be watching for, which happens to fall on the day that will mark 4 years since the full-scale invasion of Ukraine by Russia, of course. Germany in focus on Wednesday, as it will be, in fact, in 12 minutes' time when we get the iPhone number. And on Thursday, we get a by-election in the UK and some inflation data out from various parts of Europe. Guys, but let's go back to the beginning of that list and talk about trade and where the trade story goes next.
It was quite a fun weekend, as everybody tried to figure out exactly what was happening. We basically are having an emergency meeting by the Europeans today as they try and figure out exactly what they do. The European Parliament's trade chief is set to propose for freezing the ratification process of the EU's trade deal with the US. That's until they have more details from the US side. The US side is basically saying nothing's changed. You shouldn't change your side of the deal. We've changed ours, but you shouldn't change your side of the deal. Let's figure out what is therefore going on. Our trade czar, Brendan Murray, joining us around the table. Good morning. What has changed?
Well, the tools have changed, but the tools are important. The Trump administration said repeatedly over the weekend that this will provide continuity, this will provide certainty. But if you're on the receiving end of those new tools, you really need some clarity, and that's why I think we're going to see the Europeans put the brakes on the process that they still need to do to fulfill its end of the U.S.-EU trade deal, and so they're going to need to talk to Jamieson Greer at the USTR to figure out how does this 15% apply to the most favored nations deal that we cut with you several months ago in Turnberry. So and the Europeans aren't the only ones who are going to want to try to figure out what those deals now mean in this new paradigm that the president has laid out over the weekend.
Brendan, is it about kind of getting more information from the Trump administration, or are they going to start to rethink whether or not they want to renegotiate these deals? I mean, if it's not the European Union, then maybe China, as it thinks about that visit from the president. How much leverage does China have at this point? It doesn't have an official deal with the US, but will some of these deals be reworked as a result, and how much leverage does China now have?
Well, one of the statements that came out on Friday that got overlooked was the one from the U.S. Trade Representative, where he said, these are the kinds of 301 investigations we're going to go after. It's going to be unfair pharmaceutical practices. It's going to be unfair treatment of U.S. technology companies. It's going to be a whole host of things.
It's a long list, wasn't it?
Digital services. This is a big area where the U.S. administration is listening to what big tech wants, and they want less regulation, less digital services taxes. So these particular 301 investigations are going to lay the groundwork for the new tariffs that are going to come. And whether you're in Beijing or in Brussels, you need to know what exactly, how those are going to land on your exporters.
Well, specifically for Brussels then, Brendan, I mean, that sounds bad for Europe, doesn't it? Or from a Brussels perspective, this sounds like a lot of uncertainty around how tech is going to be treated and what the response to European policy around US tech is going to be. And so I suppose, is that the argument for pausing? Because actually the tariff rates, the emergency tariff rates that have now been put in place don't look all that different from the deal that was struck at Turnberry, a little bit different maybe, and it's a lack of clarity. But is it the fear of what comes next around big tech that means that Europe pauses?
Absolutely. This is where the trade war that's mostly been fought in goods goes into the realm of digital services. The U.S. and the Europeans see things completely differently when it comes to regulation, taxation, and putting tariffs on digital services. And this is where the trade war goes digital.
Okay. Brendan, thank you very much. Brendan Merry, our trade czar, with that important update. So this is just one of the themes that we're dealing with this morning, the market impact, of course, of the chaos that the Supreme Court ruling has caused. Let's look ahead to other market themes this week as well. Adam Linton is with us from our Markets Live team. Adam, let's start with the trade narrative, or perhaps ask how long do you think this week this is going to be the key driver? Because we see some risk-off evident in US futures, but if you put Friday's session in there as well, we haven't moved all that far. I mean, how long is this going to remain a dominant theme, do you think, for markets?
Yeah, I mean, it's definitely something that's not going to go away. We've got a relatively light calendar this week, so it's obviously going to remain relatively thematic. It's just about how much noise we get in the interim. I think, Friday's ruling, raises a lot more questions than it answers. I mean, we know that the Trump administration is still, very strong on tariffs. We know that they have other tools at their disposal. So we've now just got this period of uncertainty. There's a lot of positivity. Some people are trying to impress that, the EU now has more, leverage in negotiating with the US. But I don't think that's necessarily the case, because if you're a European corporate, all you've got now is just a way more uncertain environment than you had, this time a month ago. And, we're kind of doing this on and off dance with this, EU-US trade deal. So it's really not providing much clarity at all. And then in the interim, you've got Trump going 10%, next day it's 15%. Who knows what he's going to do throughout the week. And we also, we don't know the composition of any future tariff measures he's going to take. I mean, if he goes to a more sectoral approach, as Brendan has mentioned, pharmaceuticals, tech, what do you immediately think of? You think of the EU. So I think, these trade tensions, in absence of any other, potential macro drivers this week, are going to be incredibly thematic.
Is NVIDIA going to save us from all that?
Well, it depends, doesn't it? Because it does have, huge macro consequences. Yeah. We saw, the US GDP forecast. A lot of that is very reliant on this AI data center build-out. So, if that's looking at, signs of wavering, that could be a perfect cocktail. We've got trade, we've got, negative AI. Then that all of a sudden becomes something, even more thematic. And, for US tech trade as a whole, yes, we're looking for answers. How much efficacy do we get from this large capex spending in the US? But a lot of the issues still aren't really going to be resolved this week either. There's still a lot of concern about AI adjacent companies. Who's going to be next in the firing line from some of these AI benefits? We don't know much more about this. And whilst there will be a floor for US tech valuations at some point, which will entice people, I still think that in the interim, people are going to be more favoured towards Europe to some extent, albeit, as we mentioned, trade is a big overhang. But Asia, we saw the price action overnight. Yeah. Hang saying that was up over 2%. So, and these are themes we've already seen throughout 2026, and I expect them to remain in place.
So, Adam, fold those two things together then. The trade uncertainty, the tech piece, and NVIDIA and the role that plays with that outperformance that we've seen year to date for European equities versus the US, and more prominently, Asian equities as well. I mean, does this accelerate that theme? Or does it undermine it because of your point about the vulnerability potentially of Europe?
Well, I think you may see a bit of an increased divergence between Europe and Asia here. If you're a European corporate, as I mentioned earlier, this is just heightened uncertainty. So you may get to a better end destination, but the path to get there is incredibly uncertain. Yeah. Whereas in Asia, we've seen a lot more winners. You've seen the effective tariff rate go down for India. We've seen it go down for China. China arguably has more leverage. So you may see an increasingly selective approach for equity traders.
Okay, need to be selective as maybe the US looks at those different sectoral tariffs. Adam Linton from Bloomberg's Markets Live team. We touched on the euro strength with our previous guest as well, 118. Yeah. They're talking about levels of 125. Maybe that's where the concern comes through. But how much strength do you get on the euro if you start to get these sectoral tariffs under these different tools that the administration has?
Let's see what the German data tells us.
Yeah.
Because that's coming next.
Yeah, it is, absolutely. And we get GDP the middle of the week. But yes, in 4 minutes, less than 4 minutes, we get the iPhone number. And some of the PMIs have been suggesting that we've seen an uptick in the manufacturing side, that the fiscal push in Germany is starting to push through into different parts of the economy. And so we're looking for any evidence of that. With that in mind, Clemens Frost is going to be joining the team in the next hour on the Pulse. So the IFO Institute president will be with the team. And Estee Lauder CEO will also be on the Pulse, not related to the German fiscal push, I don't think.
I very much doubt it. The US looks like it's going to have a very quiet day today. It looks like the weather's going to be a big factor in terms of what we see in terms of trade. You're already seeing that in the volume numbers out of Europe this morning.
That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Tariff uncertainty hits appetite for U.S. assets after the Supreme Court strikes down a key part of President Trump's trade policy. Donald Trump says he's still considering a military strike on Iran, with nuclear talks set to resume in Geneva this week. Plus, a powerful winter storm sweeping the U.S. East Coast has shut down the vast majority of flights from the biggest airports, including New York and Boston. So first thing is first, let's check on the markets. We're expecting a little bit of a volatile day. Again, trade jitters are definitely hitting sentiment. Look, stocks and the dollar seem to be falling amid all of this uncertainty over the scope of future U.S. trade policy. And that seems to also be clouding sentiment and raising the prospect of renewed volatility. Now, the tariff ruling is adding fresh uncertainty to markets that, frankly, have already been unsettled by concerns over artificial intelligence disruption, but also U.S.-Iran tensions. And then the other thing we look at, euro dollar 118.11, Germany, February IFO confidence, business confidence, that index coming in pretty much as expected, maybe a little bit higher at 88.6 instead of the estimated 88.3, and then expectations at 90.5. The European markets map, again, I guess on tenterhooks, trying to figure out and find out what happens with trade. If you look at the prospect for volatility, it's probably, if it's not today, could be tomorrow or Wednesday. We're just seeing the FTSE MIB and the IBEX getting some 0.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. is telling partners to honor bilateral trade agreements despite fresh confusion following the Supreme Court ruling against President Trump's so-called reciprocal tariffs. Now, the president is boosting the 10% tariff rate on all global trading partners, announced on Friday, to 15%. Joining us now is Hugh Gimber, J.P. Morgan Asset Management Global Market Strategist, and Brendan Murray, who leads Bloomberg's trade coverage. Brendan, count yourself lucky I didn't call you 5 times this weekend, because I was trying to figure out what was going on. I mean, what happens next?
what happens next is countries that have signed trade deals with the U.S. or in the process of working those through are going to reevaluate those. The European Union, in particular, today is going to decide whether they want to sort of put the brakes on their implementation or whether they want to push ahead. They have a lot of questions. There were some posts on social media that suggest that there's a lot of, as they said, chaos in the situation dealing with these new customs duties. And so we've seen the Indians have postponed their trip to Washington this week to reevaluate their deal. So the most important thing at the moment is these countries are saying, what do we still have a deal? And if we do, what are the new terms of it? And we're going to have to work those out. There's a whole host of other issues from the refunds to the political blowback in Congress. Will Congress try to codify some of these deals? But it's put a lot of things that we've seen play out over the last 10 months, called them all into question.
Hugh, what does it mean for the markets?
So here, I think the question is about the benefit of the rebates versus the extra uncertainty that the trade issues are causing. And for me, the latter wins. We already saw last year, CapEx outside of the tech sector in the US was down, which is a highly unusual thing to see outside of a recession. And if you're a business now, 3 days ago, you knew the tariff regime that you were working in. Now you have no idea what's going to come because remember, these are only in place for a maximum of 150 days. And then we are assuming that the administration will be following through with new tariffs, but those are going to be more country specific, more sector specific. So every business now is facing the question of, do I act and say, well, actually 15% could be a good number, and therefore I should be front loading, or should I be holding off in the hope of something better? That, for me, risks putting business activity on hold because companies simply don't know what's to come further down the line.
Does it have an impact on the more immediate term on inflation?
I don't think it really changes inflation or growth because we are assuming even if these rebates do get paid back to corporates, that there's going to be little feed through from corporates to consumers. Similarly on growth, you tend to apply a pretty small fiscal multiplier to any of these kind of business windfalls. So the base case remains unchanged, but what we've effectively done now is just widen the potential range of outcomes. For the Fed, I think they sit tight. For the data, we're not going to see very much of this over the next couple of months, which explains why the bond market hasn't really moved over the past few days, for example. But still, there's just a lot more now that businesses and investors are going to have to be grappling with as this really sort of creates bumps in the data over the coming months.
Brendan, was this a legal issue, or was this also Supreme Court that was largely appointed actually by President Trump pushing back?
Well, the Supreme Court's decision wasn't really a surprise. The real surprise was how forcefully the president, and immediately the president came back and said, and pushed back and said, you know what, we may even go harder with tariffs. And so the Supreme Court's decision, you know, it seemed like it upset President Trump. He almost seemed angry about it. He lashed out at them personally. It'll be an interesting State of the Union tomorrow night when the justices sit in the front row. And will President Trump call out certain countries, the ones that will be targeted by these new authorities, the 301s? We'll have to wait and see. But he and his trade team have said we're going to move, and we're going to move quickly to replace the tariffs that the Supreme Court has struck down.
I mean, of course, in the newsroom this morning, we're saying, look, if you're China, you're probably benefiting from this because you had higher tariffs. If you're the UK, you're probably a net loser on this because you negotiated 10%. Could this all change? Again, I don't know when you can actually take an educated guess on who's a winner and loser.
Yeah, I mean, it's not only the economic policy that took a hit for President Trump. It's this foreign policy. It's this tool of leverage that he's used against the European Union. Basically, every country that he's applied these tariffs to, he has said, if you don't do this, I will make the tariff even more damaging to you. That hasn't really where he will meet his match is with China on this, because China will look at this situation and go, we now have a lot more leverage than we did last Friday, and that the two leaders are going to meet in late March, early early April, and we'll see how President Trump wants to deal with China more than anything, more than all the others, and he's going to go in with less of a weapon and more of a sort of bureaucratic tool of tariffs than he had before.
Hugh, is there a danger that countries retaliate? This is what we hadn't seen in 2025, which is why, by and large, trade found its way to where it had to be. Could 2026 be different?
So the response we've seen so far has been very muted. You look at the EU's reaction. They're calling for clarity. They're calling for more guidance. Similarly, I think Brendan makes a great point. China is really in the box seat here. But generally, we've seen a very, very reluctant response from countries over the weekend to come out on the front foot. And I think understandably so, when you know, again, this is only a 5-month window where this is set in place before we're expecting further tariffs to come down the line. So it's very difficult at this stage for markets to say, okay, we can try and trade this as a medium-term theme, because this is all just another week where we simply come in on a Monday and everything's been thrown up in the air and you're trying to grapple with what the longer-term impact for corporates is going to be. The dollar, for me, is the most interesting market move here, because if you think about how the dollar could have strengthened, Supreme Court ruling to say this can stay in place. Well, previously that was viewed as a dollar negative story when these were first implemented. Now you have the Supreme Court overruling and the dollar saying, well, this is more uncertainty, therefore dollar down. We see the new path for the dollar as lower and think that last year was just the start of a multi-year trend.
Hugh, what did we learn? I mean, I remember, April 1st, Liberation Day, felt like it could have been the end of the world. And then the markets bounced back and everything was back to normal. How much does that inform the markets about how they deal with this?
Well, for me, the key reason why markets bounced back last year was because of the fiscal response. So the trade hostility from the US brought Europe together. We've seen it more recently in Japan. We've seen a stronger response from China as well. So this is why markets were able to look through that trade news. I think with this latest development in mind, one thing I'll be looking out for tomorrow evening is the guidance on more fiscal stimulus to come in the US later this year. We were assuming that ahead of the midterm elections, there was going to be another round of consumer-focused stimulus, potentially along the lines of a tariff rebate. I think that explains why Besant was so quickly to come out over the weekend and say, we are going to recoup all of the tariff gains that we thought we were winning before. It probably explains that 10 to 15% jump on Saturday as well, because in order to balance the US books, they need this revenue to be able then to boost that consumer spending position.
What are you looking after, out for? But apart from the State of the Union, there's also a big China trip, I think March 31st, actually, with the president.
I think and Hugh brought this up, the rebate, the refund situation is going to get very nasty. The Democrats over the weekend were already saying that these are going to be, the fact that the administration is kind of shrugging off the refunds and saying, oh, those are going to get bogged down in court, for months or years. I think President Trump even said, yeah, fine, well, those will be in court for 5 years. Those are going to be very difficult for the Republicans to explain away if the government has taken $170 billion worth of taxes from the American importers, that's going to be very difficult for them come August or September, when the 150 days runs out, to say, we still haven't gotten our administrative system set up to give you the refunds yet. There's going to be a backlash to that. There's going to be a price to pay politically, potentially, for the Republicans and President Trump.
Brendan, I mean, sector by sector, is that how we should be looking at it? I know I've had a couple of viewers, thank you always for sending me emails as well, saying, look, Gemini says that he could then roll over 150 and 150 days each time. I mean, the legality of all this, we just don't know.
Yeah, exactly. There were a number of legal scholars and economists posting on social media all weekend is maybe this Section 122 is even more legally dubious than the IEPA was, but that doesn't matter because you can litigate that for years, probably well past the 150 days. The basic understanding is that Congress will need to reauthorize an extension of it. And if you're a member of Congress, do you really want to be putting your hand up in favor of taxes on American importers 2 months before you face re-election? So that's going to be a sticky issue and something that the administration will want to get these other authorities out there so they don't have to deal with that eventuality come mid-August.
Hugh, I like the fact that you really pointed to dollar dynamics as one of the biggest things that you're watching out for. I mean, does the administration have a problem with too weak a dollar?
No, it doesn't, because you're coming from such a strong starting point. So even when you look at last year's move, the dollar still looks overvalued on most traditional metrics. I think actually a weaker dollar here for the US is quite a happy thing. It's enabling them to work towards that long-term goal of reshoring manufacturing. For Europe, maybe the question here is slightly different. Because although a weaker dollar is no bad thing, a much stronger euro for European officials has already been flagged as a concern this year. And we see really that kind of 120 number as the threshold beyond which the ECB would be getting much more nervous. So if there's one area where I think my thinking has changed over the past couple of days, it's about the outlook for Europe and rates as well, where this idea that the ECB has been telling us they're in a good place, we're on hold, nothing to see here for some time, you have to keep in mind the euro within that discussion. And if we do see this feed through into the euro pushing towards 120, I think we'll be quite quickly talking about the potential for another interest rate cut to come from the eurozone this year.
In the first 6 months?
I mean, it depends on the pace of the move. I suspect that's more of a second half story, but we've already had Friedrich Merz talking about this already this year. We've had several members of the governing council. And so clearly they're going to be wary of coming out too quickly to say, here we are looking to weaken our currency. But I do think that feeds through into the discussion as we push into the second half.
Hugh, before I let you go, on U.S.-Iran tensions, is there a potential, closing down the Strait of Hormuz would be a huge deal, which even the Iranians don't want to do. But is that a probability, or is that something that you have to game theory, or are you just looking at the price of oil?
Yeah, I mean, oil markets are clearly welcoming the rumors so far that we might be heading towards some kind of framework for a deal between the U.S. and Iran. I mean, ultimately, you think through the lens of the midterm elections, it is in the U.S. interests to not have an extended spike in oil prices. I think that has to be the framing for following all of this news, and therefore, even with the threats that we heard over the past couple of weeks, this was talk about a very, very targeted, very, very specific strike on Iran. I think a much more widespread and longer-term disruption is in everyone's interest to avoid, not obviously just because of the humanitarian aspect, but because of the pressure on U.S. prices that oil spikes would cause, and therefore, to Brendan's point, some of the challenges that could be facing the U.S. consumer.
But Brendan, given we do have the midterms, is it possible that the president actually cools off the trade if he sees there's too much disruption at the company level?
Yeah, exactly. This is the opportunity that President Trump has, is to take a more deliberate, slower, targeted approach to tariffs, and sort of pull back from the more disruptive approach that characterized the past 10 months. That could help settle things down. It could actually create more certainty if the administration does this in a sort of procedural way that people can see what's coming, what the tariff rates are, and who the targets are.
Okay, thank you both for getting us started this Monday morning. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, and Bloomberg's Brendan Murray, in charge of that little thing called trade coverage for us. Coming up, President Donald Trump says he's still considering limited military strikes on Iran if a new nuclear deal is not signed. We have the latest next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Tomorrow, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Now, U.S. President Donald Trump says he's considering limited military strikes to pressure Iran into signing a new nuclear deal. The statement comes as the U.S. and Iran are set to resume talks in Geneva, with the Iranian Foreign Minister Abbas Araghchi expected to meet U.S. Special Envoy Steve Witkoff on Thursday. Well, joining us now to discuss all of this is Bloomberg's managing editor for the Middle East and Africa, Paul Wallace. Paul, thank you so much for joining us. So first of all, how close are the U.S. and Iranian officials to find some kind of framework and negotiation for a deal to avoid the strikes?
It's very hard to tell, but I think the fact that so the U.S. has not yet confirmed that talks will be on Thursday, but both the Iranians and and Oman, which is the main mediator between the two sides, are saying Thursday looks likely. So I think the fact that they are going to round three is significant, and it suggests we are nearer to some kind of deal. It doesn't mean we will get there, and as far as we know, the Iranians still have to provide the Americans with written proposals. So the two sides met in Geneva last week, Tuesday. The conclusion to that was that Iran would give written proposals to the U.S. The U.S. would look at them, and then if they were satisfied, say, okay, let's go to the third round of talks. But if they do happen on Thursday, I think that's a pretty good sign for those who want diplomacy to work and want to avert strikes.
Paul, do you have a good reading of what the U.S. actually wants in these negotiations?
Again, a big question. Each side is saying slightly different things. The Iranians are saying we are only talking about nuclear issues. They're saying there's no way they will accept zero enrichment, i.e. they want to be able to enrich uranium at least to a small level. The Americans are still implying that the talks cover other things. They're implying that the talks cover ballistic missiles that Iran has and that are a big threat to other countries in the region, and also proxies. And they're also saying they won't accept any uranium at all. So it's quite hard to square these positions, but I think knowing what we did going into these talks, that's not such a big surprise. One way or another, if Trump wants a deal and the Iranians want it, they'll be able to square those positions somehow. It won't be a deal that, if they do get a deal, it's not going to please everyone. The Israelis are likely to be unhappy with it, but they may just get there.
I mean, do the Iranian side really feel pressure because of these potential strikes? And could it be like a Venezuela, like targeted strikes, or what do we know about the military implications of it?
So, yeah, the Iranians clearly feel the pressure on that. They're being pretty defiant, and if anything, they're in public, sort of staying quite calm in the face of this huge buildup of U.S. military forces, naval and air forces in the region. Interestingly, Steve Witkoff, who heads the U.S. delegation in these talks, spoke over the weekend to Fox, and he sort of said that Trump was a bit surprised that Iran wasn't showing more pressure in these talks, given that buildup. But it is there. However, Iran has a pretty high pain threshold, and it sees the war in June between itself and Israel and the U.S. as a victory. Now, for a lot of people, that seems absurd. It got absolutely battered, lost way more people than Israel did, but that's how Iran works. It sees that as a victory. It sees, and it has a fair point with this, it saw the U.S. as the one calling for the ceasefire at the end of it, not, Tehran itself. So, it has a high pain threshold. If it goes to war, it probably thinks that, it can drag it out for like a month, and, it will be thinking that will look bad for Trump domestically in the U.S. and all this.
So interesting. Paul, thank you so much. Paul Wallace there with the very latest, of course, on these talks, but also these potential strikes. Now, German business confidence brightened more than anticipated in February, adding to hope that Europe's largest largest economy is emerging from its malaise. Well, we're now joined by Clement Fust. He's president at the IFO Institute. Mr. Fust, as always, thank you so much for joining us. First of all, I mean, I guess we're in trade chaos, not really understanding what happens to this trade and tariffs from the U.S. What kind of implication does this mean for Germany?
Yes, it's a problem. So there are people who hope that tariffs will be lower in the future, but what's happening is that uncertainty increases significantly. There is now uncertainty about whether the US-EU trade deal will hold up, and that is, of course, a burden on the German export industry, and this is a problem.
So is the German recovery happening? Are you confident that the way from now on is up?
It is the case that the German economy is showing signs of life, but these are coming mostly from domestic demand. If we look at the companies reporting improved expectations and data, it's mostly companies related to fiscal stimulus within Germany, whereas exporting companies continue to have difficulties. So it's really the fiscal package that is producing some stimulus here.
When you look at some of the package, of course, as you're mentioning, on infrastructure and defense, how does that help this year, but also into 2027?
So what we expect is that it will help in both years. It will probably become effective in the second half of the year, but the 1% or so GDP increase we have in the forecast at the moment for Germany in 26 are mostly coming from this fiscal stimulus. And in a way, that's good because it's supporting the German economy. At the same time, it's a bit worrying because it's only driven by public sector demand. What we would like to see is an upturn which is broader, coming more from the private sector, from private investment, but that's not visible yet. Nevertheless, in 26 and 27, we do expect Germany to return to growth driven by fiscal stimulus.
Mr. Fust, when you look at weaker dollar, it means higher euro. How problematic is this for German companies?
It's not ideal. At the same time, one has to see that the US, for instance, has a share in German exports of 10%. That's significant. It's an important export market, but the most important market for the German economy is the European Union, and German exports are very diversified. So dollar weakness is unwelcome, but it's probably not the main issue we are facing at the moment.
Mr. Fust, when you look at some of the other measures that the government could be putting in place to really fully have the biggest impact on the economy, what would be your number 1 and 2 priority?
It would be to complement this fiscal stimulus with structural reforms, in particular reduction of red tape, a shift in energy policy to improve the efficiency of the energy systems, fiscal reform, tax reform. The tax burden on investment in Germany is the highest in the G7. Those would be the priorities.
Is there anything else that Europe could do to basically fully help? We talk about, also a higher euro maybe leading to a cut from the ECB. Could that boost Germany's growth a little bit further?
It could help. At the same time, the ECB needs to look at overall European growth and inflation. Of course, inflation is coming down, so there might be room for more cuts. But would they move the euro very much? I rather doubt it. So what the EU could do would be more on the structural side again, make sure that the Mercosur and India and more trade deals are coming along, and maybe getting back to liberalizing the European internal market. The EU with its internal market does have a growth machine, but it's not been used very much in the past. There are still barriers. So an agenda promising more economic integration within Europe would help Europe as a whole and Germany in particular, of course.
Thank you so much, Clemens Fuß there, the president of the IFO Institute, for a good, rounded conversation on Germany's economy. Coming up, we'll discuss the turnaround going on at Estée Lauder. Stéphane de La Faverie, president and chief executive of the company, joins us next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Tariff uncertainty hits appetite for U.S. assets after the Supreme Court strikes down a key part of President Trump's trade policy. Donald Trump says he's still considering a military strike on Iran, with nuclear talks set to resume in Geneva this week. Plus, a powerful winter storm sweeping the U.S. East Coast has shut down the vast majority of flights from the biggest airports, including New York and Boston. So one of the biggest names in the beauty business is in the middle of a corporate overhaul. The pressure is on Estée Lauder to improve performance after it warned investors that there was more work to do. And that's despite shares rallying over the past 12 months and the company beating expectations with its latest results, boosted by growth in skincare, including La Mer and The Ordinary, and fragrance, including Tom Ford and Le Labo. Well, I'm delighted to be joined by Stéphane de La Faverie, who took over the helm last year and has faced various challenges, including tariff and trade uncertainty. He joins me now. Stéphane de La Faverie, thank you so much, and welcome to The Pulse. There's just a lot going on. There's a lot going on in terms of tariffs, in terms of trade. I mean, you reported some quarterly earnings. Shares plunged, and that's despite actually a boost to the outlook. So how did you internalize that?
Well, thank you, first of all, Francine, for having me again. You know, when I laid the strategy a year ago, when we met of Beauty Reimagined, we made a set of promises. And what I'm very happy is that we've delivered on these promises, first of all. I think we've moved with speed on consumer coverage. We've increased our innovation dramatically. In this moment in time, consumer wants more innovation. We've promised that we would go at 25% plus of our sales coming from innovation. We've also increased our investment because it was needed for us to increase investment to reboost sales. And as a result, the first 6 months of our fiscal year, we've actually increased sales for the first time in 3 years. The last quarter, as you saw, we produced 4% organic sales growth, which is the first time in 3 years that we are in this position with many markets like China, in the US, where we are gaining share. So we have momentum. And that's very important for us. You said it, over the last 12 months, I think the stock price has recovered close to 50% of its price. And the interesting thing is, like, obviously, in the last quarter, there was a little bit of a dip, but the market reacts on the short term. We are looking at the long term, and I'm really confident that we are putting the right foundation for acceleration.
I know, for example, you gained share in volume in the US, but not so much in value. Is that because of prices? Are you more sensitive to price increases?
I think there is some, with the volatility that we're seeing around the world, we're seeing some consumer confidence being a little bit subdued, that it is in China, it is in the US. But for me, it was really important in the US, after many years of market share loss, that we could reignite recruitment. And that was the most important thing. And we're seeing the volume going up. Now, we have a pyramid, as you know, of brands, from La Mer all the way to The Ordinary, that allows us to just, like, capture this consumer. And The Ordinary has been a resounding success for us, like in the US and around the world, that is moving a lot of unit in this moment in time. So we are tailoring, depending on the consumer confidence in the different places around the world, with the portfolio of brand, again, from La Mer, of very luxury tier, and also brands like Tom Ford that you've mentioned, all the way to Estée Lauder, Clinique, and The Ordinary, where we have some great momentum.
So how consumers are buying differently in the US compared to, for example, China, where Asian travel is a little bit more subdued, except we did have, the Chinese Lunar New Year.
Yeah, no, it's interesting. I think historically, we've always seen consumer buying differently by category. We are in skincare, in makeup, in fragrances, and in hair care. Obviously, the East, China, and many of the other Asian markets are much more indexed in skincare. And the recovery that we're seeing this year, we've been able to post double-digit growth in the last quarter, actually 13% growth, shows the strong desirability of our brand, led by brands like La Mer and Estée Lauder, and even The Ordinary, that is only in its first year of launch. In the US, it's a little bit more balance between the multiple categories. And what we've seen is a very strong acceleration of skincare, especially at the entry price point, but also perfume, that has been a astounding category in terms of growth since, COVID.
Can you talk to us about tariffs and trade? I mean, we have all this uncertainty over the last 2 to 3 days. What does it mean for a company such as Estée Lauder?
Look, first of all, the news was announced on Friday, so we are monitoring a lot some of the decision. I think it's still too early to understand the impact, but I like to say we are entering our 80th anniversary. We are 80 years young, so we've seen a lot of volatility. We've seen pandemic, we've seen trade tariff. The good news is that we have a very well-diversified network around the world, from a supply and a manufacturing. We have 9 manufacturing sites around the world, 5 in North America, of which 2 are in Canada, 3 in Europe and in the UK, and 1 in Japan. That has allowed us to just use some of the trade tariffs in a way to our advantage, and really just be close to the consumer, because the strategy for us was always to manufacture close to the consumer, because we want to be the most locally relevant consumer company in the world, but also to be close to the consumer.
What can we expect in terms of M&A? Is there something that you want to get rid of, or are there targets that you'd like to acquire in the next 6 months to 12 months?
So it's a very good question, because for us, we are in a period of execution. It is very important that Beauty Reimagined, we are at the beginning of this journey. The first year we've delivered on our promises. The second year for me is about now accelerating the growth and making sure that we are simplifying the ways of working, we are rebuilding profitability, but at the same time we are looking at our portfolio. So we have, and I've been very public on that, so we are looking at the portfolio, and we will always be part of the M&A discussion. Like, if you look in our 80 years history, we've bought a lot of companies. Lately, obviously, The Ordinary and Tom Ford were part of it. But M&A is not only about buying something new, it's also about incubating new brands. And we are incubating a lot of new brands as part of DCM, or taking minority investment. One of the last one was Zinu, a really fantastic brand that we've taken a minority stake in Mexico.
Stéphane, when you say, we're looking at the portfolio, are you going to buy more than you're selling?
So the future will tell. We are constantly looking. But, as a CEO, I've been really committed that we are always going to be on movement. We have fantastic brands. Our top 7 brands, from Estée Lauder to La Mer, Clinique, MAC, Tom Ford, Jo Malone, and The Ordinary, are fantastic brands. And, the reality is, the market is changing. Consumer tastes are changing. And so we are looking in the current place in our portfolio. But again, it is going to be about organic growth and inorganic growth. I think the future is going to be about making sure that we are balancing both.
On Amazon, you were maybe a little bit slower than some of the others to get onto the platform. How are sales on that platform going, and what did you learn?
Well, fantastic. We love, first of all, the partnership with Amazon has been fantastic. And we are looking at Amazon more so as a marketing platform than only sales platform, because it allows us to just acquire new consumer, re-engage with lapsed consumers. Today, we have 12 brands in 10 different markets. So you noted that we were a bit slow, but on the execution in the last year, we've been really, really fast with great, great success. And the first brand that we've launched was Clinique over a year ago, and we've deployed many brands in many markets, and there's more to come.
So what did you learn about selling on TikTok? Again, is that different to selling on Amazon, to selling through your retail stores?
Yeah, I think on TikTok and TikTok Shop, you have to be on the trend. And this is what I love about beauty. You have to be there also to be in culture. And it's much more impulsive, but you have to be there, and it's usually what the strategy of hero product is what works. For instance, you look at MAC. We've just launched MAC on TikTok in the US with great success, and people lashing on the new innovation. So this is also one of the reasons why I've put the accent on innovation acceleration, because these new social media platform that is TikTok Shop, or you have Douyin in China and others, are really where consumers are discovering what is new.
But it also means it goes really fast.
It goes
I think one mistake, and it's I don't know whether there's a strike and you're out. Is it more like roulette?
Well, no, because I think today in the world of AI, we have a lot more information at the tip of our finger. We are harnessing millions, if not billions, of data points. And our role is to really listen to the consumer, but also to anticipate their need. So one of the reasons why I've put the accent of not only increasing innovation, but also to tripling the innovation that comes to market in less than a year is really also to just follow this trend. But at the end of the day, we have a lot of information that allows us to just increase the rate of success. And today, I can tell that in 2025 and in 2026, our rate of success on innovation is much greater than in the past.
On what exactly? Again, is it makeup, or is it skincare, or is it across the board?
Across the board. The one category that also allows us to just go faster to market is makeup.
Right.
But because skincare, you have a set of product that requires longer testing sometimes, but definitely makeup allows us to go faster.
Stéphane, what are you most worried about this year, and what are you most excited about?
What I'm most excited about is how our team came together, and we are in the midst also not only of the transformation, but establishing our new culture of one ELC. And this culture allows us to be bolder, to be more agile, to be faster, to be more entrepreneurial. And this is what I'm the most excited about, how the team is. What I'm worried about is the external environment. But all the time, you cannot control geopolitics. What I can control is how do we run our business? How do we react to anything that is happening out there? So honestly, I feel really good about the momentum that we're having, and I feel that we can really go and build on it and accelerate for the future.
How much time do you spend with your staff in actually explaining? I know, for example, after your results and the share price goes down, again, internally, did you spend a lot of time talking to employees, making sure that they were okay, that morale was still high?
I spend an enormous amount of time with my team, not only traveling, but also in town halls. I host, town halls every quarter with thousands of employees around the world. This isn't part of my mission. I've always been like that as a leader. I believe in close connection with the team, and this is why it is important in this moment to just evolve also our culture, because the success of the acceleration is also about the change and the evolution of the culture. The values of the Estée company are what they are, and they are fantastic. Again, 80 years young, of strong values, but we need to evolve our culture and to go faster, and that's also by touching and speaking to all my teams around the world, we have a fantastic team, we have a fantastic portfolio of brands, and I know we are off to a very strong acceleration for the future.
Anything particular in China for the next 12 months?
So China has been really good. Actually, I was with my team in China on the phone this morning, asking a little bit how things are going as we are finishing Chinese New Year. So I was trying to leave them alone during Chinese New Year, but very good. We are off to a very strong start of the calendar year after a very strong finish of last year. We're seeing a really strong acceleration. One of the things that is exciting for me is to just see how each categories are accelerating. Yeah. We're seeing perfume accelerating in China even faster than before. Historically it's been 60 to 70% in skincare. Now we're seeing also many other categories, and it's a country that is fascinating because you are balancing brick and mortar and online in a way that you can build experience in a way with the consumer that is like nowhere else.
Stefan, so the last question is on the hot new thing in makeup. I'm told 2026 is going back to 2016, so it's a lot of colors, a lot of outrageous things. How do you see this?
Well, I see it's interesting because 2016 was about bold expression of color, and 2026 is more about fun and expressive. And in that case, there's one brand like Clinique with Black Honey, which is a product that is decades old. I've always sustained the test of time, and you are seeing today this product being viral again.
Stefan, thank you so much for joining us. Stefan de la Favrie, their President and Chief Executive Officer of the Estée Lauder companies. Coming up, much of New York City has shut down as a big winter storm hits. We'll have the full details next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, in the U.S., 41 million people across the East Coast are facing blizzard conditions from a powerful winter storm. Most flights out of the region's largest airports have been disrupted. Schools are closed. Well, ABC's Lionel Moise is in New York City. Lionel, good morning. Thank you for being there. How badly has been transport and daily life been impacted?
Good morning. Yeah, this has been coming down very constantly. So they have been warning people to do what they needed to do and get off the roads. There is a travel ban that is in effect. It's been in effect since 9 p.m. and it lasts through noon. The conditions are bad. They have been around me plowing. You can kind of probably hear the plows in the background. As soon as they finish one plot, the snow has already covered it again. This snow is also falling, as you want to say, horizontally, which makes it very hard to see, even if you're just walking on the sidewalk.
Is the city well prepared, Lionel?
It seems like the city is well prepared. Again, we saw the salt trucks, we saw the plows out, but this is a very big city, and that doesn't mean that there won't be some issues. There's already been a snow plow that actually overturned on a highway, which led to a hazmat situation, which is another reason why they are just warning people to stay inside if they can. Kids in the city are a little bit excited because they do not have remote learning. It is an old school snow day, so they do not have to clock in. But that also is probably because the teachers and all of the staff need to take care of themselves as well in this weather. And again, the snow is supposed to remain constant throughout the day. We're going to be feeling these impacts at least through the afternoon.
I mean, I remember the snow days. It was the best. Lionel, talk to me a little bit about how much snow there is now. I think it's more than 20 inches, and how much more is expected.
Yes, we have been forecasting that it could be up to 24 inches for some areas. One town in Staten Island already got a foot of snow, and on average, we're seeing about 3 inches an hour, which really is a lot and hard to stay on top of, keeping the roads and the sidewalks clear as well. Very, very beautiful sight, but also very, very dangerous conditions to be in.
When are we expecting the airports to reopen? Is it too soon to know exactly when?
It is hard. We have people, lots of my coworkers are even stuck and unable to get back. A lot of flights have been canceled until at least Wednesday. The hope would be that Tuesday, some of those flights will still be able to go out. But of course, as we know, anytime something like this happens, there is a ripple effect, getting the pilots, getting the flight attendants to their destinations to be able to get those flights taking off. So some people will be stuck for a few days.
Okay, Lionel, thank you so much. ABC's Lionel Moise there reporting from New York City. Now, the dollar has dropped along with U.S. futures as uncertainty over trade policy dampens sentiment on U.S. assets and raises the prospect of heightened volatility across global markets. Let's bring in Ven Ram, cross-asset strategist at Bloomberg M Live for more. Ven, thank you so much for joining us. So what stands out to you from the market reaction this morning?
Morning, Francine. I think that the big discussion in the markets is about what is happening to the dollar, because if you look at the Supreme Court ruling and some kind of data that we got out of Europe last week, at the end of last week, actually, all of them portray a picture where investors wouldn't want to be long the dollar. That policy uncertainty is enough of a stopper. I mean, are the traffic lights green or are the traffic lights red in the US? No one knows, and that policy uncertainty is damping sentiment. But if you look at the euro area data out of last week, Francine, we got data that showed that the European Union current account surplus was almost doubled in December. So the European Union, in other words, seems to be benefiting from the policy uncertainty in the US, because the European Union, being a natural creditor, external creditor to the rest of the world, augurs well for the euro. And also the fact, if you look at the trade data that came out of the US last week, that showed that the trade deficit widened to $960 billion last year. That was the highest in decades. So this trade tariffs clearly are not working in favor of the US, and that reaction is impinging on the dollar's valuations today.
Ven, what does it mean for gold?
Well, I think that gold has short-term buoyancy because, what we saw in the past four sessions, it's surged 6%. And I think there is that short-term momentum that was desperately lacking after the January record. It was, for a point of time, both silver and gold lacked that short-term momentum to take it higher. But I see that momentum has come back into gold. So I think that, if the geopolitical tensions surrounding Iran escalate, and it may escalate over the weekend, if it does so, then I think that gold has further to go.
Ven, thanks so much. Ven Ram, their cross-asset strategist at Bloomberg. MLive, Ven was mentioning Iran. Well, U.S. President Donald Trump says he's considering limited military strikes to pressure Iran into signing a new nuclear deal. Well, joining us now to discuss all of this, Sanam Vakil, Chatham House Middle East and North Africa Program Director. Sanam, thank you so much for joining us. What do you think the end game for the U.S. is at the moment? Are we going to have something meaningful in Geneva on Thursday?
Well, good to see you, Francine. I think all eyes are on Geneva because the president has put down one of his deadlines. And it's clear that if the talks in Geneva do not produce a deal to constrain Iran's nuclear program, I think attacks are imminent. The U.S. has assembled the largest military deployment in the region since 2003. And all reports currently indicate that the U.S. would use strikes against Iran to pressure the Islamic Republic to make a deal. I think what's perplexing for the United States, and this was reported over the past few days, is that Iran, despite all of this military pressure, is still insisting on maintaining its rights to enrich uranium, and it is looking for a face-saving solution.
But Sanam, overall, would the U.S. actually want a regime change in Iran? It's unclear to me. Or to sign a deal, or would it be Venezuela style?
Well, I think, it's important to remember that over the past month, we saw protests in Iran. Those protests were deadly. They were the largest protests we've seen across the country, and the government responded in the most brutal way, killing around 7,000 people. That's what the number that's currently been verified. But despite this internal unrest, and despite the external pressure on Iran, the system and the state seems very much in charge. And so I think the Trump administration has recognized that this is not a copy-paste to what we saw at the beginning of the year in Venezuela. It's not as if you can take out Iran's supreme leader, Ali Khamenei, and find an internal replacement that will be more pliable to U.S. interests. And so they are playing out the diplomacy runway for the time being in the hope that they can arrive at a deal. It's really unclear if the Iranians are going to make the necessary concessions, and what Iran is seeking is a right to maintain enrichment for research and medical purposes, and what they need to compromise is substantial sanctions relief. And last summer, again, if you remember, the U.S. did strike Iran's principal nuclear facilities and buried much of its nuclear program. So, this is sort of where we stand right now.
Sanam, what can you tell us about the protests? I mean, does the U.S., want to limit the deaths because of the protests? Would that also push them towards a regime change?
Well, I think here, again, let me reinforce that regime change in Iran is going to be a much more difficult ambition. Donald Trump has criticized past American regime change efforts, specifically the 2003 Iraq war that was costly for Americans in terms of life and in terms of investment. What he seeks to do is use military strikes to pressure Iran to make a deal. He is not talking about necessarily regime change, but perhaps changing the regime. And that would come through maybe targeted strikes against Iran's leadership. But again, here, this isn't going to be a one and done. Iran has made it clear that it intends to respond and respond forcefully, attacking perhaps American partners and allies in the region like Israel, but also striking back against American military bases and infrastructure. So this really risks being much more of a deadly confrontation. Iran is certainly the weaker party, and you can see from the deployment of U.S. military assets in the region that obviously the U.S. has the staying power and the ability to pummel Iran quite seriously. But we just have to see if diplomacy plays out positively on Thursday and then reassess from there.
I mean, if there was a military strike, how much does this escalate, actually? Does Iran have the capabilities to fight back?
I think Iran would very quickly try and export the instability across the region. That is its only strategy. It would target, of course, I think, U.S. facilities, perhaps American partners, Gulf infrastructure, all to raise the cost of this war and try to bring it to an end as quickly as possible, and then return to the negotiating table.
Sanam Bakil, thank you so much for joining us. I was the Chatham House Middle East and North Africa Program Director. Up next, it's Bloomberg Brief. Vonnie Quinn is here in London, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade uncertainties, futures and the dollar dipping as the Trump administration regroups after the Supreme Court's decision on tariffs. Nuclear standoff. Washington and Tehran set to resume talks later this week in Geneva as President Trump is said to be considering a targeted strike. And all of that as the northeastern commuters in the United States brace for train and air travel disruptions from another heavy snow. Let's take a look at these markets because it is a fascinating reaction to the Friday Supreme Court decision. We are seeing futures pointed lower and nicely lower at that, but you have to remember that we finished the Friday session higher for the major averages. In fact, 0.6 and 0.9% apiece for the Nasdaq and the S&P 500. Let's take a look at treasuries because that universe really unchanged. I mean, we're talking about the difference of basically less than a basis point there on the 10-year as the market digests these tariff decisions. And wonders what come next, because after all, you have tariffs potentially getting reimposed by the Trump administration in the coming week alone. But what kinds of tariffs will be reimposed and how will they be reimposed? Will there be an interregnum period and so forth? All of that is yet to be decided. Let's take a look at some more assets on the move, because we have natural gas higher today on this snowstorm that is affecting the East Coast. It had been coming down after the previous snowstorm, but East Coast not so lucky. Then you have crude coming down a little bit because nothing is happening right now in Iran. Still, those diplomacy tracks are open. We'll see what happens this week and whether that moves the price of crude. Gold, though, on the tariff uncertainties, higher once again, headed back towards a record above $5,100 an ounce. All right, let's get to some individual market movers this Monday and over to Abir Abu Omar. Abir.
Hi, Vani. Let's start with two parts of the same story. Novo Nordisk is quite down in the pre-market today, but its shares in Europe are trading quite down as well. And that is because of two hot headlines that just crossed across the terminal that say that the drug that Novo Nordisk is developing has fell short against its rivals Eli Lilly. So you're seeing here Eli is doing quite well in the pre-market, up 4% versus Novo that is down over 10% over these disappointing results that investors are not looking favorably at. Moving on to a little bit of fashion again, we have VF Corp, that is the owner of Vans, Timberland. It is moving quite a bit towards it's moving a little bit down, 3.5% almost in the pre-market, and that is because of the tariff story that you have alluded to a little bit earlier. Now, we've seen this stock do a little better over the last 3 sessions in the U.S., but it's moved quite a bit in the pre-market on the back of those tariff announcements by President Donald Trump over the weekend. And then finally, we move on to Johnson Matthey, which is quite down in Europe this morning, over 15%, 16% at this point, and this is on the back of the Honeywell acquisition. Honeywell is buying Johnson Matthey for a discount from $2.4 billion value to $1.8 billion value, confirming a Bloomberg scoop from earlier. Vani, back to you.
All right, Abir is going to join us again a little bit later on in the hour. That's Abir Abu Omar. Also coming up this hour, we're going to be speaking to Stephen Major of Tradition Dubai on the market uncertainties, from trade to what happens next with Iran. But first, New York City in a state of emergency with 41 million people across the East Coast facing blizzard conditions. Lionel Moise of ABC News joins us now. Lionel, how bad is it out there?
Hey, Vani. Yeah, last time we talked and there was a big winter storm happening. It wasn't a lot really going on at the time that we had this live shot. The snow that you see behind me has been coming down constantly since yesterday afternoon, and it is expected to continue throughout the day. There is actually a travel ban in place in New York right now. It's been the case since 9 p.m. until noon because the conditions are so dangerous. They just do not want people on the roads. Snow has been falling up to 3 inches an hour in some places. One neighborhood in Staten Island already has a foot of snow, and we are nowhere in the clear yet.
Yeah, it's going to continue for hours, as I understand it, Lionel. What is the latest in terms of how long we should expect this to last, and whether it will stay on the ground afterwards like it did last time and become big blocks of ice in everybody's way?
I am really hoping that that will not be the case. We literally, you hear the complaints of everyone here in New York that the snow piles finally started melting, and here we are in this situation again. They are expecting things to ease up for us here in New York by this afternoon, but for some parts of New England, they will not get a reprieve until at least tomorrow. So this is going to be a ripple effect, and we're already seeing flight cancellations and delays, and that will be the case for much of the week.
Lionel, I can see that there is very little on the roads behind you. Does the travel ban continue? And what about schools? Do they remain closed if this continues?
So this is some positive news in all of this, but it also shows you just how serious the situation is. The last time we had a lot of snow, kids were put in remote learning. This time the mayor actually announced it by calling a student and letting them know that they have an old school snow day. There is no online learning. There is no logging in. School is completely canceled today. But I think that really shows the magnitude. They want to make sure that the teachers and the staff and the families can take care of themselves and keep themselves safe in all of this as well.
All right, Lionel, sorry you're out there once again, but I guess you have all the gear from the last time, so you just have to take it out again. That's Lionel Moise of ABC. Turning to trade now, the dollar on the decline as President Trump's recent tariff plan is renewing concerns. U.S. Trade Representative Jimson Greer spoke to CBS and separated the current trade deals from the planned 15% global tariff.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
Joining us now is Bloomberg's Brendan Murray. So, Brendan, we know the president doesn't like to take a loss. He is obviously going to want to retaliate in some way, not just against foreign countries, I imagine, but also somehow against the Supreme Court. What's the most likely path forward?
Yeah, we heard the president come out pretty aggressively right after the ruling saying we're not only going to follow through and keep up with tariffs, but we may even go harder with tariffs. So that raises a lot of questions, particularly and immediately with the European Union. They're meeting today to figure out whether to suspend their implementation of the U.S.-EU trade deal. There's a lot of questions on the European side. You've heard Ambassador Greer talk about continuity and certainty now. But when you're on the other side of that, it's anything but certain how the U.S. is going to apply that 15% global rate, and then add to it with other investigations. You've heard this, the 301 investigations. Ambassador Greer's statement on Friday said these kinds of these tools would be aimed at countries that don't treat big tech fairly. So that's obviously a shot at the Europeans. They're looking at mispriced pharmaceutical treatment with the relationship with the U.S. So the policy hasn't changed when it comes to tariffs, but the tools are. And these other countries, that some 20 of them that have negotiated at least partial deals with the U.S. Have a lot of questions about the details here before they carry
well, we
on.
know there's a plan B, right, Brendan? In fact, they told us there were plans B, C, D, E, F right before all of this happened. And Scott Bessent, also somebody who doesn't like to take a loss. What will be his preferred method for recouping the revenue that may be lost if indeed refunds do actually go out?
Yeah, the administration had a pretty interesting response. They kind of shrugged off the importance of the refunds and said, well, there may be a process for it, but it might wind up in litigation. So it sounds like the administration had a pretty detailed plan B if they lost on the tariffs, but they don't really have a plan for a quick operation to refund the $170 billion in taxes that they've collected from American importers. That could be potentially a political issue that the Democrats could grab onto and say, look, the president had just collected $170 billion in illegal taxes that they're now slow walking and giving back to you. So Treasury Secretary Bessent seemed to indicate that the refunds might be coming, but that's up to the courts to decide, and the Supreme Court didn't touch that issue. So it will be a lower court that does so.
It was not in the remit of this particular case, right? So I'm curious, let's say you're China. Just give us one example. You're China, right? You're facing huge tariffs. Now you're potentially facing a 15% tariff. When does that go into effect? And will we start seeing Chinese goods coming right back into the United States again?
Yeah, China is one of the big winners in this situation. They had these the 10% fentanyl tariff. That now goes away because that was under the now illegal authority that the president used. I think one of the big questions that we're going to have to see how it plays out is will American importers rush to buy Chinese goods again while this 150-day window is open, to get ahead of whatever tariff might come on top of that through these other authorities. Of course, we have President Trump traveling to China in a matter of several weeks now, and it will be interesting to see how the leverage that he's now lost with President Xi applies to the trade discussions that they're going to have. President Xi is in a much better negotiating position now that Trump doesn't have his favorite weapon of both economic policy and foreign policy, and China will surely take advantage of that.
And I guess the next move is in the administration's court at the moment. Brendan, thank you so much. That is Brendan Murray, our trade czar. Well, oil also lower this morning as investors weigh the odds of a nuclear deal or something else between the United States and Iran as the two are set to meet in Geneva. Joining us now is Bloomberg's Jumana Bersetti. Jumana, the market seems to think there's going to be a positive outcome, at least today. What do analysts and investors think?
Yeah, I mean, still, we're very much a region on tenterhooks over here. Perhaps some progress on the potential for a diplomatic window since where we were on Friday. But at the same time, the fact that you have such a huge military buildup of assets in the region, bigger than that prior to the the Iran-Israel 12-day war last year, suggests that military action is still very much on the table. But one thing that is new over the course of the weekend is the Iranian Foreign Minister Abbas Araghchi gave an interview to CBS News where he said that the Iranian side do plan on attending those negotiations in Geneva on Thursday, suggesting that perhaps there is still a window for diplomacy. We know that on the Trump administration side, Jared Kushner, his son-in-law, Steve Witkoff, have also been trying to push forward with a diplomatic solution. But of course, the question here is whether there actually can be a compromise between the two sides, because the U.S. have so far been insisting on a zero enrichment policy. The Iranians have said that it is their right as being part of the non-proliferation treaty to allow for a small amount of enrichment for civilian purposes. Whether the two sides can actually agree on to a small amount of enrichment remains to be seen. At the same time, the Iranian regime is under a lot of pressure, both domestically, externally, with that huge buildup of military presence, and they are aggressively lobbying for sanctions relief. So if there is a window for diplomacy, we probably have it over the next few days. But if not, then, as President Trump said last week, 10 to 15 days is the maximum he's willing to wait, after which the possibility of a military strike, either a limited one, quote unquote, or perhaps a more protracted a series of strikes in the region really becomes an option on the table right now.
Jumana, assuming the best possible outcome right now, I guess that means a nuclear deal in, return for maybe some easing of sanctions. Is that enough then, though? Is that the two parties happy for now, or is there more? Does the Trump administration want regime change eventually? Will the Trump administration listen to Israel and ask for more after this nuclear deal, assuming that this even gets done?
Well, I think you need to ask the question of what the U.S.'s end game is here, because the language that has come out of President Trump has indeed evolved over the course of the last couple of weeks. At the beginning, I remember at the beginning of the year, he was posting about help being on the way for the Iranian protesters, and that sort of morphed into the potential for military action directed at the regime itself. Whether they want to go as far as full regime change is a question mark, because it's not as simple as, say, the Venezuela situation, where you can remove one figurehead and then cut a deal with the rest of the regime. This is a revolution, the IRGC, a group that is comprised of more than 100,000 combatants, ideologically very much opposed to the U.S. There's still very many hardline people in the regime that would be very much against cutting a deal with the U.S. on the principle of ideology. So again, very tricky at this stage to see what exactly the U.S. has in mind, and also what the unintended consequences of military action could be.
Exactly. Well, first things first, we'll wait for the outcome of the Geneva talks. Bloomberg's Jumana Bersetti, thank you so much. Now, to other top stories trending on the terminal this morning. Mexican authorities have killed a top drug cartel leader in a military raid in the western state of Jalisco. The government says the leader of Jalisco New Generation, known as El Mencho, was killed along with 6 cartel members. The operation used intelligence from the United States and comes as Mexico continues to be under pressure from President Trump to halt the flow of illegal drugs. Private equity returned fewer profits for investors for a 4th straight year. The industry sat on $3.8 trillion of unsold assets and struggled to raise money for new funds. According to Bain & Company, the distributions as a percentage of net asset value remained at 14% last year. That's the second lowest level since the 2008 financial crisis. And Johnson Matthey shares sinking after Honeywell cut the price it's paying for the UK company's Catalyst Technologies business. The US industrials conglomerate reached an agreement to pay $1.79 billion for the business. Honeywell had been considering walking away from the deal. Coming up, last week's anxiety surrounding Blue Owl's move with one of its funds rattles the private credit markets. More on Bloomberg's Big Take next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Our big take over the weekend. Concerns over the $1.8 trillion private credit market brewing after Blue Owl shuts down one of its funds. For more, Bloomberg's Silas Brown joins us now. So last week, Blue Owl shut the gates on a private credit fund. It had been seeing redemptions, also losses. Was Blue Owl forced to do this, or is this management saying, okay, if you want out, get out?
Yeah, look, I think the story is symptomatic of broader jitters in private credit, and I think Blue Owl, as our piece demonstrates, is the kind of poster child of this heightened jitteriness. I think with this fund in particular, look, it was a legacy instrument. They had considered merging it with a public vehicle that was scrapped as though investors kind of balked at that. They had different options of doing it, and they decided on this option of selling assets, and then they sold assets at quite close to par and then distributing cash to investors. The public stock market reacted quite negatively toward that, and we'll see how the investors in the fund respond over the next few weeks.
Look, you know what you're getting into with private equity and private credit, right? Your money is supposed to be locked away for a certain amount of time. If retailers want their money back all of a sudden, doesn't that go against all of the covenants and all of the rules and so on? And will there be a liquidity problem?
Yeah, so I think institutional investors very much understand that this is a kind of long-term play, and I think I'm sure a lot of retail investors understand that. But I mean, if you want the kind of forbidden fruit of retail money, I think you're going to have to answer some liquidity questions. And with private credit, it's a liquid asset class. You can't really trade out of it very easily. I mean, the debt specifically. And so there's obviously going to be concerns around liquidity. And I think this is an example. There are other examples of this being an illustration of that liquidity problem.
Silas, we have to leave it there, but there are so many more questions I want to ask, so I would urge everyone to read The Big Take. That is our Silas Brown there on today's Big Take. Coming up, DHS reversing course on suspending TSA pre-check. More on this and a look at what else is making headlines in your front page news next. This is Bloomberg.
What's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in London. Time now for your front page news. And first up, the Financial Times reporting Jamie Dimon is looking to persuade JP Morgan investors that spending $2 billion a week is necessary to drive the bank's future growth. Dimon previously told shareholders to trust him that the investment would pay off. JP Morgan will hold a slimmed-down analyst and investor day after market close today. JP Morgan has declined to comment. Next up on the New York Times, The fatal shooting of an armed man at Mar-a-Lago by law enforcement officers, including the Secret Service. The local sheriff identified the man as 21-year-old resident of Cameron, North Carolina. The Secret Service says he was carrying what appeared to be a shotgun and a fuel canister. The president was hosting governors at the White House over the weekend and was not at his resort. He hasn't commented on the shooting. And finally, the Washington Post reporting the Department of Homeland Security reversed course on suspending TSA pre-check after discussions with the White House and TSA. This as the partial shutdown of DHS operations continues, stemming from that standoff, of course, in Congress over the appropriations bill. Now, the global entry program will remain paused. Coming up, we're going to catch up with Stephen Major of Tradition Dubai on the removal of tariffs and all of the potential impacts on inflation. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10 a.m. in London, with 30 minutes after that, 10:30. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade uncertainties, futures and the dollar dip as the Trump administration regroups after the Supreme Court's decision on tariffs. Nuclear standoff. Washington and Tehran set to resume talks later this week in Geneva as President Trump is said to be considering a targeted strike. And all of that as northeastern commuters in the U.S. brace for train and air travel disruption from another heavy snow. I also want to bring you a headline that just crossed the Bloomberg now. The European Union poised to freeze the ratification process of its trade deal with the US. It's looking for more details from the administration on its new tariff program. That just crossing the Bloomberg. As you can see, futures are lower. They had been lower all day. Interesting because Friday we actually finished higher on the major averages even after we got the SCOTUS decision. So we were up 0.6% and 0.9% almost on the NASDAQ 100. Let's take a look at treasuries. Not much movement there. We're still range bound, probably waiting some more data, but also waiting on some clarification because there's lots to be had, including obviously the EU looking for clarification now as well. The 10-year yield just barely, not even a basis point, moved at 407.68. And then let's take a look at some other asset classes. Natural gas obviously moving higher on this shocking blizzard that's ripping the eastern United States. Crude oil a little lower, down about 40 cents. Not too much jitteriness in the market about an Iran strike, at least in the immediate term. But the tariff uncertainty injecting some enthusiasm into the gold market once again. It's back to approaching its record above $51.50 an ounce. Let's get to some individual movers now. And for that, we go back to Abir Abu Omar. Abir.
Good morning, Vonnie. This behind me is the battle of the weight loss drugs. And you can see one is losing, one is winning. And this is on the back of Novo. Two hot headlines just flashed across the terminal this morning. Novo saying that its weight loss drug Cagrisima has fallen short compared to its rival at Eli Lilly. So you see Eli Lilly is gaining nicely this morning. It's pairing some of those gains from earlier. It was up more than 4%. Novo Nordisk adding to the pain, more than 13% down in the pre-market. It's already trading in Europe as well, and it's down as well. So Novo really needs to be winning this weight loss fight, but the news from this morning doesn't suggest it is. Moving on to the tariff story that you have mentioned earlier. Now we've got some winners and losers when it comes to the asset classes. Gold and silver metals are gaining this morning, but when it comes to some stock, VF Corp, that is the owner of Vance, Timberland, and it's moving down this morning. 3.5% loss in the pre-market this morning, and that is on the back of this tariff uncertainty. So it was up in the 3 sessions leading to Friday last week, but over the news that we saw over the weekend with President Donald Trump's comments on the addition of tariffs, these VF Corp and similar stocks are moving downward. And then finally, this is already trading in Europe. Johnson Matthey is down substantially this morning, almost 17%, and that's on the back of Honeywell saying that it will acquire a unit of Johnson Matthey for a discount from a deal that was announced earlier. It was supposed to be over $2 billion, but now it is at $1.8 billion. So investors are not looking very favorably at that news from this morning. Vonnie, back to you.
All right, Abir, I have a feeling it's going to be a pretty churny type of day. That's Abir Abu Omar there. Trade uncertainty then back in force in the market. A slight bid into treasuries today, very slight, though we're still seeing range-bound yield curves. Crude lower, even with the threat of Iran strikes. Stephen Major of Tradition Dubai has been saying crude oil may determine the Fed's next move. He also weighs in, though, on the latest trade headlines, writing, quote, in theory, there would be a disinflationary impulse from the removal of tariffs of up to 1 percentage point on the CPI. But as we have seen, it's a lot more complicated. Stephen is a global macro advisor and joins us now. Yes, it is, and it's getting more complicated by the minute, Stephen, with this headline now that the EU is set to freeze the US trade deal and approval over any tariff risks. So legislative work stops today. In other words, it's complete chaos. Do we even know what it would mean for imports and exports to and from the European Union?
Yeah, it's complicated, and that's an understatement, Vonnie. It's about what companies think about this this complicated backdrop, and whilst the headlines tend to talk about countries and their responses, and right now we're thinking about what the EU is doing with this and perhaps what China might do. It's really down to the individual companies, and the majority of companies in the US are small. So it's complicated, yes. And I think that the only thing you can say here is that whilst we know if you were to remove tariffs, it would have a disinflationary impulse, that isn't happening right away. So what you have is this uncertainty, and uncertainty means deferral of decisions, and that's not good for growth. And just think about this, Vonnie. Coming into the weekend, we already had evidence of softening GDP, weakening sentiment. So this just underlines what I think is a trend towards weaker growth, and it's really helping to stack up the potential for rate cuts in the second half of the year.
Right, but then why are we not seeing more of a bid into treasuries given the uncertainty, Stephen?
Well, that I think it sort of answers itself, because if you've got uncertainty, you can trigger a flight to quality. And at a time when on some valuations stocks look expensive and bonds don't look out of place if the yield's above 4%, then it's hard to say that they're rich at these levels. Then there is a flight to quality happening. But markets are forward-looking, and I think that in general the markets are quite comfortable with the idea that the policy rates aren't coming down now or in the next few months, but they're also starting to think about the possibility that they could come down quite hard and fast in the second half of the year. And the way I like to describe this, Vonnie, is if markets are pricing 2 cuts for the second half of the year, maybe that's the same as saying a 50% probability of 4 cuts. And you know, a 50% probability of no cuts at all. That's all it is. And at the moment, the balance is tipping towards perhaps more rather than less.
Hold that thought, Stephen. I want to come back right on that point. First, though, we want to get an update on weather conditions as New York City stays under a travel ban and cancels schools. Lionel Moise of ABC News back with us. Lionel, I don't suppose it's got any better in the last half hour. How are conditions out there?
They're not improving. Since we last spoke, we are seeing the snow. It is getting thicker. It is more dense. The wind is blowing more. It is very difficult. There have been crews who are trying to keep this sidewalk behind me clear. They are literally going back over the same spot every 5 minutes, and before they finish one little path, it is covered again. These conditions are expected to be very dangerous for people driving in New York and all along the Northeast. They are warning people to stay home if they do not need to be on the roads, so essential people can be out and the crews can keep our area safe.
Yeah, I mean, conditions like these are so rare. Even that storm a couple of weeks back doesn't seem to have been as bad as this, right? At least then there was remote schooling. As I understand it, there's no schooling today.
Yeah, there is no school at all. It is an old-fashioned snow day, so the kids are very excited about that, but I imagine they will be outside with their parents shoveling all day because this snow is really just not letting up. This has been constant. The last snowstorm that we spoke about, there were some breaks during the day. You can see behind me, even keeping our equipment and our camera safe has been an issue. Things are just blowing all over the place.
And, of course, flights stopped, right? Lionel, it's going to take a few days for that to recover. Do we know what airports are suggesting in terms of when they might be able to receive incoming flights again?
Yes, customers are already being contacted, and a lot of airlines are doing those travel waivers. Tuesday is a hopeful guess for a lot of people to get out of those flights, but we know that there is always a ripple effect. So even if the weather lets up, it'll be Wednesday or Thursday before a lot of people probably are able to leave. There are also going to be pilots and flight attendants who are stranded in destinations because of how widespread this storm is as well.
Yeah, a huge operation to get things back to normal. Lionel, you are getting pelted with snow flurries. Sorry about that, but thank you so much for bringing us the latest. Lionel Moise of ABC News. Back to the markets now, and Stephen Major of Tradition Dubai, where he is for us. Stephen, you mentioned the Supreme Court case and all of the uncertainty it's injecting and so on. I'm also curious, though, this is the first time that the Supreme Court has actually pushed back on the unitary executive, right? The idea that President Trump has sort of powers to do lots of things. Does it make more likely that we will not now see the removal of Lisa Cook, that Jerome Powell will not be messed with, and that maybe even Kevin Warsh will be able to be more of his own man, depending on what that may be, if he becomes Fed chair?
That's a really interesting way of thinking about it, Vonnie. First of all, the Supreme Court's not finished, and we've got 2 more dates this week, in fact, so more detail is going to come through. I think that we might want to say that this could be us starting to hear the death knell of the tariffs. It could be the beginning of the end of the tariffs, right? So I think that that's reasonable. As regards the other legal steps, and you're talking about the Fed here, I think that's very separate. But it's a reasonable point to try and connect the fact that the checks and balances are actually kicking in the US.
Can I also ask you about the Yale Budget Lab projections, right? So basically all the negative effects of the tariffs, as it understands it right now, they're being halved. So unemployment will be 0.3% higher as opposed to 0.6 and stuff. But will all of the impacts be less negative, or will there be some more negative impacts if the tariffs come off?
Look, it's difficult, but it strikes me that if you remove the tariffs, it's unambiguously disinflationary. So if the tariffs added up to 1% to the CPI, then that starts to wash out through time. There's a negative impact in terms of the deficit, but the amount we're talking about here is $100 billion or so, and as you rightly said, it could be a partial refund, but who knows? I mean, it's going to take some time, and I think that the only really strong conclusion from this, Vonnie, is that it just increases uncertainty. Uncertainty means deferral of decisions, and that tends to favor bonds, I think, over risk assets.
So favors bonds. What about the dollar? We're seeing a decline, or a give back at least, of some of the recent gains. Not by a huge amount, though. We're talking a 1/4 percentage point on the BBDXY, but it's benefiting everybody else. The yen, sterling, Canadian dollar, everybody.
Yeah, you're right. So the dollar is down quite a lot from 1 year ago, but don't forget this all happened through March and April, really. And since then, the DXY has been in a bit of a range. If you look back over 5 years, the dollar is not actually down. So I think that whilst it's true to say that there are some diversification flows, they always are, by the way, it's not correct at the moment to be talking about a secular decline in the dollar. Way too early for that, and no evidence of a de-dollarization. So yes, it's not good for the dollar on the surface, but that's mainly a cyclical factor, talking about the growth decline.
Stephen, always such a pleasure to speak with you. Thank you very much. That is Stephen Major of Tradition. Now to other top stories trending on the terminal this morning. Mexican authorities have killed a top drug cartel leader in a military raid in the western state of Jalisco. The government says the leader of Jalisco New Generation, known as El Mencho, was killed along with 6 cartel members. The operation used intelligence from the United States and comes as Mexico continues to be under pressure from President Trump to halt the flow of illegal drugs. Morgan Stanley Investment Management is adding bets on emerging markets without AI risks. It's favoring sectors with limited correlation to AI, including healthcare and commodities. It's also seeing opportunities in frontier economies, which are driven by domestic reforms rather than global tech flows. And Johnson Matthey shares sinking after Honeywell cut the price it's paying for the UK company's Catalyst technology business. The US industrials conglomerate reached an agreement to pay $1.79 billion for the business. Honeywell had been considering walking away from the deal. Coming up, the EU set to freeze the approval of its trade deal with the United States as it awaits more details on the Trump administration's new tariff plans. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
President Trump's new tariff plan bringing fresh concerns on the current trade deals already in place. Bloomberg just reporting that the European Union is set to freeze the ratification process of its trade deal with the United States while it seeks more details from the Trump administration. Joining us from Washington is Bloomberg's Kasia Klimashinska. Kasia, does the Trump administration know how to answer the European Union, or is it also waiting on appeals and other court decisions?
Hello. So this is the strongest reaction yet that we saw from the U.S. trading partners to the Supreme Court decision on Friday, striking down U.S.'s global tariffs and to this new 15% tariff that President Trump announced on Saturday. So the EU today said that it will most likely slow down the ratification of the EU-U.S. trade deal, and it's very likely that other trade partners will follow. We already know that India has canceled a trip that they planned to D.C. this week to negotiate their trade deal. President Trump hasn't spoken about the EU's decision yet today. He has posted very little on Truth Social so far today, but it's still early. But as you mentioned, some of his representatives hit the TV networks, but also the phones over the weekend, trying to reassure the U.S. trade partners and seeking to reaffirm the trade deals that President Trump struck after his April global tariffs, but before the Supreme Court decision.
So what about the idea that he can tie it to the payments crisis? I mean, he's going to be giving a State of the Union address. He's obviously going to be angry. He had been promising tariff dividends to the American public. How does he somehow convince Congress that it's a crisis?
This is a very good question. So after the Supreme Court took away from Trump this ability to impose really any tariff at any country for any reason, President Trump used Section 122 that perhaps we all have heard about for the first time. This tool allows President Trump to impose tariffs, but only for 150 days. And the reason for this might be a significant global crisis of payments, which there isn't any. So that's why economists around the world are questioning this ability. And anyway, it's short term. After that, Congress would have to pass legislation that would put those tariffs in place. So this is a difficult situation for President Trump, and coming again before his State of the Union address tomorrow evening, we know that President Trump was planning to talk about affordability, perhaps promise those checks from the tariff revenue to go to American people. This is all now in limbo. We don't know what exactly he will say. He will probably focus his attacks on the Supreme Court.
Yeah, exactly. Turn to domestic foes, if you like. Kasia, thank you so much. Bloomberg's Kasia Klimaschinska. Now, to the world of private equity, the industry has returned fewer profits to investors for a fourth straight year as it sits on nearly $4 trillion of unsold assets. That's according to a new report by Bain. For more, Bloomberg's Tom Metcalf joins us now. Look, all these assets don't need to be classified as unsold, right, Tom? I mean, of course they're unsold until they're IPO'd or sold off, but it's not always the goal to sell them quickly, is it?
No, absolutely not. I think the challenge here is this is kind of an ever-extending trend. And, you know, the hard thing here is, you know, that the prime moment for a private equity firm to sell is really within those 5-6 years. That's kind of how the, you know, all the sort of valuations, all the returns work. So it only becomes harder. And I think the other troubling thing from this report is this is coming after a year, you know, a pretty strong deal-making year. Actually, I think the number of private equity exits were up 44%. But it's just such a big number of those assets, nearly $4 trillion, that it really made little of a dent. And I guess that's the problem, is at least maybe the traditional model of private equity is harder to pull off at the moment.
I mean, I guess it doesn't help that the likes of Stripe stayed private and the likes of Anthropic and OpenAI and all these massive companies that seem to be just able to get money without ever, you know, being sold off or doing IPOs or what have you. But can we break these $4 trillion of assets into AI and non-AI related companies, or are there better ways to divide them?
Yeah, or software, right? Yeah, I mean, I think no one's quite got the visibility across that. Probably be a very powerful tool. It's something we're looking into because obviously you'll see certain sectors suddenly under pressure. For example, from, you know, the rise of AI, software companies now much less valuable, and they may well be sort of stuck, to use that word. So, you know, I think what will be interesting is something really needs to shift for this whole dynamic to change, i.e., you know, interest rates. You know, private equity firms would love them to go lower. That makes their business models a bit easier. Or fundamentally, you know, private equity need to do what they're, you know, meant to do, go grow those firms. But the longer they hold on to them, the bigger those growth rates need to be for them to make a good return.
There we go. Only the best will survive. Tom, thank you so much. That is Tom Metcalf there on this private equity. $4 trillion in assets sitting around. Coming up, we'll get you set up for your trading day. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Now we'll look at what's ahead this week. Fed Governor Christopher Waller speaks at the NABE conference. That's at 8:30 a.m. Eastern. And then on Tuesday, President Trump delivers the State of the Union address. Wednesday, of course, NVIDIA reports earnings, the big kahuna, as they say. Let's take a look at the macro environment as we head into the trading day, because, of course, there will be all sorts of trade ramifications throughout the day, no doubt. Every little comment will probably see a twist in this market in response. For now, futures are pointed lower, though they're off their session lows. The dollar index is also off its session low. All the other currencies are benefiting from this bout of weakness in the dollar. And really not much movement, almost barely a basis point in the 10-year yield. It's trading at 407.30 now. That's it for Bloomberg Brief. Surveillance is next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up
up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
There's not really a set way to refund these tariffs, given how big the amount of money is.
Our thought is that the tariff regime will continue.
At some point, all these tariff discussions will be settled.
The court might change the process. Tariffs are here to stay.
Tariffs are an important tool that are not going away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance as we all sled to work here in the Northeast. U.S. futures and the dollar dipping following Friday's Supreme Court ruling on tariffs. Asian markets getting a boost. Investors seeing China and India as the biggest beneficiaries, and a big week ahead led by President Trump's State of the Union speech tomorrow. Expect a lot on tariffs and the Supreme Court, as well as NVIDIA earnings on Wednesday. The focus this morning very much on tariffs, as maybe, Anne-Marie, peak uncertainty is still getting with us.
There's a lot of uncertainty right now when it comes to the trade policy out of the United States. Even we saw that over the weekend. It went from 10% using a different authority, given the fact the Supreme Court struck down IEEPA, to then 15%. And this is only being used for 150 days. So we need to wait for the administration to come out with what is going to be the next avenue to legally justify these tariffs. In the meantime, everyone's asking questions about refunds, and you have things like, entities like the European Union saying, well, for now, we're going to take a pause because we need more clarity.
Right. So there's the uncertainty what it means in terms of who gets refunds and when. This, the Chamber of Commerce actually put out an FAQ for small businesses and what they can do. I read through it. I didn't have that much more clarity afterwards.
Lawyers.
Yeah, exactly. Meanwhile, the European Union is set to halt their trade deal, as you were mentioning, based on just the uncertainty that is abounding. What's next, given the fact that we went from 10 to 15% in 24 hours?
Well, I think it depends if you are a country that is negotiating with the United States, or if you are a small business or, say, a big business like Costco, and you've already lined up at the U.S. Trade Court for those refunds. It is going to be an incredibly long rest of the year when it comes to companies figuring out whether or not they get refunds for last year. At the same time, while that's playing out, the administration is going to be working on investigations using a 232 or a 301 to have the legal authority to upstand the tariff rates that they deem necessary.
And meanwhile, it sets up sort of an awkward paradigm for the State of the Union, which was supposed to be about affordability, about the idea of bringing costs down for families. Suddenly, the focus is very much going to be on trying to rally people around tariffs as a tool, and possibly getting really angry at the Supreme Court.
Right, and the president will be addressing Supreme Court justices, likely, who usually show up to the State of the Union. He was asked about this when he briefed the press Friday afternoon, also very rare. The president came out Friday afternoon briefing the press after the Supreme Court decision, not just putting out a statement, and he basically was like, I could barely care if they show up. But when it comes to affordability, there was a brand new Ipsos poll with the Washington Post and ABC News. More Americans disapprove, 64%. Than approve of the president's tariffs. And now he's doubling down on them.
Well, we'll get into that. Right now, it seems like people are assessing this and seeing a bit of a risk-off feel in U.S. markets, down about 0.25% for S&P futures. You are seeing a pop, though, in China in particular. Meanwhile, dollar weakness, not significant, but still the euro at 117.98. And 10-year yields a little bit lower as people assess what Walmart's earnings mean when we get Home Depot and Lowe's and some of the other consumer-led companies reporting later. Coming up this hour, Peter Scheer of Academy Securities. As a new wave of uncertainty washes over markets, former White House trade advisor Kate Kalukowicz on the Supreme Court's ruling and what this means for the future of tariffs. And China Beige Book CEO Leland Miller arguing that China is at the heart of the IEEPA fallout. We begin this hour with stocks edging lower, with concerns growing over future U.S. trade policy. Peter Scheer of Academy Securities writing, a strong ruling supporting the IEEPA tariffs may have posed more danger to markets as it could have unleashed another Liberation Day. Peter joins us now. Peter, thank you so much for being with us on this very snowy Northeast day. I'm just wondering, why do you see this as potentially being another Liberation Day?
Well, I was kind of hopeful that it wouldn't be, right? We got the ruling, markets actually responded well, then we saw 10%, and then we saw 15%. So far, you've gone the show without mentioning the word embargo. I had the strange feeling that's going to come up. So I think we're going to see pressure on the markets. I think markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again.
How much is this going to essentially crimp affordability in terms of the debate, certainly in Washington, D.C., in terms of consumer spending, if tariffs are sort of going up and down and they don't get the refund versus the opposite? Versus actually being a reprieve. I was looking at, for example, the Yale Budget Lab, and they were talking about how tariffs went down from 16% to 9% immediately after the IEEPA ruling.
Yeah, and now they're back up. I think there's just going to be confusion. I'm not sure how it's going to directly translate into the affordability issue. A lot of products have already been ordered. Some have been paid for. I think this just is confusion. I think we're going to see what happens with Iran in terms of oil prices. That could be an issue. Again, I felt we were in general in a good direction where we are headed in inflation and affordability. Friday's, PCE numbers do not support that, but I am comfortable that inflation is kind of, the last story that we need to be focusing on. We need to be focusing on jobs and economic growth.
Well, Peter, when it comes to the tariff policy, I'm thinking of China because immediately the 10% fentanyl tariff gets wiped off. Does this mean that China is a better position as Trump prepares to go there in early April?
I think there's a long time between now and April, right? Again, the ruling did seem to suggest that he could use embargo. He has not yet said he would do an embargo. Given that he likes maximum pressure, I expect a lot more noise as he tries to put the clamp back down on China. So that's why I'm a little bit nervous about markets, right? This 10% or 15%, it's not done.
You mentioned embargo twice. How would that actually look like in reality?
I have no idea, but I don't think it stops this, right? It's like you kind of go back, right? We have no idea how people are actually going to get their tariff rebate claims paid, how that's going to work. So this is a lot of stuff that's happening kind of on the fly, very loosey-goosey, for lack of a better description, and a lot's going to be challenged still in the courts, but it seems that he was given some leeway to do something on embargoes. That seems, again, a bit weird that you can't impose tariffs, but you can impose embargoes. So look for this administration to do things, I think, to re-put the clamp on China and maybe even on India. So I think that will be bad for markets.
It also raises a question about some of the Iranian talks that are ongoing, and we are going to be speaking with Norman Rule coming up, former intelligence officer. How much do you expect some of the geopolitical conflicts or potential conflicts to heat up even further as there is an effort to gain leverage?
Yeah, I expect Iran we'll maintain this kind of maximum pressure. I think we don't see an attack for at least another week or so. We still are building up the resources. And even if we do attack, it'll probably be small just to really keep Iran forcing, at the table and really negotiating in good faith. I think Mexico becomes very, very interesting. We had talked about Mexico becoming maybe a platform where during Q1 or Q2, Trump works with Sheinbaum to rid the cartels from Mexico. I think that we have a potential for an opening there. It could get a bit scary. It's obviously very nasty and over in the country right now, and it's horrible for tourists, but this could be the first step to actually finally eradicating the cartels in Mexico.
I got to say, Peter, my head's spinning this morning. It seems like we're playing whack-a-mole with a number of different issues. On one hand, you have the trade kerfuffle and what's going to happen with respect to tariffs, what's going to happen with negotiations. On the other hand, you've got the geopolitical overhang of Iran, as well as in Mexico. And then, of course, you've got NVIDIA reporting earnings at a time where I'm doom-scrolling through my Twitter feed, through my X feed, about how this is going to eradicate all white-collar work. I mean, how much are you expecting NVIDIA to essentially suck all the oxygen out of the room on Wednesday, even amid all of the tariff uncertainty?
I think we're going to look for strong earnings. They've delivered it time and time again. Are we at the point, though, is that going to be enough? Are strong earnings enough? What happens to sales and chip sales in the Middle East? Does that slow down? Does that grow? What's going on with sales to China? I know the NVIDIA itself doesn't count any sales towards China, but I think the market's been pricing that in. So I think a lot of these things are back up in the air. So I expect some caution. I think the market's going to tread, down a little bit. And, we could add Bitcoin in, right? Bitcoin seems closer and closer to getting these acts passed, and yet every day you look, it's down further. So I think it's kind of a messy market. I think you're supposed to stick to, what's been working and expect this rotation trade into, physical asset type companies that maybe have lower margins that benefit from AI. That's where I'm comfortable. And I think you want to own the rest of the world again, overweight versus US, especially with what just happened. Though right now I'd probably sell China on this pop because I think there's more nastiness to come there.
How much do you expect the dollar weakening trend to really reassert itself? I mean, we see just a touch this morning. It's nothing to really write home about. But going forward, how much do you expect the short positions that are building to be right?
I think they're going to see some of that come back into play, right? Again, we've moved pretty far. We had some, reestablishment, and bouncing. But yeah, I think longer term dollar weakness is there. And again, is this going to question some of the investment that was supposedly or allegedly going to come into this country? It's all up in the air. I think we need clarity. And unfortunately, I don't think this is a week we get clarity. In fact, I think this is a week we get, again, more noise, more rattling in the cages, and markets will not be happy with that.
Do bonds serve as some sort of haven asset, especially in light of the potential tariff issues? The fact that, are we going to get all of the income that we previously had expected? Is there going to be a $200 billion refund to small businesses that were tariffed?
I think that refund's going to take a long time to play out. I think it's going to be selective. I think there's going to be pressure not to actually claim the tariffs. I think a lot of companies might just say, you know what, this isn't worth the hassle. So we'll see where that all plays out. I think treasuries, we should be a low 4% on 10s. But again, I've been bullish 10 since like 425. You're at that 405, 406 level. I'm a little bit more indifferent. I think we got a little bit more room to lower yields. But again, I think it's limited on how much of it safe haven it can be at current yields, given the inflation story and given all the uncertainty that's going on in terms of tariffs, potentially embargoes, all these things.
When it comes to uncertainty, Stephen Major was talking about how that basically just means deferral of decisions. That's not good for growth, Peter. What kind of response do you think we could see from Washington or maybe the Federal Reserve?
I think this ties back to your other question about, AI and jobs, right? Uncertainty is not good for hiring, especially in this day and age, right, where everyone's looking, well, maybe I can just squeeze a little bit out of AI and avoid that hiring. So I think this is really detrimental to jobs. I continue to believe we will get 3 cuts by September. I think the market's not pricing in cuts fast enough. And I'm still willing to bet probably 50-50 that Powell delivers 1 cut. And it's going to be because of jobs, and all this uncertainty is going to add to that jobs uncertainty and lack of hiring. That's my big fear right now, is we're a little bit too comfortable with the job situation and more comfortable than we should be.
Peter Scheer of Academy Securities, thank you so much, and good luck out there today. I have to say, Emery, I don't know about you, but yesterday I was not that excited about hearing that we were going to get 2 feet of snow here in New York City.
After we just had 2 feet of snow, what it feels like 2 weeks ago.
And it hadn't lasted, it lasted forever, and it turned black, which was lovely, or different shades of other colors as well. And meanwhile, the children were very excited, and I was just thinking to myself, well, of course you would be.
Well, because Memdami has reversed course, and now it's a full-fledged snow day, so I'm sure the children are very excited. They're watching.
I have a photo montage of them waiting for the decision. They were waiting for the drop. It looked like them waiting for a jobs report, and then getting very excited when they found out. Right now, let's get you an update on what's going on out there, as well as, of course, other things happening around the world. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hey, Lisa, more than 35 million people across the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York City Mayor Zohar Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. And as you said, public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. Meanwhile, the U.S. and Iran are set to resume nuclear talks in Geneva on Thursday. The talks coming in the face of a U.S. military buildup in the region. Iran's foreign minister says Tehran is working on a proposal for an agreement that meets the needs of both parties. He also said the Islamic Republic will not be pressured by the U.S. military buildup. And Mexican authorities killed a top drug cartel leader in a military raid in the western states of Jalisco. The government says Nemesio Ruben Osguera Cervantes, also known as El Mencho, was killed along with 6 cartel members. U.S. officials celebrated the killing as Mexico is under intense pressure from President Trump to stop the flow of illegal drugs into the U.S. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. The images overnight, pretty shocking, coming from Mexico. Up next, a tariff defeat.
The president announced 15% global tariff using a very robust authority. The president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
Former White House trade official Kate Kulukowicz joins us next to hash through the details. This is Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. Welcome back to Bloomberg Surveillance as we look to risk assets in the U.S. really fading just a touch, down about 0.2% on S&P futures as people assess just how much uncertainty was thrown back into markets as a result of the SCOTUS's IEEPA ruling. Meanwhile, a little bit of dollar softness, just fading a touch. The euro dollar 117.94. 10-year yields lower by about a basis points, and crude getting a little bit of a breather after being bid up on the heels of an Iran threat. Under surveillance this morning, tariff defeat.
The president still has the most draconian measure for negotiations. The president announced on Friday and then amended over the weekend 15% global tariff using a very robust authority. The president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
Here's the latest. The White House defending President Trump's hike on global tariffs to 15% on Saturday. Trump raising the levy again after the U.S. Supreme Court struck down his sweeping tariffs. Bloomberg's Mike Shepard and Brendan Murray join us now. Mike, just want to start with you about the reversal that we got on Saturday. Why did it go from 10% to 15%? Do we have any more rationale?
Well, the rationale in part is that they see this as a bridge to the next round of tariffs that would replace the authority that was struck down on Friday. And the idea is that they would not only have the revenue in place, but they're also trying to send a signal to trading partners that they do mean business. It's not just about ensuring that the global average tariff rate reaches a certain point. It is also a sign of conviction. And they have tried to encourage trading partners to abide by those agreements that were struck when the tariffs that were invoked under IEEPA were initially put into place. But so much of that has been thrown into doubt. And we are seeing moves by the European Union to revisit whether to approve the U.S. trade deal, the Turnberry Agreement. And we've also seen India decide to scrap a meeting that was scheduled later this week to talk about its trade deal with the U.S.
Well, and Brendan, this is what you've been tracking all morning. What more details do we have on the European Union? What freezing this ratification process really means, and what leverage the U.S. still holds given the other tools that are at play?
Yeah, well, this is really going to annoy Washington, the fact that the Europeans are essentially putting the brakes, or at least suspending the implementation of their end of the U.S.-EU trade agreement. The U.S. administration has been pretty vocal recently and complaining about the fact that the EU is dragging its feet on these issues, and so the fact that it's kind of they're halting the implementation of it until they get more clarity isn't going to go over well with the Trump administration. That said, most other countries, if they're not saying it publicly, are in a similar boat. There is no clarity about what really matters here, and that are the tools that the Trump administration are going to use next. Sure, the tariff policy remains in place, and those will be the main instruments by which the president will try to carry out his economic agenda and foreign policy agenda. But the tools and the details of those remain unclear if your exports are on the receiving end of those tariffs. So they have questions in Brussels and right across Asia, those countries, some 20 of them, that have struck these deals with the U.S.
Mike Shepard, Brendan Murray, both of you, thank you so much for being with us. Anne-Marie, we heard from Jameson Greer, the U.S. trade rep, on a whole host of different issues on the talk shows yesterday, saying that they're looking for continuity. They're hoping that this really does not shake some of the agreements they've already gotten in place. I just wonder what kind of contingencies there are and what your response is to the fact that some of these deals seem to be breaking down.
Well, when it comes to the European Union, they're pressing pause. But I did speak to some officials abroad over the weekend that have been dealing with the administration. They're saying this doesn't really change anything. We knew that the Supreme Court was going to strike down IEEPA. This administration made it very clear. Tariffs are going to stay. They're just going to use other avenues. Some of the individuals I talked about mentioned 301s. So right now it's going to be a 122 to a bridge to something that's more legally binding, like a 232 or 301 that we actually have in place right now on certain sectors and countries.
122 to 232, 301. Keep track. Former White House trade advisor Kate Kulukowicz writing, the ruling may open space for further litigation on other tariffs imposed by the Trump administration. Kate joins us now. Kate, have you slept in 24 hours?
It's been an exciting weekend. You know, the weekend we were always hoping for, but as we say, it's always good to have a Friday morning opposed to a Friday evening decision. So we were able to get some work in on Friday.
So, Kate, how much are companies trying to sue to get some of the refunds to the tariffs that they have paid over the past 6 months?
Well, I think a lot of companies are still waiting and seeing what's going to happen. I think the Treasury Secretary yesterday said very clearly that, you know, the federal government will abide by the lower courts. We have to see how this plays out. Of all the things the Supreme Court ruled on, of course, they did not give clear direction on refunds. So I think a lot of companies continue to be in a wait and see posture to find out what happens next there.
These are not just small businesses. We're talking about Costco, we're talking about Alcoa. How long could this take when it comes to the U.S. International Trade Court and deciding whether or not these companies get refunds?
Well, you know, we've not seen a litigation like this before, so it's hard to predict. And even the president in his conference on Friday suggested that this litigation could go on and on. So, you know, I think some companies, of course, will lead the litigation. We've seen Costco take a leading role there, but they're the guinea pig in a way. And I think everyone else is going to continue to employ cost-saving measures as they can to deal with the tariffs. But, you know, the reality is whether or not we have IEEPA or some other measure in place, a high tariff scenario is where we're going to be. So I think a lot of the strategies these companies have been using are going to have to continue to be on the table.
When it comes to IEEPA, though, how much of the U.S. trade policy from last week on, not currently because it was struck down, was tethered to using IEEPA?
Well, the trade strategy itself, I think, of course, is we have many authorities to employ to maintain very high tariff rates. IEEPA, of course, was a tool of the president. He liked to use it because it was quick, it was fast, he could take it on and take it off. But as we've seen, and as you just mentioned, there are a number of other 3 numbered authorities the president can tap into. I think the most significant difference, not necessarily with 122, which is just the bridge to these other authorities. When we end up in a scenario with 301 tariffs or 232 tariffs, these become much more durable. And I think they actually lead to a tariff environment much more lasting beyond this particular administration. So what we may end up with here is a durable Trump tariff scenario, which we didn't have in the IEEPA environment.
Kate, I was looking into the Supreme Court decision, the dissents, as well as some of the accompanying remarks from Chief Justice Roberts. And it seems like the big message from the majority was, hey, Congress, where are you? Why are you not taking back the authority that the Constitution gave you? What chance is there that a majority of Congress members will actually vote for tariffs at a time when they're up for re-election and potentially affordability issues will really make this politically infeasible?
I think you just answered your own question. I don't think it's that feasible. I mean, we've seen Congress, not only this Congress, to be fair, several successive Congresses be unwilling to take away this tariff authority, be willing to act in favor of what we call trade promotion authority to use what the Constitution gave them to control the power of tariffs. And as you described, we are in a midterm scenario where, you know, the issue of affordability, the issue of tariffs is very front and center. On one hand, the Democrats want to use this issue, of course, to put pressure on the administration and Republicans and have them own this issue of rising prices and affordability concerns. But the Republicans can't cross President Trump here. He issued a very firm statement a few weeks ago that criticizing the tariffs would be seen as criticizing him. He will put pressure on them to certify these tariffs, but I don't think the administration feels they need Congress. So I predict we'll see Congress continue to just avoid taking their constitutional responsibility in tariffs and leaving the pressure with the president.
Kate Kalukowicz, thank you so much for being with us as former White House trade official. After what has been a very busy weekend, I saw you making a face about the durability of some of these tariffs, but it really raises this issue given the fact, as I was researching it, 122 lasts for 150 days.
Never been used either.
It never has been used, and then these others come in, but there are tests that they have to pass.
232s and 301s are more durable because they have investigations. My big question is, so if the administration knew that potentially they were going to get held up in courts using IEPA, why didn't they just do the work of 232s and 301s, which require investigations from the very beginning, and then we wouldn't be in this situation?
I love how closely you're tracking this. I'm really trying to keep up. 122. 301.
I'll give you the list.
232. You'll give us a list. Coming up, we've got former senior U.S. intelligence official Norman Rule, as the U.S. is set to resume talks with Iran this week. Plus, Yahira Anand with your morning movers. International paper falling on new tariff concerns. From New York, this is Bloomberg Surveillance.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Seeing just a bit of a risk-off tone as people assess what the fallout will be from the Supreme Court's ruling overturning the IEEPA tariffs. We are seeing that risk-off feeling more significantly actually in small caps, which had been the outperformers. Russell 2000 down 0.4%. NASDAQ futures down 0.4% as well, ahead of NVIDIA's earnings on Wednesday. S&P futures lower by 0.25%, 3 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Another turn in the bidding war for Warner Brothers Discovery. According to a filing, the Justice Department is taking a tougher stance as it evaluates Netflix's $72 billion takeover, looking not just at the deal, but whether it gives Netflix outsized leverage over filmmakers and could create a monopoly. That deeper probe could stretch the timeline, potentially giving Paramount Skydance more time to strengthen its offer. So for that reason, shares are up 1.6% in the pre-market. Turning to VF Corp, this is an apparel maker. Shares are falling 5.3% after JP Morgan downgraded the stock to underweight, citing increasing tariff pressures on margins. That's despite the Supreme Court ruling on Friday, of course, striking down President Trump's tariffs, a ruling that could, in theory, ease cost pressures, but it appears the market is waiting for more clarity before it prices that in. And we end on International Paper. This is a box company. Shares are falling 5.3% on the idea that more tariffs could mean fewer boxes needed for shipping. Lisa?
Thank you so much, Yahaira. I'm trying again to sort of play out all of the implications. On our radar this morning, President Trump announcing plans for new 15% global tariffs after Friday's Supreme Court decision struck down most of his sweeping levies. The president's new plan is likely to face legal challenges and create more economic volatility. That's what you're seeing baked into the markets this morning. The EU, following onto that, is preparing to freeze the ratification process of its U.S. trade deal until receiving policy details from the Trump administration. Trade negotiators in European Parliament telling Bloomberg we have no other option. Emery, I know you've been speaking with a lot of trade reps on both sides of the Atlantic, and I'm just curious how they're viewing this, given the fact that it wasn't entirely unexpected.
Not entirely unexpected, and I think the conversations a lot of these trade reps outside of the United States dealing with the U.S. administration have been told basically if the Supreme Court was going to strike down IEEPA, we are going to find those other avenues. Some of them I specifically spoke to said that they knew the administration was going to conduct the investigations for, say, a 301, that would be a country-specific, or 232, an industry-specific tariff. So this 122, as the Secretary of Treasury and Jamieson Greer over the weekend talked about it, the USTR ambassador, this is a bridge to more of those, what Kate Lutz was saying, legally durable tariff levels. You just have to ask, why didn't they do this from the beginning? Because it feels like we're having Liberation Day Part 2 or Liberation Day Light right now in 2026.
Well, that's certainly what Peter Scheer was saying. And Christine Lagarde, the ECB president, saying you want to know the rules of the road before you get in the car. It's the same with trade. So going to that point of certainty, I wonder how much pushback we're getting because of political opinion as well, domestically in places like Europe or, for example, in Canada.
And also, potentially, what does this mean for a country like the United Kingdom and Australia, which had a deal at 10%? Now they are waking up with a 15% tariff level under this new section that the president is using, 122, which has never been used before, when they already struck a deal at 10%. This is where part of the confusion and a little bit of the chaos is coming from.
It does feel a bit like whack-a-mole, because on one hand you have the trade kerfuffle and a question of what uncertainty lies ahead. On the other hand, you have AI with NVIDIA reporting earnings. And then on the other hand, you have a question about the integrity of markets and what we don't see. Private equity reportedly returning fewer profits to investors for a fourth straight year. here. This is coming as you do have the industry sitting on $3.8 trillion of unsold assets. A new report from Bain finding distributions as a percentage of net asset value are at the second lowest level since the 2008 financial crisis. This plays into some of the fears that people have about private credit and private equity.
And they started in October with Jamie Dimon saying there's one cockroach, there's others, and then also Mohamed El-Arian saying potentially does this mean liquidity crisis like we saw in 2008? When you look at the Bain research note, the head of the global private practice said the uncertainty caused by Trump's Liberation Day tariffs put a sudden break on deal activity that looked like it was gangbusters as recently as January of last year. And I wonder if we just have that same story continuing into this year as well. As we just said, this is Liberation Day light.
So in the whack-a-mole, it goes from trade to private equity to geopolitics, and we do have to focus on that. Crude coming off their highest level since July. The U.S. and Iran are preparing for another round of nuclear talks. The two sides are set to meet on Thursday in Geneva. Bloomberg's Will Kennedy joins us now. Will, can you just give us a sense of what the equation is for oil markets, which typically are the first to react to any kind of conflict in the Middle East?
Good morning, Lisa. Yeah, oil a tiny bit softer today, but that's after a significant run-up of 6% yesterday. Brent at around $72 a barrel, and that was clearly on concern that there would be some kind of military action in the Gulf. And going into the rest of the week, it becomes quite binary. Will these talks on Thursday yield an agreement? Will Trump decide to strike either before or after? I think the comments from the Iranian oil foreign minister that there could be a deal was welcome news for the oil market. But clearly, as long as those two carrier groups remain in place and we have this unprecedented buildup of naval U.S. forces in the region, the risk of military action is going to be there. And the great unknowable for markets is how Iran would respond, whether they would take action that restricted the flow of oil out of the Gulf of the Persian Gulf through the Strait of Hormuz, which of course could impact not just Iranian exports, but Iraqi, Saudi, Kuwaiti, and Emirati exports too, and be a huge event for the global oil market.
Will Kennedy, thank you so much for that, and we will be watching that. Former senior U.S. intelligence official Norman Rule joins us now. Norm, thank you so much for being with us. Will was just talking about how it's unknowable exactly what any kind of Iranian response would be to U.S. action. What's your take on how close we are right now to some sort of hot war in the region?
Good morning. We're approaching an inflection point. Thursday represents the third round of talks, and the United States will be looking to see if Iran's proposal, its written proposal from the Supreme Leader's approval, will show any indication of softening in the Iranian position. That is unlikely. But if there is no change in the Iranian position, then we are rapidly approaching the end of the president's deadline for some sort of significant change in Iran's position on its nuclear program, missiles, and regional militia building. That's going to be about March 3rd, based on the original February 20th announcement. The president has all assets in place to conduct a massive air and missile campaign against Iran's strategic capabilities, against which Iran has no credible defense, therefore leaving it only external operational capabilities, which it will likely employ. So Thursday is going to be an indicator of whether we're going to see any significant change in the direction of this initiative.
Well, Steve Witkoff, who will be there on Thursday, Norm, said to Fox News over the weekend, the president is, quote, curious why Iran has not shifted course despite mounting U.S. pressure in the region. Do you think Iran will come back to the table with any sort of change of heart, given the vast array of military hardware right now in the region?
Well, Iran needs to buy time. Iran needs to extend this process. Iran also needs to promote debate in the United States and debate between the United States and its partners abroad. So Iran needs to come up with enough of an offer to keep the U.S. at the table, enough of the offer to promote a debate between the president and his advisors that perhaps diplomacy has hope, but not to do anything that would provoke the initiation of military action, which would threaten an end to the regime.
Well, when it comes to how Iran thinks about this, when it comes to the regime's survival, what is worse, potentially capitulating at the negotiating table or having to deal with a military assault?
I think you're touching the heart of the matter here. There is highly likely a significant debate ongoing within Iran on that very question. The president and his advisors are almost certainly attempting to shape that debate through the presence of the U.S. military forces and the diplomatic campaign against Iran, just as Iran is attempting to shift the debate in the United States on this entire initiative through its defiance, its use of only indirect negotiations, its use of engagement with partners and allies. So there are debates within each side as to the direction of where they take the future of their countries on their engagement with the other.
There's a lot of reporting the president has yet to make a decision, but Norm, given all of your years of experience, have you seen this sort of military buildup, which we haven't seen since 2003, pre-invasion of the Iraq War, and then an executive not decide to have at least at minimum a minimal strike?
Well, to be clear, we have never seen this sort of military buildup against the Islamic Republic in the history of the Islamic Republic in the United States. We have also not seen this level of military buildup in the Middle East since 2003. We have also not seen this level of military buildup without the United States employing that military buildup at some point. So it's going to require some significant concession by the Iranian government to justify withdrawal of that military contingent.
Norm, how stressed is the U.S. naval contingent, given the fact that some of these deployments have been pretty long and have been extended pretty significantly?
Well, the deployments have been long, but this is an incredibly well-trained force. There is absolutely no evidence whatsoever that the U.S. forces have been stressed in any way to the point that it would degrade operational capability or morale or on any other indicator that would reduce the threat it poses to Iran or the operational ability of this force to manage the mission the president has put in front of it.
Norm, just on a broader scale, how imminent is the threat coming from Iran right now? In other words, is this the right time to make some sort of strike or make some sort of ultimatum, given the fact that there could be potentially a rebuilding of the nuclear capabilities, and there still is really questions around how much they can go back to their former strength?
I think there's a different way of looking at the question. The United States and Israel have severely degraded, if not destroyed, Iran's nuclear weapons capability. Do we want them to rebuild that capability, or do we want to do something to stop them from rebuilding their capability? Iran's missile program is advancing in its sophistication, and it is a genuine threat to Israel and partners in the region, and it is moving in the direction of an intercontinental ballistic missile, which is a threat to the United States and Western Europe. Do we want to stop that or not? And the Quds Force, which created all of the militias in the region, is still in existence, and it is going to try to rebuild those militias. Hezbollah, Hamas, and the Houthis still exist. Do we want to stop that or not? So the question is really this. Do you want to kick the can down the road and pay the price later, or do you want to do something about it now while Iran is facing all of these stresses? So the president's approach has a logic to it, a significant logic. This is a moment to do something. The question is, do you want to pay that price now or risk paying a higher price later?
Former senior U.S. intelligence official Norman Rule, always wonderful and insightful. Thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. More than 35 million people across the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York City Mayor Zohran Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. President Donald Trump wants former U.S. Ambassador to the United Nations Susan Rice removed from the Netflix board. The president's posting on Truth Social, quote, Netflix should fire racist Trump-deranged Susan Rice immediately or pay the consequences. The post comes in response to Republican political activists who quoted Rice as saying corporations who took a knee to Trump will face an accountability agenda from elected Democrats. And over in Mexico, authorities killed a top drug cartel leader in a military raid in the western state of Jalisco. The government says Nemesio Ruben Osguera Cervantes, also known as El Mencho, was killed along with 6 cartel members. U.S. officials celebrating the killing as Mexico is under intense pressure from President Trump to stop the flow of illegal drugs into the U.S. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, holding China accountable.
The purpose of the meeting with President Xi, it's not to fight about trade, it's to maintain stability, make sure that the Chinese are holding up their end of our deal and buying American, agricultural products and Boeings and other things, and making sure they're sending us the rare earths that we need.
Planet Beige Book CEO Leland Miller joining next as people reassess exactly how that relationship's going to progress in light of the IEEPA ruling. You're watching Bloomberg Surveillance. Good morning.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1, 2, 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2, then turn. Now that these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3, then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1, 2, 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Surveillance. We are seeing just a little bit of a risk-off move in U.S. equity futures, although that's really fading as the morning goes on in terms of just how wide the losses are. 0.4% decline on the S&P. The dollar clawing back some of the losses from earlier this morning. An interesting note from Kit Jukes at Societe Generale. We're now past the peak tariff levels. The biggest winners are going to be in EM, but positioning data still shows a large and growing net U.S. dollar short position, limiting U.S. dollar weakness from here. So maybe that is part of what's going on under the hood. Under surveillance this morning, holding China accountable.
The purpose of the meeting with President Xi, it's not to fight about trade, it's to maintain stability, make sure that the Chinese are holding up their end of our deal and buying American, agricultural products and Boeings and other things, and making sure they're sending us the rare earths that we need. It's really about monitoring that agreement. If there are places for additional agreement, we'll find them, and developing the president's relationship with each other.
Here's the latest. The White House gearing up for talks between President Trump and Chinese President Xi next month as China gains leverage after the Supreme Court's tariff reversal. U.S. Trade Representative Jamieson Greer says trade deals made with partners still stand. Leland Miller of China Beige Book joins us now. Leland, you had a great note over the weekend, and thank you for being with us, where you talked about how this really does spotlight the China-U.S. relationship and creates a real challenge for the United States going forward. Can you just explain your view?
Well, the tariff regime has completely changed in some ways. The authority has changed, but now you have 15% tariffs announced on the world. Now, for some allies, they're not going to be very happy about that because they had 10% negotiated or they had close to 15% negotiated. So there's a lot of questions around allies and partners. Are we worse off than the deal that we thought we had with the administration? But the larger picture is about China, because if you remember, China's tariff rates for most of last year were much higher than the rest of the world. Now, when we look at our internal estimates, we had about a 21 to 22% effective tariff rate for the year last year. We had a rate that was around 30% as we closed the year. Since the very end of last year, you had a 10% of the fentanyl tariff taken off as part of the Busan détente. The President Trump negotiated with President Xi, and then the Supreme Court just invalidated another 10%. So what's happening with China tariffs is they're coming down, 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 down. If you're trying to maintain a bilateral deficit trend, which you really celebrated if you were this administration, which was much less reliance on China, you're looking at yourself in 2026 and saying, we either need to get those tariffs back up, or we need to understand that the bilateral trade deficit with China is about to surge back in the other direction.
China, how much, Leland, does this really affect the meeting that President Trump has in China that starts on March 31st? It goes till April 2nd. This sort of sets up an awkwardness in terms of how hard can the U.S. go after China ahead of that.
Well, it's only awkward if the White House makes it awkward. They have a decision in front of them, which is we either raise tariffs back up to where they were, in ballpark last year, which created the trend that we're very, very proud of, which is this, declining reliance on Chinese production and Chinese supply chains, or we try not to antagonize Beijing in the run-up to the summit, and we deal with the consequences, which is going to be a shift back towards greater reliance on China, towards a more reliance on Chinese supply chains. And greater Chinese competitiveness across the board. So there's a real strategic question the White House has to answer right now, and we're waiting to see how they answer it.
Leland, when it comes to what the United States has effectively on China in terms of a rate, what is it now, given the fact that there was the 10% levied on China on top of a higher rate, reciprocal rate that they negotiated at the trading table?
That's a great question. I mean, we have our own internal estimates, and we work with others on theirs. At the end of last year, there was all this talk about how the effective tariff rate on China was 57%, and then it got brought down to 47% in Busan. It was actually a lot less than that. We had it around 30% towards the end of last year. If you start taking off another 10% of the fentanyl tariffs, you're in the 20s right now. So it's really a question of how much the divergence is between China and the rest of the world. The thing that people have to really keep in mind is it's not about absolute tariff rates for the most part. It's about how much is your tariff differential versus your rival producers. So if China's competing against Mexico or Southeast Asia or India, what is the differential that incentivizes people to move production out of China to those other allies and partners? And if the differential is shrinking, it means that the trends that come from that are going to be not very helpful.
When it comes to the meeting that's upcoming, as Lisa pointed out, the president heading over to Beijing late March, early April, does China now have the leverage, given the fact that the president's own Supreme Court told him his tariffs were illegal?
I don't think so. I think that what's happening right now is a tariff regime that is being replaced by another tariff regime that's roughly going to be the same thing for 2026. I mean, one of the things that we focused on, in the note you reference is showing that, look, tariff rates are not collapsing. Understand that there's a headline rate that seems lower than it was in 2025, but you look, broadly speaking, around the globe, it's mostly consistency from 2025 to 2026. What you don't have is, in a handful of countries, you're going to have a very different situation, China being one of them. So as the White House gears up to go over to Beijing and have a conversation with President Xi, they have to be thinking, what exactly are we dangling and what exactly do we want? Now, I don't think they know what the answer to those questions is, but right now, tariff relief was one of the things they were talking about dangling. They don't have tariff relief as something nothing to dangle at this point anymore. So are they going to give up more technology, or what do they want from China? I think these are going to be some very difficult conversations in the White House for the next couple of weeks.
A number of strategists, Leland, have talked about concerns, at least by the United States and by Japan in particular, that one of the negotiating chips is going to be Taiwan, and the U.S. taking a more laissez-faire attitude with either buildup of troops or potentially some of the communiques coming out of the U.S. in terms of how we categorize Taiwan. Do you think that that's feasible?
Look, anything's feasible, but I certainly hope it's not the case. If you look at what a trade deal should be talking about, it should be mostly trade. It should not be talking about whether you're selling out your allies and partners. So I think that there's an interest on the Chinese side, but not an expectation that Taiwan is going to be a big issue on the table. And so I don't see any reason to hand them something that they don't need, particularly when it undercuts decades of U.S. policy. I think the president's trying to keep closed lips right now going in to maximize his leverage. But I think that right now it's the White House's job to figure out, what do we want from China? What are we willing to give them? And what are the signals we want to be sending in the aftermath that don't show the United States having come to the table and then giving up a bunch of stuff that we didn't need to do?
China Beige Book CEO Leland Miller, thank you so much for being with us. And stay safe this morning. I hear it's piling up pretty significantly.
Yeah, it's pretty bad out there. As what's happening between text messages and emails, a lot of people thanking us, Lisa, for making our way in. But there's really low visibility, and the snow just is nonstop, and there's tons of wind. So it's very scary.
And there's low visibility when it comes to tariffs as well, which is a reason why we are here, in part because it is a significant change in terms of policy and in terms of how this is going to be used as a negotiating tool, given the fact that some of the leverage that the president had seems to have been taken away, at least for the moment.
Right, because IEEPA gave him this broad swath of leverage to, as Kate Kaluku had said, turn tariffs off, turn tariffs on, and really no limit to the rates. But Leland made a really good point. Tariff rates are not collapsing. There are still pretty high tariff rates. And when it comes to this meeting in Beijing, it definitely got a lot more interesting following the Supreme Court decision. But when you hear from what Leland said or what Ambassador Jamieson Greer said over the weekend, it's really about managing the détente right now and making sure China continues to buy agricultural products, Boeings, and that they continue as well sending rare earths to the United States.
So the Yale Budget Lab put out a fantastic chart. I'm sure you looked at it extensively, as did a lot of people I know out in the markets, that before IEEPA tariffs were struck down, consumers faced an overall tariff rate of about 16%. Following that IEEPA ruling, it fell to 9.1%. Then the Section 122 tariffs came on, and it rose to 13.7%, but that's off in 150 days, and will fall back to 9.1%, except for not only 122, 232. You start going through the list. Coming up next, Priya Misra of JP Morgan, Henrietta Trey's of Veda Partners, Crispin Love of Piper Sandler, and Torsten Slok of Apollo, as we parse through the fallout from both the tariff ruling as well as, of course, NVIDIA earnings coming up on Wednesday. This is Bloomberg Surveillance. Good morning.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The world's broadening out and it's speeding up.
There are signs of stress in the equity market.
The economy's doing okay.
We probably are going to have to go and look at our Q1 GDP forecasts and boost those.
I don't think things are as K-shaped as the narrative often portrays.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As most people in the Northeast are holed away watching the snow fall down. U.S. futures slightly lower with investors mulling the fallout from Friday's Supreme Court ruling. Questions still looming about the fate of private credit amid Blue Owl's retail fund drama. And eyes turning toward Wednesday NVIDIA earnings, with AI still looking like the biggest story of the year once we get past what we're looking at right now, which is very much trade confusion, given the fact that right now, Anne-Marie, it does feel like people are seeing everything just thrown up in the air.
Deja vu, Liberation Day light. How many times have analysts come on this program and said we're past peak tariff uncertainty? Well, it feels like we're not at this moment, given the fact that IEEPA has been struck down by the Supreme Court and the administration is going through all the other policy proposals they can enact to have more durable tariff policy. Right now, they're using Section 122. It's never been used before. It only lasts for 150 days. Then Congress may need to step in. But what you hear from the administration is they say that is a bridge to have something more sustainable. But Leland Miller, I think, said it very well. Tariff rates are not collapsing, which is why it's interesting the market is still struggling to figure it out.
Well, frankly, I think that there's a whole lot of confusion. People don't know what to focus on this morning. That's what it feels like in terms of some of the market reaction. On Friday, we got a market that rallied in the United States. Then, of course, Saturday, the 15% may be causing a bit more uncertainty. There are a host of other issues. We talked about Iran. We have private credit concerns and, of course, the NVIDIA earnings. But it does feel like right now markets are just in a turn. The dollar's regained some of its weakness from earlier. I don't get a sense of exactly what the big fear is here behind some of this weakness.
I think maybe the uncertainty when it comes to at least the tariff story is the fact that we don't know yet how the refunds are going to play out. That is going to be weeks and months of being adjudicated in the courts, and that's $170 billion. What does that mean for the deficit if all of that money gets repaid, say to Costco, Alcoa, and a ton of small businesses that lined up for those rebates if the Supreme Court made the decision they ended up making on Friday?
Which is a reason why I'm surprised that today yields are down. Let's take a look at what's going on. You're seeing S&P futures lower. They have been kind of bouncing around, lower by about 0.4%, now down about 1/3%. You can see the dollar reclaiming some of its stability, at least, basically flat versus the euro, but fluctuating between gains and losses, with a question of whether this does prompt the Federal Reserve to cut rates more significantly, whether the U.S. loses luster. Crude doing nothing, and 10-year yields lower by about a basis point. Essentially, nobody knows what to do, and everybody's snowed in anyway, so maybe just stay home with your kids. Coming up, we have Priya Misra of JP Morgan as tariff uncertainty shakes markets, Crispin Love of Piper Sandler as Blue Owl sparks renewed private credit concerns, and Torsten Slok of Apollo as Fed officials eye potential tariff refunds, as AMH was just talking about. We begin this hour with stocks just dipping as President Trump imposes new global tariffs. Priya Misra of JP Morgan writing policy uncertainty over who gets refunds and whether new tariffs are stacking maintains the headwind to CapEx. Priya joins us now to help explain all of this confusion. Priya, do you have a clear sense of whether this ruling is good or bad for the U.S. economy?
Thanks for having me. No, I think, so I'd say a couple of things. In terms of the average effective tariff rate, I mean, that's probably slightly lower, but here's the issue. The policy uncertainty, to your point, is this good or bad? Policy uncertainty has just gone up. So we don't know refunds. We don't know, we heard that Section 122 is a bridge to some point, but to what point? What kind of 301 tariffs are we going to get? What sort of 232 tariffs are we going to get? So I think policy uncertainty has just gone up. If you look at non-tech CapEx last year, it was negative, which is actually very rare. In a non-recession year, we typically do have some CapEx. So I think this headwind to hiring potentially to CapEx, I think that stays, it might have actually increased. But, I'm hoping we'll get more clarity. I'm hoping we'll hear around these reciprocal trade deals that were done with the UK, with Australia. Maybe we'll get some clarity on that. So right now it's a bit of wait and watch. I think that's why the market really hasn't reacted all that much. I think rightfully so. The fiscal concerns are long term. I don't think refunds, even if all of them are paid out quickly, which I really struggle with, I'm not sure that we should be really panicking about the deficit here. Treasuries are doing what they do. They're looking at fundamentals, and the fundamentals of the economy are okay, but inflation slowly heading lower. And if tariff rate is going to be slightly low, I think some of that concern around inflation is going to be a bit lower as well. So,
Priya, let's pick apart the threads that we do have in terms of the narrative. Ahead of this ruling, people were talking about how it would be a risk-off event for bonds if IEEPA was overturned as a basis for President Trump's tariffs, simply because those refunds and the revenues would really decrease some of what has been the bull case for bonds. We're seeing yields a little bit lower today, not really doing much. Why hasn't there been a bigger response from fixed income?
So I think to some extent the market was expecting that there would be some backup plan around tariffs. I mean, I think the world trading order has changed. I think tariffs are part of the policy toolkit. And so I think the expectation was whether it was 122, 301, 232, there would be some tariffs. So I think, it was expected that tariffs are here to stay. I think the other thing is the market. I mean, you've been talking about, is this Liberation Day light? I would say actually it's very different today compared to a year ago. Because while tariffs are here to stay, the concern a year ago was, is the U.S. disengaging from the world? I don't think, everything that's happened over the last year, that's not happening. We're not disengaging. Whether you look at what's happening on the military front or you look at all the trade deals, there was this inflation fear that perhaps inflation would really skyrocket. Inflation's been remarkably stable. And we think if you look at the underlying trends that inflation by the end of the year is going to get closer to 2.5, potentially even lower than that. And then there was this concern around Sell America. And, all of the data suggests there was perhaps a buy America. There was a hedge U.S. dollar, but we didn't see across asset classes the Sell America trade. So I think that the reason bonds are not reacting is some of those fears, the wall of worry that we were talking about for treasuries or fixed income, we've sort of climbed over that. And now we're back to fundamentals. We're looking at, what is the unemployment rate? It's likely to pick up. The Fed cut rates last year. We expect them to cut rates, in the second half of this year. And inflation just sort of heading closer to that, 2% level. I think that's why the bond market is, and the bond market is doing what it should do. It's acting as a diversifier to risk assets. We've seen that, over the last few months, when you've had risk market concerns, whether it's AI fears, whether it's some weak economic data, bonds have given you that ballast. I think that's why the bond market's a lot more calmer this time around compared to last April.
Priya, do you think potentially the bond market won't be calm, though, when we potentially have $170 billion of refunds being paid out to small businesses and big companies for the tariffs they paid last year?
So that's fair that some of the incoming revenues to the U.S. Treasury would be lower, and they would have to figure out how to make the refund. So let's say I'll give you the worst case scenario for the bond market that you could argue is the tariff refunds go out right away. So tomorrow you can go to the bank and get those refunds, the entire amount. The Treasury would have to raise potentially 170 billion. They've got that much cash sitting at the Fed. So there's no immediate financing need. And I think when I think about the overall deficit, it's a drop in the bucket. Now, if we were completely giving up on tariffs and revenues would be much lower, I think you could argue maybe the fiscal trajectory will be worse. But I think we're just replacing IEEPA with other forms of tariffs. So the going forward revenue rate, I worry less about that. So even in that scenario, I mean, where I would get concerned is if we get tariff, some tariff dividend or additional fiscal easing. We have the State of the Union. Do we get some additional stimulus checks being talked about? I think then the bond market will pay attention. But even if the refunds go out quickly, I don't think there's an immediate financing need. There's no concern that the deficit is a problem right here, right now. I think it's a long-term issue with entitlements that needs to be resolved. But no, I don't think the bond market will worry, even if we get certainty around quick tariff, refunds.
Priya, as you're talking amid a beautiful sunny backdrop, we do get a Truth Social post from President Trump. It is a very long one. I'm not going to read the whole thing, or I think it would lead to a very long diatribe. But the Supreme Court will be using lowercase letters for a while based on a complete lack of respect of the United States. Accidentally and unwittingly gave me, as President of the United States, far more powers and strength than I had prior to the ridiculous, dumb, and very international divisive ruling. He went on to say he can use licenses to charge foreign countries, and he can do terrible things to countries. Anne-Marie, do you have a sense of what he is talking about when it comes to taking away licenses or using licenses to potentially go after competing nations?
Well, licenses are government permits, legal documents that gives companies or entities the right to trade with a government. And I think this goes back to what Peter Cheer said at the very start of the program. He's waiting for Trump to talk about maybe an embargo, basically saying, I'm not going to allow licenses for companies to trade. This would be a quite nuclear option. I think we need to understand a little bit more what the president is talking about here. But he does talk about the fact that he can use licenses to do terrible things to countries, and potentially why there's a lot of consternation in the market, because they're trying to understand, can this get worse before it gets better?
And what you are seeing is just a little bit more of a risk-off feel when it comes to equity futures in the United States, but not a significant move. Priya, just a final word on what kinds of retaliation could come in terms of whether some of the risk haven aspect of bonds could be tested, or whether this just supports it.
I think whether it's this risk around export license, I think this is just reinforcing policy uncertainty. And, maybe this is a negotiating tool as we have trade deals, or at least trade frameworks with a lot of our trading partners. Is this a way to say, we stand behind, the U.S. stands behind these trade deals, you should as well, you should ratify it, not freeze it? I mean, I would think that, to your point, maybe this is the nuclear option. I think ultimately we think about businesses, and if you've held back on hiring because you're concerned about trade uncertainty, this is not making it better. Because, I was listening on Friday, people said, well, peak tariff is behind us, peak uncertainty is behind us. No, I think we're in a plateau of uncertainty, and we're going to stay in one, and that's going to be a headwind for hiring as well as CapEx. So I think we just focus on fundamentals, and the economy is resilient, but I don't see signs of any re-acceleration. And so the Fed should still continue to, over time, get rates closer to neutral, potentially accommodative territory.
Priya Misra of JP Morgan, thank you. And you can trademark that plateau of uncertainty, because I have a feeling we're going to be using it a lot going forward. If you want more uncertainty, New York City is under a state of emergency as much of the East Coast faces blizzard conditions. Lionel Moisey of ABC News joins us now. Lionel, how far have we gone in the storm? How big are the totals, and what's ahead?
Hey, Lisa. Yeah, we're kind of in the middle of it. We're not in the clear just yet. So the sun has come up. We've gotten a reprieve for like 3 seconds. I'm sure as soon as I'm done with this live hit, snow is going to knock me over. It has been quite windy. The snow is very big, and it's been coming down about 3 inches an hour. Several parts of our area already have a foot of snow. They are on track to get up to 2 feet of snow. And that is why classes are canceled for public schools for students here. And there is a travel ban here across the city of New York, at least until noon. We are expecting an update from the mayor around 1 p.m., so that could also change. But they have been urging people to stay off the roads if they do not need to be on them, so the critical workers can get the roads plowed. A snowplow actually overturned, leading into a hazmat situation a little bit earlier, which is another example of why they just do not want people out there. With all of this, there have been widespread power outages, 5,000 flights canceled today, 10,000 through tomorrow, and we do expect to continue to see a ripple effect. Now, the silver lining, or the good news, is for the younger kids, and that is because it is a true snow day, so there isn't school, there's no remote learning, but I would imagine that they will be out here in all of this, helping their parents clean up as well. Oh. Back to you, Lisa.
I'm sure that that's exactly what they had in mind. ABC's Lionel Moise, thank you so much for being with us. And that's, I'm sure, what we all hope is that they're out there shoveling. But ultimately, the real question for them is, what about Tuesday? Is it going to be shut down too?
Well, also, apparently, the mayor is saying that anyone can show up. You have to have a certain level of documentation. I think a license, two levels of documentation.
2 methods of documentation.
Which is interesting, because I think you only need 1 to fly and sometimes none to vote, but you have to show up with level of documentations, but you could make money shoveling. Maybe your children should be doing that today.
They actually were looking into it. They were looking at an age limit, so maybe we can put them to work. Up next, we're going to be talking more about what's going on in Washington, D.C., President Trump's big loss.
Their decision's incorrect, but it doesn't matter because we have very powerful alternatives. I can destroy the trade. I can destroy the country. I can do anything I want, but I can't charge $1.
Henrietta Trey's Aveda Partners joins next. This is Bloomberg Surveillance. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
On Friday, it was a risk-on feel in the wake of the Supreme Court decision. Today, it's risk-off after the tariff rate that President Trump reimposed went from 10% to 15% under Section 122. Get ready to get used to a lot of alphabet soup. You have 44 basis point decline, about nearly a 0.5% decline on S&P futures. You do see the dollar actually reclaiming some of the strength that it had from the weakness earlier in the trading session. Yields lower by about almost 2 basis points now, 4.07% rounded up on the 10-year. And crude It isn't going nowhere as questions continue to swirl about Iran. A week ahead that is completely stacked. Really important to say. Of course, we've got NVIDIA earnings, which is going to be the big event on Wednesday. But before that, the State of the Union from President Trump, as well as consumer confidence, Home Depot, Lowe's, and of course, Thursday jobless claims. Under surveillance this morning, President Trump's big loss.
Their decision's incorrect, but it doesn't matter because we have very powerful alternatives. I can destroy the trade. I can destroy the country. I'm even allowed to impose a foreign country-destroying embargo. I can embargo. I can do anything I want, but I can't charge $1.
Here's the latest. The president gearing up for the State of the Union tomorrow as recent polling shows his approval rating is sliding. 64% of Americans disapproving of his tariff policy. Bloomberg's Mike Shepard joins us now. Shep, thanks so much for being with us again. I'm just curious going forward how much the president seems constrained by either popular opinion or some of his Congress members in the Republican Party's opposal to reinstating certain tariffs.
This is a great question, Lisa, because the president really has forged ahead with this policy in spite of mounting evidence that both the public is expressing increased concern about the effectiveness of all these tariffs, and also just the sheer data that we're starting to get on the economic side. The New York Federal Reserve Bank last week put out a study signaling that up to 90% of the cost of tariffs is borne by U.S. companies and consumers and not the origin countries those levies are aimed at. And yet the president has insisted that the tariffs are actually doing good for the country, bringing in revenue to the U.S. Treasury, but also creating leverage that is encouraging investment. We have seen signs that some companies, including Taiwan Semiconductor Manufacturing, are increasing their investments here in the U.S. This is an argument he will be trying to make again tomorrow night here in Washington, but it is one that may ring more hollow in the wake of the Supreme Court loss. And he may be aiming some more of the anger that we just saw in this morning's Truth Social post, and certainly last Friday during his briefing following the ruling. We may see some of that anger directed at the justices who voted to overturn his tariff policy, which is really the centerpiece of his economic agenda. So we'll be watching to see that dynamic and also how he lays out the path going forward as well, including on the questions of affordability, which together with tariffs are increasingly a voter concern.
Mike Shepard, thank you so much for being with us. Always wonderful reporting. Henrietta Trace of Veda Partners writing, because the president's hands are tied on tariffs until November, be on the lookout for other punitive measures in the trade arsenal. Right on cue, Henrietta. We did get a Truth Social posting this morning that did seem to suggest at other such measures, talking about licenses. Henrietta, before we get into your take on what happened on Friday, what's your take on the idea of using licenses to penalize certain countries?
Yeah, licenses were a prominent feature of the Supreme Court oral arguments. The president brought it up in an interview with the New York Times that was later published. The licensing fees piece allows for the White House to do a lot like, if you'll recall, the ZTE Huawei issue back in his first term, when he could be very punitive, very targeted at individual companies, individual countries, and compel them to stay at the table. That's what a licensing fee can do pretty swiftly. Massively confusing, as y'all were talking about earlier. And to Priya's point from before, not at all any kind of clarity, but it can be very pernicious, a lot like the IEEPA tariffs.
Henrietta, if the administration knew that IEEPA potentially could be struck down in court, why didn't they just go with 232 and 301 investigations from the very beginning?
Excellent question. And I think it gets to the idea that it didn't take any time. You didn't have to get any commentary from the public sector, so businesses or individuals that be impacted. The president could just go it alone. And that's not an option for him with 301s or 232s. And you have to have at least a cursory sense of an investigation. So it takes too long. It is going to get hammered in the public eye. You know, the vast majority of Americans do not support the tariffs. Most companies do not support the tariffs. In fact, it's mostly the labor unions, AFL-CIO, or the steelworkers unions, for example, that actually support the tariffs.
And at this point, he's going to be giving a State of the Union address. He's going to be focused on affordability. As you said, look at the polling. Majority of Americans do not support the tariffs. Is this the right message he needs going into the midterm election? How does he quickly move on from tariffs to something else?
You know, If you look at the president's approval rating, going back to when he took office, he cratered in April on Liberation Day, and he's never recovered. And what we're going through right now, in my opinion, is Liberation Day 2.0. Think of all the uncertainty we have. What is the authority? The resting tariff rates on the UK and the EU have now risen. They are not 10% anymore, or even just 15%. It's 15% plus most favored nation status, which is another 3 or 4 percentage points. So we don't have trade deals with the UK or the EU that have reciprocal tariff rates in them. We don't have any continuity. There's another risk of Section 301 investigations coming. The president changed the rate by 5 percentage points within 24 hours over the weekend. We are in Liberation Day 2.0. And then if you look ahead to July 24th, when these Section 122 tariffs expire, you are now then going to be in Liberation Day 3.0, because we'll have to cycle into those 301s you mentioned. So the confusion is rampant, and I anticipate we're going to see another leg down in the president's approval, just like we did on April 4th.
Neil Gorsuch, the Justice Gorsuch, heavily focused on major questions doctrine, which defenders say basically bars the president from this sweeping broad power, and a lot of questions need to be authorized by Congress. Where is Congress right now when it comes to tariffs? There were some individuals that are staunch allies of the president saying that they should basically have a reconciliation package to push through his use of IEEPA.
Yeah, my odds of reconciliation are 20% or below. You're not going to get another package. You're not going to get a $2,000 tariff rebate. The members don't support it. They voted half a dozen times to strip these tariffs. He doesn't have the votes to extend them, either via reconciliation or not. I think the Republican Party sees that 72% of independent voters oppose the tariffs. Rich households, poor households, college educated, not college educated, rural, suburban, urban, everybody opposes the tariffs. You can't run in farm country on extending the president's authority to impose tariffs that have halted soybean sales to China. It's a losing argument, and one the president is now entering into for a second time.
Henrietta, it does seem, though, like there doesn't seem like there's a lot of will among Congress members to take back some of the power that the Supreme Court Chief Justice Gorsuch was saying, hey, you guys have this authority. At what point do you see Congress stepping back in, or is this the path of travel that presidential power is only going to grow as the lack of motion from Congress continues to leave no policy really created?
Well, we had actually started to see a bit of a snowball where members were willing to vote against the IEEPA tariffs. Just a few weeks ago, we voted against the Canadian tariffs, for example. But now that the Supreme Court has struck it down, we can be left with sort of the inertia of just waiting for this Section 122 to expire. So I do expect for there to be legislation filed, for example, on issuing refunds, for example, on repealing the Section 122 itself, otherwise condemning the IEEPA tariffs that are now null and void. Members will want to take some of those votes. It's difficult to get them to act, though, because there's an automatic expiration, and they can successfully not see the tariffs extended if they just wait it out. And I think it's really interesting that they go on vacation July 23rd and the tariffs expire July 24th. I think that's amazing.
Henrietta Trays of Veda Partners, thank you so much for being with us. They also are not in their offices today. They were supposed to come back for a voting session. Evidently,
good luck, though. It's going to be chaos getting back to D.C., which is dealing with snow. And if you think New York deals with snow badly, okay, D.C. is on a whole other level.
An inch and everything shuts down. Coming up, Crispin Love of Piper Sandler as Blue Owl anxiety rattles the private credit market more broadly. Plus, Danny Berger with your morning movers. Merck, higher on news it will split up its human health division. Those shares up about 1%. From New York, this is Bloomberg Surveillance. Good morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
A day of confusion. If you want to see what confusion looks like, look at the cross-asset board. You can see futures declining. Yes, they're down about almost 0.5% for the S&P. You're seeing a dollar that doesn't know what to do. Now it's strengthening. The euro lower versus the dollar, 117.76. Yields lower by about a basis points. Crude going nowhere. Bespoke Investment Group had this out over the weekend that I thought was fascinating. Year to date, the S&P 500 has traded in an exceptionally narrow range, the 2.7 percentage point range, from 1.9% up at year to date, or down year to date for the low, to up 0.7% on the high, is the lowest in the index's history, which just points to the volatility and the paralysis that we have right now.
Right, and all the drama that's been happening under the hood. You'd have to think, though, how much higher would the market be today if Trump just said, all right, the Supreme Court said, I can't do these tariffs, I'll reconsider my options, but doesn't immediately go for the 122 section and go from 10 to 15% in mere hours, doesn't immediately put out truths showing his frustration with the Supreme Court and potentially his ability to use licenses. I wonder how much higher the stock market would be today, this morning. And maybe he should consider that.
You have a good point, though, about the rotation. How much is this tariffs and how much is this really what we're seeing with respect to AI? 2 hours away from the cash open, here are your morning movers. Danny Berger. Danny.
Hey, Lisa, quite a bit happening in pharma today. So Merck announced that it's going to be splitting its company into two. Now, keep in mind, there is a patent cliff for a lot of drug manufacturers. Merck is one of them for their key drug, Keytruda, that happens in 2028. So it'll be separating its cancer treatments and its non-cancer treatment business. Now, relatedly, there was a deal announced this morning of Gilead. It will be buying Arcellx in a deal for about $115 a share plus a $5 share, right if a couple things go correctly. So those shares surging 78%. They are a cancer immunology treatment company. Again, all of this with an eye towards some of the patent cliff expiring and these big drug giants trying to beef up their portfolios. Finally, we also got earnings this morning from Domino's Pizza. It was a beat across the board for same-store sales, up 5%. They were able to sell higher volumes. They were able to charge more for their pizzas, and they were able to get more in franchise fees from their franchisees. The Bloomberg News team pointing to the success of their stuffed crust pizza, and who am I to argue with that? Lisa?
Thank you so much, Danny. I have a feeling that a lot of college kids agree with you. On our radar this morning, U.S. Customs and Border Protection will stop collecting tariffs deemed illegal by the Supreme Court. The agency says it will deactivate all tariff codes linked to the now-defunct IEEPA-related orders tomorrow. Trade Representative Jamieson Greer saying trade deals with U.S. partners remain in place and should be honored. The EU, meanwhile, is preparing to freeze the ratification process of its U.S. trade deals until receiving details from the Trump administration. And lastly, the U.S. and Iran set to resume nuclear talks in Geneva on Thursday. The Trump administration is pushing for concessions As it continues to build up a military presence in the Middle East, the president warning limited strikes on Iran are possible. And what we were hearing from Norman Rule earlier this morning, AMH, is that increasingly likely, given the fact that we have not seen a buildup of this type without some sort of military action.
Right, we haven't seen this type of buildup since 2003. At the same time, the president hasn't made a final decision. He has talked about, there's been a lot of reporting that potentially that buildup, they think, would force the Iranians to really negotiate at the negotiating table. Norm Rule says they're just buying time. And I think the key question for the regime right now, do you save face and just take the hit in terms of a strike and potentially be able to shore up your regime? That's the existential threat. Or do you cave at the negotiating table? And that's what they're dealing with right now. And we'll see how the Geneva talks go on Thursday.
Yeah, but this is another thing to watch, given the fact that geopolitics still very much in play, and potentially even more so after the IEEPA ruling. Turning back to markets and a real focus on private equity. Private equity profit returns falling to their second lowest level since the 2008 financial crisis. That, according to Bain. Blue Owl adding to stress in the sector. So that's the private equity side. Of the private credit side, Blue Owl permanently shutting the gates on one of its funds, preventing investors from withdrawing cash and selling assets to return investor capital. Crispin Love of Piper Sandler is maintaining his overweight rating on the stock after cutting his price target earlier in the month, writing, "We view the transactions as an incremental positive and also gives us confidence that its other private credit vehicles will be able to meet upcoming redemptions." Crispin joins us in person, in the flesh. Thank you so much for braving the snow and being here with us. So I want to start with just on a 30,000-foot level. How big of an existential threat do you think has been introduced to the private credit sphere because of retail investor involvement on an increasing level?
Yeah, so it's very interesting on the retail side, and you have to step back, and these are semi-liquid products. So what we've seen recently, it's actually a good reminder to retail investors that when you're investing in these types of products, they are semi-liquid. You might not be able to get liquidity next Wednesday. It's a lot different than, say, buying a stock of Apple or an S&P ETF. So I think this is a good reminder, and it could impact retail flows over time. But I think it's definitely important to keep an eye on this.
So there are a couple of different aspects of this story that I find interesting. On one hand, there has been a focus on bringing more retail investors in. On the other hand, there's been more investment on the part of private capital to AI-related sectors and to a lot of technology that requires fixed income, that requires credit investors to really back these investments. I mean, how much does this highlight the difficulty of having liquidity at a time of such great uncertainty around what the disruption is going to look like tied to AI?
Right, absolutely. The AI story over the last few weeks has definitely picked up. And looking back a few months ago, it seemed like some names, including Blue Owl, were under fire for being invested in AI and data centers, and people were talking about an AI bubble. And then more recently, in the last few weeks, you have AI disruption and disrupting software, and Blue Owl does screen as one of the higher investors in the software sector. So that's what people are really focused on now, and it comes back to where Blue Owl was able to sell a good chunk of assets just last week, with a good portion of them being software.
Yeah, although they are preventing investors from withdrawing cash, and they're giving sort of a broad distribution, and people are wondering, okay, well, what's left, right? Are they just selling the good stuff at 99.7 cents on the dollar, and do they have a lot of other stuff that there's going to be a little bit more difficult? I mean, I just wonder how much you see this as the tip of the iceberg. We really haven't seen the reckoning just yet.
Right, and I think it's a little bit nuanced when you look at the gating factors that show up in the semi-liquid, non-traded BDC funds. So if you look at OBDC2, so they sold $600 million of loans last week. And what they're doing, it's not necessarily gating or preventing liquidity from going back to investors. They're actually returning capital. So with those sales last week, they sold roughly 35% of the portfolio. Within the next 45 days, investors are going to receive 30% of their capital back, and then 5% plus quarterly on a go-forward basis. So you get to the end of the year, and you have investors receiving 50% of their capital back for this fund. So this was a closed-end fund. There was always going to be some type of liquidity event. It could have been an IPO. It could have been a merger with the public vehicle, which they tried to do late last year. That didn't work due to the valuation of OBDC. So this is the other option where they're going to be returning capital back to shareholders.
There was another story Business Insider wrote about Blue Owl and the fact that they couldn't secure the financing for a data center in Pennsylvania. I think it was about $4 billion. Is that an AI story? story, or is that a concern for Blue Owl?
So I think it's more of an AI story. When I look at the data center opportunity for the alternative space, there is just so much demand. All the alternatives, Blue Owl and others, Blackstone, et cetera, are looking at so much demand for the AI data center space. And Blue Owl, they acquired IPI a couple of years ago, and that has been able to give them a foothold in this space where it's going to be significantly growing over the coming years. And I think, and when you also look at these investments as well, you have to take into account it's not equity, it's more real estate focused or credit focused. They're 15-year leases, there's rent escalators, and they're able to earn very attractive returns on that.
We are seeing Washington sound the alarm on this, notably Senator Elizabeth Warren. Do you think that's going to impact the space and retail investors and the fact, should people be questions again about should people have this in their 401ks?
Yeah, I think that's a great question. And when I look at the intermediate or long-term risk to what's happening right now, I think it's going to change how retail looks at the asset class and what could happen going forward. The last few years have been really focused on the private wealth channel. And then, of course, there's been a lot of news in the last 6 months or so of potential 401k. And as I said, these are semi-liquid products, so you have to keep that into account. But when I look out over the next 6 months, year plus, this could change how these types of assets are in 401ks. And you could have plan sponsors and employers not necessarily wanting the headline risk of including private credit, private equity into 401k plans.
What's the liquidity backdrop for a number of these private debt investors, based on the fact that we are expecting a significant amount of disruption? I don't know if you watched or if you read Citrini 7 and some of the analysis, the sort of doomsday, futuristic, nihilistic kind of a view of white-collar work going forward. Do they have liquidity to take advantage of some of the fallen angels or some of the beaten-up players at the same time that they're being forced to potentially return capital or seeing losses in some of their loans?
Right, absolutely. And I think you look at the liquidity in two separate ways. One is liquidity back to investors like the non-traded BDC funds. And I think the Blue Owl sales last week were actually a positive on that, where they were able to sell $1.4 billion of loans at 99.7 cents on the dollar. And then just on liquidity for investing and taking advantage of whether it's software investments or other areas, the alternatives have tons of dry powder and they have capital to put to work. And that's Blue Owl, that's Blackstone, that's almost everyone in the space where there has been a lot of capital that has flowed in, especially on the institutional side, so they do have the capital to put to work.
As an analyst facing this amount of uncertainty, how do you even begin to quantify what the disruption could look like, given the fact that you're hearing polar opposite equations about what this will do to employment, what this will do to business models, what this will do to the default rate going forward?
Right. Yeah, there is a massive sentiment divide when you look at what the alternative asset managers, the management teams are saying on quarterly earnings calls and intra-quarter versus how the investors are viewing the space. So it's something that we need to keep a very close eye on. And I think if you look at the last couple of quarters, which is when a lot of the worries have really ramped up, is results have been very good, but you have also seen, okay, investors are looking, okay, what's 6, 12 months down the road? And on the software side, all the alternatives, they gave their software exposure. When you're looking at a percent of AUM, most of them were somewhere in the 2 to 8% range. So it's definitely worth it to keep an eye on those. And you have to be focused on, okay, not all software is created equal. It's where are you invested in the software stack.
Crispin, thank you so much for being with us. Crispin Love of Piper Sandler. Be safe out there as you try to get home. It's something that I talk about at home all the time, AMH. I mean, this idea of how much disruption there's going to be. And then last night, my oldest son sent me a 6-page prep note orchestrated by Claude that he sent to me for this morning that was, but at the same time, highlighting his use of it.
Well, they do say that actually it's the kids that are getting so used to using this. They're the ones that know how to adapt, and they're going to be the ones that are ripe to have those jobs coming out of college, the individuals that are learning on these AI models right now.
Yeah, and then you talk to their moms and they're all freaking out. So which one is it? We shall see. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. More than 35 million people across the U.S. Northeast are under blizzard warnings as a potentially historic winter storm brings heavy snow and strong winds. New York City Mayor Zohran Mamdani closing streets, highways, and bridges to most traffic from last night through noon today. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. Meanwhile, the U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. Investigators identified the suspect as 21-year-old Austin Tucker Martin of North Carolina. President Trump was in Washington at the time of the incident. And this was incredible to watch. The United States men's hockey team won their first gold medal in 46 years. Team USA beat Canada 2-1 in overtime. The men joined their female counterparts as champions at the Milan Cortina Games. It's the men's first gold since the, quote, miracle on ice, where Team USA beat the Soviet Union in 1980 on the exact day. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. They might be in Washington, D.C. at the State of the Union, right, MH?
Yeah, there was a video circulating online. It sounded like Trump talking to Kash Patel. Some reason the FBI director was there and invited them definitely to come to the White House, but maybe even the State of the Union. I mean, it's huge. The U.S. has lost to Canada, I think 2002, 2010. I think this is only our third Olympic goal. Is that what Yahira just said? So, I mean, a pretty incredible game.
Yeah, definitely one that the U.S. will be celebrating. Up next, bracing for tariff turbulence.
We're all doing calculus now, trying to figure out sort of how this feeds through to our individual businesses as well as to our partners. There'll be a lot of turbulence that goes on.
Torsten Slok of Apollo joins us next. This is Bloomberg Surveillance. Good morning.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you
up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The market doesn't know what to do this morning. You are seeing a bit of a risk-off feel, at least in futures in the United States, a little bit of a risk-on feel. If you look over in Asia, it has been up over in China, down about 0.5% on the S&P. You do see a little bit of dollar strength after having weakening earlier in this session, 117.76 euro-dollar cross, and 10-year yields lower by about 1 basis point. Under surveillance this morning, bracing for tariff turbulence.
We're all doing calculus now, trying to figure out sort of how this feeds through to our individual businesses as well as to our partners. It's hard to know. So I guess there are a couple of questions that come to mind immediately. One, is there a requirement to pay back the firms that have paid in the tariffs? If so, that's a lot of disruption, and there'll be a lot of turbulence that goes on.
Here's the latest. President Donald Trump imposing new global tariffs, citing a balance of payments crisis after the Supreme Court's striking reversal. Thousands of companies and importers preparing to launch a battle to recoup billions of dollars in paid duties. Torsten Slok of Apollo remaining positive, writing, "We remain constructive on the U.S. economic outlook, but investors should pay closer attention to tail risks than usual." Torsten, I'm so pleased to say, joins us now. Torsten, thank you so much for being with us. I want to start there with what the IEEPA ruling does for the economic outlook. We were speaking earlier with Priya Misra. She said that this could potentially increase uncertainty, a plateau of uncertainty that could reduce hiring plans. I mean, why do you not see that as a likely outcome?
No, you're right, Lisa. And Raphael Bostic, the NFF president, is right, because we all need to reopen our spreadsheets. First, when the Supreme Court ruling came out, the first conclusion was, well, a trade war is by definition stagflationary, meaning normally prices go up and sales go down. If you then take away tariffs, of course, you will begin to see the opposite, namely Goldilocks, namely lower inflation and higher GDP. And then came, of course, along the 15% on top of that, which basically brought us back to where we were before. So my forecast over the weekend basically went through a little bit of a roller coaster, but it ended up basically the weekend exactly where it was before the Supreme Court ruling. So the conclusion is we will likely still continue to have now some upward pressure on inflation. We will still have a strong economy in the background, but it is indeed the case, as you're saying, that there is still now more uncertainty, especially because the Section 122 tariffs only are going to last for 150 days potentially.
Torsten, are you surprised that yields are a little bit lower, even though there is the prospect of tariff refunds being doled out?
Yeah, because the issue suddenly also becomes if the tariffs have to be refunded, then of course the U.S. government needs to go out and find another $150 billion. And if that has to come through issuance, that of course would mean a steeper curve. So this is why this is a tug of war between more issuance potentially putting upward pressure on rates, and on the other hand, uncertainty more elevated, still elevated level of tariffs, all that pulling in the opposite direction, namely slower growth and therefore weaker demand.
Torsten, you won a huge applause from the White House over the summer when you said the president may have outsmarted us all when it comes to tariffs. Do you think he's outsmarting us now?
Well, of course, the issue at the moment is that what has certainly happened is that the Europeans, the Japanese, the Koreans, the rest of the world has woken up a lot to a lot of issues that before were just being assumed being dealt with by the U.S. But the issue, of course, is whether the short-term costs are going to be more substantial. And that's, of course, this renewed uncertainty that Section 122 is fundamentally different, of course, from unlimited forever tariffs. Because when it's only 150 days, it raises a lot of questions around, well, what is the persistence, if you will, or how long time are these levels of tariffs going to stay in place? And that does, unfortunately, introduce a new dimension that we suddenly now have to go roughly half a year down the road. And then we need to have another discussion about, well, what is now the level of tariffs at that point?
So what do you think this does to the consumer?
Well, on its own, well, if you look at the Yale Budget Lab, they do have that before the Supreme Court decision, the level of average effective level of tariffs was about 16%. Now going down to 9% after removal of course, with the Supreme Court taking away IEEPA, now back to 15% on top of that. That brings us to 14%. So the short answer, Anne-Marie, to your question is that the impulse from tariffs went from 16% average effective tariff rate to 14%. So that is a modestly lower forecast for inflation, at least on its own. So in that sense, it's made the Fed's job a little bit easier because we now have that inflation in the forecast is mildly lower than what it was just a week ago.
Okay, so I'm trying to pair all of this together. It's been a very confusing morning for me, I have to say, because on one hand, you've got the tariffs, and the other hand, people are still processing the GDP number for the fourth quarter that came in a lot lighter than expected. People are processing the fact that we got core PCE higher than expected, and they're processing a lot of doomsday prognostications about AI. I'm just wondering where tariffs fit in with some of the other narratives right now. I mean, is tariffs really the dominant storyline, or is it really the AI side, and frankly, even the GDP numbers that were highly disappointing?
You're absolutely right. Well, the GDP numbers, first of all, of course, the BA did say that 1 percentage point was subtracted because of the shutdown. So if you add 1.4 plus 1, you do get to 2.4, which is not too bad. It's still above the CBO's estimate of potential, which is at 2%. But you're right. The list of bullet points, meaning the narratives for how we all talk about the U.S. economy, is getting fairly lengthy. Of course, we have the tariffs. That's been around for a while. We have the AI story. That's now also been around for a while. We also have the important story that immigration restrictions have slowed down, of course, the flow of people coming into the U.S. That is a very important driver of why job growth has been weaker. And we also have, of course, the general level of uncertainty now coming along with, now suddenly we have to talk about trade wars again. So you're right, there's a lot of different forces pulling in different directions, which is why ultimately the forecast that we view is still that the economy is doing well, but it just tells us that we're going down the fairway. We feel comfortable that there was a 90% chance that we will just continue all the way back to the hole here on the golf course. But now the probability of going down the fairway and hitting up the rough has just changed quite dramatically. Now the chances of landing in the rough have gone up from 10% to 30%. In other words, the tail risks of one of these things going wrong, either AI being widely successful or AI disappointing, could also be something that puts us into the rough. So yes, you're right. The outlook has become more uncertain simply because there's all these potentially very important dimensions in the outlook overall.
Torsten, if AI is wildly successful, will that be wildly unsuccessful for the U.S. economy? This is one question increasingly that people are asking.
Yeah, I know, and there was some discussion on Twitter or X overnight about this. I think those statements are widely exaggerated. Of course, if we do see the unemployment rate begin to go up, of course the government will begin to react. We would see a fiscal reaction. We would begin to see more support to limit the rise in the unemployment rate. But perhaps most importantly, let's not forget, AI is solving tasks. AI is not replacing jobs. And we all in our jobs, some have fewer tasks in their jobs, some have more tasks in their jobs, but there really is very few people, if anyone, in the U.S. economy who only have one task. It's already the case in telemarketing. Even if you think about paralegals, even if you think about all the other things, media, there are basically no workers in the U.S. who only have one task. So this whole idea that AI revolution is going to replace all of us, I think it is just wildly exaggerated.
Torsten Slok of Apollo, thank you so much for being with us, and stay safe out there. News anchor by day, snowplower by night. I mean, that's sort of the argument of how people can potentially protect themselves going forward.
Yeah, potentially maybe you have multiple jobs. It is interesting, over the weekend, though, the Wall Street Journal did have this report from Andy Kessler about the AI hysteria, and basically came down to it. It's not the dystopia and it's not the utopia. Reality is going to be somewhat more mundane, somewhere in the middle. But you are seeing different competing narratives about what actually AI could mean for society. And a lot of questions right now that it's facing the government. It's going to be a huge part of policy going to the midterms in 2028.
Well, it's going to be a huge part of NVIDIA's earnings coming up on Wednesday. A lot of people looking for them to be the biggest beneficiary of the $650 billion spending plans of just 4 of the big tech names. Coming up, we've got Jason Draho of UBS, BMO CEO Darryl White at an infrastructure conference, Ballerina Urici of T. Rowe Price, and John Vin of KeyBank. From New York, this is Bloomberg Surveillance. Good morning.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There's not really a set way to refund these tariffs, given how big the amount of money is.
Our thought is that the tariff regime will continue.
At some point, all these tariff discussions will be settled.
The court might change the process. Tariffs are here to stay.
Tariffs are an important tool that are not going away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. U.S. futures lower with investors gauging the fallout from Friday's Supreme Court ruling. Trade policy remaining in flux ahead of President Trump's State of the Union address tomorrow, and a slew of earnings reports coming out throughout the week, including NVIDIA, also Home Depot and Lowe's, as economists look for new signs about the U.S. consumer. Very much a focus on what the tariff ruling will mean for the consumer, given the fact that they paid all of these tariffs and the refunds are likely to go to the companies if they go anywhere. The confusion still swirling.
Right, $170 billion about that we could potentially see refunded back to these companies that lined up already to sue the government for refunds. We're talking about massive companies like Costco, Alcoa. I think this is going to be a huge question when it comes to Lowe's and Home Depot this week when it comes to their earnings call. How do you view the new tariff rate? And do you think you're going to get refunds? And what does that potentially mean for your pricing power with U.S. consumers?
Yeah, and right now it seems like markets are trying to digest this and don't really know what to do with this. Ian Lingen of BMO Capital Markets coming out, priced for uncertainty. He pointed to the idea that 10-year yields are lower by almost a basis point, or really not moving around doing much at all, even though there is this question about what refunds will do to the fiscal deficit, what this will do to the revenue backdrop. Meanwhile, S&P futures lower by about 0.5% after closing higher on Friday. The swirl of uncertainty around what has to get repaid, but also the path of travel going forward with 122, 232, and 301 very much on the table.
Well, the path forward is 15% for 150 days, and then they're going to do something that's legally more durable, which we already have when it comes to 232 sectoral-specific tariffs and 301 investigations. Now, this is why I think it could get a bit confusing, is the president is clearly furious.
You saw that Friday on display at the White House, and you're seeing that this morning with Truth Social posts. Likely, tariffs are going to dominate headlines every single day until we get a little bit more clarity. And right now, we're not going to get that clarity anytime soon.
And we thought that we were past that, right? The peak uncertainty was beyond, and maybe we're just in the plateau of uncertainty. As Priya Misra said earlier this morning, right now, we are looking at futures just a bit lower. Coming up, we've got Jason Draho of UBS Global Wealth Management with stocks just off a bit. BMO CEO Daryl White breaking down the cost of critical mineral dominance. And John Vinh of KeyBank Capital Market previewing another big event this week, NVIDIA's earnings, which a lot of people have been waiting for. We begin this hour with stocks sliding down about 0.5% on the S&P as uncertainty weighs on Wall Street. Jason Draho of UBS Global Wealth Management writing, once the dust settles on the Supreme Court decision, the administration's tariff decisions may still favor running it hot. Jason joins us now. Jason, thank you so much for being with us. So explain, why does it suggest to you that it leads to a run it hot type of scenario amid a plateau potentially of uncertainty?
Well, I think we need to look at the current situation in the context of where we came into the year, right? The common narrative in the marketplace was it'd be sort of this run it hot environment where growth would accelerate because of both past stimulus, but also the assumption that you have the president who would want an economy that would be strong going into midterms. We saw the first week of the year, a number of policy announcements, they're all dealt with sort of affordability or trying to, lower the borrowing costs. So the question is, has the development with the IEEPA tariffs really going to change the view of how the Trump administration is going to approach policy this year? And Marie just mentioned that, the president is clearly unhappy with the results. It's going to dominate the headlines. But when the dust settles on this, are you ultimately still going to get a direction of travel where the effective tariff rate, which is kind of the simple way to think about this whole tariff dynamic, is it still going to go lower this year? And that was saying a lot of people were assuming that ultimately it would drift a little bit lower. Has that really changed or not? And I think right now I'd say probably has not changed. We don't know for sure, but I think the direction of travel still is that ultimately that's going to go lower, that you have an administration that would want the economy to be relatively strong going into midterms and not actually look worse from a stagflationary perspective.
Uncertainty takes a toll, though. We've seen this a number of different times. You have companies that are facing off with the uncertainty of AI and what kind of disruption there could be. You're facing off with companies that are unclear exactly what kind of tariff regime they're in. You have companies that are facing off with the uncertainty of what trajectory the economy will be. And so why do you see this as not being enough to pose a drag on growth the way that Priya was talking about?
Well, think about what's already in the pipeline for growth. We have stimulus that was passed through the One Big Beautiful Bill. We're seeing tax refunds, coming in now that they're at least running ahead of last year. This is the kind of expected. You're going to see incremental capex spending from AI that was bigger than what was expected just 3 or 4 weeks ago. So we should see a momentum boost going forward. So the question then is, well, how much should this uncertainty relative for tariffs weigh on that path going forward? And that's that's an open question. Is it 0.1% of GDP? Is it 0.2? I think maybe it moderates a little bit, but we're still likely to see growth accelerate for other reasons that were already sort of taking place and that are not easy to reverse, at least in a very short time period.
Well, when it comes to reversing, I'm thinking of the refunds and the potential refunds, $170 billion worth that the U.S. lower court for international trade will be dealing with. If we do see big refunds to corporate America, is that market positive or negative because the deficit?
Well, it's probably more positive for equities and sort of negative for fixed income. I think ultimately, again, if it comes down to you're shifting where the tariff burden lies. So if you take the administration's word over the course of the weekend that ultimately tariff revenue this year is not going to be a whole lot different than it otherwise would have been, that shouldn't really have a material impact on where rates are, especially the back end of the curve. If these tariff refunds actually take place over a period of time, then it probably becomes very company specific. Those who have the ability to kind of reclaim those tariffs, let's say it's some of the big retailers, if they're not necessarily going to pass that on through lower prices going forward, it's not necessarily the exporters. Ultimately, that should just be a net benefit for those individual companies, not necessarily the markets overall. So, I'm not saying this is a non-event at all. That's not the case. But I think we have to sort of think about what is the material change in the economic outlook. And if we compare this to Liberation Day, where that was a much higher level of tariffs than investors expected, I think this is more adjustments at the margin. It creates uncertainty that's not helpful, but I don't think it changes the overall narrative for the marketplace. Once we kind of step back and think about a couple of weeks where we're going to be versus where we are right now.
Well, we're going to be in the summers that the 122 expires, and they're going to be introducing the new investigations of 301s and 232s. At the same time, you say they want to run it hot. Can we expect more when it comes to fiscal policy out of this Congress before the midterms?
Well, I think that's very unlikely. I guess the real question is how much does the administration go forward with these investigations? We know they will. The question is, when will they impose tariffs? What magnitude will they be? There's a lot of discretion there. And so once again, sort of, sort of maybe things calm down a little bit. What levels will they put it in, and will they do it in such a way that will create perhaps exemptions, carve-outs, things that were already taking place with certain food products, steel and aluminum, that would again suggest that the overall direction of travel for the effective tariff, the overall drag on the economy from these tariffs, is actually going a little bit lower, not higher. Again, this is a conjecture, but I think that's sort of not an unreasonable conjecture that ultimately that was the path before. Has it really changed? Maybe the magnitude, but I think not necessarily the direction.
So, Jason, would you be taking advantage of the uncertainty that's currently being priced in on the margins, the fact that you've seen the S&P essentially going nowhere, at least on an index level? And would you recommend that your clients go more heavily into U.S. equities at a time when everyone's looking outside?
Well, the story that we have for the markets right now is that we kind of call it the great broadening, that the equity markets, for multiple years have been dominated by U.S. large cap growth companies, large cap tech. What we're seeing over the past year, and it's continued this year, is sort of broadening out of performance, whether it's within the U.S. to other sectors that we like that are more cyclically oriented, whether it's international markets. So we think that will continue. That story has not changed. And it is true that the S&P has been a pretty tight range from about 6,800 to 7,000, really for a couple of months. That may not really change materially, but within it, there's sort of opportunities. And ultimately, we think as the economic data sort of materializes, you see the acceleration as earnings kind of come in and you have sort of stalled earnings growth, that will be sort of allow the markets to sort of break above the range they've been. I may take a little bit of time because there is this tariff uncertainty. There's still the questions about AI disruption, like how companies will sort of work through that. But the direction of travel to me is ultimately the economics and the growth story for earnings and GDP will justify equities in the U.S. and globally going higher by year end.
In this kind of environment, Jason, do you prefer liquidity over liquid assets that might offer, at least on the face of it, a little bit extra incremental yield?
Well, I think at least from an equity market perspective, one of the things that I sort of think about, especially dealing with wealth clients, those who can have a longer horizon, in some ways, if there's a lot of volatility, you get market pullbacks, you can be a liquidity provider rather than asking for liquidity. So I think that's something that I look for is, if there's dislocations or disruptions in the marketplace for reasons that are perhaps technical related, as the markets sort of overshoot as they react to this information, does it create opportunities to sort of take advantage of that if you can take a long-term horizon? So that's kind of the way I think about the liquidity dynamic right now. Given the market's volatility, it's really hard to be too nimble. So it's trying to take a perspective like, do you ultimately believe the long-term structural story has changed? If it hasn't and the market sort of is dislocated, that's an opportunity for you to provide liquidity rather than sort of taking advantage of liquidity in the marketplace.
Jason Draho of UBS Global Wealth Management, thank you so much for being with us this morning. As we are sitting here in this lovely warm studio, New York City is in a state of emergency. Much of the East Coast faces blizzard conditions. Lionel Moise of ABC News joins us now. Hopefully he hasn't blown away, although he does have some more snow on him. It does seem like things have kind of picked up.
Yes, things are picking up, and you're rubbing it in my face, but this is the name of the game. We have had a lot of snow. It has been coming down constantly all morning. The snow is getting a little bit bigger. It is coming down heavier, and the wind is certainly blowing. We are in a travel ban until noon here for the entire city of New York. They have just extended it just a few minutes ago for New Jersey as well. They really want people off the roads so they can focus on clearing them and keeping everyone safe. And these conditions are not going to let up at least until a little bit later this afternoon. So this has been an ongoing situation. I have been standing in this one location since about 3 o'clock this morning, and it has constantly just been coming down.
Well, this raises a question, Lionel, about some of the other travel mechanisms, like including the airport. I mean, we do know that 5,000 flights have been canceled. Do we have a sense of what the process is of reopening? I'm thinking about schools with school days, as well as, of course, some of the mass transit.
Yeah, those are really important questions. So mass transit was canceled for things like the Long Island Railroad. Some of the regular subway routes had to be postponed as well. Hopefully those will be up and running sooner. A lot of flights are canceled, though. A lot of people are not going to be getting out of here until at least Wednesday. 5,000 flights canceled today, another 5,000 already canceled for tomorrow. And as we see each and every time that there's a big weather event, there is a ripple effect. It takes a while to get those flight attendants who, too, might also be trapped back to New York to then get you to your destination home. So, you know, it is pretty. Hopefully people are able to enjoy it if they can do it safely, but we are going to be dealing with this for quite some time.
Well, thank you so much for standing out there, and hopefully you can get warm soon. ABC's Lionel Moise, thank you. Up next, we've got the morning calls, plus BMO CEO Darryl White breaking down the cost of critical mineral dominance. That's coming up next. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
I think we're going to see pressure on the markets. I think markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again. Given that he likes maximum pressure, I expect a lot more noise as he tries to put the clamp back down on China. So that's why I'm a little bit nervous about markets, right? This 10% or 15%, it's not done.
That was Peter Scheer of Academy Securities. As we do see equities futures just a bit lower this morning on the heels of some of that uncertainty, down about 0.4%. We had seen dollar weakness earlier this morning, now essentially flat on the euro-dollar cross, 117.85. Interesting to note, and this is something that Ian Lingham pointed out as well, the stability in bonds. It was thought to be this risk-off move in bonds if we did get this IEEPA ruling by the Supreme Court. We're not seeing that image. I think this is interesting given the fact that refunds are probably coming, and this does call into question how much revenue the U.S. will get.
Probably, but maybe not so sure, and it's going to take months. This isn't going to be an overnight story when it comes to the refunds. This is going to be adjudicated in court, and potentially it won't even be all of the $170 billion that individuals are lining up for those refunds. So I think that story is going to take a lot more time to play out. And then what do we have to deal with in the short term? It's the fact that we still have a 15% tariff rate. It's a little bit lower than the effective tariff rate, but as Leland Miller said, tariff rates are not collapsing.
And now we deal with licenses, evidently. We'll be parsing through that going forward. Time now for the morning calls. First up, Alethea upgrading NVIDIA to buy ahead of earnings, calling the stock, quote, too cheap to ignore. Those shares are up 0.3% in pre-market trading. Next up, BTIG lowering its price target on Snowflake ahead of earnings later this week, noting initiatives only target existing customer spends. Those shares lower by 0.4%. And finally, Wells Fargo upgrading Alphabet to overweight, saying it has, quote,
Key traits of an AI winner. The share's up 0.5%. Let's head over to BMO Global Metals Mining and Critical Minerals Conference. The U.S. moving toward a strategic reserve as governments and corporations race to secure raw materials. BMO sits at the center of the shift as one of North America's largest cross-border lenders. BMO CEO Daryl White joins us now. Daryl, I hope it is much better weather where you are right now. I want to just start with how important and how much more activity this sector has seen, given the fact that there is this renewed interest in building out the U.S. infrastructure.
Yeah, well, thanks for having us, Lisa. And the weather is a little bit better. I hope you're keeping safe in the snow and the storm. It's very important when I step back and think about what we're hosting here this week. It really is the greatest metals and mining show on earth. We've got in the neighborhood of 7,600 one-on-one encounters that we're coordinating and hosting. We've got 350 capital providers, which is the most we've ever had in our 35 years doing this. And we've got over 600 corporates who are here as well, taking part in a really important conversation, I think, in this moment in time, in particular, when we think about the global forces that are colliding into the critical mineral space. This is a very important conversation at a very important time for the economy and for the future of the next 5 or 10 years of our resilience agendas.
Daryl, we'll get into exactly what the demand could look like, which metals are going to be priority, what the production plans are going to look like. I am curious how much people there are talking about tariffs this morning, given the IEEPA ruling by the Supreme Court, the fact that metals might be among some of the most affected.
Yeah, you know, Lisa, I think it's early days. I mean, the announcement's a couple of days old on IEEPA. If you look at the market reaction, it's been pretty subdued, as we've all been talking about this morning. I think part of that is because some of the outcome that we saw over the last few days was probably priced into bond markets, so we haven't seen much of a reaction there. And if you talk to most of the corporates that we're dealing with, the reality is, over the course of the last year or so, the instability and the volatility that's been brought by various decisions over the course of the last year on tariffs have become a little bit more normal course. So in the meantime, they've rebuilt supply chains or organized themselves in different ways to have resiliency in how they think about dealing to surprise, or maybe not such a surprise, as the case may be, depending on the audience. So in the meantime, more stable than you might think.
How much do you hear also a discussion around domestic production and expediting some of the licensing around getting, say, for example, the copper mine in Arizona up and running at a time when there is this priority on metals of all sorts?
Yeah, that's a live conversation. I mean, I think it's a very important one, because if you think about the confluence of two forces, we've got the demand being driven by the AI power up. So the newest industries are literally dependent on the oldest industries. In addition to the global order reorganizing at the same time, there's a massive demand push here, and the response to that at the end of the day is going to hit a bottleneck on the supply side. So the needed reorganization of permitting, of getting to market faster, of regulatory reform is a really active conversation. And I think, as you know, we're seeing some positive developments on that, particularly here in the United States.
Are companies feeling confident right now, though, to pour money into the United States in this sector?
I think companies are feeling confident, and perhaps more importantly, we've got investors who are feeling confident and trying to pick their spots. And when we look at the North American continent, it's particularly attractive. There are other places in the world that are attractive as well, but they may come with a higher risk premium.
Do you see consolidation in this space? I know there was potentially going to be a Rio Glencore deal that fell through, but do you see potentially that this space right now, given everything you've described, is ripe for more consolidation?
Yeah, there is a lot of talk of consolidation. We've seen a fair bit of consolidation over the last 6 to 12 months, haven't we? And right now, if I look at our own internal pipelines, they're as full as they've ever been. Our teams have been responsible for advising on 70% of all M&A activity that we've seen in the sector globally in the last 4 years. We expect that to continue as we go through this year, and the conditions, both from a capital perspective as well as the efficiency perspective of the producers, are pretty constructive for that consolidation theme as well.
This is a space that the Trump administration has taken aim on to take actual equity stakes. Has that been positive, or is that concerning to the individuals you're talking to, because potentially it means less competition?
Yeah, but I would say on balance, it's a very good question, but it's generally been positive because it feeds into the narrative of needing more reliable, bankable solutions on particular demand signals. So we've got a demand signal, we can set a floor. Capital craves certainty, as we know, and certainty isn't a luxury. Certainty is something that folks need in the sector to make those investments. So on balance, well structured, these are considered fairly positive interventions. And we're seeing other countries around the world slowly follow step and look at projects like these as well.
Daryl, there is a lot of controversy, certainly in Montreal. I was just actually in Montreal just not a long time ago, and I was overhearing people saying that they're trying to avoid going to the United States. And you could definitely feel a certain sentiment there. Has it made it difficult for you, being both in Canada as well as having increased your U.S. platform, to navigate the growing tensions between the two countries?
Yeah, look, we've been doing business for 208 years, and 207 of them we've been in the United States. So this is a long game for us, and it'll be a very long game for us. We're committed. We continue to be committed to both countries, almost in equal measure. They're very important client bases for us, and we continue to run our strategy as we always have.
How much do companies on a cross-border level have difficulty making decisions about deal making, about investments, when you do see such an uncertain landscape that will affect the long term potentially, right? I mean, you think about the USMCA that could get renegotiated. I mean, how much is that affecting some of the discussions that you hear on the ground there?
Yeah, it is affecting the discussions for sure. I think what you've seen is we're now about a year into the volatility that we've seen around uncertainty of tariffs, all kinds of tariffs. But over that period of time, corporates move pretty quickly. They're able to reorganize their supply chains, make decisions based on the path of most certainty, not least certainty. And you do see some reorganization going on there. And our bankers here have been there to support them through all of those discussions.
Building on Lisa's point and putting hockey aside, we have seen a more acrimonious tone coming from Washington to this government when it comes to Prime Minister Mark Carney. I would just love your reaction from his speech at Davos, which didn't name the United States, but there was that tone that he was calling out the U.S., forcing allies to pick between China and U.S.
Yeah, look, I think in the end, if you look at the economic cooperation between the two countries over a long period of time, we have no anticipation that that's going to change. In the meantime, if you look at some of the middle powers of the world, Canada included, are there things that we can do for our own agendas, that we can consider what's going on right now as a bit of a wake-up call, whether in the country of Canada, it's interprovincial trade barriers, it's productivity and efficiency of our own, or diversifying our trade relationships at the same time as we preserve a wonderful relationship with the United States for the long term. Those are all good things.
You also in the past talked about how Carney should be cutting taxes. You don't think that Canada is competitive on tax. Do you like what you're seeing out of the Carney government?
I do, and I will also underscore that it remains early days. The government has been in power for a little less than a year now with a full mandate. There have been some changes that are positive. There are more changes along the lines of competition, along the lines of competitiveness, along the lines of competitive tax that always should be considered through any government, but I think we've seen material progress over the last year.
Daryl, is this the most attended conference that you've had of this type in terms of all of these questions?
Oh, by far. I mean, people are beating down the doors to get in here. The weather happens to be good. I feel for you in New York, but we've got a lot of important conversations going on around here.
BMO Financial Group CEO Daryl White, thank you so much for being with us and having the time today. And honestly, this is going to be a heated topic, especially in the metals issue, given the fact that we're trying to stockpile metals in the United States.
Right. The U.S. administration, this was a Biden administration issue as well. Critical minerals, this needs to be a national security concern. How they deal with it, we have seen different prescriptions from different politicians.
Yeah, coming up, we'll talk about the economic ramifications of this swirl of uncertainty. Blorina Garici of T. Rowe Price, as Wall Street looks for more clarity on trade, on AI, on a whole host of things. Plus, Danny Berger with your Morning Movers. This is Bloomberg. Good morning.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
On Friday, it was a positive for equity futures or equity markets. Today, it seems to be somewhat of a negative, dampening risk appetite, given the fact that we did get IEEPA overturned by the Supreme Court, used as a justification for President Trump's tariffs. S&P futures lower by 0.4%. Interesting response, though, both when it comes to what we're seeing in yields as well as what we're seeing in the dollar. Dollar weaker earlier this morning. Now it is slightly stronger. 10-year yields lower by almost 2 basis points. So given the fact that people were worried about the deficit in the face of some of the tariff refunds, does not seem to be a problem this morning. And of course, you do have that haven bid into gold. 1 hour away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa. Vanda Pharmaceuticals this morning, shares are higher by a whopping 39%, receiving FDA approval for some of its medication to treat manic episodes for bipolar 1 and schizophrenia disorders. This is now its second drug that is brought to market this year. So again, those shares soaring higher. Elsewhere this morning, all of the paper, cardboard, container-related stocks are all falling a lot. International paper, the poster child, no pun intended, down 7%. An industry report showing that prices have dropped considerably, down $20 a ton month over month. Analysts pointing out that it's bearish for all of these names and shows that there really is a lot of weak demand at the moment. Finally, a little bit of sell-side action. VF Corp, this is the owner of Vans, getting a downgrade over at JP Morgan after their latest earnings were a disappointment for their look-through for 2027 and 2028, the fiscal years of those. So they downgraded and saying specifically their Vans brand is going to need some work before it can improve. So shares down over 4 1/3% this morning, Lisa.
Bringing Ska back. Danny, thank you so much for that. Turning to the economy, investors and the Federal Reserve awaiting more clarity on trade from the White House, with President Trump threatening a global tariff rate of 15%. The Fed and everyone else. Bloomberg's Michael McKee joins us from the NABE conference. Mike, I'm just curious how the Fed is going to consider this, given the fact that they were looking through it previously.
Well, pretty much the same way. Chris Waller is probably the second most important man for people on Wall Street trading desks today after the meteorologist, because he's been leading the dovish camp, and he is speaking right now here and basically said that it's too early to make a judgment on tariffs, but he doesn't think they're going to have a significant effect, because he said even if the president puts on new tariffs, it will just be the same thing. They look through the tariffs because they think they'll be a one-off. What will perhaps influence him, though, is if the economy continues to show some strength, particularly in the labor market. He's one of the people who dissented at almost every meeting last year, and he says this time that if the labor market data for February are consistent with the stronger job creation and low unemployment rate initially reported in January, it may be appropriate to hold the FOMC's policy rate at current levels. But he goes on to say that this could be just noise, what we saw in January. And if that's the case, if the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate, and that such a cut should be made at the March meeting. So we're putting a lot on that early February announcement of what the jobs rate will be in March. Yeah. And we do get a lot of other Fed officials speaking this week, so we'll get beyond Chris Waller, we'll get a lot of idea about where they all are after the January jobs report and after the president's trade decisions. Today, Chris Waller, and then tomorrow, we get a host of speakers, including Goolsbee, Collins, Bostic, Waller again, Cook and Barkin, and more throughout the week. So the storm not slowing down the Fed, but we are continuing to wait and see in terms of what the ultimate outcomes will be at the March meeting.
Mike, before you run back to listen in on all of that, I'm just curious, how much discussion is around AI disruption and what that means to employment and growth, to some of Fed Governor Waller's points?
There is a lot of discussion about that here. Chris Waller is going to give a speech on it tomorrow, he says, so we'll hear more from him on that. But the economists here are all trying to figure out what everybody's trying to figure out. When does it hit the economy? How much productivity does it create? And there are several sessions at this National Association for Business Economics meeting on AI and what might be coming next.
Michael McKay, thank you so much, and we look forward to reporting throughout the week on this conference and exactly what comes out of it, particularly the Fed speakers. Blina Ricci of T. Rowe Price joins us now for more amid the swirl of uncertainty that we're seeing in markets. Blina, thank you so much for being with us. I want to start with what's more important for you when you take a look at the economy and the economic trajectory for this year. Is it the tariff side of things? Is it the AI side of things? Or is it a consumer that's slowing down and potentially facing a pretty uneven labor market?
So never a dull moment with the U.S. economy. Just when we thought we had left tariff uncertainty behind us and we could look forward to some of those other factors that you mentioned to affect the outlook, now we're reintroducing that into the equation. So to be clear with you, I think there are many cross currents affecting the U.S. economy this year. We have this uneven labor market that you mentioned, a slowdown in the demand for workers. I think that's going to affect household incomes. To what extent that happens, I think will be also dependent on fiscal policy and the refunds that consumers are getting from the One Big Beautiful Bill exemptions and tax cuts that we saw last year. So I think in the first half of the year, we can expect the economy to be on solid footing, I would say. But I think bringing in this new tariff uncertainty does bring downside risks to my view about the U.S. economy. First of all, because now companies will have to deal with is there going to be a refund or not? How are we going to handle that? Do we need to file court cases individually? All of those things are resources that you don't spend on creating new business and demand. So I think that's important. Also, we don't know now what the new level of tariff will be. And that's another uncertainty that companies and consumers have to deal with. And what we learned last year is that uncertainty does affect small businesses more than larger businesses. And we were just seeing small businesses hiring demand pick up in late 2025. So I think it would be a shame to lose that momentum with this new policy uncertainty. So lots of cross currents here to navigate for the U.S. economy, including will it be appropriate or not when you balance the risk to the labor market and inflation, will it be appropriate to cut interest rates further this year?
Rita, there's a lot to pick through. I want to just parse one of the things that you said, which is that on the marches, this actually lowers your outlook for growth on the U.S. economy. I'm talking about the IEPA ruling by the Supreme Court. Can you quantify that? Do you have a sense of how much? I mean, is it incremental, like 0.1% kind of hit to GDP, or is it something more substantial in the order of actually truly profoundly decreasing hiring?
I think uncertainty around this is high. It's still early days. We are not sure how the administration is going to precisely respond to this and how businesses will as well. But I would say that those downside risks are more modest. I don't think this is going to tip the U.S. economy into a downturn and that finally balanced labor market that we're have experienced. I don't think this is going to be enough to make it roll over and to get a spike in the unemployment rate. And I was listening to Governor Waller's remarks as well, and I agree with his view that what we saw in January in terms of a pickup, a pretty substantial pickup in hiring, I don't think that's going to be sustained for the rest of this year because we're still facing that lower break-even pace of employment. But I tend to disagree with him when you translate that to the unemployment rate. I don't think we're seeing signs that companies are going to engage in mass firing. You mentioned AI. I think there's going to be some productivity gains from AI, but not to the extent that they are completely transformative of the labor market in 2026. So the unemployment rate stays stable in my view. We just see a little bit more downside risk to that solid growth scenario that I had expected for 2026.
Well, what do you make of Governor Waller, though, saying that executives say significant job cuts are coming from AI? Isn't that only going to accelerate the better the models get?
I think so, but we haven't heard a timeline for when that might happen. And so based on what we know so far, my best case scenario is that could take 5 to 10 years to get those substantial productivity gains and to reduce employment. We're going to see in the first couple of years, I think, more of an effect on hiring of lower skilled or entry-level jobs. Sure, we'll see that, but I don't think it's going to transform the labor market and lead to a lot of hiring this year already.
So where do you think we're going to see the labor market continue to hold up? Is it just going to be healthcare jobs?
So we've seen that uneven equilibrium in the labor market, right? State and local healthcare jobs, government jobs for the last 3 years really driving employment. We are seeing tentative signs of more of a broadening in the labor market. So those are typically acyclical components of employment, and they don't tend to fluctuate too much with a business cycle. I think because we got that fiscal boost from the One Big Beautiful Bill, and because we got those interest rate cuts from the Fed and significant easing in financial conditions in the last 6 months or so, that we would see a broadening of employment and a pickup in cyclical demand for workers. Now, because we're dealing with labor hoarding post-pandemic and we're dealing with AI, I'm not expecting that we'll see a big boost in employment growth, but something in the range of 50K per month, I think it's possible for this year. And given that the break-even pace of employment has declined a lot, the labor force participation is not increasing anymore because we're not getting those migrant flows that we had post-pandemic, that should keep the unemployment rate stable in my view.
Florina, just quickly here, as we look ahead to a number of different earnings from Lowe's, Home Depot, and a number of other retailers, in addition to, of course, NVIDIA on Wednesday, a real question about consumer spending and how much that can keep going. Why is the market not spooked by what Walmart had to say about the look forward, about a consumer that was flagging, sort of highlighting the K-shape and some of the concerns among consumer sentiment?
I think some of it has to do with the fact that the composition of aggregate in demand in the US or aggregate consumer spending is driven a lot by middle income and higher income households. And also part of it, I think, is to do with the refunding season that we're going to see for taxes this year that is going to benefit those lower end consumers more. And I think as inflation pressures stabilize, now, let's see what happens with tariffs. I don't think we're going to get price cuts because of nominal price rigidity, but we're going to get more stable inflation going forward. That should be helpful for real disposable income as well and should benefit lower income households. So I think those are the factors that companies are looking at and not taking a very pessimistic view on the U.S. household. Plus, let's not forget that the balance sheet of the U.S. household is in really good shape. There was a lot of cleaning up that happened post-pandemic, and I think that's going to be, I think, a key pillar because the U.S. household can do leveraging very well, and it hasn't even started to get there in this process.
Lorena Urici of T. Rowe Price, thank you so much for being with us. And we're just getting a note from Citigroup that I thought was really interesting from Andrew Hollenhorst saying, and this might be the reason why you're not seeing much more of a response in the bond space. The average global effective tariff rate appears to be little changed under the new regime, and we expect that the new global tariff, together with other new tariffs, will raise a similar amount of revenue.
All right, and that's what the administration told us. They had Plan B ready to go, and they're enacting Plan B right now. I think the bigger question is how much corporate America is going to get in terms of refunds. Or do they get refunds at all, or is that just an absolute wash for 2025?
Yeah, and do they just pocket that for profit, or do they pass it along to
big question.
the consumer? Meanwhile, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. More than 35 million people across the Northeast are under blizzard warnings as a winter storm brings heavy snow and strong winds. Some areas are expected to see as much as 28 inches of snow. 15 inches of snowfall has already been recorded in Central Park. Meanwhile, flight cancellations are piling up at the area's 3 main airports as they run on a modified schedule. NASA is preparing to remove its massive moon rocket from its launch pad to fix a technical issue. This putting on hold its much anticipated mission to send a crew of 4 astronauts around the moon. The agency had been targeting a March 6th launch for the Artemis 2 mission, but now says it won't happen until April at the earliest. And the U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. Investigators identified the suspect as 21-year-old Austin Tucker Martin of North Carolina. President Trump was in Washington at the time of the incident. That's Bloomberg Brief, Lisa.
Thank you so much, Yahira, and thank you for being here this morning. Up next, setting you up for the day ahead, plus John Vinh of KeyBank Capital Markets previewing NVIDIA's earnings. That will come out on Wednesday. A lot of people looking, how much are they the main beneficiaries from the $650 billion of CapEx spending ahead? This is Bloomberg Surveillance.
Crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The forecast that we view is still that the economy is doing well. The probability of going down the fairway and hitting up the rough has just changed quite dramatically. And the tail risks of one of these things going wrong, either AI being widely successful or AI disappointing, could also be something that puts us into the rough.
That was Torsten Slok of Apollo talking about the toxic brew of uncertainty that seems to be hitting risk appetite. Adding to the uncertainty, what kind of economic hit the shutdown tied to the snow will be. We have been seeing whiteout conditions earlier. It is emergency conditions in New York City. Transit has been suspended. People are prohibited from traveling unless they absolutely have to, and it's been near whiteout conditions at a time where people are wondering exactly when economic conditions will start to reopen.
Yeah, we're basically locked into the city. It's absolutely insane. This live shot is kind of crazy about how bad the conditions are, and visibility seems to be getting worse. More than 10,000 flights into around the U.S. were canceled. So that includes Boston, Philadelphia, and New York. And as we heard from the ABC reporter earlier, usually this takes days to recoup in terms of the setback. And also, natural gas prices, futures are jumping right now. So it's going to be an expensive one when it comes to electricity bills, when it comes to heating.
Yeah, we'll keep you posted throughout the day as it does progress. Let's count you down to the opening bell. Here is a trading diary for the week ahead. 10 a.m. Eastern, durable goods. Tomorrow, we get Home Depot earnings, consumer confidence, plus President Trump delivering his State of the Union address. Watch this space. Wednesday, earnings from NVIDIA, the big one after all of those CapEx plans were announced by the big tech names earlier in the earnings season. Thursday, another round of jobless claims, and the U.S. and Iran set to resume nuclear talks. Looking ahead to NVIDIA earnings, the chipmaker is set to report results on Wednesday in the next test for artificial intelligence. John Vin of KeyBank maintaining an overweight rating on NVIDIA with a price target of $275, writing, "We expect increasing shipments of Blackwell to be a key driver of strong results and guidance." John joins us now for more. John, thank you so much for being with us. I want to start just with why NVIDIA hasn't been a bigger beneficiary, at least to the price action, on the backs of the $650 billion of capital expenditures announced by just 4 of the hyperscalers.
Yeah, I think, obviously a lot of concerns by investors these days that stock has underperformed this year. It's basically been flat. I think in the near term, it's just simply a function of positioning. I think a lot of investors beginning of the year have really been focused on the memory trade, right? You look at stocks like Micron, which is up 50% year to date. Obviously, that's been a huge topic because of the shortage issues. It's a huge enabler of AI and CapEx infrastructure spend. So I think, as memory has outperformed early in the year, I think a lot of investors are going to come back to kind of the leaders in AI. And I think NVIDIA is well poised to start outperforming the rest of the year.
They're going to have additional questions around geopolitics, global relations, especially after this tariff ruling. How do you see any kind of potential increase in tensions between the U.S. and China following?
Better off allowing shipments to China versus not allowing shipments to China, which would then, fuel further investment in R&D on the China front and potentially allow them to develop their own AI chip solution. And then at that point, we have no idea what their policy and their strategy is at that point in time. And I think the chip makers in the U.S., I think, have been lobbying and working with President Trump pretty closely to kind of get to the policy that we are where we are today.
What about the appetite on the Chinese side? Do you see Beijing continuing to want to buy NVIDIA's chips, most notably the H200s?
I think that appetite will continue. Obviously, out of China, there has been a lot of rumblings that the China government is capping shipments of H200 GPUs from NVIDIA, and they're really pushing their local hyperscalers to buy domestic solutions. But the reality is there's such a wide performance gap that really, they really have no choice at this point but to kind of lean on NVIDIA and U.S. technology.
John, are we going to find out more about Jensen Huang and Sam Altman and what their relationship really looks like?
I don't think we'll see anything other than kind of just a reiteration of the commitment between OpenAI and NVIDIA. You know, similarly to China, you know, we think OpenAI is developing their own AI ASICs like other hyperscalers are. But at this point in time, you know, other than Google's TPU, there is nothing out there in the marketplace that is competitive to the GPUs that NVIDIA produces. So I think at this point in time and for the foreseeable future, OpenAI and NVIDIA are heavily codependent upon each other.
John Vinh of KeyBanc Capital Markets, thank you so much for being with us. Stay safe as the weather does pose some significant challenges. I will just say, did you see Sam Altman's comments over the weekend?
I did.
About energy?
They were pretty weird.
Humans need energy too. He was trying to push back against this question around how much energy usage AI would
you have to feed humans,
as well
you have
as
to warm
you've
humans.
got to water them as well.
So why don't we just put all that energy we're putting towards humans to putting it towards an AI robot? That was the sense I got.
Well, there is this interesting dual approach from Dario Amodei of Anthropic versus Sam Altman of ChatGPT, and a question, or OpenAI rather, a question of how do you push back against what could be rising animus, especially given the fact and given the concern that people have about what this will do to the jobs picture.
Well, Anthropic is pushing back when it comes to how the U.S. government is using their Claude approach. And actually, Axios has a story that Pete Hegseth, the defense secretary, will be sitting down with the Anthropic CEO tomorrow. Potentially, if Anthropic continues to push back about how their AI tools are used by the military, that might mean that that tool might not be used anymore in the military. They may no longer be a customer. So there's a lot of big stories taking place right now, live discussions about how AI is being used, at least when it comes to the defense sector.
Yeah, and how much say some of these CEOs have over how their technology will be deployed when used by certain players. Right now, you are seeing that risk-off feel. Will it last throughout the day? Coming up tomorrow, we'll parse through it all with Cameron Dawson of New Age Wealth, Bob Michael of JP Morgan, Libby Cantrell of PIMCO, and Kate Moore of Citi. From New York, this was Bloomberg Surveillance. Please stay safe out there throughout the day.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, you know, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the legs air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Happy snow day from New York City. It's 30 minutes until the start of your cash equity trade. I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up, trade uncertainty rattles markets again as President Trump moves ahead with new global tariffs following the Supreme Court's decision. A powerful winter storm could shatter records across the East Coast, crippling transport networks and straining power grids. Plus, Novo Nordisk plunges, Merck splits up, and Gilead makes a deal. We're tracking a flurry of pharma news out this morning. Let's look at some of those pharma movers, because there are a lot. So Novo Nordisk this morning plunging 15.33%. Its next generation obesity shot, CagriSemi, delivered less weight loss than Eli Lilly's rival in a head-to-head trial. We're going to be talking to someone from the C-suite of Novo Nordisk about that deal. Then there's Eli Lilly. 3.5% surge because, that didn't do as well. Also keeping an eye on Merck, up 0.33%, splitting up its cancer and its non-cancer drug unit. They're facing a patent cliff, so that's playing into that. Also keeping an eye on stocks overall this morning. They are decisively down on the uncertainty and a new across-the-board 15% tariff on U.S. imports. The EU is poised to freeze the ratification process of its trade deal with the U.S. following the Supreme Court decision on so-called reciprocal tariffs. U.S. Trade Representative Jamieson Greer told CBS that he expects the trade deal to remain in place as is.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
Let's dig into the trade uncertainty. Joining us now is Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Anne-Marie, besides the snowplow drivers, you're probably the busiest person this weekend. Where do we stand now?
Well, where we stand right now is that we still have tariffs. And I mean, that was always going to be the case going into whether or not the Supreme Court upheld IEEPA, which would have had the deals that were already struck, or were they going to come out with Plan B, which they had broadcasted well ahead of this event. So what we have right now is Section 122 being used. It's never been used before. The administration is using that. They can use it for 150 days, and then Congress would need to get involved. The president started out Friday in that press conference talking about a 10% tariff rate, and then he quickly moved to 15%, but that only lasts for 150 days. So by this summer, by the end of the July, they're going to have more durable tariffs in place, and that's going to require investigations. They've talked about the administration over the weekend, whether it's Secretary Bessent or Ambassador Jamieson Greer, about using 232s or using Section 301. These will require investigations, so they take a little bit more of a longer time. But what is clear is that tariff rates are staying. The big question mark is what happens to the tariffs paid last year that now the Supreme Court has deemed basically were illegal? Do those companies that lined up, do they get refunds?
And I guess that would make a big difference to the fiscal picture for the United States in deficits. What about individual trade deals? I mentioned what's happening with the EU. Are we just at a standstill now?
I think it depends about which country we're discussing. So I did talk to a lot of foreigners over the weekend, and basically they were told what we were told, that if the Supreme Court was to strike down IEEPA, the administration would come back using other provisions to enact their trading policies. So a lot of these trading partners don't really think a lot has changed. I think there's going to be some key countries to focus on, places like the United Kingdom, places like Australia, where their deal was under 15%, which is under the current rate right now the president has enacted using Section 122. What happens with those trade deals? And of course, with the European Union, it sounds like they just want to seek some clarity right now. And then the big one is going to be China. Does this change any of the negotiations when it comes to China? Ambassador Jameson Greer said no. This is really just about a check-in of the relationship, making sure that China continues to buy U.S. agricultural goods, continues to buy Boeings, they continue to ship off rare earths into the United States. But definitely is going to change some of the contours of the discussions because tariff rates have changed, even though as Leland Miller of the Beige Book, the China Beige Book put it us this morning, they're not collapsing.
What do you think Congress's reaction will be to this, especially Republicans who are facing a midterm in 3.5 months?
Well, it depends which Republican you ask. So over the weekend, we did hear from Representative Don Bacon. He was talking about how this is not good politics or policy. And then you heard from others, like Senator Bernie Moreno. And he was talking about the fact that Congress should actually just let the president use IEPA, put that into reconciliation to give the president that broad swath of authority. It was very clear if you read through the opinions from the Supreme Court justices, especially when it came to Justice Gorsuch. He talked about this idea of really presidential power and how unless it's specifically detailed, outlined, a lot of this lays in the hands of Congress. So it's up to them to adjudicate. But is Congress really going to want to do this, as you say, with a midterm election year, when the latest polling on tariffs from Ipsos, Washington Post, and ABC show that 64% of Americans really don't like the tariff policy?
Anne-Marie, thank you so much for all of your coverage, both Friday, the weekend, and today. Anne-Marie Herdern of Bloomberg Surveillance. And in the next hour, corporate America reacts to President Trump's new tariffs. We're going to speak with the CEOs of Mazda North America and Freeport McMoRan. Now, elsewhere, a lot of distraction this morning. 41 million people along the U.S. East Coast are grappling with blizzard conditions this morning. Let's get right to ABC's Lionel Moise here with the latest, who has yet to turn into a snowman, but maybe working on your way there. Lionel, what is the latest with the weather? Is it picking up? Does it seem like it's getting worse at this point?
You know, every time I check in with you guys, it seems like it's getting worse. We did get a little word from the meteorologist that it is going to start getting better. We were told by the afternoon things should be better, but the snow is thick. It is still coming down. It has been very windy. Right when you think you get a break, you're knocked over again. Maybe I'm not a snowman, but I feel like I'm in a live snow globe. They have been working to clear this sidewalk behind me for the last 8 hours, and you cannot see the color of the concrete. So that just shows what has been going on. We are still in that travel ban here in New York until noon. New Jersey also extended their travel ban until noon to keep people off the streets so they can work on clearing them.
Yeah, Lionel, I know it's unpleasant conditions out there, but it is kind of beautiful. You're right, it does look like a snow globe. What about for the week to come? Things still look treacherous today. They're still trying to clear up, but does it look like things like flights, transportation, that might resume come Tuesday?
I wish I had better news. So right now we know that there are 5,000 flights canceled today. There are about 5,000 canceled tomorrow. I usually would say, okay, so the day after things are going to be picking up, but there is more snow in the forecast for this week. Nothing like these blizzard-like conditions, but hopefully that will not be a hindrance to people who are still trying to get out, because it's not just customers who need to get to their destination. The flight attendants and the pilots could also be stuck in this storm as well.
Lionel, thank you for braving the conditions for us. That is ABC's Lionel Moise. Let's get back to markets this morning. People taking Novo Nordisk's next generation obesity shot lost an average 20% of weight loss. That compares to 23% for Eli Lilly's equivalent drug. Let's discuss with Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, just how big of a blow is this for Novo?
Well, you see, about 30% of revenue or growth over the next 5 years was supposed to come from this drug when you look at analyst forecasts. So it's a big blow. And at the end of the day, you know, Novo rolled the dice. These companies do head-to-head comparisons just to prove their relative efficacy and side effect profile, and it didn't work out for them. And the thing is that it showed it to be inferior. A lot of the times there's so much overlap between the data that you don't get, you can't call it better or worse. Here, it literally came out they couldn't hit the non-inferiority, which is not a good story for them. Perhaps Novo needs to now think about M&A more.
What targets might they look at, Sam? Because we've seen M&A tried and failed in this industry and battles over individual companies. So where does Novo turn to next?
Yeah, so the one thing Novo did not do is follow Lilly in this class of drug that they developed. Remember, I keep reminding you, there are two mechanisms of action in Zepbound, tirzepatide. Novo did not follow that route. There are lots of companies who have compounds that are similar to tirzepatide. Maybe one of those would be a potential partner or future target for potentially Novo Nordisk. There's also many companies that are developing completely new ideas along the way for obesity, muscle sparing, etc. Those are the areas that perhaps Novo needs to look at to gain some competitive strength again here.
There's also just a flurry of various deals and corporate restructuring. Sam, we learned from Merck this morning that they're going to be separating their cancer non-cancer unit. Gilead is making a purchase, too, of a biotech company around cancer treatments. How much of all of this action, Sam, is just about a patent cliff that a lot of these pharma giants are facing and grappling with?
Yeah, so as you know, or maybe you don't, we recently published, my colleagues Ord and Vinay Hamilton recently published a very deep look at the patents for Merck's Keytruda, the big drug that's supposed to come off patent by 2029, and they find that Merck can protect it to 2033. So maybe the move that Merck is making is to clarify its business such that it's reporting slightly different, the oncology business, etc. But I think this is more to do with the fact that the pipeline of drugs that they have coming are becoming so complicated, so diverse, that it's the right thing to do for the company to focus on oncology and the other disease areas separately. The other company that does this that's been very successful is AstraZeneca, so that's nice to see. Gilead's story is a little bit different. Gilead is buying essentially its partner, and it's doubling down on this bet of treating multiple myeloma with these cell therapies, and there's only currently two companies that are potentially, I mean, one's on the market, which is Johnson & Johnson. The next one could be these guys within the next 12 to 18 months.
Sam, thank you so much for this. Sam Fazeli from Bloomberg Intelligence. And later this hour, we will be hearing from Novo Nordisk's Chief Scientific Officer, Martin Lange, so stay with us for that interview. Let's get a check on futures, about 20 minutes away from your trading day, and we are down 1/3% despite a positive week last week, 0.5% for the NASDAQ 100. We finally saw gains for the NASDAQ 100 for the first time in 3 weeks, but it's the tariff fears, the uncertainty. Will companies get paid back? Are we staying at 15%? What happens next? Let's get a look at some of the other movers on our radar this morning. Domino's sales topped estimates as budget-friendly prices lured consumers. And I would note, our Bloomberg News team saying it was the stuffed crust pizza that sent them over the edge. I've not tried it myself, but I'm sure that is the reason sales are doing so well, up 6%. Meanwhile, the Justice Department is looking into Netflix's $72 billion proposed merger with Warner Brothers. It's investigating whether Netflix wields anti-competitive leverage over creators through the deal. And then international paper, that is falling after a global report which showed that the prices of paper or prices being able to pay were tumbling. So a lot of its peers falling too, those shares down 7.4% in the pre-market, analysts noting a slowdown in demand. Coming up, the president hikes tariffs to 15% after a Supreme Court setback. Missouri Representative Jason Smith, the chairman of the House Ways and Means Committee, will join us next on what Congress has to say. Stay with us on Open Interest.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
Let's get to high interest. A look at what's making headlines around the world. Mexico says it has killed Jalisco cartel leader known as El Mencho in a U.S.-backed raid seizing heavy weapons and rocket launchers. The strike triggered nationwide road blockages, shootings, and flight suspensions. Washington praised the operation while urging Americans in affected areas to shelter in place. Private markets flashing stress. Bain says private equity is in its worst dry spell since 2008, with $3.8 trillion in unsold assets and payouts near 16-year lows. Now, elsewhere in private credit, Blue Owl has frozen a $1.6 billion private credit fund and is selling assets to meet redemptions. That has rattled a $1.8 trillion market and revived liquidity fears. The European Parliament is sent to freeze ratification of its U.S. trade deal, the bloc demanding clarity after President Trump's new 15% tariff. The move follows a Supreme Court ruling limiting his emergency powers. EU leaders say approval can't move forward amid growing trade uncertainty. Let's stay on tariffs, and I'm joined now by Missouri Representative Jason Smith, who also serves as the chairman of the House Ways and Means Committee, and he is the chief tax writer in Congress. Chairman Smith, thank you so much for joining us this morning. Let's start with the elephant in the room. The tariffs were a big source of fiscal revenue for 2025. Do you anticipate that all will get refunded? And if not all, much of it will get refunded now?
To say that the tariffs were a significant impact of revenue is to say it lightly. In fact, it has been projected by the Congressional Budget Office that the tariffs that were in place would reduce the national deficit by $3 trillion. And that's pretty substantial. However, the Supreme Court decision is not going to affect the revenue that's coming in for the most part, because under a lot of the federal trade statutes in regards to unfair trade, whether it's Section 122, 301, or 232, the president is going to be able to levy his authority to implement virtually the same tariffs that were in place under IEEPA that the Supreme Court threw out.
Sure, but the tariffs that were implemented through IEEPA, Representative Smith, is it your message maybe to corporate America that if they've joined this lawsuit that maybe they shouldn't be expecting the tariff refunds? How do you expect that to play out?
You know, it's really unfortunate that the Supreme Court was crickets when it came to their very large opinion, but they didn't even address this. So, of course, now it's going to be reprimanded down to the lower courts. They will make those decisions, but it's going to be a process that's going to take 3 to 4 years probably before it's addressed.
There is this question of uncertainty. That's certainly one of them, Chairman Smith, what's going to happen with the refunds. But then there's this other lingering uncertainty of having a president who first announces 10% tariffs and then 15% with Section 122, which can only be in place for a limited number of days. How is this helping uncertainty in corporate America? Do you think that there could have been an argument to just said, okay, the Supreme Court has made its decision and we carry on as is?
You know, certainty is great for the economy. That's why we passed the big, beautiful bill, the Working Families Tax Cut, 6 months early to give the certainty to those small businesses, those big companies. But in regards to the tariffs, I think it's very certain. There's probably not going to be any refunds. I don't see a pathway in Congress that there's going to be refunds. And so you're going to look at over the course of President Trump's administration, he's going to continue to use those tariff revenues to bring down the deficit.
There is another matter to this, though, and it can easily, and many people have framed this as simply a consumer price hike. Representative Smith, do you expect that all of the Republicans in Congress will be behind this when we're just 3.5 months away from a midterm election where affordability is on the ticket?
I think it's very important to understand trade policy just as a whole of where it is with all Americans, but also all members of Congress and the United States Senate. It's a deeply divided issue, whether you're Republican or whether you're Democrat. There's not a uniform opinion of one party. In fact, you have Democrats that agree with Republicans and Republicans agree with Democrats on various aspects of whether they're pro-tariffs or they're anti-tariffs. So if something moves forward from a legislative perspective, it will have to be bipartisan, because it is such a bipartisan division when it comes to those different items. But let's look at what tariffs have done. We have the lowest trade deficits since 2009. And when you refund tariffs, you're refunding money to corporations that benefit by purchasing products outside of the United States. Who benefited from tariffs was the U.S. manufacturers and U.S. farmers.
So to be clear, are you and your colleagues working on legislation right now to codify tariffs?
We've been working on trade legislation throughout my 3 years as chairman of the Ways and Means. If you just look at most recently in the last month, we reinstituted and extended the Haiti and the AGOA trade preferences program. So we're in the middle of all the different trading aspects. If you look at the big, beautiful bill, we addressed de minimis when it came to China and other packages coming in the United States. We're going to continue to do so.
Tariffs or not, the debt is still exploding because, in large part, the one big, beautiful bill, Representative Smith. Are we done cutting the deficit? Is this it for now?
We can't be done cutting the deficit. When you look at a national security threat, it's definitely our fiscal house. When you're looking at approaching $40 trillion in national debt, we have to be looking at ways to trim the budget 24/7.
So are you then, with all of this, disappointed in a lot of your Republican colleagues? There have been some, Senator Paul, Representative Bacon, who publicly applauded the Supreme Court ruling. Representative Smith, it doesn't seem like there's cohesion at this moment.
Well, Senator Paul didn't vote for the big, beautiful bill either. So there's always division within the Republican Party. But guess what? There's bigger division in the Democrat Party, because Hakeem Jeffries is not even the minority leader of the House. His liberal base affects all of his policies, his decisions. That's why we're in a government shutdown right now with the Department of Homeland Security, and why they're not funding TSA agents in the airport, why they're not funding FEMA, and why they're not funding the U.S. Coast Guard.
Yeah, there's a lot of backlash this weekend about a brief decision to shut down TSA PreCheck. Chairman Smith, where do we stand on funding the Department of Homeland Security? Is there any movement?
There has been zero movement from what I have seen. The Democrats are demanding unrealistic expectations and solutions. They're the ones who shut down government. They need to come back to the table and make sure those TSA agents, the Coast Guard, the Secret Service, FEMA, that they have paychecks.
There still has been just mass outrage about what's happening with immigration and with ICE. Representative Smith, where would anyone budge on this? How does it come to a solution?
Well, what doesn't make sense is that they say they want to defund ICE, but guess what? ICE was funded for 4 years in the one big beautiful bill. So by shutting down the Department of Homeland Security budget, that does not affect funding of ICE. ICE is continuing to be funded because we did it for 4 years. So it is absolutely only politics of why the Democrats are shutting down government. They say that they're doing to defund ICE, but they know that they're not defunding ICE by shutting down Department of Homeland.
Some of the polls, though, have moved in the wrong direction for this administration, be it on things the president ran on immigration, on this economy, on affordability. Again, 3.5 months away from the midterms. Is this an administration and a party, a GOP, that risks losing control of the narrative?
Anyone can find a poll that favors their narrative. There's no question about it. What I will say is I was back home in my congressional district all last week, traveling throughout my 28 counties, and people were very supportive of the president's immigration policies and securing the border. And the fact that 3 million people illegals have been deported or voluntarily left.
I still think some of the images coming out have shocked people. But all this said, Representative Smith, there are a lot of issues that this administration now needs to tackle, especially in light of Friday's ruling. What are you expecting for the President's State of the Union address tomorrow?
I think the president's going to highlight what he's done in his first year in office, which I believe what President Trump has done in his first year of office is more than what most presidents do in 8 years. When you look at securing the border, which we just discussed, creating the largest tax cut in U.S. history and fulfilling his campaign promises of no tax on tips, no tax on overtime, tax relief for seniors, increasing the child tax credit, creating the Trump investment accounts, making 100% expensing of new factories. You've seen more than $10 trillion of investment come back into the United States. We have the lowest interest rate in 5 years, the lowest gas prices in 5 years. And guess what? The murder rate in the United States is the lowest since 1900. These are huge successes. But when you look on the foreign stage, the president has eliminated 8 different conflicts. So I think that's a lot of success that some presidents would be begging for.
Although there might be another conflict brewing with Iran, or at least an escalation, which also might undo some of the work in gas and oil prices. Representative Smith, we're going to have to leave it there. Thank you for joining us. Representative Jason Smith, Chairman of the House Ways and Means Committee. Coming up in the next hour, we're going to have more on corporate impact of trade uncertainty. We'll be speaking with 2 CEOs of Mazda North America and Freeport McMoran. But a quick check on your futures this morning, because there are some nerves playing out. We're down about 0.25% for the S&P. The NASDAQ falls 0.4%. While Russell 2000 futures, it is the small caps that are underperforming, down 0.5%. More to come. You're watching Bloomberg Open Interest.
No, what would you say when you look at your career that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988, after my first restaurant opened, he asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. And because I never watched the movies, I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, you are watching Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off today. It is a snow day. We're down 0.2% for the S&P 500. The NASDAQ 100, that underperforms, down 0.4%. The Russell 2000, that also underperforms. A lot of this is based on the uncertainty over the weekend of ramping up of tariffs from 10 to 15%, which is the highest amount that you can do in Section 122 tariffs. Here, we have a construction group, ConExpo. I have to say, I am so impressed about both the New York Stock Exchange and the NASDAQ. Look, it is a full crowd, and it is a snow day. These people had to trudge through mountains of blizzards, so well done to you. It is the Association of African American Financial Advisors ringing the bell down at the NASDAQ. So congratulations on multiple fronts. Let's get to your stocks to watch this morning. Look at what Novo Nordisk is doing this morning. This is the ADRs, down more than 15%. Its next generation obesity shot delivered less weight loss than Eli Lilly's rival in a head-to-head. So you can see Eli Lilly is ramping up off the back of that. Merck, down slightly, not a lot of action. It is splitting its business into 2 units, a cancer drug unit and a specialty non-cancer drug unit. We're also keeping an eye on the majority of stocks this morning. Again, it is this uncertainty. You can see a lot of the consumer companies, Gap, down 2.5%, because now we have across the board 15% tariffs on U.S. imports. The European Union is poised to freeze the ratification process of its trade deal with the U.S. following that Supreme Court decision on so-called reciprocal tariffs. Let's bring in Bernstein Private Wealth Chief Investment Officer Alex Chaloff on all of this. Alex, what has changed for you in your 2026 outlook, given Friday's ruling by the Supreme Court and the tariffs announced by this president over the weekend?
I think uncertainty is the new word, Danny. I think chaos would be an extreme, but certainly uncertainty is something that we have to live with, where we and others had planned out for a specific set of tariffs and the ensuing fallout from that. At least we were able to plan for it. Now everything's up in the air. There was 10% on Friday. It was 15% on Saturday. There's a lot of discussion over the weekend. So we all just have to live for this period of time with some level of uncertainty.
And I mean, I heard from companies over the weekend, just this absolute scramble. If they've joined the lawsuit, can they get their refund? What does that look like? How do you assume corporate America behaves in this moment? Do we see stockpiling again? Do we see holding off on CapEx plans, especially for those that are affected by the tariffs, Alex?
I think that Danny, the most likely is the last part of what you just described. This holding off on CapEx. We've already seen it. We've seen it play out in hiring plans and the slowdown in hiring. We've seen it in other than the AI hyperscalers in a lack of commitment to spend real dollars until tariffs policy is known and codified. So I think joining lawsuit, not joining lawsuit, I think that's less important, frankly, than this idea of how much of a pullback are we going to see in CapEx?
There have been, in the meantime, a lot of calls to look abroad for equity gains, Alex. Citi had a downgrade to U.S. tech stocks not that long ago, just last week. Hedge funds have been net sellers of global stocks at the fastest pace since the tariff meltdown. There does seem to be this feeling of maybe this is another year of outperformance internationally. Are you seeing the same thing?
Yeah, a big part of the outperformance internationally came from a weak dollar. I mean, yes, Europe did better than expected in 25, Japan, Asia, and we would expect continued earnings growth out of those markets. But it's really the tailwind from the weak dollar has driven that significant outperformance. If I were to look at the crystal ball for the end of the year, yeah, I think this is a year that non-US will do well. We've had clients allocated there for the last number of years, and so look forward to turning the tide. You'll recall that for the 15 years before 2025, U.S. outperformed non-U.S. So there is a little bit of a valuation trade there as well. But yes, I think non-U.S. markets will do quite well this year.
Alex, if I was mean, I would probably ask you what's going to be more impactful and disruptive, AI or tariff policy. But I guess at this point, it's maybe impossible to know. But okay, so you have AI, disruption, also bubble fears, also tariffs, also is there going to be a conflict with Iran? Alex, how are you just thinking holistically about markets right now when it feels that that left tail every day is just getting that much fatter?
Danny, you can't be mean. That would be. I also would throw into that blender of issues that we're working through the private credit market.
True.
And what's going on there. So look, I think you've got to take a step back and say, you know, what do you own? Why do you own it? Have there been major disappointments to derail any of the investment theses for any of the asset classes that are available to you? And the answer in large part is no. The AI trade is still on. I think the hyperscalers continue to do well. That whole AI ecosystem, whether you're talking about the picks and shovels or the data centers or whatever part of that, it's still working. And I think you'll continue to see companies spend there in meaningful fashion to drive future profits, certainly not near term. And we could argue about the relative benefits of taking money out of the pocket of current projects and pushing it to AI. But this is nothing unusual. I mean, it's never been easy. There's always been global conflict. People say, what are you doing about the Middle East? It's like, well, we always have the Middle East to worry about. We always have oil prices to worry about. So while the headlines might be more fast and furious today, I think the issues really are quite consistent with what we've had to deal with over history.
And to be fair, when it is easy, people freak out that money's too easy anyway. So maybe, we're not satisfied regardless of what things look like. Alex, if I could just linger on the private credit for just a moment, because as overseeing the money, overseeing so many different clients at Bernstein Private Wealth, how are you approaching that with clients? Are you getting a lot of questions about private credit? Are there fears in there? Is that an allocation that you'd recommend for a high net worth individual?
I'm going to say yes to basically everything that you said. Yes, there are concerns among our clients. Yes, we have our concerns. The news of the last couple of weeks, it wasn't just the big announcement last week and the ensuing desire to buy at fire sale prices some of these loans that may or may not come to the market. But there have been a couple of high-profile, sizable deals that have gone sideways in private credit at the end of 25 and into 26. So this is an area that requires extreme vigilance. It really comes down to underwriting. Boring is better here. Having an ability to sort through the types of fundamentals that you would expect in the public markets is even more important in the private markets. And I think what we've seen from some of the failures when you really step back is that this flood of capital that's come into private credit over the last 5-6 years has forced a lot of private credit players to make deals that they otherwise would not have done if not for the fact that they had all this capital on the sideline that they had to invest. And so I think you want to invest with a group that isn't in a rush. Thankfully, the team that we have in place within AB has done a terrific job of managing through this, and patience will win here. And I think a lot of the deals that we may have, air quotation mark, lost a couple of years ago because we weren't willing to bend on covenants or bend on coupon, we're going to see them back again, coming around the other side at a deep discount, and that's okay with us.
Hey, Alex, this was just so fantastic. Thank you for joining us. Hopefully you're staying warm and snow-free wherever you are in the world. Alex Chaloff of Bernstein Private Wealth. Let's get a check on your equity markets this morning. 8 minutes into your trading day. Ooh, we are just barely putting in gains, but that's good news because we ended the week higher last week. Maybe we can do it again this week. Volumes are probably off. A lot of people not at their desks this morning. We are going to be getting NVIDIA earnings this week. That is the other big thing to put in the blender, as Alex so wonderfully put it, of risks concerning us. So NVIDIA shares are up 1.6%. Eli Lilly also putting in strong gains after a Novo Nordisk trial, a head-to-head trial, did not have as strong as results from Eli Lilly. On the downside, also has some tech companies in here too. Microsoft is down, Amazon is down, Tesla too, and Palantir off 5%, as is Netflix, concerned over the DOJ looking into that deal with Warner Brothers Discovery. Let's look at how the sectors are doing this morning. A pretty even split between gainers and losers. Energy is doing well. There's a Supreme Court. We'll hear a case on oil giants when it comes to climate issues. We'll get more details on that for you, but energy stocks surging this morning. We're up by 1%. Healthcare, utilities, real estate. So even though it's a positive day, it's a lot of the safety sectors that seem to be doing better. Consumer discretionary at the bottom of the pile with those tariff concerns. 10% becomes 15% in Section 122 tariffs. Coming up, I mentioned it, we're going to discuss Novo Nordisk's newest obesity drug with the firm's Chief Scientific Officer. Stay with us for that interview. Coming up next on Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for some top calls. The analyst action that we are following. First up, Jefferies cuts Deere to a sell, saying the stock already reflects a full recovery in farm demand. The firm also warned that higher costs, trade uncertainty, and heavy debt could hamper the company's recovery. Next up, Wells Fargo, they upgrade Alphabet to a buy, calling it an AI winner with strengths in consumer data, distribution, and compute capacity. Shares only up 0.2%. And finally, Bank of America downgrades General Mills, saying its recovery story is not playing out. The firm says hopes for a pet rebound and steadier sales have stalled as shoppers pull back. Elsewhere, Novo Nordisk's next-generation obesity shot, CagriSema, underperformed Eli Lilly's tirzepatide in a head-to-head trial. Let's bring in Novo Nordisk Chief Scientific Officer Martin Host-Long on this. Martin, thank you so much for joining us this morning. And I just want to bring you a comment from a shareholder of Novo Nordisk, of Global Health Invest. Novo Nordisk's opportunity to make a comeback in the fight against Lilly, this was it. This obviously weakens them in a fight. What would be your message to those who believe the same thing, who have looked at this study and said, now this means Novo is falling even further behind Eli Lilly?
I would answer, it's been a few years since we designed the Redefine program, the program to show the weight loss potential of CagriSema. We already last year learned that to really see the true weight loss potential of CagriSema, it is a very powerful combination of two molecules. We need to have what we call a bespoke titration algorithms to really allow patients to titrate the very powerful treatment in the way that they prefer. We could see from the first study that that could be further optimized. In this setting, we could not manage to implement those learnings in what we call Redefine 4, which is the study that we discussed today. So the jury is still out of what can CagriSema actually achieve. In the study that read out today, we saw a 23% weight loss with CagriSema. That is actually very substantial. And it is among the best weight losses that we've seen, also amongst drugs in the market.
Right. Of course, just sort of the sore point in that, if I can jump in, Martin, is just the comparison to Lilly. It will forever be there. So what is the plan then to catch up with them?
Yeah, exactly. So first of all, the 23% weight loss that we saw with CagriSema is in line with what we've previously seen. The 25%, which we saw with the comparator drug, is actually the best data that has been seen so far in similar trials, which is a little bit surprising, but it stands alone in terms of that 25%. But we've also taken a lot of learnings in terms of how we can improve the titration for CagriSema. We've implemented those learnings in a study that's currently ongoing. That study is called Redefine 11. And we've guided for the last year that only when we see those data do we know the full weight loss potential of CagriSema. Furthermore, we are initiating during this year phase 3 studies to investigate even higher doses of CagriSema. And then obviously we have our very competitive pipeline, starting with semaglutide that starts phase 3 this year, but also our 2 triagonist that is currently in phases 1 and 2. So I think from a short but also a longer term perspective, we have a very competitive portfolio and pipeline.
Martin, on that pipeline, you seem confident on it. Would you like to see that bolstered by some M&A, by bringing in organic growth to the pipeline too?
The way we think about this is that obesity is a very complex disease, and obviously we want to have drugs that provide the biggest weight loss, but we also want to have drugs that gives as few side effects as possible. Then we also want to have drugs that provide comorbidities, and to an extent in our current portfolio we have all of that. We also have the best-in-class oral already on the market in the US, and the semaglutide offering that is starting phase 3 will have both a subcutaneous and an oral offering with what we believe will
Martin,
be best in class.
Why within that did you not follow Lilly with the tirzepatide and develop a GLP-1 GIP? Why not go down that route when so many other companies did?
We need to follow our philosophy when we do development. We also want to, we always want to see differentiated weight loss potential or efficacy potential, but also differentiated safety and tolerability. We do believe that we will see that when we see Redefine 11 in terms of weight loss with CagriSema. but we also believe that we have that potential for amycretin, which is another version of addressing two biologies. So you mentioned GLP-1, GIP. Sanagemtide is GLP-1 plus amylin. And then we have what we call triagonist, which is basically the next level. We do, again, believe that that is going to be a very competitive offering individually, but specifically as a portfolio.
Okay, Martin, we're going to have to leave it there. Thank you so much for joining us today. That's Novo Nordisk Chief Scientific Officer, Martin Holst Long. I want to bring you some breaking news just crossing the terminal now. The EU has frozen the U.S. trade deal approval. That's over uncertainty about where things stand after this most recent Supreme Court decision. We had reported on it earlier this morning, so it is a confirmation that the EU will be freezing the confirmation process, the approval process of their tariffs. They've been aiming to ratify the agreement in March. It was already a difficult conversation, and now the Supreme Court decision throwing that even more up in the air. So that approval process has been frozen. Coming up, we're going to bring you the details from the Justice Department's investigation into Netflix's takeover of Warner Brothers. Ed Ludlow is going to join the show coming up next.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Let's get a check on your equity market. Welcome back to Open Interest. I'm Danny Berger. Matt is out today, hopefully safe and not stuck in a snow pile. The S&P down 0.2%. The NASDAQ falls 0.4%. What's causing us to drop more? We were kind of positive. The president putting out on Truth Social, basically saying he has the power to implement tariffs. It doesn't need to go through Congress, being very forceful in those countries that are pushing back against him. Russell 2000 falling 0.4%. Bloomberg dollar, that's also weaker this morning. Again, the trend had been mixed, but now it's getting more forceful. NYMEX crude, Matt Maley of Miller Tabak sending me a note saying, we're not paying enough attention to what's happening with Iran. That, yes, rightly, we're paying attention to AI and tariffs, but that is still one to keep your eye on. NVIDIA, those shares up 1.8%. We will get earnings from them this week. Salesforce diving. Morgan Stanley downgrading Salesforce. That falls by 4.2%. And look at some of these energy stocks. They're the best performing sector. ExxonMobil up 2%. Suncor up 1%. They're getting a boost from the Supreme Court. They're going to hear a challenge on climate change lawsuits. And then there's Netflix and Warner Brothers Discovery. So today is the deadline for Warner Brothers to give Paramount to submit its best and final offer. The Trump administration is also going beyond a standard review in the Justice Department's probe into Netflix takeover of Warner Brothers. Bloomberg has learned that there are some developments there, and so let's go to Ed Ludlow, who has been watching it. Ed, what is the latest in the Justice Department's involvement with this planned deal?
Yes, it's a probe that's inclusive of a review of the merger, but also a specific look at anti-competitive behavior. The reporting is based on a civil administrative demand, an administrative subpoena that sources tell us went to an independent film or movie studio. And basically, in this document that Bloomberg reviewed, they are citing both the Clayton Act and the Sherman Act. Those are two important pieces of legislation in parallel, because the Clayton Act is something that's invoked, and there's precedent for it in the context of a merger, right? And so when you said a moment ago that it looks like the DOJ and this administration is looking broader than just a standard review, it's the Sherman Act part that this document invokes that would suggest that, because it's essentially used historically to look at the behavior of one single entity, one company, in a monopolistic fashion. And just last week, when Ted Sarandos was on the network talking to me and Lucas, you know, the co-CEO of Netflix, his main argument was, what is happening right now is standard. The DOJ is just going through the standard procedures which are legislated for. This latest reporting would suggest it goes far beyond that.
What difference does it make then to also have the president in a Truth Social post on Saturday evening talking about Netflix needing to fire Suzanne Rice from its board of directors, saying or else? How would Netflix interpret such a threat, Ed?
Yeah, I mean, well, how would Netflix interpret such a threat? I mean, again, going back to the conversation with Ted Sarandos last week, his view was that this is a completely apolitical, non-political scenario, right? The history with that, of course, with Susan Rice, is she had made some comments on a podcast that basically corporate America and any other entity that is following the direction of the president, you know, does so knowing full well what it's doing, and that's what the president was reacting to. Both of these stories, the subpoena that we've reported on and the wider probe, and the relationship with the president suggests that this is not straightforward. At a minimum, the process and review, pending whatever happens with Paramount and the waiver deadline today, it's going to go on for weeks, if not months.
Hey, Ed, we only got a minute here, but I'd remiss if I let you go without just setting expectations for NVIDIA earnings on Wednesday. Where do they stand?
Yeah, we prepare, brace yourself. I mean, this is a stock that's now trading at 24 times forward earnings. Its 5-year average is 38 times. It has fallen in each of the last 2 earnings reports. The stock is up about 3.5% year to date, having jumped triple digits on an annual basis in the last few years. Everyone is kind of like, momentum's gone, and it's a very high bar to clear to keep this market going with it.
All right, Ed, thank you very much for that. Ed Ludlow in San Francisco, who we are looking forward, as every day we are, to your 11 a.m. Bloomberg Tech Show. Coming up here on the next hour, more on market uncertainty with PNC's Amanda Agati. Plus, we'll talk Trump tariffs with Mazda North America CEO and the CEO of Freeport McMoran.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Municipal workers in New York have hit the streets with shovels as a historic snowstorm barrels its way up through the Northeast. Forecasters say it could reach historic proportions. New Jersey Governor Mikey Sherrill has extended a travel ban in her state until noon.
Still be very dangerous to be out without four-wheel drive or without a vehicle that can get through some of this. So the best bet right now is to stay home.
CBS News Philadelphia's Waukesha Bailey.
The wind seems like that's letting up a little bit, but the snow, it's definitely continuing to come on down. So it could be a little bit deceiving where you're like, oh, it's getting a little bit better outside. Not quite. You still want to be careful, especially as you hit the roads. I mean, they're empty. I feel like that's part of the story today is that not many people are out.
Schools and businesses are closed, power out to about 500,000 customers. Thousands of airline flights are canceled. Correspondent Chris Van Cleve.
The airlines are hoping to resume service to the Northeast sometime tomorrow. That will depend on conditions, and already have canceled more than 1,300 flights, primarily New York City and Boston.
We're getting word 25 Mexican National Guard troops have been killed in Jalisco in 6 separate attacks after the Mexican military killed El Mencho, one of the most powerful drug lords in the world. CBS's Karen Waugh has more from Mexico City.
Activamos el código rojo.
In response, Jalisco's governor activated a code red security alert, suspending public transit, large events, and school activities.
American tourists are holed up in their hotel rooms amid violence in the streets in Puerto Vallarta. A report on the investigation into the president's classified document case will not be released to the public. CBS's Stacey Lynn's at the White House.
A federal judge blocked the public release of former special counsel Jack Smith's final report on the investigation into President Trump. U.S. District Judge Aileen Cannon granted a motion from Mr. Trump backed by the Justice Department, barring any current or future DOJ employees from sharing the report, writing the former defendants, quote, still enjoy the presumption of innocence.
New advisories for some Americans overseas.
CBS News has learned that the State Department's ordered the departure of all non-emergency U.S. government personnel and eligible family members from the U.S. Embassy in Beirut. It comes as President Trump continues to weigh strikes on Iran. And as the New York Times reports, Iran may be weighing retaliatory strikes on U.S. targets through proxies.
That's correspondent Vicki Barker at the Foreign Desk. This is CBS News. There's a new government report on anti-anxiety medications.
The CDC says the proportion of American adults who took anxiety medications jumped from 11.7% in 2019 to more than 14% in 2024. KFF Health News contributor Philip Reese.
Significant increase in use of anxiety meds over the period of the pandemic. The highest increases were among young adults, among women, among people with a college education, and among people who identify as LGBTQ.
Health Secretary Robert F. Kennedy Jr. has criticized the wider use of antidepressants and other psychiatric medications. Steve Kathan, CBS News.
GoFundMe for Eric Dane's family is up to almost $350,000 less than a week after he died following a short battle with ALS. GoFundMe for the family of actor James Vanderbeek now tops $2.7 million. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in snowy New York City. We are here. We're streaming live on YouTube. We're streaming live on Bloomberg.com/video. That's where you'll find us here. Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Rob Carolyn, Bloomberg's meteorologist, to get the latest on this snowstorm that is just hammering the mid-Atlantic and northeast part of the country here. We're going to also check in with Michael Shepard, Bloomberg Senior Editor for Technology, get his thoughts on what we're hearing from some of our trade partners on some of this tariff overhaul as well. Peter Cheer, Head of Macro Strategy at Academy Securities, will give us his market outlook. Then we're going to go down to Washington, D.C. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, talk to us about, I guess, the growing and resurgent uncertainty around some of this policy coming out of this administration, what it means for economic trade policy, what's the latest coming out of Washington, D.C. So we got it covered all which ways here. Stocks trading down here. Let's check in with John Tucker for a Bloomberg Business Flash, John.
All right, guys, good morning. This report brought to you by IBKR. Will the year-over-year change in the U.S. CPI exceed 2.6% in February? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 11th. All right, so we're back to this again. Trade uncertainty. After Donald Trump announced a 15% global duty following the Supreme Court decision on Friday. If it's clarity you want on tariffs, Cameron Dawson at New Edge Wealth says, forget it.
A big question is what the ultimate run rate of tariffs will be, and it doesn't look like we are going to get that certainty anytime soon.
Well, Merck creating a separate cancer unit. They're going to split up the human health business into two entities, this according to the Journal. Gilead Sciences agreeing to buy cancer-focused biotech Arcellx for as much as $7.8 billion. Look at these shares. Arcellx, the ticker symbol is ACLX. 78% higher.
That's how it happens.
That's nice.
Yep.
So it's looking at shares of companies that might be affected by the storm. DoorDash, I didn't even think of this one. Right now, DoorDash shares, they are down 7%. They suspended service in certain parts of the area because of the storm. Didn't think of that one. And then you have the airlines down. Delta, 4% lower. And some people have flights this week, nervously waiting to see or not. Those flights are
Let's not talk about it. I don't want to jinx anything.
No, it's supposed to be nice tomorrow. Anyway, right now the S&P 500, 38 points lower. That's down 0.5%, 68.71 on the index. The Dow is 522 points lower, down 1%. And the NASDAQ 100 down 193 points lower. That is down 0.8%. So I went to Marty Shanker, the global superhead of everything, this morning, and I was
good title.
So we got to, include something about the NYSE and trading and whatever. He goes, yeah, moron. It's mostly electronic these days. They're not going to be impacted, and they're not. So,
so there you go.
He didn't say moron.
Business as usual.
Business as usual.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Good to see everybody made it.
We all made it in here.
And we'll be in tomorrow.
Yes, we'll be in tomorrow. Just booked the room for
Good
tonight.
Lord
so
willing.
we'll be all set to go.
Yeah.
John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, streaming live on Bloomberg.com as well. Let's take a look at some of the stock movers on the day. We do that with Alexis Christophorus. Alexis, what are you looking at today?
Looking at Novo Nordisk, guys, because it's really taken it on the chin, and it has really fallen out of favor with investors as of late. And by that, I mean the past year. I mean, the stock is down 54% in just the past year. Today alone, Novo Nordisk down more than 14% year to date. That brings its loss to 20%. This, of course, the Danish medical pharma company. So it had a trial run. It went on a head-to-head trial with Eli Lilly when it comes to their next generation weight loss injection. And it did not do nearly as well as Eli Lilly's injection. And so as a result, the stock is getting punished. Lots of analysts weighing in. One Morgan Stanley analyst saying this is the result of those tests are the absolute worst case scenario for Novo Nordisk. So
it feels like it can't catch a break. I mean,
Yep.
you know, every news that comes out is like incrementally, I don't want to say terrible, but not positive.
Right, relative to the competitors. All right, what else we got there?
I am looking at Domino Pizza
because
it is the best performing stock, last I checked, in the S&P 500 today. Stocks rallying now 3.5%. And year to date, though, it's still down about 4.5%. So there you go. Fourth quarter revenue beat the street earnings at Domino's Pizza in line with projections. So it made more money by doing a few things: selling more food to its stores, charging higher prices for ingredients. So there's inflation, right? Another way it's sort of rearing its ugly head, and collecting more fees from franchise operators for things like royalties and advertising. You know, a lot of people were saying that pizza like sort of was over, that people weren't going out and buying pizza.
No.
So the CEO of Domino's Pizza, and of course he has his own reasons for saying this, right? He said the sector continues to grow modestly in the U.S. and that the chain is taking market share from its competitors. So I guess the crust stuffed pizza at Domino's Pizza.
Do they mention the Spicoli effect at all for Domino's?
No, what is this?
With all the gummies and the weed and all that kind of...
People get the munchies.
Stuffing their pizza with that now?
No, they get the munchies, and they need to call someone to get food to them right away.
Didn't connect the dots there, John Tucker.
It's a thing.
All right, well, how about these package companies? We don't really talk about them as a group often, but International Paper, Smurfit, they are just getting killed today. They're coming under pressure after a surprise drop in U.S. container board and liner board prices, driven by weak demand, aggressive discounting, and a rise in European imports. J.P. Morgan said this unexpected price decline is a negative development for International Paper and really for the entire sector, and could weigh on their earnings outlook and valuation. So International Paper is down now. I just want to check it real quick, but it was one of the worst performers in the S&P 500, if not the worst, the last time that I checked, along with these other packaged companies. Yeah, International Paper now down nearly 8%. And down about 23% in just the past year.
I wonder if the minimum amount that you get charged, that you have to buy in order to get free shipping will change because of this, because this is huge for all those e-commerce companies.
Yeah. International Paper, you know when it IPO'd? October 6th, 1941.
What?
Isn't that amazing?
Wow.
Back
Lots
in the
of history there.
Yep. That's
so,
blue chip.
And just in case you were wondering, and for those out there who would like to get into the nitty-gritty, and those in trading this, container board prices for February fell by $20 a ton from January, while box board prices were unchanged for a second straight month. That's what you get on the Bloomberg terminal.
Yep, absolutely. And you get it when IP did the IPO. So
absolutely. All right, Alexis Christophorus, thank you so much with our market movers. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I have not stepped foot outside the office since when I got in around 6:30 a.m., 7 a.m. today. But the snow does not look like it's coming down. It looks like it's going up.
And it's like... how in a thunderstorm you get sheets of rain, there's sheets of snow.
Yeah, just like flying at you in every direction.
Exactly.
All right, so of course we need to get an update on what's going on here with the weather. Rob Carolan is a Bloomberg meteorologist. And Rob, it feels like the warning for this now blizzard went from, oh, it's going to be 1 to 2 inches to, oh, this is going to be the storm of the century within a matter of hours. Did everyone just miss this? And if so, how did they miss it?
No, it wasn't missed so much, Scarlett, as the models shifted the track of the storm northward about 250 miles starting during the day on Friday. So it looked like it was going to kind of graze everybody from the coast of New England back across New York City. And then by Friday afternoon, we started to see the guidance come in. The U.S. model was very aggressive last week, forecasting a pretty strong storm system to generally hit the Northeast. All the other models, though, were further south, so we were kind of not giving it a whole lot of weight. Then on Friday, all of the models started to come together with this storm coming much closer to the coast and being a big deal. It's probably going to come in, once it's said and done, as a top 20 storm in the New York City area. We'll have to see what officially the measurement in Central Park is. The record in Central Park is over 27 inches of snow. I don't think we're going to see that from this storm in Central Park. Parts of Long Island, east of Islip's a different story, already over 20 inches at Islip, and it's still snowing there. And there are going to be parts of southern New England that are in excess of 20 inches from this storm as well.
All right, Rob, asking for a friend here in the metro New York area. When does this storm get out of New York? We've had it.
Okay, so New York, Paul, it's going to be coming to an end early mid-afternoon. It'll taper off in the intensity. We still have that band that we've been watching all morning from the Hudson River Valley down into the city. It's weakening now up around Poughkeepsie. That will tend to shift southward into the city and the Jersey Shore this afternoon. It's out of here by the time the blizzard warning is ending at 6 p.m. in the city. New England, different story further east. They're still being impacted by the storm into the evening. It looks like totals in New York are going to be many locations up or over a foot to as high as 16, 17 inches. Long Island, it's going to be 20 to 26 inches from this storm. And we'll have parts of southeastern New England that end up with about 20 to 26 inches of snow from this storm.
Okay, also asking for a friend. If you are, say, flying out late Tuesday night / early Wednesday morning, my flight, or oops, I gave it away. The flight has not been canceled. The flight has not been canceled because it's a 12:05 a.m. departure time. Can we assume right now that Wednesday flights are going to take off if it hasn't been canceled yet?
I think you're safe to assume with that in the tri-state area and points to the south and west. With the storm ending this afternoon, the intensity of the snow is going to drop off quite a bit this afternoon. They should be able to get the runways cleared and we'll be back to regular operations in the city. Boston, it's a different story. They're going to probably have some issues overnight into tomorrow morning. I'd expect some delays and cancellations in Boston through tomorrow afternoon, but I think you're going to be okay late tomorrow night.
Rob Carolyn, thank you so much. Appreciate it. Rob Carolyn, Bloomberg meteorologist, giving us the latest on this storm. I'm just looking at my forward, just kind of temps here. We're going to be pretty much above freezing for the remainder of the week. Wednesday's actually,
which is a nice change.
42. Yes, because last time, probably the bigger problem was it was just below freezing, well below freezing for
like 2 weeks.
Yes, and so whatever was there, it froze rock solid and taking a hard time to melt it. And I was just noting just over the weekend, it was so warm and sunny. You could see grass everywhere.
I know.
I mean,
it was such
we'd just gotten out
I was planting flower bulbs on Saturday.
John Tucker.
I kid you not.
And then here we are right back into the soup. So I tell you what, we've been very lucky the last several years with our winters here
I mean,
in
it
the
made me
greater New
think
York
that
area.
normal winters are like 45 degrees or even 55 or 60 degrees.
Exactly. So, you know, we were due with a harsh winter, and it looks like we're getting that now. For me, I tell you, turn the calendar to March 1st, boom, the winter's over. Whether it is or not, for me, just mentally.
The meteorologists keep talking about how this could like last into April.
I know, but just mentally, that's kind of where I go. So we'll see how that works this year. S&P down 46 points, 0.7%. The Dow off 640 points. That's 1.3%. The Nasdaq off 160 points, 0.7% there. The VIX shooting out 1.6. We're now at 20.7, so a little bit of angst out there in the marketplace. Yields coming in slightly. 10-year Treasury yield, 4.05%. WTI crude oil, it's higher, $67 a barrel. How about that? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, the tariff situation has triggered mass confusion, and what do markets hate? Uncertainty and confusion. So they're lower. President Trump responding to the court ruling Friday by imposing new across-the-board 15% levy on U.S. imports. So again, that's sowing fresh confusion around the global trade. Shares of NVIDIA, actually one of the bright spots today, up just about 1%, advancing before the earnings report that we're going to see on Wednesday. And then Novo Nordisk, the next-generation obesity shot, delivered less weight loss than Eli Lilly's rival blockbuster. It's another blow to the company's attempts to regain lost ground in the weight loss market. And Novo's, these are the American depository receipts, right now 15% lower. And overall, the markets are taking on the chin today. The Dow down 653 points. That is a decline of 1.3%. The S&P 500, 43 points lower. And the NASDAQ 100 down 168 points. I feel like I'm being extorted. This is like, you know, if you have a kid, you should be shoveling and not demanding payment, right? I mean, but I have no choice. I'm like, you live there. Yes, you have to
I got paid $3 to mow the lawn. That was the going rate when I was a kid. And we had a pretty big lot and a push mower. So I felt like that was well-earned $3.
I think I'm a schmo. I just did it without getting paid anything.
Really? Okay. Well, that's, you know, you should have been my daughter. We check the markets all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in snowy New York City, streaming live on YouTube and streaming live at Bloomberg.com. As John was just mentioning, the market's selling off in part due to some uncertainty as it relates to trade policy. The Supreme Court striking down some of the reciprocal tariffs from the Trump administration. Let's get some details here. Michael Shepard, Senior Editor for Technology and Strategic Industries, Bloomberg News. He's down there in Washington, D.C. Michael, the Supreme Court spoke. President Trump responded. Where are we with tariffs now? I forget.
Well, you know, in a way, we're digging out from this deluge of incoming on the whole trade and tariff question, not only the Supreme Court ruling, but then Trump's misgivings over it, and then his moves to impose a 10 and then 15% global tariff. And then, of course, all the U.S. trading partners around the world responding. And in a word, as John said, it really is confusion. Or if you're in the markets, as he said, it really is quite a bit of uncertainty. And the questions now going forward are how firmly any of the U.S. trading partners are going to abide by previously struck agreements. The European Union is holding off now on ratifying in its parliament the accord that was struck at Turnberry between Trump and EU officials last year. And of course, we see Indian officials canceling a planned meeting here in Washington that was set for later this week in the wake of this Supreme Court ruling. And then, of course, there is China. President Donald Trump is scheduled to visit China a little more than a month from now for a highly anticipated summit with Chinese leader Xi Jinping, with tariffs and trade really hanging over the agenda. China does not have a formal agreement the way other trading partners do. We just have that trade truce, but that really allowed the flow of rare earths to resume in exchange for the U.S. holding off on tariffs that the president now may be handcuffed and imposing. So we're going to be watching this, Paul and Scarlett, unfold over the coming weeks and months. And the administration is trying to make clear from its standpoint that it's steady as she goes, and that they're just using this latest round of tariffs announced on Saturday as a bridge. But it's unclear how firm or steady that bridge will be and how quickly they'll be able to impose some of these other authorities.
I want to go back to China because Xi Jinping and President Trump are set to meet in Beijing on March 31st. And along with the rollback of those reciprocal tariffs was the 10% fentanyl tariff that the president imposed on China. And that was also rolled back essentially by the Supreme Court. So does China kind of come out ahead here because it never actually agreed to anything with the U.S.?
Scarlett, you really boiled it down nicely there to the whole question, and that is who will have more leverage heading into those discussions. And really removing the fentanyl tariffs does rob the president of a little bit of leverage there. And it also forces the administration to rely on some of these other authorities, including Section 301. There already is a trade investigation into China and its trade practices through that, and whether Beijing is cooperating with the trade deal from the first Trump term back, at the end of January, in January 2020, they announced that. And there's been question all along, including during the Biden administration, about whether China was living up to its end of the bargain, including soybean purchases and other things. But the whole question going into this, Scarlett, as you put it, really is one of leverage and who will have the upper hand in these discussions. And if China is able to actually extract a few more concessions from the U.S. side during those conversations.
Michael, is there any rumblings down there in Washington that Congress may reassert some of its, decision-making power as it relates to trade here, given the Supreme Court ruling? I haven't heard much other than a few social media posts.
Well, Paul, that was part of the concurring opinion that Justice Neil Gorsuch wrote. Gorsuch, as we all remember, was a Trump appointee, and the president was pretty unhappy with two of his three high court picks during his remarks last Friday. And Gorsuch referred to the role of the legislative branch in imposing tariffs. And he almost chided Congress for really not stepping up. But we haven't seen the Republican-led House or Senate really assert itself or assert its traditional role in passing and approving tariff programs, instead ceding that on a more emergency or investigative authority over to the Trump administration and to the president. So it'll be interesting to see how, with the midterms coming up, Republicans play this and whether they decide to begin to assert their authority more. There were 6 Republicans who defected in the House and voted to help pass a measure of a resolution of disapproval, really, of the tariff program against Canada. Now, we haven't seen anything more globally in terms of the president's tariff agenda from Congress in terms of disapproval or anything, but it is one of the key questions going forward, and especially with State of the Union tomorrow night. Exactly, which should be interesting, coming down the aisle and does he
definitely
greet the chief of the Supreme Court.
Body language will be super, super fascinating. Lots of memes coming from that, I assure you. All right, Michael Shepard, Bloomberg senior editor for technology and strategic industries. Every day, right now that includes everything. Everything. Yeah, on the global trade confusion. Thank you so much. All right, let's bring in Peter Chur. He is head of macro strategy at Academy Securities. He does a great job of kind of synthesizing all these headlines, especially the geopolitics of it all, into what this means for markets. And Peter, one thing that you are kind of thinking aloud is this question of whether the president is able to embargo trade. He is clearly frustrated with the Supreme Court's ruling against his reciprocal tariffs. He's made clear that he is going to impose new tariffs one way or another, this time 10%, which was then raised to 15%. What do you mean by this question of whether the president is able to embargo trade?
Some of the ruling was kind of strange. It said he's allowed to basically force licenses on countries, but he couldn't charge a fee for those licenses. And he himself has kind of talked about embargo. So, he always likes to have the maximum pressure, maximum leverage. Whether that turns out to be useful or not, I don't always know. But I suspect we might see something pretty aggressive where he threatens embargo, something to really kind of ratchet it up, especially with China, who we kind of lost a lot of that leverage with, and maybe even India.
So, Peter, given this, I guess, the reintroduction of some trade uncertainty back into the conversation, has it changed the way you're thinking about markets, asset allocation, offensive versus defensive? How are you thinking about just overall market moves here?
So, one thing, going back, we called it a bridge too far. And I think some of the action that occurred around, the Gordie Howe bridge kind of turned some people off. And that was the first time, as your previous guest mentioned, we had 6 Republicans switch against the president. The president even threatened to primary them. And so they stuck their ground, maybe believing that they're better off fighting some of these tariffs. So I think there's a lot of uncertainty even coming into the IEEPA decision yesterday. So I think you're going to see more of that. To me, what it leads me to want is I want to be a little bit overweight the rest of the world. And then when I take a look at the AI transition, what's going on there, I still think what you want to do is be long U.S. kind of labor-intensive, physically intensive businesses, maybe with lower margins, because they can benefit, I think, the most from AI. And you want to be a little bit careful on those really high-margin sectors that have come under pressure. So that's where I want to be. And I think, we've talked about it before, what we call production for security, PROSEC. So it's chips, it's rare earths, critical minerals, electricity production. That's where you want to be concentrated in the U.S. And to be honest, I actually bought some, and been talking to clients about buying Mexico today. I think that could become really interesting with everything that's going on.
Right, especially they're taking out a key drug kingpin. Peter, I want to get your interpretation of what's happening when it comes to the Middle East and Iran. The U.S. has been amassing this huge military presence, the biggest since 2003. We know the president has been pushing on a deal over its nuclear program, and that's been kind of consistent. Is this going to come to blows? How do you see this shaping up? What is the strategy here?
Yeah, so I think our view has been that it's probably going to take another week till everything's kind of fully in place and we're really truly prepared to have some attacks. And then we will attempt to do some damage, very targeted, specific facilities, just enough to kind of bloody Iran's nose, show them that we're willing to do this. I think there's a huge reluctance for us to, really risk troops on the ground. We don't want to risk American lives. So how can we do that but still send a message? So I think that's what will happen over the next 2 to 3 weeks is some sort of show of force where we attack Iran from a distance to bring them to the table.
Why are we doing this? I mean, what's the rationale the president is going to give, maybe, perhaps on Tuesday during the State of the Union, for why the U.S. needs to attack Iran?
Wow, that's a very loaded question, given that, all the national security structure was really, strategy was really focused on North and Central and South America. I believe the the protests really caught his eye as maybe an opportunity to see a regime shift there. I don't know whether we would actually try and force a regime shift or maybe just create a little bit more impetus for that to happen. I think our history with regime change is awful. On the other hand, right, the Middle East has been coalescing into a real market, into something where we're selling chips into the Saudis and other countries there. And Iran's kind of the last thorn in the side, both to us, to Israel, and even to much of the Middle East. So maybe that's where he's seeing this as an opportunity to kind of push this to the edge once and for all. And then we can have a Middle East that's maybe much more peaceful, can move along with the Abraham Accords, and can be much more, part of Western society.
Peter, thanks so much for joining us. Always appreciate getting your unique opinion. Peter Cheer, Head of Macro Strategy at Academy Securities. And as the name implies, Academy Securities is owned, managed by a bunch of ex-military folks, by and large, ergo the Academy name, from the military academies. So they have a unique perspective on geopolitics and how it impacts global markets. And that's why we can go to Peter Cheer and ask him about kind of geopolitics and how that impacts markets here, because they really, as an institution, they really focus on that part of the market. Coming up, we're going to check in with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. I'm going to get a preview of the State of the Union address. I mean, I'm going to tune in for the walk down the aisle, see whose hand he shakes, whose hand he doesn't.
In other words, you're going to watch it with the volume turned off so you can see all the body language.
Exactly. The Supreme Court, did they get a handshake, a high five? I don't know. It'll be fun to watch. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, it comes down to this. President Trump threatening to place a much higher tariff, his words, on any country that wants to play games with the Supreme Court's tariff ruling Friday. So investors are pretty much back to an environment of uncertainty. And as a result, all the major averages lower right now. The Dow down 651 points. The S&P 500 53 points lower. And the NASDAQ 100, 224 points lower. Aswar Prasad, he's a professor of trade policy at Cornell University. He was on surveillance earlier today, waiting to see how the dust settles after the tariffs were struck down by the Supreme Court on Friday.
Nobody quite knows right now what the trade landscape is going to look like, what sort of tariff measures are going to be in place. So I think right now, waiting is probably the best thing.
NVIDIA, those shares right now up a little less than 1%. Althea Capital raising the stock to a buy. They say it's too cheap to ignore before the earnings. And we're going to get results from NVIDIA Wednesday. Energy stocks, they're advancing right now. Oil prices rising. Investors continue to assess the potential for conflict with Iran. We have Brent right now. This is the international benchmark, 72.42 a barrel. So that's up about 0.7%. There's the storm update. So I go to poweroutage.com because they're pretty good at this. So in New Jersey, which I'm going to say is hardest hit, in particular the Jersey Shore, almost 131,000 people without power.
Oh, boy.
Then Massachusetts, 258,000 people without power there. It's not business, but this is, I guess, snow-related. And this is serious. Lindsey Vaughn, who, if you saw that accident with her left leg, she says now it was a lot more serious than what we were led to believe. A complex, not just the complex tibia fracture in the leg. She said she almost lost her leg.
Oh, boy.
Now, the surgeon who specializes in this sort of thing happened to be with her, with the team, only because of her previous problems with her ACL. Wow. So if he hadn't been there, she says in this Instagram post, she would have lost her leg as a result of this accident.
Enough is enough.
According to her, anyway. We check the markets for you and other stuff right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com. You know, with all the news out there over the last several days, at least I kind of forgot that we have the State of the Union tomorrow. And that's a pretty big deal, particularly for the folks down there in D.C. So let's get a little bit of a preview here, as well as a little tariff talk. Who doesn't like that? Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. He's down there in Washington, D.C. Nathan, what are you going to be listening for or looking for at the State of the Union tomorrow evening?
So I think there's three themes. You know, the first is obviously geopolitical. I mean, what's the situation going on with Iran? I mean, it's certainly important to the commodity markets, but the other two are more domestic. And the first is healthcare policy. You know, will President Trump try to essentially change the Affordable Care Act via reconciliation? The note that my colleague Dwayne Wright just put on in the terminal suggests it's not. We're only giving it a 20% chance that a reconciliation bill can happen this year. But I think more importantly for the markets is the idea of affordability and headline risk. You know, I look for President Trump to dial deep, to go deeper on these ideas of credit card interest caps and purchases of corporate purchases of single-family home bans. But what you need to know is essentially is that we don't think legislation is going to happen this year. It's going to be very difficult to come by. So the question that people should be asking themselves is, what is President Trump willing to use the bully pulpit for to try and drive behavior? Think of his comment over the weekend of trying to drive Susan Rice off the board over at Netflix. That's the most likely outcome from this speech. It's going to be headline risk and then questions about President Trump using the bully pulpit.
When it comes to, it's great that we have kind of ideas of what we expect the speech to include, but it feels like many of his speeches that intended to focus on policy end up becoming kind of like a campaign rally. Is this something that's going to be tightly scripted and he's going to stick to it, or is this going to become like an ad-lib thing where it can easily extend into 2 hours and he's kind of just riffing on his grievances?
You know, he's going to have a script, but I'm kind of interested to see myself how much he's going to deviate for it. I mean, look, you know, we're in a situation where it's a little bit different. His approval rating isn't all that popular at the moment. It's one of the highest disapproval ratings that the president has ever had. He's going to also be looking at the Supreme Court justices directly below him, ones that just refuted him. And even on the betting markets, they're talking about, will President Trump shake John Roberts' hand? And I think right now the no's are winning over the yeas. But, you know, what I will say is that it is a campaign year. It is a campaign speech. And like all things with the State of the Union, you just have to ask yourself, does this statement that comes out of the president's mouth have an avenue to passage? And in many instances, it doesn't, or it has to fall in the deregulatory camp, which takes forever. I don't think you're going to see many new ideas here. I think President Trump's going to die, you know, just go back to where he's been speaking about over the last few weeks. I think he's certainly going to double down on tariffs. You know, he's going to make, you know, statements like he just said on Truth Social about how countries that quote unquote play games are going to face higher tariffs. You're going to see a lot of that. But again, I don't think you're going to see much new way of the information, and a lot of it's just going to lead to headline risk.
Nathan, what's the feeling within the Republican Party here as it relates to the affordability issue and tariffs? Because I think most Americans now, if they didn't already, they now have a fuller appreciation that tariffs are, in effect, a tax on the U.S. economy, depending, and you can debate who really pays the lion's share, but that is generally understood. And now to have the president double down, triple down on this tariff policy, are the Republican Party saying, wait, we're shooting ourselves in the foot here?
So they're certainly stuck between a rock and a hard place. And I think this is one of those situations where they'll say one thing publicly, and then if you give them truth serum, they'll say something else. Because, look, I think most of the Republican Party understands that tariffs are a tax on the American people. You know, there have been significant numbers of Republicans that have voiced their uneasiness with tariffs, or those of them that actually voted against the president in terms of certain recent resolutions on tariffs. But, you know, when it comes to affordability, you know, President Trump will say that prices have come down, inflation has come down, but, you know, the markets sort of say something differently. And so, you know, anecdotally, if you've just been to the grocery store, food prices are certainly up. So, you know, you are going to see statements from the president, from the White House over the next few weeks to try and drive affordability, but it's only going to have so much impact if they can't get the policy through, and or there's an inflationary aspect from tariffs on the other side as well. It's just one of those situations where, you know, the message is sort of gets muddled.
Are we going to have the usual response from the Democrat side once the president gives his State of the Union? I just wonder whether the Democrats have come up with any policy prescriptions, or whether it's just going to be more, you know, whatever they propose will be the opposite of what the president is pitching.
You know, it's a great question. I mean, Virginia Governor Abigail Spanberger is going to be giving the Democratic address just after the State of the Union. And this is really going to be indicative, I think, of the 2028 election cycle. Think about the presidency, because there's always been this discussion amongst the Democratic Party. Is it the, you know, the progressive wing of the Democratic Party, or is it the moderate wing of the Democratic Party that is really driving the mantra going forward? And we've seen successes from both sides of the party in recent elections. Now, the discussion or the decision to have the Virginia governor come and give the address, I think, is going to lead more towards the moderation side of the argument. But again, you know, this address is really going to dictate, I think, this messaging, because right now the Democrats going into the 2026 elections are essentially running a platform of, we aren't President Trump, but they are going to have to come around with a bigger message, I think, going into 2028.
30 seconds left, Nathan. Should we expect anything from this Congress for the remainder of this calendar year?
You know, I think there's still an opportunity for a housing bill to pass. Long story short is, I don't think it's all that exciting for the markets. But then there's this idea of a crypto market structure bill passing in April. I'm still at a 60% chance. Gives regulatory clarity for companies like Coinbase and Robinhood, but I don't think it really impacts the underlying Bitcoin or commodities all that much either.
All right, Nathan, thanks so much. Appreciate it. Nathan Dean, Senior Policy Analyst of Bloomberg Intelligence. Chances are I will not be watching the State of the Union, but Nathan will be.
Yeah.
So if anything exciting happens,
that's
tell
okay.
us.
You can watch the memes the next day. I'm sure
Yes.
everything will be made into a meme.
Yes, but will they shake their hands? I like that. You know, there's a prediction market on whether President Trump will shake the hand of the Chief Justice after that.
Or does he just
Supreme
kind of
Court
walk
ruling.
past them and not even make eye contact?
Yeah, I don't know. I guess, you know, he can do whatever he wants, and so we'll see. But that's always a spectacle when you see the president walk down the aisle there and everybody jockeying to get a little FaceTime, I guess, and shake the hand of.
Right, take their selfies with him, whatnot.
Exactly. So we'll keep an eye on that. S&P down 56 points. The Dow, that's down 700 points. Goldman Sachs, American Express are the two names that are leading that lower. That index is down 1.4%. NASDAQ off about 190 points. That's 0.8%. So a sell-off here into the market. Seeing that in the VIX. VIX pushing higher, up almost 2 full points. Let's call it 21 on the VIX. A little bit of angst out there. Yields coming in. Got the 10-year in 3 basis points. Let's call it 4.04%. On a 3.99 watch. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good Monday morning. It is Monday, right? It feels like it's already Friday.
Yeah, exactly.
Even though it's Monday because of the storm. In any case, we're keeping a close eye on the markets and healthcare shares. In particular, everything's down right now. The S&P losing about 0.9%, the Dow off 1.4%. But within the pharma space, Novo Nordisk, the ADRs, American Depository Receipts, down by double digits. In fact, lower for a fifth day, losing about 16% today. And this is after its next generation obesity shot, CagriSema, delivered less weight loss than Eli Lilly's rival treatment. Let's bring in Sam Fazeli. He is our Director of Research for Global Industries and Senior Pharmaceuticals Analyst on what's happening here. And Sam, I mean, we've been keeping a close eye on Novo Nordisk because it was a pioneer in weight loss drugs, but it appears that it has really fallen behind Eli Lilly and continues to fall behind even with this next-gen obesity shot. The data shows a 20.2% weight loss after 84 weeks compared with Eli Lilly's 23.6% weight loss. I mean, that sounds like it's pretty small differences. Is that an unqualified failure?
Well, the trial was set up, Scarlett, to test one drug against the other, and it failed, right? So that's when they start these trials, they have a hypothesis. We think our drug is as good as this one. And they set the hypothesis up. They do the right number of patients to prove that CagriSema is as good as tirzepatide. It didn't prove that. what it does, I mean, I don't really care about these 23%, 25%. A lot of people are happy with the weight loss they get and they maintain the weight loss. That's what they care about. This rapid weight loss, a very large weight loss, may matter for much more obese patients potentially. But the reality is, this is handed a gift to Eli Lilly now. Once this data is published, they can go out there and say, well, look, we've beaten Wegovy, we've beaten the next generation drug they've got, at least on weight loss on the surface. What happens to muscle loss and all that sort of stuff will come out, or peripheral fat versus visceral fat, etc. We've beaten them. This is the drug to take. And they should be able to sell as much as they can make. So, which is kind of what's been going on already.
All right, thank you for explaining that. It's the relative effectiveness, and in this case, giving Eli Lilly an easy win. Why is it that Novo Nordisk has lost so much ground and its edge to Eli Lilly? Does it come down to the science of it, or is there something culturally at the company that's led to this underperformance?
Yeah, I can't speak to the culture, to be honest with you. I mean, this has been a phenomenal story for years, right? They were the pioneers in obesity. They in diabetes with this class of drugs. They brought for obesity. They have a lot to applaud for them for. The point is, all these companies take calculated risks. Back in 2015-16, Lilly took a calculated risk to try this new molecule, a GLP-1, attached to it a GIP. Let's forget what they are, but they're two different ways of modulating the system. And nobody thought that GIP would do what it did. So they were lucky, they threw the dice and they got the right answer, or they just had a very clever biology person who said, I disagree with the rest of the world, GIP will do this. So they ended up with a supercharged product. And then, of course, Novo never went down that road. Even since 2018, when we all saw the first data, we went, wow, there's a whole bunch of other companies who did this. We have a list that we keep. Not Novo. They put their dice, or they put their money on this combination, amylin. A lot of people have too. But so it hasn't worked out. It's just the way that drug development goes. In 6 years' time, you might find that some mechanism they've got starts to beat what Lilly has. But we don't see that at the minute, and we haven't got any sight on those things.
Well, Karen from the Jersey Shore writes in and says she is a huge fan of Wegovy. It worked just great.
There you go.
Sam, here we go. Merck splitting its main pharmaceutical unit in two as it prepares for the approaching patent expiry of its best-selling drug. What's going on here?
Yeah, so there's one other company that does this, and it's been one of the, you plot the share chart and you go, wow, that's pretty cool. And that's AstraZeneca. AstraZeneca has for a long time had a division, a person responsible for oncology business and responsible for oncology drug development. That's always been there. I think they recognized they had assets and that oncology drug development is quite different to every other area. Here's Merck now doing the same thing. Is it suggesting that they, because of the number of drugs that they've got coming, some in oncology, some elsewhere, it's better to have two units that look after these two things, especially in the R&D side? I think they're doing the right thing. I don't think it tells us much about separating the reporting lines and all that sort of stuff, or the P&L look of things. I think it's much more to do with making sure that they're going to get the best chance in the specialty pharma, as they call, and oncology. And I think that's the right call to make by them.
Does it lead to a formal spinoff where you might have two publicly traded companies, or is this more like an internal division within the company?
Yeah, I doubt this is about a spin-off. I mean, who knows? I'm not in the board of Merck and listening to the, or even a fly on the wall. And the thing is, I don't think you need to go that far. I think this just reorganizing the business in a way that works best for the pipeline. And I think that's the right thing to do, especially if my colleague Ord Gersbacher and Vinay Hamilton are right, that actually the Keytruda that people think is going to expire in terms of their patents in 2029 has another extra 3 years of cash flow or 4 years of cash flow to 2033. Remember, it's the biggest drug in the world. If they're right in their patent analysis, you know, this really puts that oncology business in supercharged mode.
Yep. Sam, thanks so much for joining us. Appreciate it. Sam Fazeli, Director of Research for Global Industries and Senior Pharma Analyst for Bloomberg Intelligence. He's based in London, where it's not snowing. You know how Sam mentioned that, you know, he's not in the boardroom. He doesn't know what's they're thinking?
I don't believe him.
Back in the day, we were literally called by people at the board. Hey, Paul, what do you think? Should we do this? What do you think the market would react to?
Well, there you go.
That was when we had a lot of fun. For our listeners in the U.S., a reminder, you can listen to us via satellite radio and Sirius XM channel 121. Access the world's only global auto business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. More coming up. This.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good snowy Monday morning here from the team at Bloomberg Intelligence. We are live in our Bloomberg Interactive Broker Studio. John Tucker, Paul Sweeney, Scarlett Fu. We all made it into the office. Norma Linda as well. We're all sitting in the studio. We made it. We're safe. We're warm for now, and we're going to stay in the office for a couple more hours.
I feel
while
like
this
singing
storm
now.
Goes out. I know. Well, there you go. This is Bloomberg Intelligence. In the second hour, we're going to definitely check in with Rob Carolyn. He is our meteorologist on when the snow will stop falling from the skies and just swirl around on the ground, and what's going on with airline flights. Holly Fromm is our litigation analyst. She's going to give us an update on what President Trump's now 15% tariff means and how we move forward from this, given the Supreme Court ruling against his reciprocal tariffs back in April. And we're going to check in with RJ Gallo. He is CIO of Global Fixed Income Group on the markets and the tariffs and what this means for treasuries. Michael Halen is our senior restaurant and food service analyst. Domino's doing very well. DPZ, one of the big gainers in today's trade. Cheap pies and stuffed crusts are driving a lot of sales. So we'll check in for that. We'll check in with him on that. John Tucker, are you a fan of stuffed crusts?
Since the last time I made a comment about this and got into intense trouble.
Ooh, okay. All right, you prefer to be healthy. I get it. Okay.
But no, but I think Domino's is the ultimate
carbs.
In gourmet food. Sure.
Let's go there. Let's stick with that. All right, why don't you give us a Bloomberg Business Flash?
Traders assessing the implications of the latest tariff developments for markets in the economy. Right now, the major averages all lower, down 1% or more. The Dow is 719 points lower. That's down 1.5%. The S&P 500 down 73 points. That's a decline of 1%. NASDAQ 100 right now is down 326 points. That is down 1.3%. Well, Priya Misra, J.P. Morgan Investment Manager, says, add to the High Court tariff ruling Friday, we are definitely facing more uncertainty.
Policy uncertainty has just gone up. So we don't know refunds. We don't know, we heard that Section 122 is a bridge to some point, but to what point? What kind of 301 tariffs are we going to get? What sort of 232 tariffs are we going to get?
And yes, Domino's Pizza, ticker symbol DPZ, right now rising 3.4%. The company reporting comp sales that top expectations. They also, I guess more importantly, boosted the dividend by 15%. Then you have International Paper falling. Analysts note a surprise price drop in container board. And it's something of a bellwether is their demand for boxes, which you ship stuff. Credit card companies under pressure. You have Dow Component, American Express. Those shares right now, they are down almost 8%, 7.5% to be exact. Young men have been drenching themselves with Axe body spray for, I guess, a long time. You've all smelled it. Now the brand is encouraging guys to tone it down. The company, yes.
It worked too well.
I guess. So Unilever, they own the company. They're rolling out new bottles with a lighter, more controlled application. According to the journal, Axe is running a marketing campaign to promote the sprayer called the History of Overdoing It. I don't recall like a company ever saying you overdoing it with our product.
So teenage boys need to be taught how to use body.
Teenage boys need to be taught a lot of things,
This is true.
including this. But anyway,
Yeah, that was definitely a thing in our household back in the day. When the guys were 16. Yeah, that kind of 17.
Yeah, what would Miss Manners say? Like, how do you approach somebody like, you're just killing me?
It's too much. It's too much.
Too much. We check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com/video. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, I'm looking at shares of Deere. This is ticker DE. The stock falling more than 1% today. This is after a downgrade from Jefferies. They downgraded the stock to hold, to underperform, from hold. So essentially, the analysts over there are saying that they've turned bearish on the company. They're saying that this is after shares have rallied to an all-time high. They're saying that the stock is pricing in a rebound in the farm economy that appears, quote unquote, elusive. And a downturn should reach its worst point this year. But the analyst does say that troughs have lasted years in the past and farmers face high costs and a volatile trade environment.
Stock put 40% year to date, so taking profits. Okay, not bad.
Clearly so, yeah. Also moving over into the residential space, I've got my eyes on Veris Residential. This is a real estate investment trust, about $1.7 billion in market cap, focuses on multifamily properties. This company earlier seeing its best day since July, and this is after it said it will be acquired by an investor consortium led by Affinius Capital in a partnership with Vista Hill Partners. This is an all-cash transaction for $19 per share. So currently seeing shares of VRE on the rise, up for double-digit gains right now.
All right, let's stick with the upward trajectory of individual stocks. You're also looking at a biotech name.
Very small name. There's so many biotechs out there. This one is about $59.1 million in market cap, but it's making some really big moves today because we saw the stock has really been in focus earlier, surging as much as 45%. This is after the U.S. FDA approved the firm's oral medication for treating manic or mixed episodes in bipolar 1 disorder and schizophrenia in adults. So clearly the street is liking this. We're seeing shares up right now, up about 40% as we speak.
This is Vanda, right?
Vanda Pharmaceuticals, VNDA.
Got it. All right. Nora, thank you so much. Nora Melinda is our Bloomberg Television Markets correspondent. And of course, for more conversations like this, subscribe to our Stock Movers reports. You can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Check it out. Stock Movers, available on Apple Podcasts, Spotify, or anywhere you listen. All right. This storm, I think we're all over winter at this point.
Yes.
Paul is ready for the spring.
Yes.
So is John Tucker. I am as well. Rob Carolyn, our Bloomberg meteorologist, is on standby where he's been all weekend checking out the latest trajectory of the storm. Rob, are we pretty much done with the snowfall, or is there still more to come in the greater New York City region?
Well, we're almost done with it in the greater New York City region, Scarlett. The precipitation on the radar is starting to diminish and will continue to do so over the next several hours. It'll drop off and end probably late this afternoon, early this evening, right around the time the blizzard warning comes to an end. Eastern central Long Island out into southern New England, a completely different story. We've been talking about this band all morning long coming in off the Atlantic. The snowfall rates have been ridiculous, between 2 and 5 inches an hour. I'm seeing totals now east of Islip, Long Island, at around 27, 28 inches of snow. We've seen Providence, Rhode Island get 2 feet of snow this morning. And it looks like they may rival their all-time heaviest snowfall with a blizzard of 78. They may get over 28 inches of snow from this storm.
Wow. So, I mean, this storm, is it technically a nor'easter here? Because I'm looking at some of the radar.
It is.
It certainly looks like it.
It is. It is the classic nor'easter. It's the central pressure has dropped 41 millibars in less than 24 hours. So when you hear meteorologists talk about a bomb cyclone, usually that's 24 millibars in 24 hours. So this has exceeded that. It's almost doubled it, and that's why we've had such ferocious winds. We've had reports of gusts of over 80 miles an hour now on Nantucket, and the fact that it's been snowing in parts of southeastern New England at 4 to 5 inches an hour. It's just, that's epic. I mean, normally you see those snowfall rates sometimes with very intense lake effect events, downwind in Buffalo and in Rochester, but to get it off the Atlantic, it's historic for eastern Long Island, South County, Rhode Island, and into southeastern Massachusetts. We knew that area was going to get the the maximum snowfall from this storm, but even looking at the data coming in, and I worked yesterday, it's just amazing to see that there are going to be some places in that belt that are probably going to get close to 30 inches of snow from this storm.
Right. And I guess what makes this storm different from the one that we saw in late January, was we didn't have the winds like we did last time. You have said to us in the past, Rob, that because it's been a very snowy winter, that kind of encourages more snow to come. I mean, is this kind of the cadence that we've set up through the rest of winter? Are we going to get snowfall into April?
Well, I don't know about into April. I can't see out that far, Scarlett, but I think March is going to be a problem for us. The last couple of Marches, we haven't had a whole lot of snow, but because we have the snow cover on the ground, it leads the cold air. The storm track sets up along the boundary. So with it being warmer to our west, the snow cover here, when part of these.
Yeah, we're starting to lose Rob there, but I think we get the point, which is, like, my theory has always been you flip the calendar to March 1 and you kind of feel, at least I feel, we're done. We got through the worst. And
That's
he's saying
because
maybe not.
You're using the recent history of the last 7 to 10
exactly.
years, right?
Recency bias. And actually, Rob's saying maybe not so much this year. All right, Rob Carolyn, Bloomberg meteorologist, joining us there, giving us the latest. Friday, we had the Supreme Court strike down some of President Trump's reciprocal tariffs. We've got some new ones. They're back. 15% coming back. Are these things going to be litigated? I have no idea. Holly Fromm, she's a Bloomberg Intelligence litigation analyst. Holly, thanks so much for left to be litigated, if any, because there's still lots and lots and lots of tariffs out there.
So what's left to be litigated probably is what happens with all the tariffs that have been collected. Like, do the importers have to go, who want refunds, have to go to the Court of International Trade to seek refunds? Do they have to file lawsuits, or can they just file some kind of application with the Customs Border Protection Agency? So that's a question that's still outstanding. It doesn't affect the tariffs that Trump imposed via Section 232, which were on things like aluminum, steel, and auto parts, and it doesn't affect 301 tariffs that were imposed in 2018.
Okay, so that's where it stands on the main tariffs. What about the de minimis exemption? Explain to us how that works and whether that's affected by the Supreme Court's ruling.
So the de minimis exemption is not necessarily affected. It's an exemption. It's not a tariff. So it's an exemption to a tariff. So we don't know if the ruling means that he cannot remove a tariff. He cannot remove an exemption to a tariff. So it's not necessarily the case so the Supreme Court didn't answer that question. In other words, that ruling doesn't answer the question. But I think there's a case that's playing out now at the International Trade Court. That ruling was that case was stayed pending appeal of the Supreme Court ruling. And so what I think happens is I think that the court will say that he probably can't remove that exemption via executive order. It probably has to be some kind of regulation, and it's not even clear that his trade secretary can promulgates. It's not even clear that he can remove it at all, because there's some question as to whether that exemption is mandatory based on the language of the statute.
If I want to get a refund to some tariffs that I've paid, how do I do that?
So normally what you do is what happens is the goods come in, you estimate what you think you owe. The Customs Border Protection Agency decides whether that's correct. That's called liquidation. If that amount is finalized and it liquidates, you have 180 days to protest what the Customs Agency says you owe. So that's normally how you get a refund. You file a protest. And they think that that might be the procedure used here, but nobody really knows because this has never happened before.
Well, if I'm Nike or something like that, I mean, do I say you owe me hundreds of millions of dollars or something like that? Is that how we think it's going to go? Or are companies actually going to go through the work of doing this?
Well, it probably depends on the amount that they think that they overpaid. And there are also, other issues that they may take into account. So, it's not clear whether all companies will seek refunds. There are probably some companies that say it's not worth it for them to try, so they're going to waive their right to do that. Some of them may be time barred from doing that by virtue of the deadlines to protest. So we don't expect the full amount that's been collected to be refunded.
Holly, what will you be watching for and listening for when the president speaks in his State of the Union tomorrow when it comes to tariffs? I mean, he's going to say a lot of things, and we know that a lot of what he says, he doesn't necessarily, it's more in the spirit of what he wants, but specifically when it comes to the legality of some of this stuff, what will you be listening for?
Well, we want to see what he, like what you said, we want to see what he says, because what he wants has to be justified by some kind of legal authority. And so we want to see, what he's aiming to do. And then we'll try to figure out how he's going to do that. And so there are various tariffing tools that he has, and he's already imposed tariffs via Section 122. But those are time limited for 150 days. So he'll probably use other authorities. And so that's something we're going to look at is, what is he trying to do? Can he use the other authorities to do that?
Holly, was there anything, or I guess what was most notable to you from the Supreme Court ruling on Friday?
I think that was what was really striking was that they said that this statute doesn't allow tariffs at all. So any tariff that is imposed via this statute are probably going to be struck. So tariffs on India and Brazil are going to be struck. And what they said was a tariff is a tax. And so only Congress has the power to tax. And if they are going to delegate that power, they have to be very, very clear when they do that. And, using this vague language in the statute, wasn't enough. And so that, I think that was very interesting. And the other thing to note is that, they did talk about other tariffing powers he has. So it may be the case that, and we think that those tariffing powers rest on, better legal footing. So the challenges will be harder to the new tariffs he imposes if he's going to use, well-settled authorities like Section 232 of the Trade Expansion Act or Section 301 of the Trade Act, both of which he's used before. So challenges will probably be harder.
All right, good stuff. Holly Fromm, thank you so much. Bloomberg Intelligence litigation analyst on how President Trump's 15% tariff will likely stick, but if it doesn't, he's going to have several options. Holly mentioned Section 232, there's Section 201, there's Section 301, there's Section 122, there's Section 338. All these things take time, so they can't be imposed instantly. They require an investigation. And in the case of Section 232, I believe, Section 122, there's like a time span, a time limit of only 15 months, which seems like a lot of work to get a temporary tariff.
Yeah, and I guess my question I ask a lot of folks, particularly on the political side, like Henrietta Trez, clearly this is polling, tariffs in general, is polling very poorly. Affordability, broadly defined, is polling as a very key issue. It's almost mind-boggling that the president continues to double down and triple down on this whole tariff issue, but it is certainly key to his trade policy, to parts of his economic policy.
His geopolitical policy?
Yep, I would just, if I were his advisor, I'd say, but it's coming at a big cost, Mr. President, in terms of, and we've got midterm elections coming up, and we've got some people that are nervous, but I'm sure those discussions are being had. But
well, he's a second-term president, so maybe it's their problem. It's someone else's problem, not his problem.
Exactly right. S&P down 84 points. The Dow off 800 points. That's 1.6%. Wow. NASDAQ off 315 points, 1.4%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker, the Bloomberg Newsroom. With this Bloomberg Business Flash, we are brought to you by Golden Crest Metals. Inflation, tariffs, and volatility of some investors turning to gold for stability. And to get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So 15% is the level that President Trump has vowed to impose using the alternative tools not subject to the high court ruling on Friday. So add it all up, it's a new level of uncertainty and confusion with the tariffs, and that's leading to declines right now in the major averages. The Dow down 743, that's down 1.5%. The S&P 500 74 points lower, down just over 1%. The Nasdaq 100 335 points lower. That is down 1.3%. So you also have DoorDash and American Express leading declines in software in payment stocks. Citrini Research published this article. It details pretty much a hypothetical scenario on the impact that AI could have on markets as well as the global economy. American Express, in fact, is the worst performing stock right now in the Dow Jones Industrial Average. It is down close to 8%. The Supreme Court, speaking of that, agreed to hear an appeal by ExxonMobil in an industry bid to stop dozens of lawsuits that blame oil companies for climate change. And then you have Blue Owl Capital. They permanently shut the gates on one of its funds, and this prevents investors at this point from withdrawing their cash. The move has triggered a broad decline in the stocks of money managers with exposure to private credit. Blue Owl, for instance, we get a ticker symbol OWL. Owl, right now, they're down just about 3%. They plunged about 60% in the past 13 months. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, streaming live on Bloomberg.com as well. I'm looking at the 10-year U.S. Treasury, 4.03%. I'm officially on a 3.99 watch, kids. So let's keep an eye on that. Well, you look at the Bloomberg U.S. Aggregate Index. I mean, it's up 1.2% this year to date. So the bond folks are doing just fine despite some of the uncertainties out there. RJ Gallo, Deputy CIO of Global Fixed Income at Federated Hermes, he joins us here. RJ, it looks like the bond market's, saying, yeah, I get there's some trade uncertainty out there, but we're doing okay out there. What do you see out there when you look across your fixed income perspective?
Well, first and foremost, it's nice to see when risk assets stumble, namely stocks, but, things like Bitcoin, that bonds, can be your friend. So the fact that we're incrementally up year to date, as you just mentioned, I think it's a sign that fixed income is performing the role in your portfolio that you would hope in a diversification sense. So that's a very important takeaway. I continue to believe that we have restored bonds to sufficiently high yields where they can behave in that manner, and it's great to see that is in fact happening year to date. As far as the trade uncertainty, I recall a number of months ago there was a lot of hand-wringing that if the Supreme Court kicked out the IEEPA tariffs and called them unconstitutional, as they now have done, that yields would rise pretty sharply. That really didn't happen. I mean, they edged up a little bit, curve steepened a little bit. It opens questions about refunds and blowing a bit of a fiscal hole in projected revenues for the Treasury. But President Trump came in right away with Plan B. But Plan B is not as flexible, carries a terminal period, 150 days, unless Congress actually acts to affirm the new tariffs. So there's a lot of questions now. So much for yields rising on the tariff uncertainty, because I think the uncertainty itself is also contributing to the risk asset stumbles. We think the economy's in pretty good shape. Thought yields would be heading higher to start the year. We've been caught a little off guard by this. Simply the fact that the economy's got a lot of tailwinds is not what the market's focused on. The market's focused on disruption from AI to existing business models, and now disruption to the tariff policy. And what will the new tariff policy really look like?
You say the economy is holding up pretty well, and that's borne out in the data as well. Fiscal policy we know is expansionary as well, so that's going to support GDP. Torsten Slok of Apollo says it's difficult to be bearish on the economic outlook here, and that he believes later this year the conversation in markets will change from talking about Fed cuts to talking about the Federal Reserve having to hike rates. Do you agree with that?
Well, the FOMC minutes suggested that a number of members of the committee feel that way, that there is at least some prospect that hikes could be warranted. A little surprising, I have to admit, given that, inflation is well off the boil, but it's still much higher, meaningfully higher than the Fed's 2% target. I imagine those FOMC members, and Torsten Slok is focusing on this as well, is to the degree that the Fed has completely embraced a 2% inflation target. The fact that we don't seem to be getting back down there, and it's not clear if we will anytime soon, makes it hard for the Fed to continue in an easing path, especially if the economy is holding up reasonably well. Unemployment most recently has ticked down. Job creation was a worry a number of months ago. It seems to be picking back up. So maybe that some on the FOMC want to have more of a symmetric view in terms of where's the next change in target rates. Right. I still think the market's not going to embrace that view just yet. I think Kevin Warsh coming in, he's apt to be dovish. That's partly why Trump picked him, although he's a complicated candidate for the Fed chair because he doesn't like the big balance sheet. I don't think we're going to see a hike anytime too soon. And I wouldn't be surprised if the talk about hiking that we saw in the minutes or that Torsten Slok mentioned eventually sort of fades away.
Red headline crossing the Bloomberg terminal. PayPal is said to attract takeover interest after stock slump. The stock trading is halted. The stock's up 3.5% today, but it is down about 43% over the trailing 12 months. So we'll keep an eye on that and have any further reporting there. We're joined by RJ Gallo, Deputy CIO, Global Fixed Income Group at Federated Hermes. RJ, talk to us about the municipal bond market. It seems like I'm hearing more and more about that over the last, 6 months or so, about as a good place to really see some relative value.
Well, the muni market staged a pretty solid second half last year. The market itself had been rocked really by a lot of the policy uncertainty that existed before we knew what the one big beautiful bill looked like. Ultimately, that didn't do anything negative to munis. It didn't somehow curtail the tax exemption on municipal bond interest, and that was a relief to the market, and it did set the stage for a nice recovery in the latter half of last year in terms of total return. In terms of relative value, short to intermediate munis have significantly outperformed. Investors are speaking with their wallets. So they're clearly putting money into the short and intermediate parts of the curve. Longer term munis, on the other hand, have lagged a little bit. All in all, the muni market looks a little bit rich these days in terms of its relative valuation in the short and intermediate space. Out longer, it looks like a bit of an opportunity. Getting people to extend duration is not an easy thing. Even when bond markets have gone through the pain of 2022 and restored value to yields, it can be hard to get investors out the curve. We still think the longer end of the curve of munis has some attraction, while the shorter intermediate part is looking a touch pricey in the here and now.
Yeah, I think people were burned and they're kind of gun shy at the moment. Thank you so much. RJ Gallo is, of course, Deputy CIO of Global Fixed Income Group at Federated Hermes. One of the big gainers in today's trade, or maybe big is an overstatement, but given that we're seeing sizable losses in the equity indexes, I'd say a 2.4% move higher is kind of big, right? Yep. Domino's Pizza, DPZ is the ticker, moving higher today. The company reported a bigger than expected rise in comparable sales. So let's bring in Michael Halen. He is our senior restaurant and food service analyst for Bloomberg Intelligence. And Michael, Domino's provides a lot of value to people. You see those ads for buy one, get one free. And they've added stuffed pizza crust to their repertoire. So people are getting value and they're getting something, I guess, in terms of food value as well. Talk to us about Domino's Pizza and the strategy here.
Yeah, so to your point, they are outperforming the market pretty handily today. It was a pretty solid report. Same-store sales topped expectations. They're doing it with a few different things. Yes, the food innovation, stuffed crust isn't groundbreaking, but it's something that their national competitors had already offered, right? And so they're trying to take a piece of that market here in the U.S. Value, to your point, right? They're number one pizza player here in the United States. They have more stores than anyone else, and they have that scale. So they are able to offer price points that their competitors really can't match and keep it profitable for the franchisees. You know, and then another big part of the strategy here has been the DoorDash and Uber Eats expansion, right? So they're still delivering the food themselves, but they're posting their food on the third-party aggregator sites, and that's been a big boost to their business as well.
What's the difference in economics, Mike, to using one of their own drivers versus a third party like a DoorDash?
Yeah, it's a big difference, Paul. It probably costs a big player like Domino's. It would probably, you know, for them to deliver it themselves, it probably costs them half of what it would cost. Maybe even less than half of what it would cost. So it makes a huge difference on the delivery economics. You know, so for the chains that already have a delivery network like Domino's, it's really a no-brainer.
One thing that Domino's did over the last quarter was make more money by selling more food to its stores, charging higher prices for ingredients, collecting more fees from the franchise operators for advertising and royalties. That's good for the bottom line, but does it sour relationships with franchise operators? I mean, how does Domino's manage that going forward?
Yeah, that's a good question, Scarlett. You know, franchisee relationships is crucial in this business because they're going to be the ones, you know, forking up the capital to build new stores, right? So you want to keep them happy with strong same-store sales. You know, 3% plus, almost 4% gain keeps them happy. You know, in terms of the supply chain, so you know, Domino's owns the supply chain. They want to make sure that their franchisees aren't skimping on quality, right? And so what they do to make this palatable for their franchisees is they actually split the revenues on a monthly basis via checks with their franchisees, right? And so, yes, prices are going up, expected to go up low single digits this year for commodities and in the supply chain, right? But they give back half of that. Half of their profit increase back to their franchisees in a sharing agreement.
All right, Mike, thanks so much for joining us. As always, our go-to voice on all things in the restaurant business. Mike Kalin covers the restaurants for Bloomberg Intelligence. I guess, you know, most of the world probably doesn't have what we consider to be great pizza like we have around here.
I was just thinking the same thing.
Philadelphia, and of course, New Haven, you know, the Northeast generally defined. So Domino's is a totally viable option. It was when I was in school in Virginia. School in North Carolina.
It's real pizza for much of the nation. It's just not real pizza for those of us in certain parts of the Northeast.
Easy. I've been down this road.
Okay.
Very controversial.
All right.
What about famous arrays, original?
Yeah, exactly.
There's so many of those. I don't think any of them
But I'll
are
tell you what we're
original.
not seeing today is those delivery dudes in New York City on their bikes flying all around the city.
Yeah,
they're
a little
they are
constrained at the
snowed in
moment.
at the moment. So, but I'm sure they'll be out there tomorrow. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Hey, I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, fresh confusion over the tariffs, and that's pretty much in the driver's seat for the major averages today. You have the S&P 500, 67 points lower, down 1%. The Dow is down 1.4%. This is a decline of 700 points. The NASDAQ 100, 307 points lower. That is down 1.25%. Torsten Slok at Apollo Management says, with the Trump administration promising new tariffs, investors, once again at this point, lack certainty. PayPal Holdings attracting takeover interest from potential buyers after a stock slide wiped out almost half of its value. And right now, PayPal on this news, those shares up 7.2%. And then you have the shares of some of the major airlines. Let's do Delta. Those are down close to 4%. They're taking a hit on all the flight cancellations and delays because of the storm that's descended on the East Coast. They say Scarlett's flight should be fine tomorrow. No, not really. Mavis
But we're
Tire.
crossing our fingers.
And yep.
What airline?
Eva Air, International.
Oh, okay. All right. Mavis Tire said to be looking to become a public company. Sources tell us the auto repair giant that counts Midas, I didn't know that, among its brands. They've
I didn't know that either.
Picked the banks already that was going to work on the initial public offering, again, for Mavis. Mavis traces its roots back to 1949. No comment from Mavis.
I like the free, filling up your tire with air service they provide.
Well, that was always free.
Yeah, now
only
you
in
can't
recent
get
years
it.
you got to.
So I bought an air
pay
pump.
for air.
I know, it's a scam.
Pay for air? I don't think so. The FT reports officials working with Donald Trump's Board of Peace are exploring setting up a stable coin type of cryptocurrency for Gaza. Once again, major averages, they are lower. S&P 500, 66 points lower. Let me give some love to bonds, treasuries. 2-year down 3 basis points, 344. The 10-year down 5 basis points, 4.03%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Back to trek into the blizzard.
I'm all fired up for this Mavis Tire IPO. It's a non-IPO. I mean, talk about this, a basic business. I think I can understand it.
Yeah, and I would argue that with cars so expensive now, people more and more are trying to repair
12 years, 13 years is the average age of a car.
They're
It's
doing
crazy.
what they can to preserve their existing vehicles.
Yep. All right, good stuff there. We've got geopolitics. It just gets pushed back because we're dealing with tariffs and other news items. But boy, we have to pay attention to what's going on over in the Middle East with the U.S. building up its forces there as it thinks about how to deal with Iran. Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace, can help us refocus here. Aaron, what's your sense of the U.S. policy here? What do you think the U.S. policy is here, and how far do you think the president wants to go to pursue that policy?
No good options, guys. Number one, when it comes to Iran, I think the president is in a box. I think he's deployed the largest buildup in missile and naval assets since the Iraq War. Rhetorically, he's way out there, encouraging the demonstrators. And right now, I think he's looking for some de-escalation at the negotiating table, but he's not going to find it. So that leaves the very real possibility within the next 10 days of a massive U.S. military strike. And here, I think it becomes very complicated. It's a war, frankly, in search of a strategy. One day he's talking about limited strikes to encourage the Iranians to come back to the table and cut a deal. On the other hand, he's talking about massive strikes, different regime in coming months. So again, I think it's going to be extremely difficult. Weaken the regime, to be sure. Overturn it, not so much.
So I like what you said. It's a war in search of a strategy. Is this a war in search of a rationale? What's the explanation the president can offer to the public that makes sense, especially after he had promised an America First approach to foreign policy?
mean, look, I've made my views on this clear. Having worked for Democrats and Republicans, Jimmy Carter to Bush 43, when we deploy this kind of military assets, we need to ask ourselves some questions. Not just can we do it, but should we do it? What are the costs? What are the potential gains and what are the risks? And again, I voted for Republicans and Democrats and worked for them. I've seen no rationale. Yes, this is a repressive, evil regime. It's indiscriminately killed its citizens in increasingly large numbers in early January. It has the potential of acquiring a nuclear weapon, but not anytime soon. And it's a threat to American interests and the interests of our allies. But the question, to borrow a phrase from Oliver Wendell Holmes, when he was Supreme Court Justice, on a domestic issue, what's the clear and present danger now? Great movie, by the way. What's the clear and present danger now that would warrant the possibility of a massive strike with the potential of creating a regional war? So, I'm at a loss, actually, and I'm at a loss to explain the objective successfully.
Are you surprised, Aaron, that given the potential risk here, given the buildup, that we haven't seen any type of roadblocks put in the president's way, whether it be congressional or just others, in terms of maybe trying to step back a little bit?
In public opinion, whipsawed by so many issues, is unwilling and frankly unable to be a constraining force. You hear Democrats in Congress talk about war powers. They don't have the votes. The president still owns the Republican Party, other than a few MAGA outliers who I think rightly question the impact and logic of a massive series of strikes. There are no constraints. This is the largest aggrandizement of presidential power we've seen in the Republic's history. And you know as well as I, Supreme Court goes in and out of session, Congress goes in and out of session. The presidency is the Energizer Bunny of the American political system. It's 24/7. And on foreign policy, the Constitution defaults to presidential discretion, power, and leadership. The biggest constraint, and he said this himself, is my own mind, the morality of my actions. And on this one, I think he's stuck. I think he does not want to end up like Barack Obama and the famous red line of 2012, when Obama basically said if Assad uses chemicals on civilians, that would be a red line. Well, the red line turned pink. I think it's 70-30 here in favor of some kind of military action, because I don't think this Thursday you're going to get much from the Iranians at the table.
All right, Aaron David Miller, thank you so much. Sobering commentary from Aaron David Miller, who knows a thing or two about geopolitics, given that he has served both Republican and Democratic presidents in the past. Senior fellow at Carnegie Endowment for International Peace. And of course, he was referring to these talks that will resume Thursday in Geneva between the U.S. and Iran as they look for some kind of diplomatic solution. But as these military forces amass in the region, it feels like.
Yeah, and I think what's one of the sobering things that Aaron mentioned was in referring to President Trump, he's on the cusp of a major war in search of a strategy. And that's probably how I kind of view it. I'm just unsure as to what our strategy is there. Is it just to get a nuclear agreement, which would be a thing in and of itself, no question, or is it something more? Is it regime change, which is a whole nother story, which suggests a whole nother level of commitment? I don't know, and I don't think most Americans do know.
We'll see if he actually says anything about it in the State of the Union on Tuesday evening. This is something a lot of people are wondering about for sure. This is Bloomberg Intelligence on Bloomberg Radio in New York. Keep it here.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. We're streaming live on Bloomberg.com/video. And that's where you'll find all the live video coming out of the Bloomberg complex, as well as all the curated video as well. Apparel retailers, they win some tariff relief on the Supreme Court ruling. So how about that? So maybe some of these apparel retailers will get a little bit of a break here, as they've been bearing some of the brunt of the tariffs here. Mary Ross Gilbert joins us, senior equity analyst. She covers the retail space for Bloomberg Intelligence. She's out there in LA where it is not snowing, I can tell you that. Mary, thanks so much for joining us here. Supreme Court ruling striking down some of those reciprocal tariffs. What's it mean for the retailers that you cover?
Yes, so Paul, what this means is that we're going to get some relief. We're not getting complete relief from tariffs. So when you think about it, just before Trump, over the weekend, on Saturday, first on Friday, he said he was going to exercise his ability to enforce Section 122 of the 1974 Tariff Code, and you can go up to about 15%. So on Friday, he announced 10% immediately, or actually it was in 3 days, and then Saturday said immediately 15%. So really what that means is you're going to get about a 25% savings from the tariff rates that these apparel retailers were paying just prior to this news that came out on Saturday. And so we estimate that the savings could be anywhere from 20 to 50 basis points, maybe a little more than that. And many of these apparel companies have been putting in mitigation measures, and of course the number one being, well, first of all, diversifying away from China, so they have a lot less exposure there. And then also their suppliers absorbing, let's say, about half of the tariff impact. And then, of course, price increases, and that's being passed on to the consumer, and it's done very selectively. And so that's why the savings, the net savings, is going to be somewhere around 20 to 50 basis points. And just to give you an example, what companies have disclosed is on an annual basis, they were looking for a net tariff impact, again, net of these mitigation measures, to be somewhere in that sort of 100 to 200 basis points, in that range.
So I guess it's interesting here because some of these retailers have in fact been right kind of in the crosshairs of the tariff debate. Have any of the companies that you cover, they talked about whether they would even think about getting tariff rebates, if that's a possibility?
Paul, that's a really good question. I can't imagine that a rebate process could actually go into effect. It would be a nightmare to try to go back and recover these funds. It just seems, I don't know. I think it's too complex. I think we just have to let whatever tariffs were already enforced and the funds received. I certainly hope that doesn't happen, because that could turn out to be a very expensive nightmare trying to recover those funds. And then the idea would be, well, should it go back to the consumer once, if companies were to recover it? So
yeah, it's very complex. So given that, we've had, roughly a year of these tariffs. Is there kind of a ballpark that you've arrived at, or the companies have disclosed about how much they took into their margin versus maybe how much the importer took into its margin, the consumer took into its margin there?
Yeah, it's complex to say specifically, but I think what we were trying to allude to earlier, that 100 to 200 basis points, is what these companies are effectively taking in on an annual basis based on commentary from the third quarter earnings call. So they might have gotten hit more or less depending on the retailer that we're talking about and goods that were sourced during various times, right? Because if you had some retailers that sourced fall and winter during that time when China had a tariff that was well over 100%, then that merchandise and their margin was affected very much so, because they had already taken delivery of that product. So it depends on the retailer. And then you have a couple of retailers, for example, Aritzia and Ralph Lauren. Both of those companies have been posting margin increases all year.
And so they've been able to benefit from strong sales. What that means is that they're able to leverage fixed costs and get incremental benefits there, and also pass on price increases. And so even though they've been negatively impacted by tariffs, you're not seeing that net effect. Whereas most of the other retailers, you have seen margins dented, and they've disclosed every quarter what the tariff impact has been, net of mitigation measures, and also they'll provide sort of the gross impact. So like I said, I would say the net 100 to 200 basis points. Think about Gap, Abercrombie. Gap's at the lower level. They said annual impact about 100 to 110 basis points. Abercrombie and Fitch about 170. And American Eagle, they were sort of harder, 200 to 225 basis points.
All right, very good. Mary Ross Gilbert, thank you so much for joining us. Mary Ross Gilbert, she's a senior equity analyst. She covers the retail space for Bloomberg Intelligence, and she's located out there in our LA, California office. Markets selling off here. The Dow off 740 points, 1.5%. S&P off 74 points, that's 1%. And the NASDAQ off 280 points, that's 1.25%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network. Coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Again, equities are selling off. The bond market yields coming in noticeably here. At the 10-year yield at 5.5 basis points. We're sitting at 4.02%. WTI crude oil steady, just around $66 a barrel. Gold higher by 2%, $5,200. More Bloomberg Radio coming up right now.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Flight cancellations, travel bans. It's tough to get around in much of the Northeast because of a fierce winter storm. CBS News meteorologist Zoe Mintz.
This is a wide-ranging storm, and Philadelphia has already seen upwards of a foot. New York City, more than a foot to a foot and a half, and that will continue through Hartford, Connecticut, and Boston. That's where the heaviest snow is continuing to make its way over the next several hours.
CBS's Chris Van Cleve has a look at the airports.
Airlines started canceling flights on Saturday to get ahead of this storm, and now essentially they're going to be waiting out the weather, particularly in areas from, say, Philadelphia north to Boston. You are not going to be able to fly in and out of those areas today. Flights essentially suspended.
A federal judge has permanently blocked release of a report by special counsel Jack Smith on his investigation into President Trump's handling of classified documents. California Governor Gavin Newsom facing criticism, accused of making a racist remark during an Atlanta stop on his book tour, speaking to Atlanta's Mayor Andre Dickens.
I'm not trying to impress you. I'm just trying to impress upon you. I'm like you. I'm no better than you. You know, I'm a 960 SAT guy.
CBS's Scott McFarlane has more on the fallout from FBI Director Kash Patel's overseas trip to celebrate with the U.S. gold medal winning hockey team.
The FBI director's taken some criticism for this, for being seen partying while there were huge issues back home. Yes, it was a taxpayer-funded flight on a government jet to get to Italy. When it was first reported, including by CBS News, there was pushback from Kash Patel's spokesman saying that those were erroneous reports.
President Trump again defended his tariffs on social media. Over the weekend, he levied a 15% duty on all nations.
I'm Vicky Barker in London. A spokesman for Britain's prime minister says no reciprocal action is off the table if the U.S. doesn't honor its previous tariff deal, which was more favorable to the U.K., adding, quote, no one wants a trade war. And the EU has put its U.S. tariff deal on hold in response to Trump's new declaration of 15% tariffs.
CBS's Stacey Lynn on a morning event today at the White House.
President Trump hosted families of victims killed by undocumented immigrants, including Georgia nursing student Laken Riley, whose death helped spur immigration legislation. Her mother, Allison Phillips.
She just wanted to go for a run that morning.
The president signed the proclamation.
I'm going to sign this, okay?
Okay. A candle was lit in honor of the victims.
Jesse Bird,
whose names were read out loud.
And checking Wall Street, the Dow is down 731 points. The S&P is down 71. This is CBS News. A popular Latina musician scrapped a performance in Mexico last night. No word on whether American stars will follow over fears about violence.
Colombia's Kali Uchis canceled her show in Jalisco after the country's most wanted drug lord, El Mencho, was taken out by Mexican military forces. Uchis was set to sing at the Telmex Auditorium in Zapopan. She hasn't commented. So far, Wednesday night's show in Mexico City has not been canceled. Air Supply is scheduled to perform in Zapopan next Saturday. Bryan Adams has a concert date in Guadalajara Friday. Deborah Rodriguez, CBS News.
The film Goat led a quiet weekend at the box office, beating Wuthering Heights. Goat earned more than $17 million. Wuthering Heights just over $14 million. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
New week, new levels of uncertainty. Welcome to the Monday edition of Balance of Power. As President Trump hikes tariffs in the wake of last week's Supreme Court ruling, with a partial government shutdown now reaching day 10 and a massive American military buildup in the Middle East for possible strikes against Iran. This is going to be quite a week with the State of the Union tomorrow night. We're going to spend time this hour with Nathan Dean at Bloomberg Intelligence, with Cliff Young, who's got fresh numbers from Ipsos, and with our political panel, Rick Davis and Jeannie Shanzano, back together again today, and they're with us for the hour. It's all after a look at Wall Street. We start, as always, with Charlie Pellet, fresh off his tour of Alaska and the Arctic Circle. Charlie, the voice of Wall Street, what do you have?
Right now, we are looking at a market that is lower across the board. Do want to begin with an important storm development. Just getting a post on X from New York City's Mayor Mamdani. He says the New York City travel ban is lifted. He is continuing to advise New Yorkers to stay indoors. But in the meantime, we've got stocks dropping like the snow. The Dow, the S&P, NASDAQ, all trading lower. In fact, very close to session lows. 72-point decline on the S&P. Lots of concerns, down 1%. But right now, the S&P at 68.38. We have got the Dow down 735, a drop there of 1.5%. NASDAQ down 262, a drop there of 1.1%. Lots of concerns, as I mentioned. Iran, tariffs, renewed issues involving AI hitting financial and software companies. Bottom line, stocks are selling off. The 10-year, 4.02%, with the 2-year, 3.44%. Gold is surging 2%, 52.12 the ounce. Silver up 2.4%, 86.64. West Texas Intermediate crude now lower by 0.3%, 66.31 a barrel. And Bitcoin with a $65,000 handle, lower today by 3.2%. So Wall Street is grappling with the tariff fallout from Friday and geopolitical concerns amid expectations that President Trump may soon order large-scale airstrikes on Iran. Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank.
You know, I don't know how this is going to play out. It doesn't feel like there's a bluff here. It feels like this is real. But I don't think the market has really sussed out yet what the path forward and the implications are. To the extent that energy policy is in the crosshairs on this, I do think that the market will see a pretty big reset. And we've seen global energy prices start to, incorporate a risk premium around it. But we're just going to have to see how this plays out.
PNC's Amanda Agati. Indeed, oil stocks higher. Case in point, ExxonMobil up now by 2.1%. We've got Chevron up 0.4%. ConocoPhillips down 0.4%. A headline right off the Bloomberg Professional Service: Citibank nearing a Banamex stake sales to both Blackstone and Televisa co-CEOs. Recapping, S&P down 1%. Lots going on, Joe Matthew. That is a Bloomberg Business Flash.
It's like he didn't miss a minute. Charlie Pellet, by the way, laughs at the weather in New York right now. He just got back, and I've been following him on social media because I'm a fan. Just got back from Alaska. He's up there looking at the northern lights. Charlie, I saw you next to that pipeline.
Exactly, because
you're an American explorer.
I went up on Valentine's Day because nothing says Valentine's Day and romance like taking your wife to an oil pipeline. I tried to get to an aircraft boneyard, but the weather was just too bad up there. And Also, too, we just wanted to spend a lot of time out in the woods enjoying Alaska. So, and I froze.
Well,
yeah,
you
it was
sure
cold.
did.
Yep,
My
it was
God.
beautiful.
So, yeah, right. Central Park is nothing for you after that.
Well, a lot more snow. Got 15 inches today. I'm curious, Joe Matthew.
Sure did.
How are you doing down in Washington, D.C.? How are things holding up?
Oh, it's nothing. We got like an inch and a half, so the whole city shut down. That's how we do it here. I did have to pull out the scraper. It wasn't just a shovel or a broom. We actually had to. It was a little crispy down here. But we're talking about. CNN calls it the beastly bomb cyclone. Are people getting around? Because I heard, and this is an important update, as you just mentioned, the snow emergency. The travel ban, I should say, is lifted. They did a pretty good job overnight, is what I'm hearing.
Indeed. Roads are, though, still absolutely empty here in New York. I look out the windows of our headquarters. I see nothing on local and on main streets around here. But I got to tell you, by the time this is all said and done, Joe Matthew, this is likely going to be one of the top 10 worst snowstorms to ever hit New York City.
Wow.
Thousands of flights canceled. It is a mess.
Yeah, I saw like 10,000 flights in. So you're probably lucky you got back in. Thank God you're here. I wasn't sure if I was going to see you. Charlie Pellet, great to have you back. We missed you.
My pleasure.
He's still got the northern lights dancing in his head, and he'll have more on Wall Street in just about, 10 minutes time if I keep talking. Always helping us connect the dots between Washington and Wall Street. So welcome. Hope you got through the storm wherever you are in the country here. Maybe a big one if you're in the Northeast. If you're listening to us right now, they're just shoveling a path right now for Mr. Eruzione to get home to Winthrop. If you're with us on 92.9, we see you. I know there's a lot up there. I was getting pictures from my folks, and there's a big old storm in Massachusetts. There'll be more coming, by the way, and we're going to be talking, I'm sure, at some point about the economic impact of these storms as we consider the impact of uncertainty today. That is the word of the moment, whether you're talking about economic policy, and by that I mean tariffs coming out of the White House, whether you're talking about potential strikes against Iran. We are still in a we don't know what's about to happen mode, just like we ended last week on Friday, although the president filled in some blanks when it comes to, of course, the matter of tariffs, replacing the IEEPA tariffs that the court struck down with now 15% tariffs. This went up on Saturday under Section 122 of the Trade Act of 1974. Everybody's a big expert on 122. We keep hearing about this for the coming days as they investigate whatever the next justification is going to be. We're going to get to the Iran stuff a little bit later. Let's stick with this from right now, because the president's back on Truth Social this morning with just thumbing his nose at Congress, which is supposed to, of course, handle things like tariffs and taxes. As president, I do not have to go back to Congress, he writes, to get approval of tariffs. It's already been gotten in many forms a long time ago, exclamation point. They were also just reaffirmed, he says, by the ridiculous and poorly crafted Supreme Court decision. President DJT suggesting he wrote it himself. We heard earlier today on the refunds, or lack thereof, from Jason Smith. The House Ways and Means chair is wondering what the heck's going to happen next, too, because, well, I don't know. I guess maybe not, because Congress doesn't play any role in this. Refunds might be another matter, whether there's a law or we spend the next several years of our lives in court with Costco. Here's what the chairman said.
In regards to the tariffs, I think it's very certain there's probably not going to be any refunds. I don't see a pathway in Congress that there's going to be refunds. And so you're going to look at over the course of President Trump's administration, he's going to continue to use those tariff revenues to bring down the deficit.
Uncertainty remains. That's why Nathan Dean's phone keeps ringing. It's like Groundhog Day around here. Bloomberg Intelligence senior U.S. policy analyst with us in Washington. Number one, he's got the quarter zip. You look good. You got out of the house because half this, well, I won't say bureau, half the cities work from home today, huh? Just get in through an inch and a half.
I just got a text that there's a 4-foot snowman right where I parked my car. So I'm going to go home and have some discussions with my kids.
Good job. Is that how they save the spaces in your neighborhood? That's pretty good.
I'm not exactly sure, but I need to figure out how to get the car back. So we'll see.
Right. I want pictures. I bet it's a nice one, too. Nathan, this is interesting because people said, finally we'll get some definitive word on tariffs when the Supreme Court rules, even though we knew that the administration would come back around with a different justification. But we thought it would take time as well, at least the analysis that I heard, that to be a lengthy investigation. Maybe they get them even through the midterms before there's more. Not so. Not only is the president saying that we're going to make up the difference with these new tariffs, but Congress has no role in this anyway. What's the market think?
So he's right when Congress has no role, when he's looking at 301. Now, look, a lot of people are focused on
301.
Yeah, a lot of people are focused on 122,
Yes.
which is the 15% tariff up to 150 days. I don't think we ever get to a congressional vote on 122. I think because there have already been 301 investigations announced, that they're going to try and fast track these investigations as quick as they can, and they'll transfer these tariffs from the 15% 150 or 122 tariff to something that's much higher, because under 301 you can go much higher as long as there's an investigation. The one thing to note is that under 122, President Trump can just say across the entire globe 15%. 301 has to be specifically targeted towards an investigation and towards a country. So I don't think the White House is going to be able to say, look, here's what the 301 tariff is for everybody across the globe. I think there's going to be specific, targeted tariffs towards countries. But at the end of the day, I don't think Congress has much of a role here to play, because 301, according to our analysis, is pretty firm.
Really interesting. How long would an investigation take? And but when we talk about an investigation, what are we talking about? What results would be brought?
I think on average you're looking around 9 months. I mean, look,
9 months.
It could take years, but I also
to say
think
we found examples of abuse that we can prove in court. That's essentially what we're talking about here, right?
Exactly. I mean, I think this investigation, but look, I mean, normally investigations aren't challenged all to the point like they potentially would be here. And so I think, because some of these investigations have already been announced in the past, and look, there's a notice and comment period. You can go to the website and it will tell you which countries have already been, investigations have started on. I think the administration will try and fast track it. I think they can get it out because, look, 150 days, 5 months. I think you can get some of these investigations done before then. And in the interim, you continue this pressure of trade deals where, like President Trump says on Truth Social, anybody who tries to, quote unquote, play games, is going to be in trouble. So, I think from the administration's perspective, there is a pathway here. From the market perspective, there's still uncertainty, but at least the uncertainty and specifically what areas they're looking at. So it's a little bit of clarity, but not to the point where the markets are going to be.
This is helpful, though, because 122, this is what we have in place now at the 15%, that would require congressional approval beyond 6 months, right? So your point is 301 gives the president more leeway, but must be targeted. So they're going to have their work for them, or cut out for them in this investigation.
Yeah, and if you ever hear the news folks say 232, what they're thinking is specifically targeted towards sectors, or think semiconductors. 301, think China. So, it's just a little bit more, but both of them require investigations. Both of them require a notice and comment period, so we know the investigation is beginning. And look, the White House does have a lot of authority to go here. But the one thing I would throw out, though, is that if these investigations continue, let's just say 5 months from now, 5 months from now is just a few months before the midterms. So does President Trump want to double down or triple down on these tariffs months before the midterms, when they are extremely unpopular with the American populace? It's easy
the timing is brutal.
It's easy to launch an investigation. It's a little bit more difficult to say we're going to rubber stamp it and say go forward.
I understand. The uncertainty is amplified by the European Union here. In our remaining moment, EU poised to freeze the ratification process of its trade deal with the U.S. And we've got a market, Nathan, that is sharply lower. S&P 500 down 1%, the Dow's down 1.5%, the VIX back above 21. Is this why?
I think so. I mean, I think it's also just a lot of uncertainty. And, in advance of tomorrow night at the State of the Union, we're telling our clients, no matter what words comes out of President Trump's mouth, look at your bracelet that says, is this legislation, regulation, executive action, or bully pulpit? That'll tell you the pathway to implementation.
Wow. So we need a decoder ring for the speech tomorrow night?
Always.
This is fantastic. Can we get Nathan back like the day after to distill what he said? We're going to be up there, by the way, special coverage. Tomorrow night, I'll be in Stat Hall. Kaylee will be here on the Bureau, and we're going to have live coverage of the State of the Union like you have never seen it before. That's the way they talk now in Washington, right? This is Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that UK police have arrested Labour Party official Peter Mandelson on suspicion of misconduct in public office. The arrest comes after emails released in late January by the Department of Justice allegedly showed Mandelson disclosed market-sensitive information to the late Jeffrey Epstein while serving as a UK government minister. Stocks lower across the board, very close to session lows right now. Slight bounce off the bottom on the S&P, down 73, 68.36, drop there of just about 1%. Concerns about AI hitting financial and software companies. Also, President Trump's move to impose a new levy on U.S. imports, sowing confusion around global trade. The Dow is down 770, a decline of 1.5%. Nasdaq down 1.2%. Again, the S&P lower by 1.1%. The 10-year 4.02%. Spot gold at 52.06 the ounce, up almost 2% now. Bitcoin is down 4.1% below 65,000, now dipping to 64,800 on Bitcoin. Domino's delivered in the latest quarter. Domino's Pizza shares are higher after the company reported a larger than expected rise in comparable sales. Domino's shares right now, they are gaining by 2%. Rival Papa John's Pizza up now by 4.6%. Again, recapping here, stocks selling off, S&P down by 1.1%. Back we go to Washington. Balance of Power continues now. And once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, sir. We've put the band back together. Charlie's back from the great unknown. He was up in Alaska. We thought we'd lost him. We've got the panel back. Rick Davis is with us this week. They'll be coming up a little bit later. And Cliff Young's going to be with us in a moment, too. Kaylee's here. Everything's going to be fine. The news might not be fine, but we are going to be fine as we talk about the news. And there's a lot of it. Ahead of the State of the Union address tomorrow night, remembering the president's attempts to address the issue of affordability in a series of speeches, right? He went through Pennsylvania, went to Detroit, he went to North Carolina, of course, even last week, went to Georgia to seize on the issue that not only brought him here to the dance, but threatens the Republican majority on Capitol Hill. Listen.
We inherited a mess with high prices and high inflation, and we've turned it around and we've made it great. They caused the affordability problem, and we've solved it. What word have you not heard over the last 2 weeks? Affordability. Because I've won. I've won affordability.
I've won affordability. So as we fast forward to tomorrow night, what will he say if he seizes on the classic line? You know he's going to talk for 45 minutes, an hour, maybe it's longer than that. We'll be up there flipping through the page. I think he's halfway through. We'll see how much time he even spends on the script. Maybe he wants to riff tomorrow night. We do the weave. But at some point, with this being an actual State of the Union as opposed to the joint session we saw last year, the state of our union is affordable? Cliff Young has been investigating this whole idea in his research at Ipsos, and he is with us now in Washington, D.C. U.S. Public Affairs Chair at Ipsos, Professor, Texas A&M University's Bush School of Government and Public Service. It's always great to see you.
Great to be here.
60% do not approve of the job he's doing as he gears up for the speech. Does he need to speak to them tomorrow night?
Well, he's on shaky ground, right? If you flip that and you look at approval ratings, we have him at 39%. The overall market's about 41%. Overall, it's come down about 3 or 4 points in the last few months. There's a lot of stuff going on. There's lots of friction in the system, immigration enforcement, but affordability as well. But I think he has a tricky task in this State of the Union. The most important issue, affordability, is his weakest point. He polls in the range of about 30% when it comes to affordability and cost of living. So it is a challenge for him going into it.
Does it make it worse when he says that he solved it, that he won?
Yeah, I think he's talking to his base, perhaps. That's the big question. Will he talk to his base exclusively? Sure. Will he talk to the population in general?
Didn't Joe Biden teach us that you can't tell people how they feel very successfully.
Yeah, he's committing the same sort of problems of the last administration. Remember Bidenomics, things are going well. When we would do focus groups and people would start screaming at the TV screen when they would hear that.
Wow.
It's the same sort of thing. You've got to be very careful not to create dissonance. That creates dissonance when you talk to the average American today. They are having problems still making ends meet. It's about cost levels. It's not about inflation. It takes inflation, and inflationary effect is gnarly, and it takes a lot of time to work itself out. And to date, that has not been the case in the United States.
Really interesting. Now, you talk about the base, and you've used that word a couple of times. You're one of the few researchers here who is actually polling non-MAGA. When we talk about the base, we mean MAGA, right? So if you broaden this to Republicans that include non-MAGA voters, how different are the numbers?
Yeah, a few months ago, we started dividing that out, separating it out. When you look just at Republicans, it looks like a monolith, usually a supermajority in favor of whatever issue you're talking about. But when you peel away that onion a bit and you separate MAGA from non-MAGA, you're finding fairly large differences. The MAGA base is still there. They still support Trump on many issues, including tariffs, for instance, which we just polled on, in the 70 to 80 plus range. But when you look at non-MAGA Republicans, those Republicans that are really important on Election Day, going to be really important for the midterms, they're below 50% on most of the signature issues at hand with the Trump administration.
Really interesting, and it makes you wonder then what kind of a jailbreak we could see by more traditional non-MAGA Republicans in Congress. I know this may be a dwindling number of members, but there was a thought on Friday that the Supreme Court may have saved Republicans from losing the midterms and the president simply bearing back down. Could he find the line here based on those numbers with non-MAGA members of Congress?
Yeah, I think he would have to seriously change course, right? I think a lot of the MAGA members tend to be moderate, tend to believe in kind of consensus-based solutions, are not in favor of the tariffs. Only about 45% or so of non-MAGA Republicans are in favor of the job that Trump is doing on tariffs. They're more traditional Republicans ultimately. But you're very right, and I often emphasize those points. Indeed, it looks like it will be a blue year when it comes to the House, maybe the Senate, but especially the House this year. But more importantly, I believe, is the profile of Republicans. I think we could see a more moderate class coming in, not just at the national level, the federal level, but at the state levels as well.
Interesting. You talk about who is best equipped to handle major issues. Trump, Democrats, neither. It's like the same number on all three. This is the ultimate division here, isn't it?
Yeah, we live in a divided country today, 50-50. I guess one-third, one-third, one-third. It suggests the importance of the independent as a swing voter. Now, they don't vote in the same numbers during the midterms, but they are also important indeed. They really explain Trump's decline in his numbers over the last year. He's really lost the support of those independent-minded libertarians and sort of moderate conservatives.
So that neither number you're looking at is an independent voter bloc.
Yeah, there's somewhere they haven't sort of put their hat in one ring or the other. They're probably, from a political perspective, they're somewhere in the middle.
Well, it's interesting. It's not Republican Democrats in neither. It's Trump Democrats in neither, which is how you smoke them out here, right?
Exactly, because that MAGA base will be with Trump until the end. They are there no matter what. It's really not just about the independents, but it's about those moderate Republicans and who they vote for, or more importantly, whether they vote on Election Day.
Does the State of the Union matter for people outside of the Beltway when it comes to deciding what issue or what politician or what policy they like?
No, it's noise and it's very far away.
Okay.
No, however, the State of the Union is very important. Because we're going to be able to go into the mind, get into the mind a bit.
It's important to us, though, is what you're saying.
To understand Trump and the administration, where they are, how they see things, whether they're aligned or not with what people think. So I do think it's an important benchmark, but only for us and not the population in general.
Paul Sweeney said earlier he's not even watching this thing tomorrow. I don't know if he's watching The Sopranos or we're going to have it here on Bloomberg, you know. I'll be very curious to see what kind of guests we're going to see. Once we get through the U.S. men's hockey, they got to be in the gallery, right? Are we going to see victims of illegal aliens, a sort of bleak view of the country tomorrow night? Is this going to be a more hopeful view? We're going to pack the stands with astronauts and hockey players. How dark or light might this be?
Well, historically speaking, presidents have tried to gain consensus through bringing in sort of individuals that represents consensus in one way or the other. Trump has never done that. Trump tends to be more divisive in the way he approaches his rhetoric and approaches his politics. I expect to have these credibility building individuals there. I think they will tend on the side of MAGA and being a little bit more divisive than not, but we will see.
President Trump's producer, James, just dug this out. His speech last year, that was March 4, by the way, the joint session of Congress, 36.6 million viewers. With the madness that we've seen worldwide since then, that number is only going higher, right? It might not be.
I think we'll beat it.
I think we're going to beat that for sure.
Yeah, so people are paying attention.
Then the question becomes, what's the tenor and tone in the room? Will there be decorum? Will there be holding signs yelling at the president?
Yeah, I think there's a greater likelihood than in past years for this to be a non-traditional State of the Union address.
We've already got, there are other competing states of the union. Democrats are going
yeah, but let's just take this one for the sake of argument. Trump, there's a likelihood that Trump will not go consensus. He will go really partisan and base. He needs to energize that base. It's a problem. He's looking towards a midterm. And I see the Democrats as being non-cooperative potentially. We live in this partisan time. I think they're energized. We'll see, obviously. But I think there's a likelihood of having a much higher likelihood of having a non-traditional State of the Union.
Why would anyone do the official response if there's such a curse? If the speech doesn't help Trump, the response isn't going to help anyone else, is it? If you're Abigail Spanberg, you just won. Can you get any better than this?
Yeah, maybe you just want name recognition. You want to be known by a broader audience. It's a difficult sort of follow-up, right, ultimately. But I do think that Democrats feel emboldened. They've won some off-cycle elections, even at the state level, that are suggestive of what will happen later this year. I think they want to get their message out. They want to be seen as the affordability party, contrary to the Republicans and Trump. They have won the last few elections on that message. That's a good message for them. I think they'll want to hammer that home.
I haven't mentioned the Epstein files since we started talking, and you did run numbers on this. The headline, Epstein files undermine credibility of the political class. That cuts both ways.
Yeah, it's a pox on all your houses. Yeah. It's not good for the political class in general. Both Americans on the right and the left want to burn it all down. Now, so it really doesn't hurt anyone specifically, directly. That said, I do think it takes away takes away oxygen from Trump on the narratives he wants to push forward. It diverts attention away from those issues that are important to him. So it's probably a net negative for Trump because of that. But from a public opinion standpoint, they blame everyone.
State of our union is affordable? What else could he say?
Yeah,
he's going to do strong because we're safer, or something like that.
Yeah, I also think he might sort of double down on the fact that the system is broken.
The state of our union is broken.
And I'm the right man to fix it, and look at what we're doing, and I'm confronting the elites and the corrupt and pushing it forward. It's difficult, but I'm your man.
He didn't do it last year. Based on my research here, it was not our State of the Union, ... He said America is back. We'll see if he doubles down on that. Cliff, great to see you.
Great to see you.
We'll see if you run numbers on the length of the speech. That's going to be another one as well. 36 million watched it last year, and it was not short. We'll find out tomorrow night. Special coverage here on Bloomberg. I'm Joe Matthew. We'll assemble our political panel next on Balance of Power.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. New York Mayor Zoran Mamdani has lifted the directive that closed streets, highways, and bridges to most traffic as snow continues to fall across New York City. Now in a post on X, the mayor said the travel ban is lifted, but he is urging caution and says New Yorkers should still stay indoors. We've got stocks declining, number of reasons, but fresh AI worries hitting financials, also trade concerns and geopolitical tensions. S&P right now, lows of the day, down 86, down 1.2%. Dow Industrials down 840, decline there of 1.7%. NASDAQ Composite Index down 323 for NASDAQ, a decline of 1.4%. The 10-year at 4.01% with the 2-year 3.43%. Spot gold now higher by $93 the ounce, just above 5,200, up by 1.8%. West Texas Intermediate crude down 0.4%, 66.22 a barrel. And a major sell-off in Bitcoin, now down 4.5%. Bitcoin below 64,570 on Bitcoin. The U.S. Supreme Court's decision to nix President Trump's reciprocal tariffs is throwing fresh confusion over global trade deals. Ryan Majerus is a partner at the law firm King & Spalding. He was a guest this morning on Bloomberg Surveillance.
You know, the Supreme Court definitively ruled that IEEPA cannot be used for the imposition of tariffs, but I have a feeling this is going to lead to more enduring tariffs under novel uses of laws. As you all know, we're going to see Section 122 tariffs for 5 months, but then I think the long game here is going to be Section 301 tariffs that could be in place for a long time.
Ryan Majerus of the law firm King & Spalding interviewed this morning on Surveillance. Novo Nordisk's next-generation obesity shot delivered less weight loss than Eli Lilly's rival Blockbuster in yet another blow to the Danish company's attempts to regain lost ground in the weight loss market. We've got shares of Eli Lilly up today by 4.8%. ADRs of Novo Nordisk, they are plunging by 15.5%. Again, recapping, stocks lower, S&P 500 index down now by 1.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Once again, here's your host, Joe Matthew.
Charlie Pellet back in the continental United States. After his trip to the Arctic Circle, he laughs at the people who are complaining about snow and cold in New York City today. You should see him on social media standing next to that pipeline. Charlie Pellet, yes, sir, back at 1 o'clock with the latest on the markets as we welcome our global television audience to the conversation. As we're talking about snow, by the way, I should mention the mayor. We're going to hear from him just about a half hour from now. Mayor Zoran Mamdani on Twitter. The city's travel ban is lifted, he wrote, but conditions on the roads remain icy. If you choose to drive, travel slowly, unless your name is Charlie Pellet. He's going to hold a news conference at 1:15 p.m. Eastern Time. Mamdani on the winter storm. We do plan to bring some of that to you. We just want to make sure everyone has a sense of where they're going tonight and tomorrow and whether everybody can get to work. So we'll have more from the mayor coming up in our second hour here as we ask many of the same questions today, this Monday, that we were asking on Friday when it comes to tariffs. You listen to Bloomberg Radio for 5 minutes. My God, how many times? 122, 301, 1974. Just slow down. I suspect the president will have more to say on this tomorrow. He's saying on Truth Social today he does not need Congress to help him with the tariffs, and therefore that's why everyone thinks he's going to go to this. For now, it's 122. Is he going to talk about this tomorrow? Sure, of course. He's going to be looking right at the Supreme Court. What's he going to do to the justices? Will he shake John Roberts' hand when he walks by? That's what everyone's been talking about. So it strikes me that it probably won't be an issue, right? You know how this goes. Donald Trump says lots of nasty things about people until they're together, and then they seem to become friends. Even Jay Powell had a pretty good time hanging out with him with the hard hats on. We'll find out. Knowing as well he's going to be talking about Iran with this massive buildup of military hardware in the Middle East. Been really looking forward to hearing from Rick and Jeannie together on this, and this will be our chance for the first time in a week with talks now between the U.S. and Iranian officials set for Thursday, if we get that far. The president, the New York Times is out with the latest bloody nose story here, right? You do the bloody nose strike and you threaten something much larger to bring Iran to the table. Targets under consideration remain pretty much the same as well. Headquarters of Iran's Islamic Revolutionary Guard Corps, to the country's nuclear sites, which we've already hit, to the ballistic missile program. But it's really interesting what Scott Bessent said yesterday. suggesting that on Fox News, this might not wait until next weekend. Claiming that Iran's regime is, quote, probably a week away, he said, from having industrial-grade bomb-making material, unquote. Well, what's that about now? And what will the president say about this tomorrow when he addresses the American people? We assemble our great political panel. They're both back together. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. Rick is Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, I can't imagine that a president, that a commander-in-chief would want to be announcing kinetic action during a State of the Union. But then again, this is Donald Trump. Do you believe that we're on the precipice of more strikes?
Yeah, I think as soon as he amassed this armada of power, you know, in the Persian Gulf and the Red Sea and the Mediterranean, I mean, like, they have done as best they could from the sea of basically surrounding Iran. You're not going to do that if you really don't mean business. And I can understand that there's a group within the administration who wants to see a deal cut. Steve Witkoff said over the weekend that they think they're still got a plan to do that. And no doubt that's a better option for the president. But he's shown a likelihood to use force as a negotiating tactic. And I would not be surprised by anything, including an attack the night of the State of the Union, where he would bring that up. So he is a theatrical genius. There are a lot of things you can say about Donald Trump, but he knows theater. We're going to see theater on Tuesday night. Whether that includes Iran or not, I don't know.
With his flair for drama, Jeannie, would you be surprised if the president arrived in the speaker's rostrum and said, upon my direction, you can imagine the rest of the statement, we have begun strikes against Iran?
Nothing would surprise me at this point, Joe. You know, I think the State of the Union for the president is a really important moment as it pertains to Iran, for him to explain what the heck is going on. It was just months ago that he told us their nuclear program was, quote unquote, obliterated. Now we hear we are like sleepwalking ourselves into the biggest war that we have seen or been a part of in the Middle East in decades. Why? What has changed? As far as we know, nothing has changed with the proxies. Nothing has changed with their nuclear program. Nothing has changed on the ground with how they treat their citizenry, which is deplorable. So why are we doing this? The president has a moment in the State of the Union before he engages in limited strikes to explain that. Doesn't mean he will, but he certainly owes it to the American people and to Congress to say, what is the point? And by the way, what is the goal? What does the United States get out of this? After Venezuela, we were told, oh, that's okay that it's a violation of his promise not to get involved in wars overseas because it's in our hemisphere. Well, guess what? Iran is not. So why are we doing this? He has yet to tell us that. And the State of the Union is going to be his biggest audience to explain that. So gosh, I hope he explains it before he engages in limited strikes.
Well, you know, there are going to be a lot of members in the room thinking about war powers, Rick, and it does look like the effort to check the president through legislation seems to be petering out. They don't even have all Democrats on board today. Pretty remarkable to see Representative Josh Gottheimer, Democrat from New Jersey, pull out of this. He issued a statement saying, we respect and defend Congress's constitutional role in matters of war. Oversight and debate are absolutely vital. However, this resolution would restrict the flexibility needed to respond to real and evolving threats and risk signaling weakness at a dangerous moment. How many members do you think in that room he speaks for, Rick? Democrats and Republicans?
You know, I think Representative Gottheimer actually speaks for the vast majority of the House of Representatives. I mean, there's a significant difference between a show of force, between using tactical military force and fighting a war. And we've gotten so used to this idea that they're the same, right? Oh, we're going to go to Venezuela, we're going to attack Venezuela, and we're going to be stuck in this long war. Well, that's not what actually happened. You know, we supported Israel in its fights against the proxy groups that Iran supports. We were going to get involved in a long war there. That's not exactly what happened. Syria, we had soldiers stationed there for quite some time. but small number, and we helped basically create a free Syria. That's not a long time war. So it just because it's happened in the past doesn't mean it's going to happen in the future. I think that speaks to a lot of House members, both Republican and Democrat. Democrats have shown an interest over the last decade of being much more muscular when it comes to military affairs. And I think that's good for the country, and it creates less of a partisan divide between Democrats and Republicans on key, important national security matters. So, this is a good news item. We should celebrate that because we don't have that many in Congress these days.
Well, I'll tell you, we had something to celebrate as Americans yesterday, Jeannie. If the State of the Union is going to do it for you, U.S. men's hockey will. And I'm wondering if we're going to see Jack Hughes and his teammates in the gallery tomorrow night. There were videos around there, I told that they may or may not be real, of the president calling things. Kash Patel went to visit these guys after they won. 46 years to the day after the Miracle on Ice. It's absolutely amazing. Will that be the moment, Jeannie, when both sides of the room get up and acknowledge these incredible Americans who won gold yesterday?
Oh, if they're there, absolutely. Even if they're not and the president acknowledges them, absolutely. I think we're going to see more than one moment when the entire room can get up and get together on things. But of course, you mentioned Kash Patel, Joe. Why do you do this to me? As the president's
you saw that?
Getting attacked in Mar-a-Lago, and a 21-year-old culprit apparently is shot and killed. Kash Patel is celebrating after he said through his spokespeople that he was not going there to do anything but business. There he was drinking his beer. He, by the way, criticized the former FBI director for doing the same. So, I think there's a lot there that Kash Patel needs to live down. We'll see if he accompanies the hockey team into the room tomorrow night.
We're looking at the video right now, Jeannie. This is something, man. If you want to party, you need to hang out with Kash Patel, I guess. He's drinking the beer. He's throwing the beer all over the players wearing goggles. He's slamming on the table, fist pumping, table slamming display. And everybody's having a blast. The question is that appropriate for the FBI director, Rick, knowing everything that Jeannie just said? Mar-a-Lago, there's a deadly break-in at Mar-a-Lago over the weekend here. He said he was not in Italy to hang out at the Olympics, but he looks like he's having a blast.
Yeah, no, look, I mean, first of all, let's all celebrate the America's male and female hockey teams, right? Gold winners both. And look, I can't begrudge red-blooded American going crazy and celebrating for gold medal victory at the Olympics. I mean, there are a lot of things I'll throw him under the bus to do, but this is not one of them.
This isn't one of them.
I'm happy he's there showing the flag and supporting our team. I disagree with his flavor in beer, both wearing it and drinking it. But yeah, I mean, if I were the FBI director, I'm not sure there'd be much difference between Kash Patel and Rick Davis.
Well, even if maybe you pay your own way. Yeah, Michelob Ultra just flying around the room here. They must have been watching Landman. Democrats don't like it, Jeannie. The gift and corruption is unreal, said Jason Crow. Sean Caston, Illinois, your taxpayer dollars funding the FBI director's Italian vacation. 3 million pages of evidence of a massive child sex trafficking ring. And this is what the FBI director is doing right now. Jeannie, when do the hearings begin?
I think the Democrats may have to wait to see if they can take the House to have hearings on this kind of thing. But, it is the hypocrisy. It's the public dime. It is so much going on that he is responsible for. And it is his critique of the former director, not to mention flying around on this jet on the public dime. So there's a lot there to criticize. You think he might have a little bit more common sense than to do this publicly, and yet he did it, and he did it full out there. And I'm curious to see what the president has to say about that, because none of this makes him look good.
Well, he's very happy to see us beat Canada there. And boy, I'll tell you what, maybe we'll see them all. Maybe will all the men and women be up there, James? What do we think tomorrow? There aren't that many seats, up in the gallery, but we got a lot to celebrate here. 2 gold medals, pretty cool and pretty amazing way to watch that whole thing come to an end. Our panel is back together, and they'll be back with a lot more in our second hour. Jeannie Shanzano and Rick Davis on this eve of the State of the Union. They're going to be with us tomorrow night as well. It's going to be quite a night in the old town here. We'll see if we can get through all the snow and the rest of it to make that happen. Rick and Jeannie back together, and back next hour. Kaylee Lyons will join us as well. And as I mentioned, we're going to hear from Mayor Mamdani. He's holding a briefing on storm cleanup and maybe storm preps, because, you know, there's more coming this week. How am I supposed to get up there anyway? I'll figure that out in the meantime. Only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
The uncertainty is spreading. Welcome to the Monday edition, with the president hiking tariffs in the wake of last week's Supreme Court ruling that struck them down. A partial government shutdown reaching day 10. And, of course, possible military strikes against Iran still on the table. It's a new week with the same concerns. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thank you for being with us here on the Monday edition. All of this hitting a day before the State of the Union, Kaylee, and the markets don't seem to like any of it.
No, they certainly don't. Maybe a little bit of AI fear is prevalent in today's market action as well. But yes, to your point, Joe, it's quite a week for all of these stories to intersect as the president gets set to address a joint session of Congress, the justices of the Supreme Court, and the nation tomorrow. Will it be largely focused on his domestic economic agenda? Because that has to do with tariffs. Will it focus on his geopolitical ambitions? Because that probably leads us to Iran. Maybe we'll get a little bit of both. The president told those gathered at the White House today for an event that it's going to be a long speech because he's got a lot to talk about.
In conclusion, so I guess he's going to hit them all. The question is, will he stay on script is another one, and what will be the other side of the room? Will there be decorum, or is this going to be a shouting fest like we've seen the last couple of years? We'll find out together with special coverage tomorrow night here on Bloomberg.
Indeed, but first we have our coverage today, and we're going to be focused on these issues specifically. We're going to check in a moment with Mike McKee, who's at the National Association of Business Economics Conference. Quite a day for that to be in town as well, considering the uncertainty regarding the president's tariffs. As President Trump is threatening he may send tariffs higher for countries that aren't playing ball on trade. But we know with the authority he's currently using, or the one he used over the weekend to enact 15% tariffs on our trading partners, Section 122, he can only raise it to that level, and it can only last for so long.
That's right. FAFO seems to be the message from the president. In the meantime, he's got 6 months to play with.
Indeed, he does. 150 days, but we know that can go by quick. So we'll be keeping track of that story today, but we have to check on the markets as well as the tariff narrative, the AI narrative. All of it is fueling today's action. So Charlie Pellet's taking a look from New York. Hey, Charlie.
Well, hello there, Kaylee Lines. Hello, Joe Matthew. Indeed, a blizzard of selling right now. The snow coming down, and so are stocks. The Dow, the S&P, NASDAQ, all in the red right now. Very close to session lows. A 1% drop on the S&P to 68.38. Dow Industrials down 7.36 now, down 1.5%. NASDAQ down 1.1% with the 10-year currently yielding 4.02%. Gold up $101. That's an advance of 2%. 52.07 where we stand on gold. And a sell-off right now for Bitcoin, plunging 4.3%. 64,693 on Bitcoin. Again, recapping, S&P down 1%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking the markets from New York. Thank you so much. As Charlie was alluding to, there's quite the intersection between what's happening on Wall Street, or how Wall Street is reading what's happening in Washington, as President Trump is trying to continue his tariff regime, just using different authorities that involve a lot of numbers after the Supreme Court, of course, dealt him a major blow on Friday, ruling the tariffs he had placed under the Emergency Economic Powers Act, IEPA, unconstitutional or illegal. So now we're on to Section 122. Potentially Section 232, Section 301. Those later two, though, Joe, of course, require investigation, whereas the Section 122 tariffs are set to go into effect.
As if the alphabet soup in Washington were not enough. I'm getting a popsicle headache. If you are, you're not alone. It is 122 for now, but he's got 150 days there if you want to add more numbers, which is why many are thinking that 301 is going to be the longer-term solution here, but that involves an investigation. It's going to take some time, Kaylee, and the markets don't love waiting in conditions like these. So let's start our coverage. Before we talk to Michael McKee with Jeff Mason, Bloomberg White House correspondent. He's on the North Lawn right now, which reminds me to tell you that Mayor Mamdani of New York will be holding a news briefing about 15 minutes from now on the storm cleanup. We didn't get nearly as much as New York here in the nation's capital, which allows us to talk to Jeff outdoors today. It's great to see you, Jeff. I don't know if we should assume that this is going to be the case for the next 150 days, or how long this 301 investigation is going to take, but what's the White House preparing for?
Well, I think you're right to say that they're basically wanting to have something in place to make up for what they lost on Friday, which was the broader executive authority that President Trump has taken for himself on trade and on tariffs since the beginning of his administration that the Supreme Court struck down. So they haven't said specifically what the plan is, other than what he told everyone in the White House press corps at the press conference on Friday, which is that they basically have the plan B, and those are all of these other authorities that you were just referencing. I don't think he's going to walk away from that in less than 150 days. What I think they're going to do is try to have something in place that's more permanent by the time that deadline passes.
Well, I guess it becomes a question of, can they do so? Jeff, we've seen Section 232 investigations open before and concluded, and tariffs gone into place as a result. How much can this process be escalated, fast-tracked, if they're trying to make sure that the revenue gap does not actually grow?
Yeah, it's a great question. I don't really know the answer, but what I do know that there's political will to do it as fast as they possibly can. But of course, having lost this case at the Supreme Court on Friday, they have to do it legally. They have to follow the statutes and the laws and the regulations that require the investigations that you were just referencing. So, I'm the wrong guy to say how long each of those investigations are required to take. But for sure, this is a president who will be putting a lot of pressure on his trade team to do them as fast as legally possible so that he can maintain that revenue stream that you mentioned.
All right, Jeff Mason, never the wrong guy. We appreciate your reporting from the White House North Lawn, of course, a correspondent for us here at Bloomberg. Thank you so much. And as we consider the political calculations the president and the administration are making around tariffs, clearly their decisions will have economic consequences as well. And I'm imagining that's featuring pretty heavily in the discussion at the location where we find Bloomberg's Michael McKee. He is joining us live from here in Washington, but at the National Association of Business Economics Conference, NABE, which, Mike, I am sure the market driving forces we're looking at today, both this tariff conversation as well as artificial intelligence, are also a lot of what you're hearing about.
There's a lot of talk about both here, Kaylee, but it's really the labor market that has caught most people's attention for the moment, because the folks here that they're paying attention to are central bankers. Governor Chris Waller of the Federal Reserve this morning saying that he's not sure the strong January payroll numbers are a trend, and he wants to see the February payroll numbers before deciding whether he would advocate for another cut at the March meeting. His view on the tariffs is they don't change much under this 15% Section 122 method that the president is using now, and there's no real certainty about what the president's going to be able to do with the various other sections he might imply. But to Waller, it doesn't matter, because even if they provide some more inflation, he still says it's going to be a one-off kind of thing. Prices go up once and then stop rising, so he's going to look through it. He's not particularly worried about it yet. We're also hearing right now from Christine Lagarde, who said that basically Europe is kind of behind the U.S. on AI, but has enormous potential out there, and Europe is trying its best to get its act together and to move forward and keep up with the U.S. So AI and trade and tariffs and the labor market, the big concerns here right now.
Well, that seems to be plenty to go around here, Michael McKee. And if the real worry is not about tariffs, at least when it comes to Mr. Waller, I'm wondering, how we rationalize this reaction in the marketplace. And news today, for instance, from the European Union, that they're going to put the trade deal that they struck with the United States on ice until they learn more. Doesn't that further cloud the picture?
Oh, absolutely. It clouds the picture. It makes it more uncertain. And Waller and Christine Lagarde both acknowledge that. But the problem is there's no sense on when there will be clarity, because we don't know how long these investigations will take. We don't know what the administration is going to come up with at the end of that. So it just leaves everybody sort of up in the air and just continuing on the way they have been now. And it probably means we don't see huge price increases right yet, but we could down the road. So that's something to keep track of. And then, of course, is the question of what will AI do to the labor market down the road? There have been some sessions on that as well. And again, nobody knows. This is a very uncertain time for economists as well as politicians.
Uncharted is a word we like to use when we talk to Michael McKee. It's great to have you back, sir. We thank you, and good to have you in town at the NABE conference. Bloomberg International Economics and Policy Correspondent. As we add the voice now of Lori Wallach, the director of the Rethink Trade Program at American Economic Liberties Project, with our eyes on tariffs and what might come next. Lori, it's good to have you with us here on Bloomberg TV and radio. 122-301, do you even care when we're talking about tariffs at 10 or 15%?
The president is looking to reestablish that same rate of tariffs that he had under IEEPA. And there is a smorgasbord of different congressional delegations of tariff authority that I suspect they're going to sequence into place to try and achieve that outcome.
Well, so when we consider what outcome President Trump would like to get, specifically what he would like to elicit from our trading partners in the form of deals, the president took to Truth Social earlier this morning to say any country that wants to, quote, play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff, and worse than which they just recently agreed to. I think he probably is alluding to the EU here, Lori. But when we consider how high those tariffs can go, is there a limit under these other authorities? Because, of course, with IEEPA, he just kind of slapped whatever rate he felt appropriate. Can he do so using other legal grounds?
There are other legal grounds that actually allow quite high tariffs. So the unexplored IEEPA-like instrument is a law called Section 338 of the Trade Act of 1930. It hasn't been used since World War II. No one knows how it would go if it were challenged in court, which certainly it would be, but that would take many months. That allows up to 50% for an unlimited amount of time on a presidential, basically self-finding of a fact of discrimination against the interests of the United States. So that one's very loose. The other provision, Section 232, which is you have to have a report finding a national security basis for raising tariffs, in Section 301, which requires an investigation. You need to find basically unfair practices against the United States of a particular country. Those mechanisms have more procedures on the front end, but they don't have limits on the back end with respect to how high the tariffs can go. And all of those have an unlimited time. So Section 122 is maximum 15% for a balance of payments problem for only 5 months. The other ones, the three of them, 301 and 232, have gone through the courts and have been declared fine. 338, more of a mystery, but lots of other delegated authorities for a president to use tariffs.
And for those other three approaches, how long would these investigations last? Might they outlast the midterms?
Section 338, again, not used since before I was born, is a process that can be very speedy. I guess the outlying question as far as how long it could stay in place is if it got challenged in court, how long it would take before you'd have a ruling that would take it down if it were ruled against. As far as Sections 232 and Sections 301, it's probably unhelpful to say, but it kind of depends. It depends how many countries, how many issues, and also the quality of the investigation. There have not been cases challenging the qualities of the investigations. A very good Section 301 investigation can be done in 4 or 5 months. Typically, they take longer. It just depends how many people they're going to put on it. I think that, as far as the midterms, the big X factor is, as far as Section 122, the 150 days runs out on July 24th. And then it goes to Congress to try and extend it. And that could really make an interesting political problem because members of Congress would have to go on the record right then about whether they want to extend that authority or not.
Well, and we've already heard from the Senate Minority Leader, Chuck Schumer, who has suggested Democrats will not vote for an extension. That probably makes it a dead-on-arrival proposition in the Senate when we consider the 60-vote threshold. On Section 122, you mentioned how that will run out in July. Is there time between now and July for that to be challenged in a court of law when we consider the authority he's using or the justification for using that authority? Are we in a balance of payments crisis right now? Could that not end up in court?
So I recommend folks should look at the actual proclamation they issued. They actually have thought it through, and they make a case that is not wrong. It is a case that maybe could get challenged. Almost certainly, to answer the direct question, almost certainly a lawsuit's going to get filed. But in the 5 months, it seems extremely unlikely that will work its way through the courts to a point where there would be a final order. So yes, a challenge, but no, not probably a decision. As far as the merits of the case, it's not the people who are saying this is ridiculous. They're basically looking back at the time period when that statute was written, and we were just coming off of a gold-based currency. And those conditions obviously were not literally in a balance of payments crisis in the sense of checks are going to bounce. But in the sense of what a balance of payments crisis is with respect to our overall current account balance and other factors, you can make the case, which they do in this proclamation, and economists watching, everyone look and come back to us trade lawyers and say what you think. But yeah, I think that it will get challenged. I also think, though, that they've got other potential laws to put in place that they could do in that period of time. The much bigger X factor, honestly, is the refunds.
Well, I'm glad you just brought that up, because as we wait to hear from the mayor of New York, he's going to be holding a news conference any moment now on the storm cleanup. Lori, there are huge questions about refunds. No one's got any answers, and we know a lot of lawsuits have already been filed and were filed in advance of the Supreme Court ruling. We heard earlier today from the chairman of the Ways and Means Committee in the House, was speaking with us here on Bloomberg TV and radio with his thoughts on the prospect of paying back all this money. Listen.
In regards to the tariffs, I think it's very certain there's probably not going to be any refunds. I don't see a pathway in Congress that there's going to be refunds. And so you're going to look at, over the course of President Trump's administration, he's going to continue to use those tariff revenues to bring down the deficit.
What do you think about Congressman Jason Smith there, Lori? And if you're a Costco, for instance, and you already filed suit, does that put you at the front of the line potentially?
So I suspect there are a lot of people in boardrooms who have a very different take than Chairman Smith about that question. And honestly, as a trade lawyer, I would say the question is not an if, it's actually a how question. There's a history of tariffs being refunded, and there are different mechanisms. The thing that's particularly thorny with this situation as compared to the usual situation, which is, say, a preference program, like the generalized system of preferences, doesn't get renewed. And so you have to pay in for an extra year when it should have been renewed and you wouldn't have had to pay, then that money comes back. In this instance, the tariffs were so broad on so many goods affecting so many countries that actually there's a big question where there's a gap between who is booked at customs for the entity that paid a tariff and who actually paid. So as a practical matter, it's going to be extremely difficult to figure out a fair way to do it. So Costco is so big that in some circumstances, I bet their procurement people would fess up to the fact they probably made their foreign suppliers cover a lot of the tariff by either giving them a lower price on the good or by literally paying a payment to have to cover that expense as a condition for continuing to source from that particular tariffed entity overseas. So the big companies that have dominant market positions and basically monopoly power could avoid paying. Some of them then, not saying Costco did, passed on expenses to consumers. So even though they didn't pay, they raised their prices. And then you've got companies that raised prices that didn't get charged tariffs at all. So you've got a big question of how the consumer is made whole.
Yeah.
How you don't end up with windfall profits from companies that didn't pay but are booked as paying. And then there's always the question for small businesses. What is a system that hopefully is even less complicated than like paycheck protection so they don't have to go to court?
Well, Lori, when we consider these questions around refunds, I would point to what a former senator from Ohio, hoping to be a senator from Ohio, again, Sherrod Brown, the Democrat, is out on X posting about today. He says he's calling for a $1,336 refund for every Ohio household, saying that the reckless tariffs ruled illegal by the Supreme Court cost Ohioans $6.5 billion. That's not really how this will work, though, right? You aren't going to see direct checks to households like that.
You know, given the complexity I was just describing, that's as fair a way of doing it, honestly.
Really?
And anything that's going to come out one way or another, there's going to be an unfairness. And given how many people have been hit, by rising prices, some of it, again, price gouging using the cover of tariffs. I mean, the beef situation is a classic. 80% of the beef we eat in the U.S. is grown and processed here. So only 20% of imports, and of that, half of it has always been duty-free because it comes from Mexico and Canada, which from day one under the Trump tariffs have had a duty-free exception. So we've seen the prices of beef go through the ceiling, has nothing to do with tariffs, yet it's been claimed by the grocery stores, the meat packers, oh, we can't help you, it's tariffs, we have to pass through the price. So if you had, for instance, the Costcos and those guys who have the wherewithal to sue, getting back the money, but actually a lot of consumers have been the ones who in the end paid and some of the big retailers didn't pay at all because they had the leverage to make someone else carry it for them. How is that fairer than Senator Brown's idea of giving everyone a check?
Wow. Lori, it's fascinating and refreshing to speak with someone who knows as much about this as you do, because there are a lot of armchair experts in Washington right now when it comes to tariffs. The president said on Friday when he met the press after the ruling, going forward, we will be able to take in more money and there will no longer be doubt. Is the first part of that true? He will be able to take in more money from fill in the blank, whether it's consumer, importer, or foreign country, with the new tariff regime than the old one?
I think it is hypothetically possible, although seems somewhat improbable. So as a legal matter, if they used all of the authorities that they have, at least like in the year period, the short term, they might be able to bring in the $150 billion. That is more or less what I think the most clean estimates are of the revenue they've brought in to date since Liberation Day. And I think, you know, with the laws that they have, they could do that. They could approximate the same kind of tariff levels that they were able to do under IEEPA. Whether or not that's what they're going to do is a different question.
All right, Lori, great stuff. We appreciate your expertise. Lori Wallach, director of the Rethink Trade program at the American Economic Liberties Project. Thank you so much. We want to go live now to New York City, where the mayor, Zohar Mamdani, is briefing, holding a press conference on the storm, knowing that the travel ban in New York has been lifted effective as of noon. Let's listen into him live on Bloomberg TV and radio.
To keep our roadways clear so that emergency vehicles can get through. Every vehicle that stays off the road makes that work that little bit easier. These are dangerous conditions. Not only is snow continuing to fall, accumulated snowfall and refreezing have made it hazardous to travel. If you can, remain indoors. If you must leave your home, please rely on public transit. I am grateful for our tireless agency teams who have been working nonstop to prepare our city for this blizzard and to keep New York running. This has been a full-force winter weather response operation, with 2,600 sanitation workers deployed on every 12-hour shift and over 2,300 plows, including 700 salt spreaders mobilized citywide. In addition, DSNY has employed 575 emergency snow shovelers across our city last night, with more than 800 shovelers on the morning shift today. Despite the active blizzard, they were able to clear over 1,600 crosswalks, 419 fire hydrants, and almost 900 bus stops overnight. And that does not include what they have cleared since this morning. Amidst this, DSNY has been hard at work to expand their supervision capacity for the snow shoveler program. And as of today, they can now deploy 1,800 New Yorkers per shift. Due to the historic nature of this blizzard, we've increased pay to $30 per hour. You can walk into any DSNY garage until 8 p.m. this evening and then starting again at 9 a.m. tomorrow. All you need to bring is 2 forms of ID to ensure you get paid. In addition to DSNY, the DOT has also cleared over 1,300 sheltered bus stops so far. All of this is managed through DSNY's Blade Runner 2.0 system, which monitors plowing and salting in real time. You too can track their live progress via our plow tracker at nyc.gov/plownyc. As of 12:30 p.m., DSNY has distributed over 50 million pounds of salt and plowed over 99.5% of city streets at least once. As heavy snow continues to fall, every single street in every single borough will be plowed as many times as necessary to make it safe for emergency travel. As I mentioned earlier, parts of Staten Island are being hit hardest by this winter storm. In addition to existing efforts, DSNY is deploying 65 further pieces of equipment to Staten Island, and the NYPD Tow Truck Task Force is now operating especially heavily in the borough to free stuck vehicles, which include MTA buses. Our teams will continue to salt again and again throughout the day. This work has been a testament to the whole of government coming together to tackle a shared challenge. The NYPD Highway Patrol will continue escorting DSNY to facilitate the salting and plowing of our streets. And the Down Trees Task Force has been coordinating across the 5 boroughs. Again, I am imploring New Yorkers to stay off the roads. The fewer passenger and commercial vehicles need to be assisted, the quicker we can respond to plows and emergency vehicles. And if you can cook at home, please do so instead of ordering food to be delivered, given the conditions. I hope our students enjoy their snow day today and stay warm and safe throughout, but I do have some tough news to share. School will be in person tomorrow. You can still pelt me with snowballs when you see me. Alternate side parking will be suspended through the week. NYC Ferry remains suspended for the rest of today, while the Staten Island Ferry is running half-hour service through the day. A decision will be made on tomorrow's service for both the Staten Island and NYC ferries later today. All public libraries across the city remain closed today. An update on reopening tomorrow will be made and shared later this afternoon. City buildings will be back open to the public tomorrow for in-person city services. Code Blue remains in effect, and an enhanced Code Blue has been extended through Wednesday morning. Throughout this storm, our outreach workers have continually canvassed all 5 boroughs, helping homeless New Yorkers find shelter. Last night, outreach workers made 79 placements. I want to be very clear. If you need warmth and shelter, it is available to you. This morning, our Department of Social Services accelerated the opening of another 100 low-barrier stabilization beds in Upper Manhattan, building on the additional capacity we added during the historic cold snap a few weeks ago. Across our city, we have had 22 warming buses, 11 health and hospitals warming spaces, and 13 school warming centers open. Our health and hospitals mobile warming units have been redeployed to provide clinical assistance, warm food, and clothing. By this afternoon, we will have 15 mobile warming units citywide. Our on-point overdose prevention centers were also open all of last night and will remain open today and overnight tonight as well. I continue to ask New Yorkers to check in on those who may be struggling. If you see someone in need of warmth or shelter, please call 311 immediately so outreach workers can assist. In a Code Blue, these 311 calls will be rerouted to 911. You can also call 311 directly from our Link NYC kiosks or use them to find the locations of warming centers across the city. We are aware that there were power outages across the city, including over 11,000 New Yorkers in the Rockaways who were without power this morning. NYSEM dispatched field personnel to check conditions and make repairs. Power has already been restored to more than 8,000 of those New Yorkers. As a contingency, NYSEM has opened warming centers at Far Rockaway High School, Beach Channel High School, and PS 43. For New Yorkers dealing with heat or hot water issues, call your landlord immediately. If you do not hear back promptly, please call 311. HPD staff is working overtime and is on call to help. NYCHA has deployed additional staff this weekend, including technical teams, to respond to elevator, heat, and any other repair issues that may arise. If you are a NYCHA resident dealing with a non-emergency issue, please call 718-707-7771 or submit a work ticket through the My NYCHA application. Lyft began clearing operations at City Bike stations this morning and have cleared 20 stations as of 11:30 a.m. With additional vendors starting at different points throughout the day, we expect their progress to rapidly accelerate as the afternoon continues. And operational agencies have been working to clear fire hydrants, crosswalks, and bus stops around their property as well. While DSNY continues to prioritize snow response, there will be delays in collection. There will be no collection of any material today, February 23rd, or tomorrow, February 24th. We will provide an updated plan on trash collection by end of day tomorrow on what collection will look like for the rest of the week. When we share that plan, we will be prioritizing trash and compost. Recycling will continue to be delayed into the following week. Please hold your recycling and wait to put it out until next week, as you would after certain holidays. Our mandate for property owners to clear 4-foot wide paths across all sidewalks remains in effect. We issued more than 4,000 violations after the last storm. We do not want to issue as many citations again. So please, if you are a property owner, do your part, clear the snow, and help make our city passable for our neighbors, especially those with disabilities. For those shoveling, take it slow. This snow is exceptionally wet and heavy. Your health comes first. Please protect your back and your heart by working slowly and make sure that you're taking frequent breaks. Older adults should stay indoors and should avoid shoveling. The coastal flood warning for low-lying coastal parts of our city ended at 5 a.m. this morning. There are no current warnings issued for our coast flood zones. For those in flood zones,
New York Mayor Mamdani speaking live here on Bloomberg TV and radio. We wanted to get a sense of what the mayor had for us here with regard to tomorrow. And I'm sorry, kids, In-person school is the news. Now that the travel ban has ended, we're keeping tabs, of course, on the next round of snow that's going to be potentially coming later in the week. We'll let you know if he goes to questions and makes any more news. The mayor holding a news briefing at the lunch hour here in New York. I'm Joe Matthew in Washington. Thanks for being with us on the Monday edition of Balance of Power. It was on Friday I had a chance to spend some time with the Republican running for governor of New York, Bruce Blakeman. He's the county executive, Nassau County, and has some pretty strong feelings about what's happening in the city, even though he's, of course, aiming to be elected and take office in Albany. The so-called bailout that he has called it from Kathy Hochul to help address a major budget shortfall in the city of New York, something that he is not a fan of. It's where we started our conversation here on Bloomberg. Listen.
You don't give candy to a diabetic, and basically the state of Florida has less of a budget than the city of New York. There's something fundamentally wrong with that. We have policies here that don't work in favor of the taxpayers, don't work in favor of the ratepayers. We have a subway system that is unsafe, that is dirty. People don't pay their fares. We need to start making sure that we have a transportation system that people want to use, that's safe and secure and clean, and make them pay for it. 60% of people who use the subway don't even pay the fares. They just go past the turnstiles. So that's one of the areas that we could make it more efficient, we could provide better services, and we could do it in a way that didn't kill the taxpayers of the city of New York and the state of New York.
Mm-hmm. You know, Mayor Mamdani has said repeatedly that Albany has underfunded New York City in relation to its tax contribution. Do you think New York City gets its fair share?
Yeah, I think New York City gets its fair share. I think New York City needs to start managing their fiscal affairs better. I have a county that's larger than 8 states. I've gotten 7 bond upgrades in the last 3 years, which is unprecedented, and I haven't raised taxes a single penny. As a matter of fact, I canceled a $150 million tax hike by my predecessor. So if you manage government more like a business, if you provide quality services at a cost-efficient price, then you'll get a balanced budget. They can't do that in New York City because nobody's managing it. I mean, Zohran Mamdani has no executive or business experience. The guy's never run the graveyard shift of a Dairy Queen in the middle of the winter, and now he's running one of the biggest economies in the world. He's in over his head, and the state of New York should not bail him out for his own mismanagement.
Would you try to make a partnership with the mayor? Obviously, you'd have to work with the mayor of New York City, or would this be a difficult relationship?
Well, that's up to him. If he enforces the law and makes for safe communities, then I will support that. I will help with that. But if he doesn't enforce the law and he makes it unsafe to live in New York City, as governor, I will stop that. If he ruins the economy of New York City, I will stop him. I want to create economic development and job prosperity. New York City is very important to the economy of the state of New York, and I'm not going to let the mayor of the city of New York ruin the economy in New York City, which would have a ripple effect on the rest of the state.
Would you propose legislation to remove New York City as a sanctuary city?
Well, from day one as governor, I would not create a sanctuary state. I would eliminate us being a sanctuary state, just as I did in Nassau County on day one.
How do you get that done?
By executive order. I would issue an executive order my first day in office saying that New York State is no longer a sanctuary state. Kathy Hochul has spent billions and billions of dollars of taxpayer dollars on people who have been here for 15 minutes. They came illegally. They haven't earned it. What about all the immigrants that came here legally? What about the people who came here before us, immigrants that worked hard for all that they have achieved? Now we're going to give billions of dollars when we could use the money for schools, we could use the money for hospitals, we could use the money to cut taxes, we could use the money for infrastructure. She's just given billions and billions of dollars away for people who just arrived here. That is a disgrace. I will end that on day one.
Would you welcome ICE agents to the state of New York to remove those immigrants you referred to?
Yeah, my policy in Nassau County has been to work with ICE. I have a comprehensive agreement with them. We removed in just 1 year, 2,000 illegal migrants with criminal records, ranging from attempted murder to rape to kidnapping to carjacking to robbery. And it has made us the safest county in America, according to U.S. News and World Report, and I believe that. We've got a great police department. We fund them. And working with ICE, we've made it safer. However, I told my police department and ICE that I did not want raids on schools, on daycare centers, on houses of worship, waiting in front of hospitals, that their focus should be on illegal migrants with criminal records or who have committed crimes, either in Nassau County or anywhere in the metropolitan area. And again, we removed 2,000 criminals from the streets of the metropolitan area. Where would Kathy Hochul like to put them? She wants to put them back in the streets to prey on the communities of New York? I don't think so. I think that basically our policy is sound. It's got common sense, and it's the right way to approach things. But we do have to have a comprehensive immigration policy where people who have been here for a long period of time, who may have a child in school, if they're law-abiding and they're gainfully employed, I don't think it's compassionate to remove them from communities. I think we have to have a path to legality for them. So I think we have to have a comprehensive immigration policy. We need to be compassionate. We need to use common sense. And I think basically they contribute to the economy in a lot of different businesses, such as the hospitality industry, landscapers, golf courses, many other industries, farming, that they are an important part of our economy. We need those workers, and we should have a path to legality for them.
That's Republican Executive Nassau County Bruce Blakeman, who's running for governor of New York. In our conversation from Friday, we wanted to make sure you had a chance to hear some of his insights on an issue that has brought us to another partial government shutdown. Kaylee, it's day 10, DHS closure. We have no end in sight here, although an interesting back and forth between Democrats and the White House. Tom Homan again reinforcing some of the changes that have been made when it comes to ICE agents in the field.
And of course, Republicans contend those changes should be enough to satisfy Democrats and to fund the Department of Homeland Security once again. So the question is, are we going to see forward progress this week as lawmakers return to Washington? They were supposed to be back today. Turns out they're not going to get back till tomorrow because of the snowstorm.
Yes.
And tomorrow, of course, is also State of the Union. So we might have to wait at least 2 more days to see any kind of forward progress, though likely it will be longer. And on that note, we turn to our political panel. Rick Davis and Jeannie Shanzano are with us. Rick, of course, Republican strategist and Stone Court Capital partner. Jeannie, a democracy visiting fellow at Harvard Kennedy School's Ash Center and Democratic analyst for us. Thank you both. So, Jeannie, obviously we know Democrats have been have had a laundry list of proposals that they would like to see. We understand they have viewed the White House counteroffers as insufficient. It seems like we're going nowhere quite fast. Once everyone's back in Washington, do you see this process accelerating, or is there just not adequate political pressure to come to a resolution?
Yeah, I think you said it perfectly at the end, Kaylee. There's not pressure yet. I think the pressure may come. You and Joe were talking about the White House releasing this Tom Homan plan. That clearly is sort of dead in the water for Democrats. That 1 or 2 pager they put out doesn't go far enough for Democrats. And quite frankly, neither side has really the political incentive to move at this point. I think we saw DHS try over the weekend to move in that direction, suspending some of the programs, then pulling back on that. I think is just quickly a reminder that both sides are pretty dug in. And I'll tell you one thing that has made Democrats dig in even more is this revelation about this shooting that occurred in Texas, where an ICE officer fatally shot a man in March at San Padre Island. I think those kinds of revelations are making some kind of middle ground even harder to get to at this point.
Rick, I'm looking at this one sheet that came from the White House to Democrats' offices on the Hill, and it's got bullets on some of the changes that have been made, including limiting teams to conduct targeted immigration enforcement as opposed to roving. Body-worn cameras deployed, we knew that as well. And interesting here, it reaffirmed policies to federal officers. They must clearly display their badge and other adequate law enforcement identifiers. There's no demasking on here, and I don't see anything more about the use of warrants when it comes to raids. Is this as good as it's going to get from the administration?
It'll just depend upon how much pain they're willing to take. These are negotiations. The fact that some of it's sort of popping out publicly is probably not productive to the outcome because obviously there are a lot of different Democrats with different views on what they want. And it's ideal that the negotiators are able to control that public messaging. And I do think Republicans are going to start getting the message that they've got to get something done on this. I mean, we saw Ipsos poll earlier in the program that talked about immigration and how independents by a margin of 63% didn't like what they were seeing out of ICE. So when you see those numbers on independents and you've got a midterm coming up, you got to patch that hole. It's not good enough just to rally the base. And so I do think there's some heat on Republicans to find a way to get this done. One of the reasons why the White House is directly engaged, one of the reasons Homan is the one doing it, because he's trying to instill some confidence in the Democrats to actually get to a deal. So is it going to take a while? It may. And it just depends upon when this administration is willing to sign on to something. But I think there's still a lot more wood to chop when it comes to what is it going to be a final deal.
Well, so does the president use the State of the Union address tomorrow night, Rick, to try to inch closer to a deal, or is it just an opportunity to call out Democrats for not playing ball and for keeping this agency or this department shuttered?
I think most of the Republicans I talked to over the weekend are worried that the State of the Union is going to be an attack on Democrats and their weakness on immigration, which actually will do no help to getting a deal done. He can't help himself. The Democrat likes President Trump likes to demagogue this issue. He always has, probably always will. I sincerely doubt there's going to be any kind of a effort to find common ground in the president's speech on tomorrow night. And so it may actually be a backfire and make the negotiations even more difficult.
Well, what's going to be Democrats' approach, Jeannie, to this State of the Union? I'll probably ask you this again tomorrow after we see more social media. I mean, is it going to be yelling and signs, or are we going to have an attempt to return to decorum?
I think there's going to be yelling and signs outside of the room as some of them rally, some of them stay away. We know Hakeem Jeffries has said in the room or advised in the room they should be quiet and follow decorum. But what they're going to be talking about, of course, is exactly what Rick just alluded to. Are these polls, the Ipsos poll you were talking about earlier, 6 out of 10, 7 out of 10 Americans opposing ICE tactics, opposing Donald Trump's approach to immigration, 70% saying you need judicial warrants. He's 18% under the water on immigration, something that got him elected or helped get him elected 2 times to the White House. These are bad numbers. That's what Democrats want to talk about. And to Rick's point, I don't think the president's going to shy away from saying, I own this issue, which clearly the polls show he does not anymore.
Great conversation with our panel, and it's great to have you both back together. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis, they will play a big role in our coverage tomorrow night, and we'll meet you on the late edition of Balance of Power coming up at 5 p.m. Eastern Time. I'm Joe Matthew alongside Kaylee Lyons in Washington. We've got our eyes on stocks here. The whole conversation about a partial government shutdown continuing with no end in sight. Tariffs, of course, with great uncertainty following the ruling on Friday and the president's approach here, not to mention this massive armada that has been assembled in the Middle East with eyes on Iran. It's not playing well when it comes to the financial markets today. Kind of a collision course here when you add uncertainty over AI. Let's bring in Charlie Pellet. He's back today as well and brings us up to date on Wall Street. Charlie, what do you have?
Right now, looking at a move lower for the Dow, the S&P, NASDAQ, perhaps the key takeaway at this hour. Joe Matthew, we are off session lows. Still looking at a 660-point drop on the Dow, down by 1.3%. S&P down 60 right now. That is a drop of 0.9%. The S&P at 68.49. NASDAQ down 213 for NASDAQ, a decline of 0.9%. Your 10-year at 4.02%. You correctly outlined all of the factors helping combine to send stocks lower. We've got the 2-year 3.44%. Gold is surging 2% now, 52.8 a barrel. The ounce on spot gold. Silver up 3.5%, 87.57 the ounce. West Texas Intermediate crude though retreating down 0.6%, 66.10 now for a barrel of West Texas Intermediate crude. Bitcoin down 3.9%. Bitcoin 64,940 on Bitcoin. New York Mayor Mamdani wrapping up a storm update. You heard it live on Bloomberg Television and Radio. Key takeaway: in-person school resumes tomorrow in New York City. The mayor, however, continues to advise New Yorkers to stay indoors. It is a massive storm. It will rank as one of the top 10 snowiest on record. More than 15 inches of snow in New York City. The snow is expected to continue through the afternoon before tapering off. Other news: Novo Nordisk's next-generation obesity shot delivered less weight loss than Eli Lilly's rival Blockbuster, in yet another blow to the Danish company's attempts to regain lost ground in the weight loss market. Novo Nordisk, the ADR, is right now trading lower by 15.9%. Eli Lilly shares are gaining 4.4%. Again, recapping, school in New York resumes tomorrow. Stocks lower, blizzard of selling with the S&P down 0.9. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, he knows what he's talking about when it comes to this storm here. Charlie just got back from Alaska last night. This is nothing for him. Charlie, thank you. He'll have more on the markets coming up at the top of the hour, 2 p.m. Eastern Time. With our eyes on Bitcoin and oil, as Charlie just mentioned, both heading lower today. In fact, we're looking at a 64 handle again on Bitcoin. I wanted to bring in Mike McGlone just to take a beat on this, because there's been nothing fun about this session, even if we are off our lows of the session. Bloomberg Intelligence Senior Commodity Strategist Mike McGlone, welcome back. When you start seeing Bitcoin back below 65,000, I know that we're in a world here where the chart is broken. How do you interpret the selling?
Well, I think that's the absolute right word, Joe. It's broken. If you look at Bitcoin, the last 170 weeks, it's unchanged. That means the average buyer for over 3 years is not making any money. But if you look at the S&P 500 over the same time period, it's up about 30% from its 170-week moving average. Just showing the comparison, yet Bitcoin trades almost 2 times the volatility. So that's a broken asset class. Despite all the sell side telling how great it was to buy the ETFs, to me that marked the peak. It's a bear market. As a strategist, I say act accordingly, look to sell rallies. So I say anything near 74,000 is legitimate resistance. I think it's just a matter of time now that breaks below 64 and heads to 50. But that's another thing it has in common with crude oil. Crude oil is a bear market, yet it's bumped up the upper end of the range. It's a question of when and where and how we start trying to test that bear market to go lower.
Well, I'm glad you brought up oil, Mike, because we in Washington are all waiting to see if President Trump is going to order a strike, whether a limited one in the middle of talks around a nuclear deal, or perhaps a more elongated conflict being started with Iran. How should we expect oil to react when we get the news, if we get it, considering how much price action we have seen amid questions around whether or not he's actually going to act?
Kate, I think the base case is, unless there's some kind of severe supply disruption that's enduring, crude oil can easily drop $5, head towards 60, and continue its bear market trend. So it needs some kind of shocker to pop it above 70 or 75, and that's exactly what the Western producers are waiting for, so they can sell forward, backwardate the curve a little more, bring on supply, rinse and repeat, the trend goes lower. So you see the trend there. Supply has shifted to the Western Hemisphere being the price maker. So I look at crude oil as, yes, right now it's under these dicey situations, but the kind of thing to look at, the key thing to remember is, what does Mr. Trump want for the midterms for the end of the year? Lower energy prices, and some kind of resolution out of Iran would help that.
All right, Mike McGlone, Bloomberg commodity strategist in Miami for us. Thank you so much. Meantime, here in Washington, we're joined now for more conversation on Iran, specifically by Jen Gavito. She is senior advisor with the Cohen Group and former acting principal deputy assistant secretary of state for Near Eastern affairs under President Biden. Jen, thanks for being here on Bloomberg TV and radio. When we consider the reports we have gotten, and President Trump has actually confirmed this himself, that he is at least considering a limited strike on Iran in order effectively to pressure them into agreeing to something on the nuclear deal. Do you think that would be an effective strategy, or does it risk backfiring?
I'm deeply skeptical and think it indeed risks backfiring. One thing that I have not yet seen is a real explanation of what the objectives would be, either of the short-term strike or, frankly, the longer term. If the assumption is that the short term would push the Iranians back to the negotiating table and be willing to make concessions that they're not currently able to make, I think that that's probably not accurate. And so I think you really do risk Iran needing to retaliate in its mind immediately and setting off a cycle of escalation.
Well, when it comes to justification, it was interesting to hear from Scott Bessent over the weekend. The president has talked about the need for a nuclear deal. We've heard a lot of reporting around other elements, whether it's ballistic missiles or, in fact, regime change. But remember, he said 10 or 15 days was the timeline at the end of last week that he might be making a decision. Scott Bessent said on Fox over the weekend that the regime is probably a week away from having industrial-grade bomb-making material. That's a direct quote. Does that give us a better sense of what this administration's projecting?
I don't know that it does. I'm honestly a bit baffled.
Is that true?
By that assertion. President Trump said back in the summer after the initial strikes that the nuclear program had been obliterated. And so there is a wide swath between obliterated and being within a week away. You know, there have been, and I certainly have not seen recent intelligence reports on this, but there have been various estimates over the years that have suggested that they are inching closer and closer to what we would call a breakout capacity. There is still a wide gap between the ability to enrich uranium at a weapons grade to a weapons grade point and the ability to actually deploy that in a bomb. And so when we say a week away, it certainly sounds startling. That doesn't mean that they're able to launch a nuclear strike within, say, a week or a month or even, say, 6 months. But again, I do think that probably the public and certainly the Congress deserve some answers about where this gap is between the obliteration that was described over the summer and this being used now as a justification for renewed conflict in the Middle East.
Well, and again, we get back to the notion of where that conflict will ultimately end us. Will we be talking about regime change in Iran? We actually were joined last week on Balance of Power by the former defense secretary in the first Trump administration, Mark Esper, who warned actually that if you want to see regime change in Iran, you may end up with potentially a worse result than you anticipate. This is what he told us.
And I think the experts would say that the odds are that the successor to the Khamenei regime is going to be a hardliner as equal to or greater than Khamenei. So it could be more likely than not somebody from the Islamic Republic Revolutionary Guard Corps. So those are the concerns, and that's why, you know, I think if you were to step back and strategically think about this, what you want to do is prepare a much broader game plan.
So when we consider that notion, Rebecca or Jen, and I saw you kind of nodding in agreement there, is regime change, pursuing it right now, advisable in your mind?
Every U.S. government and military gaming of this problem that has been done in recent years, to my knowledge, has led exactly to that result, that the IRGC would be the natural successor to a regime that has been changed. And that is almost certainly a worse outcome for the people of Iran than what we currently have. And so, again, I think until this administration can better identify, and perhaps they have behind closed doors, but better identify what the objectives are and what the day after planning for this looks like, I think going in with an attempt to remove the top level of the Iranian leadership without understanding what comes next and what that sets off as far as destabilization in a region that is really central to President Trump's economic objectives is ill-advised.
Do you buy this idea of a bloody nose strike unlocking some sort of a deal? And if not, I think you expressed some skepticism over this at the beginning of our conversation. What is the prolonged campaign that would follow? Because the next hammer to drop would be a lot bigger.
Absolutely. First of all, I think it is a miscalculation to assume that an initial strike would lead the Iranian regime to be in a position to make additional concessions. They are at a point of weakness, which again raises questions about why now. But they're really at a point of weakness. And so additional concessions beyond the degradation of their proxy groups that we've already seen, the degradation of the nuclear program that we've already seen, I think would be viewed as existential. And so I do think it's a miscalculation to assume that they have additional concessions to be able to make. So yes, then you get the question of what does a longer term campaign, either by design or in response to Iranian retaliation, then look like? And that gets very dicey. This is, a massive country. This is not another Syria. This is a massive country with very deep bureaucratic structures, and so the idea of regime change there is just on a different level than what we've seen elsewhere in the region. And I, again, have not personally heard any explanation of how you would reconstruct a government. Does that involve long-term U.S. investment, for example? And I think that the assumption that the Iranian people would somehow rise up and kind of do the job for us is also probably wishful thinking.
So in our final moment here, Jen, as we consider the notion of Iranian retaliation, when we saw Iran retaliate back in June for the strikes on nuclear facilities, arguably it was a de-escalatory measure, right? Do you think they would make the same decision this time around?
I don't. Again, I go back to we are in what I would consider to be an existential moment for this regime. I think they've been very clear in their messaging that it would not be de-escalatory as it was in the summer. And so I think we would see attacks against our facilities in the region, against our allies and partners.
So the other Gulf states?
I think that that would be a good assumption, yes.
We heard reporting from Axios, the chairman of the Joint Chiefs, advising the president and top officials that a campaign against Iran could carry significant risks and bring a prolonged conflict. As Kayleigh said, we only have about a minute left here, or 30 seconds at this point. Does Donald Trump set himself up to learn a lesson of the limitations of airstrikes?
I certainly think so. You know, if there were an easy kinetic answer to this problem, we would have taken it at some point over the last 20 years. Yes, I think this would be destabilizing, and I think that there are no easy answers here. So I think the U.S. would be in a position of not having an identified off-ramp to fall back on.
It's great to have you back with us, Jen. Jen Gavito with us from the Cohen Group. I'm Joe Matthew in Washington alongside Kayleigh Lyons. We'll meet you on the late edition of Balance of Power at 5 p.m. on Bloomberg.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Very good afternoon, everybody, across Bloomberg platforms. I'm Carol Masser. Tim is out today. Emily Graffeo back with us on what is a very, very snowy Monday. Continuing, if you could take a shot outside these walls, you would continue to see snow coming down.
That's right. And Central Park getting more than a dozen inches of snow right now. But we're not only going to be talking about the weather, Carol, are we? There's a lot going on in markets right now. The S&P 500 down about 1%. Tech stocks, software names, and delivery companies getting hit pretty hard.
It's once again the AI scare trace. So we're going to talk about that certainly over the next couple of hours. We're also going to talk about the latest on the blizzard, what you need to know and where kind of we are and when does it kind of finally wrap up. We're also going to get the latest on President Trump's 2.0 when it comes to tariffs, because we know big news, the Supreme Court decision on Friday, and then of course the president imposing new across-the-board tariffs. So kind of trying to keep track of where we are on this process and who's impacted. Hey, and on those tariffs and more, we're going to head over to our own Mike McKee. He's down in the nation's capital, surrounded by top Fed officials and economists, so he's going to weigh in on all of that. Also, Nassim Taleb weighing in on that Supreme Court decision and what it means for the president's tariffs. And then, Emily, I feel like it's something that deals with your world, and that is the private credit and private market world. We're going to get the latest on Blue Owl.
That's right. We're going to talk to Bloomberg News' very own James Crombie in just a few minutes here about the woes actually plaguing that sector and concerns about illiquidity and private credit more broadly.
Kind of continues, and Blue Owl shares are down once again for a third consecutive day. Hey, first up, though, let's get a check on the trade on this very snowy Monday. For that, he's back, Charlie Pellet.
Hi, thank you very much. And we got the Dow, the S&P, NASDAQ, all very much in the red right now, as you guys were just discussing. A number of factors here, geopolitical concerns, part of it, but stocks also getting hit on AI and tariff jitters. S&P right now down 72. The S&P at 6837, drop there of just about 1%. The Dow down 742. On the Dow Industrials down 1.5%. Nasdaq is down 267 for the Nasdaq Composite Index, a drop right now of 1.2%. The 10-year at 4.02% with a 2-year 3.43%. Gold is up $102 back at $52.09. The ounce up 2%. West Texas Intermediate crude down 0.5%, 66.18 a barrel. And Bitcoin right now down 4.2%. Bitcoin tumbling back below 65,000, 64,720 on Bitcoin. Software stocks hit hard again today amid anxiety over the impact of AI on company profits. Now, IGV, that is the iShares Expanded Tech Software ETF, that is down by 5% among specific software names. Microsoft down 2.7%, Palantir down 3.7%, Oracle down by 5.5%. Those, by the way, are the top 3 holdings in IGV. New York City reopening roads and bridges as the blizzard, though, continues to snarl travel. And Mayor Mamdani announcing here on Bloomberg, a live news conference. We covered it on Bloomberg television and radio. In-person school will resume tomorrow. That storm, by the way, one of the top 10 snowiest on record. Right now, we got more than 15 inches of snow in New York Central Park. Again, recapping here, S&P down by 1.1%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great to have him back. And I got to say, I'm loving the snow. It's a little crazy. Ran my dogs in it last night, but it's really made this city just stop. And certainly the New York metro area just come to a halt.
You know what it hasn't made stop, Carol?
What's that?
That guy jogging in shorts. I'm not kidding. I saw a man this morning when I was walking to the office.
I don't even know what to say.
He was jogging in shorts. These people know no bounds, Carol.
No, it's kind of amazing. New Yorkers are pretty wild, so it's kind of interesting to see what they can endure and kind of get out there. I will say, though, you know, I saw a lot of people getting out, certainly I'm just outside New York City, and just people, you know, throwing on coats, taking their kids out for a walk.
Ski goggles.
Taking their dogs, which you needed to because it was really, really windy. So anyway, we're going to get a check on the weather for you a little bit later. It is certainly one of our most read stories. And I think it's safe to say, though, Emily, we continue to see kind of this churn and trying to understand. If you look at the markets, it does feel like the AI concerns about, okay, now what does the president do in terms of tariffs? How do nations push back? All of this is kind of coming to the forefront, if you will, when it comes to the trade. We're definitely seeing it in terms of the equity trade. Having said that, I'm thinking the tariffs are a big topic of discussion, certainly at an event down in D.C. on that, and actually weighing in on Friday's tariff decision earlier today, Federal Reserve Governor Chris Waller, who said the Supreme Court's decision to strike down a large chunk of tariffs that the president has implemented using emergency powers is unlikely to have a significant impact on his view of how the Fed should set policy. He also noted that the Fed March rate cut, really that call hinges on upcoming labor market data, so it's not determined yet. Listen up.
But if the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate, and that such a cut should be made at the March meeting.
All right, that is Federal Reserve Governor Chris Waller earlier today at the NABE meeting in Washington, D.C. Hey, also at the 2026 National Association of Business Economics Policy Conference is our own Bloomberg TV and radio international economics and policy correspondent. He is Michael McKee. Hey, Mike, good to have you here. Of course, we just heard from Chris Waller earlier from the meeting. Remind us what this forum is all about and who's all there.
Well, it's the business economists, basically, from Wall Street and other parts of the country, companies everywhere, and they gather twice a year, once a year in Washington to talk about the major issues. And when they're in Washington, it's the political issues. So tariffs are sort of topic one, along with what's the Fed going to do, because there's zero snow here, I got to tell you guys. So it's completely clear.
We're saving it for you, Mike.
To talk about are the problems we're facing. Yeah, I'm sure you are. But tariffs as an issue are basically being considered by the economists in the same way that Chris Waller put it. We don't know yet what the president's going to end up doing in terms of the level of tariffs he's going to be able to put on, or even when he's going to be able to do it. And even if and when he does it, as Waller said, the Fed looks at it largely as a one-off. Prices may go up to meet the new tariff levels, but then they will stop going up. They'll go up once. So the Fed can look through that and try to figure out where inflation is sans tariffs. And right now, as you heard him say, inflation's low enough that if the labor market is still weakening in the February numbers we get next Friday, then he thinks that perhaps it would be time to cut rates again. But still, some data to wait for.
I do want to ask about the labor market because the year's conference theme is the Great Realignment and explores kind of how accelerating advances in AI are redefining the economy. Is there any talk at this conference just about the impact of AI on the labor market and potentially displacing a lot of jobs?
Oh, definitely. There have been several sessions on that. There was one featuring the chief economist of Anthropic, which does the Claude AI. And the answer is from everybody, the economists and the AI researchers, they don't really know yet. They anticipate there's going to be a big effect. But a lot of people think in the business that it could be a positive effect. We could see more jobs created, or because it gives people the chance to do more, that it would enable companies to sell more of their products. But there's also the concern that a lot of jobs, especially those that are repetitive and maybe low education jobs, would go away. So a lot of talk about what might happen, but no definite conclusions on what's going to happen.
Mike, how would you describe the mood there? Is it more upbeat? Is it more cautious? Is it more, again, TBD, because there's just, again, some uncertainty out there, or a fair amount of uncertainty?
Well, I think it's kind of TBD. Last year at these conferences, people were kind of depressed about what was happening, fearing the worst from tariffs and everything else that was going on. And now they sort of have a sense of where we are. Yes, we don't know where tariffs are going, but we've got tariffs now. The economy is surviving that at the moment.
And we don't know what's going to happen next with foreign policy. So there's kind of a feeling of let's wait and see and not get too depressed by what might happen, since the things we feared last year didn't necessarily come true in the worst possible way.
All right, we're going to leave it there. Hey, Mike, thank you so much. We're certainly going to be tracking you throughout this event. Looking forward to hearing more. Michael McKee, of course, our Bloomberg News TV and radio international economics and policy correspondent there in D.C. Hey, we want to go back to what is, no doubt about it, for a second day, our top story, and that has to do with the tariffs, the Supreme Court decision that we got on Friday. Now, as you know, the Trump administration swiftly announced plans to replace the prior tariffs with a new across-the-board 15% levy on on U.S. imports. Well, that creates kind of temporary winners. We are still trying to find our way. And we just heard from Mike talking about that when it comes to economists and even Fed officials waiting to kind of figure out what this all means. So let's see, though, exactly where we are, what we are continuing to hear from the White House. We head to the Bloomberg News Washington, D.C. Bureau and to our Bloomberg Intelligence Senior Policy Analyst, Nathan Dean. Hey, Nathan, come on in. Tell us kind of where we are, what has truly changed when it comes to presidential tariffs. Where are we?
Yeah, so President Trump signed an executive order putting 15% tariffs under Section 122 of the Trade Act. Now, these tariffs are global in nature, but they can only last for 150 days. And there's a lot of questions about the legality of these tariffs and also whether or not Congress will appropriate them or authorize them back in 150 days. And we at Bloomberg Intelligence actually think that the real question here is, when is the White House going to transfer from a 122 tariff to what is known as a Section 301 tariff? Now, we think that's going to come within the first 150 days, so we don't think this congressional authorization is all that important. But under Section 301, it requires an investigation. And there are already investigations in place for places like China, certain aspects of Europe, and also Brazil. And then under Section 301, the president does have the authority to go as high as he wants for an extended amount of time. It's actually for about 4 years. And so the real question for us is, what are these investigations going to show? Because sometime in probably the next 5 months, another round of tariff announcements are going to be made. The biggest question, though, is that if the president decides to move forward with these Section 301 tariffs, it's going to come months right before the midterm elections. Is that something the White House wants to do to an American populace that isn't all that popular, or finding tariffs all that popular? Still TBD on that one.
So, Nathan, when you think about the news that we did get about the Supreme Court decision on Friday, where do we stand now with just how much authority the president has legally to impose new tariffs? Has that authority been scaled back, even now that we see that there are, again, new 15% tariffs?
So it was scaled back under IEEPA, which is the International Economic Emergency Powers Act, but it hasn't in other areas. And so Congress largely delegated tariffs away from its authority about 50 years ago and really hasn't taken any steps to claw that back. So when President Trump says on Truth Social that Congress has given him the power, he's largely correct when it comes to things like Section 301 and Section 232. Now, this is where I think President Trump and the U.S. Trade Representative Jamieson Greer are going to fall back on, is that, look, they were using IEEPA to implement these tariffs on a global nature, but now instead of being able to say, look, I'm going to put in a Truth Social announcement saying how's a new tariff on this country, they have to go back and actually do an investigation. There's a notice and comment period. So while it doesn't provide much clarity for the markets, it at least gives us an idea of what the White House is targeting. So there's a little bit of clarity for the markets, but higher tariffs are still most likely in store.
And Nathan, still in store is the president out on his social media company. And let me just go there, because he did, just after the market opened this morning in New York, President Trump out on social saying any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff, and worse than that, which they just recently agreed to, buyer beware. So once again, we're back to kind of social media. We're back to, it feels like threats. It feels like, a reminder of what many say is a transactional president. So, like, if you don't play ball, there's going to be worse stuff coming. So has a lot changed or not?
So just to play into that scenario, there's really two things that President Trump's thinking about after reading the Bloomberg News reporting that my guess is that he was referring to the European Union news that they were halting negotiations. There's really two ways President Trump can respond to that. You know, he can't use IEPA anymore, but there is an investigation into Europe already under Section 301. So maybe 30 days from now, 60 days from now, we just don't unfortunately know. President Trump could just say, okay, under Section 301, here's the increased tariff for the European Union. And that can last for 4 years, and it can go as high as he wants. The other thing that President Trump can do is actually investigate this idea of licensing, because even though President Trump doesn't have the authority under IEPA to say, here's what the new tariff is, he does have the authority to say, you know what, you want to sell cars in the United States? You're limited at 100,000 or 200,000 or 1 million. And so that's another avenue that, you know, when President Trump talks about licensing, that's specifically what he's referring to. So long story short, or the short story long is that President Trump still has a lot of authority here, and the clarity, it's a little bit better, but not all that great for markets still at the moment.
When you think about their plan, is the White House at all confused about what it's going to do next? Or it seems like you said, they have a lot of options here.
You know, it's really a mixed message coming from the White House, because tomorrow night in the State of the Union, you're going to hear President Trump double down on tariffs, and he's going to continue to say tariffs is my favorite word in the in the English language. But on the same side, he's also going to be talking about affordability, and he's going to be trying to talk about prices, you know, food prices, you know, consumer goods, et cetera, trying to drive prices down. And it's almost sort of like a mixed message here. So, you know, it's something that the White House will probably have to figure out, because, you know, his approval rating isn't all that great. I mean, we're talking about some of the highest disapproval ratings in his presidency, and we're only months away until the campaign season. So I think that's a message the White House is grappling with, and it's something they're going to have to address.
Yeah, and I feel like members of Congress, GOP members in particular, right, they are thinking about the midterms in a big way too. And I do think I thought it was really smart how you laid out the 301 tariffs and the investigations and how the clock ticks down to the midterms. I mean, they've got to be thinking about what the strategy is as midterms get closer and where they want to be in terms of the U.S. economy and the perception when it comes to things like affordability.
Yeah, I would keep an eye on the primary calendar. You know, primary season starts in March, and, you know, generally the rule of thumb is you play to the party for the primary, and then you play to the independents when you go into the general election. And so for a lot of the Republican members right now, you know, they just don't want to upset the party, and they don't want to upset President Trump, because as we saw just with Representative Hurd from Colorado, President Trump pulled his endorsement based off of how he voted on tariffs prior to the primary. So after the primary season, which is March, April, and May, after that, you would probably see Republicans move more towards the center and being a little bit more, you know, at least airing uneasiness of this tariff policy, not to the point where they're going to oppose the president. But again, you know, that's where I think the public-facing Republican mantra is versus what they're thinking in private. You know, there's a lot of uneasiness about tariffs in the United States right now, and just they still have to figure it out before the midterms.
Hey, just quickly, and in the next hour, we're going to talk about the legality of all of this and what happens in terms of the refunds. Anything you're hearing on that front when it comes to what the White House is expecting, or what measures they might do to counter that, or can they at this point? Real quickly.
So, you know, honestly, I think if you're a litigation lawyer and trade refunds, you're going to have a very busy 3 years ahead of yourself, because, you know, this is where I think this is most likely going, is you're going to have to sue the U.S. government to get your refunds back, and it's going to have to play through the courts.
All right, great stuff. As always, Nathan Dean, thank you so much. He's Bloomberg Intelligence Senior Policy Analyst. Nathan Dean there at the D.C. Bureau for Bloomberg News. Hey, coming up next, we're going to get to two of our most read stories on the Bloomberg. One has to do with the weather that's around us. Snow. A lot of snow. And the other rattling a much talked about investment area. Folks, you are looking, for those watching on TV and YouTube and Bloomberg Originals, a live shot of what is still a snowy New York City. Stick around, though. We're talking the most read on the Bloomberg when we come back. Quick check on the markets right now. We are hovering just off our lows of this session, but down about 1% on both the S&P and the NASDAQ 100. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got ourselves a blizzard of selling on Wall Street with the Dow, the S&P, NASDAQ all in the red. Stocks are getting hit on AI and tariff jitters, also geopolitical concerns. But the Dow, the S&P, NASDAQ all down by 1.1% or more. S&P now down 76 to 68.32. The Dow is down 825, down 1.7%. S&P, by the way, very close to session lows. NASDAQ down 1.2%. The NASDAQ composite, NASDAQ 100 index down 1.3%. The 10-year 4.02% with the 2-year currently yielding 3.43%. Gold is up $104 the ounce, now at $52.12, up 2%. And West Texas Intermediate crude lower, little change, down 0.1%, 66.38 a barrel on WTI. Bitcoin now down by 4.6%. 64,450 on Bitcoin. Earnings news. Domino's delivered in the latest quarter. Domino's Pizza higher after the pizza chain reported a larger than expected rise in comparable sales. Shares of Domino's today, they are higher by 4.4%. Rival Papa John's up by 3.7%. In New York City, in-person school will resume tomorrow. This is Mayor Mamdani continues to advise New Yorkers to stay indoors. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser, along with Emily Garfeo, here in our Bloomberg studio in New York City, snowy New York City. On that, it is actually one of the most read stories on the Bloomberg. It has to do with this Northeast blizzard.
Mm-hmm. It's a powerful winter storm, buried New York City in one of its 10 snowiest days on record, Carol, and poised to rank among one of the worst blizzards in almost 50 years. Over 600,000 or almost 600,000 homes and businesses lost power and more than 10,000 flights canceled through Tuesday.
I am grateful not to have lost power, but we feel for those that are. And it's not over yet. And we know the streets have to be cleaned up, certainly in this area. We want to start there because kind of want to know when this is all over, the tallies, and dare we even ask, might there be more snow coming this week? Because it sounds like there might be. Let's get to it with Bloomberg News weather reporter Lauren Rosenthal joining us here in New York City. Lauren, good to have you here. So where are we right now in the storm? Because if we look outside, it does look like, I'm looking out the windows, it looks like things are calming down here in New York City slowly.
Yes, we could still see another few inches through early evening hours. We are definitely through the worst of it. So don't be surprised if you see some light snowflakes if you're in the Northeast, but you don't need to fear another 2 feet dumping on you in the middle of the night like we had overnight Sunday.
And how has New York City's response been so far? I did see some buses running, a couple folks saying they're taking the subways. The transit system seems to be working smoothly?
Yeah, we've had reports of, subways operating on local schedules, and I've seen buses where I'm based in Brooklyn with chains attached. I think the system's operating slowly, but it is still up and running in places. Amtrak, on the other hand, canceled all service between Boston and New York's Moynihan train hall today, and there are cancellations that have cascaded into New England. So air travel has become impossible over the last day or so. We've seen thousands of flights canceled.
Lauren, I want to go back to what you said. The 2 feet, we're probably not going to get the 2 feet that's already dumped on us. Is that the official tally? And I know from shoveling, and I live just across from Lower Manhattan, I would shovel, and then within the next hour, they're like 4 inches back. It was unbelievable how fast it was coming down. So is it official that we're close to 2 feet here in and around the New York City area?
Yeah, in Central Park, we're at 19.7 inches as of just about an hour ago. If you're on Long Island, yes, totals have inched up above 2 feet. There are reports of up to 30 inches, in some parts of the Northeast. So I'm not quite sure that we'll reach 2 feet in New York City proper, but it may come close.
And so this is one of the 10 snowiest days on record, or have we passed that tally so far? I'm just looking at what your colleague Brian Sullivan had put out on Bloomberg News earlier this morning with some superlatives.
Yeah, it's a 24-hour measurement, and when all is said and done and the measurements are verified, we'll have a better idea. We're far short of the snowiest day on record for Central Park, but this morning we did crack the top 10 24-hour snowfalls observed in Central Park, and those records go back to the 1800s.
All right, it's been a pretty snowy start to 2026. Are we done yet? We were sitting in their makeup room this morning, and people are like, yeah, there's more snow coming this week. Is there more snow coming this week?
Unfortunately, it is a possibility, depending on how you feel about winter. There are chances of some sort of slippery winter mix later in the week, and some forecast models have hinted at the possibility of another nor'easter next week. However, this far out, it's difficult to say with certainty whether we will see another significant snowstorm.
Well, and I guess it all depends on the weather. We know that first one that hit us, it was so cold, stayed so cold for so long, which is why that snow, which just disappeared in my neighborhood on Saturday, and is now, we're full of snow once again. But we'll see whether or not the temperatures start to kick up a little bit, so that maybe it doesn't stick around as much. Having said that, is it too early to say 2026 in terms of how it stacks up in terms of snowfall?
Yeah, we have a ways to go before winter is over. I think, a lot of the forecasters we talk to on a regular basis have cautioned us. We may not be out of the woods until April. So we have a ways to go before we know exactly how bad it was this winter.
All right, we're going to leave it there. Hey, Lauren, thank you so much. Appreciate the update. Lauren Rosenthal, Bloomberg News weather reporter. All right, you are up to date on the storm. Now let's get to another thing that's been on our radar, not the weather radar, but certainly on the investment radar, and that is Blue Owl. Bloomberg exclusively reporting that the money manager and investor in private credit has permanently shut the gates on one of its funds, preventing investors from withdrawing their cash, and is selling assets to return investor capital. Shares of Blue Owl are down for a third consecutive day, for a drop of about 16% over those 3 days. It's now down more than 60% since a high back on January 24th of last year. So let's get to it. An update. Bloomberg News senior editor for credit, James Crombie, joining us here in studio. Good to have you here with Emily and me. I know this is her world, and I know you guys have all been talking a lot. Investors, though, continue to sell shares of Blue Owl. What's the latest? What's the latest update?
Well, we're still seeing the stock down, obviously. The bonds are under pressure. I mean, I think the two big questions now are, one, how much stress is in their portfolio? We know that they were very active in the software lending, and that sector obviously is under a lot of pressure again today. But not just Blue Owl, but the whole private credit business had a lot of exposure to technology and software. Those loans are coming due. They all need to be rolled over. What happens next? The other big question, I would say, is what does this do to the big retail push for private credit, which has gone from 0 to 1.8 trillion very, very quickly. The retail push is founded on this belief that you can get to 40 trillion fairly soon in private credit. If retail gets rattled and backs out, that whole $40 trillion dream falls apart.
And tell us about what makes Blue Owl specifically unique, because they have vehicles that retail has been able to access for quite some time now, even before the White House is trying to get, retail into private assets. So what about Blue Owl makes it so that we're talking specifically about this firm right now instead of other alternative asset managers?
I mean, I think the whole sector's under pressure. Blue Owl has BDCs just like the other ones do, and this is the fund we're talking about. It's a business development company, a very, on the face of it, boring fund that just makes very straightforward loans to companies, often middle market companies that and they're in the high street. So, Blue Owl has become kind of the whipping boy for private credit, possibly because of their bigger exposure to software, which everyone is very worried about with the move to AI.
But this gets to, there's not a lot of transparency about all the investments. I assume that if you are an investor in one of these funds, you have an idea of what is in these funds. But is that a wrong assumption?
Well, if you're a lender directly, you get a lot of information. And then if the group gets slightly bigger, then those new lenders get more information. But if you're joining late, or if you're way down the stack, you probably don't get a lot of information, not much transparency. You certainly don't get very many updates on the price. And as we've seen with BDCs across the board, they all have the same loan. Some of them are marking them at 95, and some of them are, 70.
I want to ask you about something. Bank of America is out and says a significant level of misinformation, that's their word, that caused a rout in Blue Owl Capital shares presents an attractive buying opportunity in the stock and some peers, according to BofA Securities. Here's what they say. Misinformation stems from a lack of understanding of what private credit is. So we constantly here at Bloomberg remind everybody about private credit is kind of a different beast. And it's not as liquid as some other things. You invest for a while. But what are they getting into? I mean, what is the lack of understanding when it comes to private credit that maybe investors don't get? Is it that your money gets locked up? But this sounds like it's something more than that.
Well, the word private, I think, worries people. What you don't know can harm you. There's a fear of, the unknown, basically. And I don't think the private credit people, we went through this golden age a couple of years ago. Now we're hitting the wall of the maturities. I don't think they've done a particularly good job of explaining the stress which we're seeing rising in terms of payment in kind, in terms of non-accruals on the BDC side. So there's certainly distress. We are hearing loans trade or new lenders coming in and offering much lower levels for loans that are coming up for maturity. So, they're under a lot of stress. But it's hard to be transparent when you are actually private.
You've covered credit for a long time. I'm wondering what your take is on why credit spreads in public investment grade and public high yield are so calm if we're seeing the BDC performance showing a lot of investor jitters about credit and lending.
Part of that is when we talk to high yield managers who've been doing this a long time, they talk about private credit as a cleansing device for their market. And so, what they will tell you is that the private market is taking the stuff that they don't want, so, the bad loans, and that has a beneficial effect. And so, therefore, high yield and leveraged loans should be safer, they should be higher quality, therefore, spreads should be tighter.
James, I think about this all the time because you talk to somebody in the private credit space and they say, we're top of the tier in terms of what we're investing. Like, we know we're doing all the due diligence for our investors. And to some extent, you have to think that those funds are not going to continue to attract new money if they're not providing the returns. So maybe there is a checks and balances, but the more I hear that, the more I'm like, it can't all be top tier.
Well, we've had that conversation for, I would say, the last 3 years with all of the new private credit people and all of the existing private credit people. And one of them actually made the comment that, yes, there are bad deals being done, but it's not them, it's the, quote, tourists.
In just the last minute.
Are they right, though?
We'll find out.
We don't know yet.
We'll find out.
That's what this is all about.
There's a lack of transparency that's leading to fear of the unknown, and it's feeding on itself at this point.
And yet we have, rightly so, the founders of Blue Owl defending themselves. Co-CEO Mark Lipschultz said, performance has been strong, loss is minimal. Investors are ignoring facts and acting out of fear. Where are the investors not seeing eye to eye with the founders? Why such a big difference, I guess?
I think also retail was kind of led to believe that they might have more liquidity than they actually do. And that's the whole point about the push to, let's say, 401ks and everything else in retail, that you do kind of expect a bit more transparency, a bit more liquidity. And then when you suddenly realize that you don't have it, then you start to panic.
But to that point, maybe investors don't understand that, right? You're locking up your money, but permanently shutting the gates of one of your funds, that's not what the goal is, right? Like, that's not ideal.
It's not. It's certainly surprised a few people.
Okay. All right. TBD. I'm guessing there'll be more stories on this, as there has been over the last week or so, and then some. James, thank you so much. Really, really appreciate it. Bloomberg News Senior Editor for Credit here at Bloomberg, James Crombie, joining us here in studio. It's just already one of the stories of 2026. And we'll see, right?
Yeah.
If it has more legs or it hits other firms.
And we can see those losses in the shares of the BDCs, down over 60%. In the last 12 months.
Right. There's worry right across that group. Hey, folks, stocks are bouncing along their worst levels of this session. Stick around.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all very much in the red. Close to session lows right now on the S&P 500 index. Stocks are getting hit on AI and tariff jitters, also geopolitical concerns. Right now, the S&P 500 index is down 82, a drop of 1.2%. The S&P at 6826. Dow Industrials down 840, a drop there of 1.7%. The NASDAQ Composite Index now down 307 points, a drop there of 1.3%. The 10-year yield at 4.02% with the 2-year 3.44%. Gold is up 2.1%, $52.13 the ounce on the precious metal. West Texas Intermediate crude lower a little change, now down 0.2%, $66.36 a barrel on WTI, and Bitcoin down now by almost 5%, $64,230 on Bitcoin. Novo Nordisk's next-generation obesity shot delivered less weight loss than Eli Lilly's rival blockbuster, and yet another blow to the Danish company's attempts to regain lost ground in the weight loss market. Novo Nordisk ADR is now down by 16.5%. Eli Lilly shares up by 3.9%. Just getting word from Crypto.com that it has won conditional approval for a U.S. bank charter, paving the way for the digital asset exchange to offer its crypto services. And in New York City, in-person school will resume tomorrow. Mayor Mondani continues to advise New Yorkers, though, to stay indoors. Recapping, S&P down by 1.2%. I'm Charlie Pellet, Carol Massar, and Emily Grafeo. That is a Bloomberg Business Flash.
All right, so appreciated. Charlie Pellet there. Carol Massar along with Emily Grafeo in for Tim on this Monday. We just want to point out, we just did an update on Blue Owl. It is among our most read stories on the Bloomberg with our own James Crombie. He actually does a podcast, right?
Yes.
On the private world, the private market world.
On all credit. It's called The Credit Edge with Bloomberg Intelligence. Private credit, but also public markets as well. You can get it Apple, Spotify, wherever you get your podcasts. They interview top investors and strategists in credit.
Which is such a big part of the AI story, but just so much. So we highly recommend that you check it out. In the meantime, a lot too coming from our Bloomberg economics team. In fact, they put out a brief today, and they noted that we started 2026 with a bullish outlook, but not even 2 months into the year, many of our assumptions are being challenged. And they talk about things like the Supreme Court ruling, concerns about the AI boom and all the spending around that. So we wanted to see what our next guest has to say. He's actually where Michael McKee is, surrounded by Fed officials and economists. Great to have back with us Greg Dacko. He is chief economist at EY Parthenon, and he joins us from the 2026 National Association of Business Economics Policy Conference in Washington, D.C. Greg, so glad you could catch up with us. I'm here with Emily Grafeo. Has the game changed in terms of the U.S. economy, starting with the Friday Supreme Court decision? Are all bets off?
Yeah, I mean, I think in general, what we're seeing in terms of the U.S. economy is still ongoing resilience, but a lot of uncertainty as a result of the Supreme Court ruling, as well as a result of the subsequent announcement by the administration to impose the Section 122 15% tariff, which have a maximum duration of 150 days. From a business standpoint, this is a highly uncertain environment. It's one where it's very difficult to plan how much you're going to invest, how much you're going to be hiring, and it makes it very difficult to plan in the long run. So in terms of the momentum for the overall U.S. economy, the paradigm has not shifted that much, but we are going to be in an environment where there is likely to be more restraint in terms of investment because of this latent uncertainty when it comes to trade.
What does it mean for growth prospects in the U.S.? Talk about kind of how you guys are calculating the outlook for growth now that, you know, some tariffs are being taken away, but now more are being proposed.
Yeah. So if you put it simply, and you think about the IEEPA tariffs that were imposed, with the IEEPA tariff, you had an average cost of doing trade with the U.S. that was around 17%, 16.9%. That was the average tariff rate. With the Supreme Court ruling that the imposition of these tariffs was not legal, that brought down the average tariff rate to about 9%. Now, with the subsequent re-announcement of Section 122 15% global tariff, you're back up to around 13.5%. So a big share of essentially this potential easing in tariff restrictions has been offset by the new announcement of these new tariffs. In terms of GDP growth, we were anticipating a drag from the IEEPA tariffs of about 1.2% of GDP. Without them, only about 0.6% of GDP. Now, with the new Section 122 tariffs, we're back to a drag of about 1% on GDP growth. So a lot of the relief has actually potentially been offset by this new announcement of new tariffs being imposed.
All right. One step forward, two steps back, it feels like. Greg, I do want to get to what your note you wrote and you put out specifically on this, and you do, and this is some of what you just covered. You say the Supreme Court's decision materially reduces the economic drag associated with IEEPA-based tariffs. Effective tariff rates have fallen, fiscal revenues will decline, growth headwinds have eased, and inflation pressures moderate at the margin. However, tariff risk has not been eliminated and policy uncertainty remains elevated. You just talked about all of this, and I just go to this idea of uncertainty, whether it's over AI spend, whether it's over tariffs, you know, what have you. This is never good for an economy.
Yeah, that's right. In general, business leaders across various sectors always want to know what's going to happen next, even if that means there is a tax increase on the horizon or a tariff increase on the horizon. As long as they know that there is going to be stability in the environment they're going to evolve in, they are able to plan. Without that stability, they're much less able to plan. And you were just talking, Carol, about inflation. And I think it's important to remind everyone that even if there is an easing in the average tariff rate, it's an open question as to how much of that easing in input cost will be passed on to consumers, because we know a lot of businesses have been compressing their margin as a result of these tariffs to avoid passing on the cost to consumers. So it's very realistic that even with some easing of the tariff rate, there's not going to be much relief on the price front, because businesses are not necessarily going to pass on these reduced costs onto consumers.
Yeah, let's talk about the consumer and what this all means for household incomes.
Yeah, I think that's a very important component of economic activity, and we tend to forget it. If you think about how the Fed is conducting monetary policy, it has two mandates. It has an inflation mandate, it has an employment mandate. But the reality is that we're forgetting about the income component of economic activity. And when you look at developments in terms of the labor market, there has been fewer job growth, less job growth. We're talking about a jobless expansion, and wage growth is under pressure. You combine the two, and you have a trajectory for real disposable income growth that is gradually cooling. And adjusted for inflation, real disposable income is below 1%. What does that mean for the average person? It means that they're less able to spend freely. And so we're seeing this deceleration in consumer spending activity as a result of this slower trajectory for income. And I think that's a key risk that we have to be increasingly focused on in a jobless environment.
It makes me a little nervous. It makes me think of something Emily talked about on Friday about, for a while we were talking, was it last year, the year before, a lot about stagflation, of slower growth, but higher prices, inflationary pressures. And, you know, even Fed's Chris Waller says the March rate call depends on the labor market. He's watching the weakness in the labor market. Should we be talking or even thinking about stagflation at this point, Greg?
I don't think it's the right time to be talking about stagflation, in the sense that if you look at growth numbers, they're actually quite strong. And inflation, yes, is slightly above 2%, but it's not alarmingly so. We're not in a stagflationary environment in the purest definition of the sense, where inflation would be at 5% and growth would be 0. We are seeing an economy that's growing at 2.5%, and we are seeing inflation slightly above the 2% target. One thing that I'm increasingly concerned, though, is this notion that not everybody is benefiting from this economy. We have an environment where a lot of the growth is productivity driven, and we have an environment where a lot of the growth is driven by AI investment. Not everybody benefits from these gains, and that means that the income for some may be really strong, but the income for a majority is under pressure, and that in turn is a key constraint in terms of economic activity. So I'm not as concerned about stagflation as I am potentially about downside risk to growth because of this slowdown in real disposable income growth.
Right, and I do think about the gaps, right? And if some don't feel the benefits of that growth, their income not growing, for them, it maybe doesn't feel so good. Greg, thank you so much. I know it's a busy event. So glad we could check in with you. Greg Dacko, he's chief economist at EY Parthenon there at the NABE event in Washington. Hey, coming up, the author of The Black Swan on President Trump's tariffs.